thought I'd like you to chime in on. With the kind of conversation that we've been having with all our allies around the world as well, were this to escalate, would you believe that, global sentiment is more with India than Pakistan now, given the sort of standing that we have in the world? Because this is also a time when the world is facing a fair amount of geopolitical uncertainty. There are tariff wars across the globe. India +1 is playing out. We yesterday signed a free trade agreement with the UK as well. So amidst all of this, India's world standing a lot higher?
Whatever is our standing, when it comes to warfare, we are on our own. We must remember this. Anything additional is just a plus. So every country looks after its own geopolitical interests. To think that the British or the French or the Americans would side with us, well, there may be statements, and the statements would come which would be to lower the temperature down, urging both sides not to escalate. That is how it's going to be. But when you come to the blunt end or the pointed end of the stick, it's us alone handling this situation. There may be few statements that may come our way, different type of statements, but we'll take them as they come. However, they do not go into the planning process or the execution process at this stage. Things would be happening at the back for sure. As I said earlier, the diplomats would be, the telephone lines will be hot right now. And we would be explaining our situation and telling them that enough is enough.
Right. Manglam, we should tell our viewers that overnight, the Prime Minister has been watching the situation. There have also been conversations between Indian government officials in the MEA and also officials in Russia, UK, United States, Saudi Arabia. So we are getting our allies on board, and there will be more such conversations. I can expect ambassadors of different countries to be called in. We should also tell our viewers that there were massive ceasefire violations by Pakistan overnight. This was along the line of control and the international border. 3 innocent Indian civilians have been killed in those attacks. The Indian Army retaliating effectively. But let's also tell our viewers that there have been almost 20 to 25 ceasefire violations by Pakistan this year itself. These do keep happening, but since the Pahalgam attack, these ceasefire violations from Pakistan have escalated. We've seen almost 10 ceasefire violations since the Pahalgam attack itself. So let me get in Group Captain Banerjee at this point. Group Captain Banerjee, how do you think we move on from here onwards? India, of course, has taken a very strong step of suspending cooperation under the Indus Waters Treaty. We have flushed out the Baglihar Dam to slow down, reduce the water supply via the Chenab through the Baglihar Dam into Pakistan. All of this is being treated very seriously by the Pakistani government. What do you think is the kind of scenario we're looking at over the next few weeks? Do we see this situation subsiding altogether, or you believe that the tensions between India and Pakistan will continue to simmer? President Trump also, I believe, has spoken on these attacks, saying that he hopes that everything will be back on track, everything will be normalized very soon. But Group Captain Banerjee, your thoughts on how the situation unfolds from here onwards?
The modern day, conflicts are very, very dynamic in nature, and as it unfolds, we need to watch this very, very carefully. As Vice Marshal Bahadur said, that it's a whole nation approach. And as you mentioned, some of the things which are already we have seen in action for the past few weeks, like abrogation of the Indus Water Treaty, how it flows from there, how this strike today of the Indian Armed Forces is viewed in Pakistan in terms of escalatory ladder. We need to see everything, but it's sufficient to say that India has got all the means available in its disposal, diplomatic, military, other civil measures. So I guess it will be a mixed match of all of these responses, choosing the supreme national interest, which is safeguarding the life, property or economic interest, and life of our innocent civilian life, which are lost very, very tragically in Pahalgam. So the message, I think, which has gone out last night, is unequivocally that India is not going to tolerate any such things in future. and it will do whatever is in its capacity to deter any such attempt to destabilize India's internal cohesiveness. This was definitely targeted at that. We will have to wait and watch, Parikshit, how it unfolds, because my guess will be it will be very, very dynamic from here on, and we need to watch the space very, very carefully for the next couple of hours, days,
right?
And we will know only at the end of it that how things are moving.
We take that point entirely. Group Captain Banerjee, thank you so much for joining in. The response has been measured, precise, unequivocal, and the message that it sends out that India will not tolerate any sort of acts of terrorism. At the same time, it has been measured in the sense that it's not been escalated or no civilians have been harmed. The situation as it is, dynamic, is something that we will most definitely keep an eye out on. Group Captain Banerjee, Major Mohammad Ali Shah, as well as Vice Marshal Manmohan Bahadur, thank you so much for joining us earlier this morning itself. Parikshit, thank you for taking us through with these conversations as well. Just an eye out on the markets before we start, trade for our own markets. At one point, the GIFT Nifty was down over 130 points, has seen a sharp recovery from the lows, currently indicating a cut of 50 points at the open. But several global leaders have reacted since the strike took place as well. Speaking to reporters, the White House, US President Donald Trump said he had just heard about the intensification of hostilities that had occurred in recent hours. Let's hear him out.
No, it's a shame. We just heard about it just as we were walking in the doors of the Oval. Just heard about it. I guess people knew something was going to happen based on a little bit of the past. They've been fighting for a long time. They've been fighting for many, many decades and centuries, actually, if you really think about it. No, I just hope it ends very quickly.
Well, that is the U.S. President Donald Trump sort of commenting, and I think you should expect more and more leaders, world leaders, to react to what has happened. Good morning. You're with us here on special coverage, of course, of what has happened last night. India responding after those ghastly terror attacks in Kashmir and striking terrorist infrastructure in Pakistan, in POK, making sure it's a calibrated response. The statement will come up a little later, but essentially, the map and the visuals show where these strikes really have taken place. And I think, we've all been waiting for it for a while. Remember yesterday and over the last 2 days, the announcement of mock drills happened today. And I think now we, with the benefit of hindsight, know the reason why those mock drills, etc., were announced, because last night we have these strikes which have finally been conducted. So, as always, the response from India to unprovoked aggression from across the border has been calibrated, but a response nevertheless, which has, of course, been very, very necessary. Comments will come in from the Pakistani side, and they have been coming in from the Pakistani side, etc., as they have been from the global arena as well. So this is, of course, a top story which we will continue to focus on in a big way over the next 2.5 hours or so. Let me welcome in my colleague Surabhi as well. Surabhi, hi.
Prashant, what a morning, right? What a night and what a morning, and what a strong, befitting response.
Yep.
More power to our brave men, our armed forces, and prayers for safety and security for everyone. And of course, we're ready. Whatever might be the response or retaliation from the other side, we're ready. And I think that's exactly what, from a business and market standpoint as well, I think that's going to be the crux of it, right? The market has a lot to go over today, from this big, mega national news to, of course, the UK FTA, to the fact that China has, by the way, lowered policy and cut rates this morning. There's talk of trade talks. So there's a lot to go over. But I think depending on what the response is and whether this is a contained sort of a 1 or 2 day phenomena, whether this becomes a more prolonged war, I think that is something that's going to be critical. Because
you're absolutely right, Surabhi, because the other, other news flow, which we usually track early in the morning, is all, I should say, on the positive side. I mean, you look at the US-China thing, you look at the FTA last night, there is the Fed later today.
Yeah.
So, I mean, it's a full deck in that sense. But of course, I mean, top of mind, what is incremental, what is new, and what is uncertain, of course, remains what's happened last night. And I mean, of course, where it goes from here. expectations from stock market participants. And remember, there's been a big divergence between what the local sort of H&I crowd has been expecting. They've been expecting, and they've been on the sidelines. And by the way, I mean, that crowd has got it in that sense right. And that was a crowd which bought the budget day dip, if you remember, $1 billion on the 4th of June. And I mean, that was absolutely correct. And that is the reason why, I mean, as we've been saying, that it was well worth to pay attention to it. Now, I'm not saying that the strike has happened and, I mean, it's going to escalate in any big way or anything of that sort. The expectation is very much targeted strikes and a targeted kind of a response, and that's about it. But, as they say, I mean, in terms of war, and you heard experts with Parikshit earlier on as well, we'll just have to give it time for this to sort of play out in that sense. But the GIFT Nifty will come up very quickly on your screens, gives you a quick sense of what the sort of overall picture at this point is looking like. I think we were down about 100, we're down about 60. So this is again, I mean, a very, very measured kind of a sort of start that we are likely to have.
What has been really interesting in all this, Prashant, is in the run-up to this big act, which was always anticipated, which was always coming. Foreign investors never stopped buying India. They've been very consistent in their approach last 11 days. In fact, numbers till yesterday, while domestic institutions were on the side and DI has actually sold, foreign investors have still been coming in. So perhaps this level of a geopolitical risk is fine. I mean, it's all, you balance out your risks and the rewards. And perhaps the market anyway has enough going on the positive side as well.
Yeah, absolutely. Well, let's welcome in Arvind Sanger of Geosphere Capital is with us now, joining us. Arvind, good to have you with us here as always. Thank you very much. So that's the question. I mean, what next, in your opinion?
Well, I think we have to wait and watch. Clearly, the ball is in Pakistan's court, whether they choose to escalate and retaliate and how far they go, because, the risk is tit for tat escalating. The opportunity is that if Pakistan does something token, because they'll have to do something to save face, is my guess. And if they do something token and call it a day, then maybe things can calm down. So, the markets are obviously have been on tenterhooks the last few days. Today, it looks like the markets are hoping that whatever was expected has happened and it's not going to get worse. From a foreign investor standpoint, I think maybe people have been a little bit less focused on the immediate risk and more focused on the global macro factors. I think the immediate risk may cause a little bit of a knee-jerk reaction in the next 24 hours. But I think the important thing is, if this doesn't escalate, then the India story, hopefully we can focus on the economic fundamentals again, and that's what as investors, that's what obviously we're not ignoring the horrible tragedy in Kashmir and everything else, but from a financial standpoint, we want economics to be the focus, not war.
No, absolutely. And, it's all about sort of expecting or hoping that there's no further escalation. There's another statement, I think, that's coming from the U.S. State Department urging exactly that. Earlier this afternoon, Mr. Rubio spoke to the national security advisors from India and Pakistan. He urged both to keep lines of communication open and avoid escalation. So it seems right now international powers are going to put pressure on Pakistan to avoid any form of escalation. We don't know if Pakistan is going to comply or not, but let's see. Arvind, so for the next couple of, I'm only talking immediate here and now. I mean, would you be on the sidelines in India till this clears up? What should we expect in the immediate near term?
I think from a long-term investors like us with a long-term view, we would look for any dislocations to create opportunities to buy, because we're long-term believers in the story. But, are we going to be a little bit more maybe greedy in terms of wanting a little bigger pullback to buy? Maybe. But I think that it doesn't change the India story. And again, the hope and the expectation and the, most likely outcome is going to be maybe some modest tit for tat, and then, things settle down. That would be the outcome that would be, best for both countries to move forward from here. And that would be the central assumption we would proceed with from our investment standpoint.
Absolutely. That's the absolute the expectation out there as well, that this is going to be limited response, and that's it. I mean, for now, not very much beyond that. That is, of course, what the financial markets in that sense are pricing in. Arvind, the other stuff, apart from this, what we've seen from last night, the confirmation that China and US are going to start trade talks this week. So Besant and Greer, the USTR, are going to meet Chinese Vice Premier in Switzerland. So it's a bit of a de-escalation signal to the market. That, and of course, then there is the India FTA, which is India-UK FTA, which has been signed yesterday evening. Your thoughts?
Well, I think the China situation is a little more complicated, and it may take a little bit longer to reach any kind of reasonable ground, because the reality is that U.S. is not, maybe it comes down from 145% to 60-65%, but it's still going to be pretty severe. But as President Trump mentioned in the Oval Office today, when he was meeting with the Canadian Prime Minister, that he's looking for a number of countries to do deals, and everybody will pay some tariffs to do a deal with the U.S. So, I think there's a lot of uncertainty, but I'm hoping that, India will be amongst the first few, maybe along with Japan, Korea, that seems to be at the front of the line to do a deal. And if India ends up with, something like 10% tariffs and that's it, and lowers its barriers like it's doing with the UK with the announcement today of their deal, and if there's a win-win on both sides, then it would be great for India. But I'm not kind of holding my breath on any great outcome just from one meeting from China. Maybe they start to lower a little bit the extreme levels of tariffs, but I don't think the US-China trade, while it may resume from a complete stop, it's certainly not going back to any levels that existed even a month ago.
By the way, since we're talking US-China, let's quickly fire up some of the Asian markets as well, just to take stock of the situation. Last night, Wall Street, of course, ended negative. Markets were down between 0.75% to about 1%. But futures have turned positive. Wall Street futures have turned positive. Let's get the Asian markets up on the screen as well for reference. Hong Kong, for instance, is reacting very well to two positives coming in today. One is, can we get the markets up? If we can get the hot boards up, that would be helpful. So the Hong Kong market right now is 1.6% higher. The two positives being that, yes, later this week there's going to be a meeting and perhaps trade talks will chug along. The other positive is the announcements out of China and the easing they've announced. The key interest rate is being lowered by 10 basis points. And not just that, the Chinese have cut the reserve requirement ratio, the RRR, by 50 basis points as well. So it's twin bonanza for the Chinese market, which is why China is up. That's a limited point I'm making. Both mainland markets and the Hong Kong markets as well on the upside. Arvind, just want to get your sense in on the overall sentiment on India, because while you're saying, you'll be using any dips to perhaps come in, the fact that there's been so much uncertainty around China, that's also helped those flows come back into India in the last 10, 15 odd days or so. So if there's a thaw in US-China and in general, if there's a stimulus there as well, if the Chinese market starts tactically seeing a uptrade, could that create a bit of a problem for us?
Again, I'm not going to be able to call the day-to-day trading on India versus China, but the reality is that I think that U.S. is probably become slightly less favorable. Dollar, and economic issues again overhanging the U.S. market, and emerging markets or Europe have been benefiting. China clearly has the worst hit from tariffs. So if its tariffs go down some, maybe China benefits on a relative trading basis for a little while. But the reality is that from a structural standpoint, India is sitting in a very strong position. EU and now UK just yesterday, and now the EU coming to try to do deals with India on a free trade basis. So India is a destination for a lot of trade flows to redirect. And I think that deal with the U.S. could happen too. So I don't think that China, U.S., any kind of, some agreement to de-escalate is going to disadvantage India, because on a structural basis, India is a much bigger winner, and China could only just get some temporary relief.
No, absolutely. In terms of the bigger macro shifts that we've been talking about, and actually, Arvind, let me just quickly, for viewers who are still sort of getting up to this news flow, let me just quickly recap, what has happened. And I'll come to you and we'll continue this discussion in just 2 minutes. If you're just sort of tuning in, the news is that India has launched strikes against terror sites and we'll have the graphics and the visuals coming up. Terror strikes in Pakistan and POK. 9 sites have been targeted, and these targets are specific. The Ministry of Defence, of course, was the first to yesterday put out this information. It's called Operation Sindoor, a precise and restrained response to the barbaric Pahalgam terror attacks that claimed 26 lives, including 1 Nepali citizen. 9 terrorist infrastructure sites in Pakistan and POK have been targeted, which are the roots of cross-border terror planning. And again, now this is important. Importantly, no Pakistani military facilities were hit, reflecting India's calibrated and non-escalatory approach. The operation underscores India's resolve to hold perpetrators accountable while avoiding unnecessary provocation. And of course, a detailed briefing on the operation will follow later. So this is what has happened right now.
Prashant, just one more addition. While, of course, these are the 9 strikes, what's happening is that the skirmishes across the LOC have increased, and there are 3 civilian casualties, and that is something that the army has confirmed. 3 civilians killed in what the army is calling indiscriminate firing by the Pakistani military across the LOC as well as the international border. And those are the kind of issues that we have to observe carefully as well. We also have Nigel joining in. Nigel, good morning. What a morning. But feeling powerful, feeling strong, standing tall with our armed forces.
Well, indeed, the last time around the enemy was in denial. This time around they can't be in denial. The other point is with regard to the Operation Sindoor, the name that's been given to it, right? Sindoor is something that's very, very important for a married lady. And they went in there and they, in fact, disrupted many honeymoons and many couples that were just married out there. The significance of that Sindoor is very, very important. And you hurt a lot of sentiments out there.
That's true.
So that's, a lot of newly married couples, your first destination that you want to go to is Jammu and Kashmir. And in fact, that was something that I did as well. So they went in there, they hurt sentiment, they hurt married couples. So Sindoor is so very, very, very important for a married Indian lady. And they hurt. And in fact, the response that we have given is, something that you should take note of. And they can't be in denial.
How beautifully put, because of the morning news flow. Frankly, I didn't pay so much attention to how this operation was titled. But you're right. They hurt our hearts. And we've hit back strong.
Well, indeed. And in fact, the response as well that's been put out is that in all likelihood, this is the hit that we wanted to effect. And there may not be any escalation from here on. So we've given our response. Let's see what they do, whether or not they have anything in their kitty.
No, absolutely. Guys, you saw that news flow, right? The Pakistani defense minister claiming on Bloomberg television that they've captured
Indian soldiers,
or something.
And shot down 5 of our planes.
Coming up and saying that, well, it's actually not correct. It's just the point is that when you see a lot of the news flow which is coming through on social media, especially from Pakistani handles, etc., be careful because a lot of it, as they say, the fog of war. So you will see a lot of stuff being pushed, and I think trust verified sources when you're sort of looking for information, because I think most people will be sort of tuned in and clued in terms of what's happening. So you want to go to reliable sources of information, and some of them clearly are not. But this is, of course, the latest developments. If you're just sort of joining us this morning here on CNBC-TV18. Arvind, of course, is still with us, and we've been speaking with him and asking him what happens here. And I think Arvind said it's, of course, up to the Pakistani side now in terms of what they want to do, if there's an escalation, etc., going to be. But on balance, some of the other stuff, of course, has been good, has been pretty decent. Arvind, just a quick word on what you began by saying, right? Some of the global macro shifts have certainly benefited India, which is a lot of money moving out of US assets. And I think it's been a big theme which has now become kind of mainstream into emerging markets. And even if you look at even within emerging markets, there aren't that many deep, liquid, well-governed markets. And I think, it's a very basic, fundamental thing which is coming back. as a talking point, and India certainly is one of them. Valuations are a problem and all of that, yes, absolutely, and I think everybody recognizes that, but there is this bigger shift. Would you agree, Arvind?
Yes, and it's not just emerging market. Europe has done extremely well. So
Yeah.
it's kind of anything but US. And I think, it's not going to go too quickly in one direction without some ebb and flow. And you've clearly seen, even US markets recover a little bit sharply in the last, week or 10 days. But I think the reality is that on a structural multi-quarter basis, we see this as something that is going to benefit, non-US markets, and India certainly is positioned for that. The most important thing from an Indian standpoint is economic growth, earnings growth. And last couple of quarters have not been particularly stellar, but hopefully some of the leading indicators are suggesting that things are turning. So I think that's going to be the most important driver as to whether India gets its more than fair share of those flows. India has to have that growth story that starts to re-accelerate, and that'll be the key driver for that.
All right, Arvind, good to see you. And as always, Arvind, final question before we let you go. The next big trigger that global markets are going to be looking at tonight is going to be what the Fed is going to do. What are you penciling in? As of now, odds are we don't get a rate cut. But in fact, with the commentary, hopefully will be a little bit more dovish. What are your expectations, and what are you factoring in with regard to Fed rate cuts for the remaining of this year?
Well, certainly no rate cut now, but June is looking more likely. Whether or not Chairman Powell tips his hat on that is what we'll be watching. I think what he's probably going to end up saying is that they're going to be looking at data very closely, and they're going to be looking at employment data, and if that starts to show signs of stress, then they'll be ready to step up. On the other hand, they'll also be watching inflation expectations, and they want the inflation to get off control. So between those two, my suspicion is that they will lean more towards the employment data, and if they do, and if that does give room for cutting, then June becomes very likely. So that's what I'm expecting from tomorrow. No cut, but more indications that they'll be watching the employment data closely.
By the way, here in India, Arvind, specifically, defense as a pack has done quite well over the last 1 month or so. I mean, import substitution, etc., has been a big theme. We saw big corrections, of course, there, and now starting to come back. I mean, some of this does highlight. I mean, actually, there was that Stockholm Defense Report, which is a big global report which came out, and they just released, I think, about a week ago, data for last year. Defense spending, it's not a surprise, but hit an all-time high. And there's a country-by-country breakup and a lot of data out there. Any thoughts on stocks from the defense space, Arvind?
Unfortunately, we have no direct exposure, maybe some indirect exposure, but the reality is that I think that on a global basis, given that the U.S. is becoming a less reliable security umbrella for a lot of parts of the world, I think, whether it's in Europe or it's in Japan or it's in Korea or it's in, the Indian subcontinent or elsewhere, the Middle East, I think defense spending is on a structural rise as the world becomes a more dangerous place. And frankly, the flip side of that is that stock market multiples globally don't necessarily do great if there's more global, risk and tensions of war. But certainly defense would be an area that should structurally benefit from this.
And that's an important point, Arvind, right? I mean, the US for the last at least 30, 40 more years has been sort of present everywhere and has kind of acted as a bit of a stabilizing force, which of course is no longer there in that sense. At least that's the indication that this is a shift away and this is a more each for himself or herself kind of a world. So in that sense, maybe a little bit more in terms of a dangerous place, as you called it, Arvind, right?
Yes, unfortunately, yes. And that does long-term also, more tension, more uncertainty, more volatility could mean lower multiples.
Okay, all right, Arvind, we'll leave it there for now. Thank you very much for joining us. Good speaking with you. And thank you once again for joining us on a short notice. Nigel, but news flow around this will keep coming in, but we've got a market
Well, that's right. In terms of a market, I think the response that India has put out, that with regard to this particular response that we have given to the enemy, it's focused, it's measured, and it's non-escalatory in nature. We'll hear in from our leaders later in the day. But in fact, this is important, and this is indicating that in fact it's non-escalatory. And in fact, the markets, they were working with this uncertainty for the last many trading sessions. This uncertainty could be behind us, at least as of now. What do the FIs do? They're showing us some money in the cash market. Well, in the F&O market, if you look at index futures, they added more long positions than short positions in the ratio of close to around 2:1. In terms of buying, well, they bought more puts than calls. In case things go wrong, there is some cushion out there. So some put buying is what we saw. But they wrote an equivalent amount of calls as well as puts. What is the positioning as of now? We've been making this point. The FI short positions have come down to almost zilch. Only 3,000 short contracts right now. The clients are 27,000 short contracts, 27 to around 30,000 contracts on the short side. Options data comes up for you. 24,400 call, that's been active. That was the case yesterday. And 24,000 put as well. The broad band you're getting is the recent low at around 23,850. That becomes the first level of support that you're looking at. On the upside, the recent high that we saw, that was at around the 24,600 odd mark. That becomes, the near-term resistance that you're looking at. So this is the broad 600, 650 price band that you're looking at. Let's get those levels up for you on the screen. In the month of May, as well as, in April, those are the important numbers that I'm looking at. The Nifty Bank. Yesterday, it went, to the low point of the day towards the end of close. And I think the very, very important mark will be this 53,500 mark, because that's where the first technical level comes in at around the 20 DMA. So you don't want that level to break on the downside. Going by all the cues that we have, I think, we got past the Trump's tariffs. Looks like now, going by the response that we've given, and if there is no escalation from here on, the uncertainty is behind us. Pakistan neither has, the bandwidth or the financial muscle as well to take us on, unless, they get some support from external. So uncertainty behind as of now. The markets could start looking ahead from here on. The 23,800 mark on the Nifty needs to hold out.
Absolutely, and I think this is in a way an event widely expected, time and place, etc. As we've been saying, as the government's been saying. It would have been our own choosing, and it has been, and it's happened last night now. So we'll continue to look ahead and, of course, continue to track the developments as they are coming in. We slip into a quick commercial break here. Our coverage on Operation Sindoor continues on the other side. There's a lot of other global stuff which we are going to sort of be discussing here with our guests on the other side. Stay tuned.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, Nigel. Nigel, hi. Morning.
Well, morning, Prashant. You know, overnight, the news that was anticipated has finally come about.
Yep.
We have given the enemy the response. And in fact, you know, from a market perspective, we look on from here on, obviously. And the way the Indian military has responded, and they've said it's targeted, it's measured, and it's, de-escalatory in nature. I think that holds the key.
Jawab de diya hai. And now I think let's look ahead in terms of what really comes through. So for those who are joining us, and we started, at about 7:30. Actually, we started even earlier, about 7. But for those of you who are joining us now, the Indian Armed Forces launched Operation Sindoor earlier this morning, hitting terrorist infrastructure in Pakistan and Pakistan-Occupied Jammu and Kashmir. Focused strikes were carried out on 9 terrorist infrastructure sites, including Bahawalpur, which is the headquarters of Jaish-e-Mohammed. The Indian Armed Forces have also decimated terror camps at Muridke, the headquarters of Lashkar-e-Taiba and Hafiz Saeed's Jamaat-ud-Dawa. According to the Indian Army, no Pak military facility has been targeted. Later today, Prime Minister Modi is going to chair a meeting of the Cabinet Committee on Security today at 11 a.m., while the Indian Army will also hold a press conference at 10 a.m. Today. Let's actually, this is a story which we will continue to track. The GIFT Nifty at the bottom of the screen gives you an indication of how things are likely to start up. But for now, these are the latest developments which actually started in the wee hours of the morning. Rajiv Bhatia is former ambassador, South Africa, and distinguished fellow, Gateway House. He's with us. Thanks very much, sir, for joining us. Good to have you here. It's an important day. The response has finally come through, Mr. Bhatia. What do you make of it? And, will the forces here, the Defense Ministry has made it very clear, they are targeted, not aimed at civilians, and, of course, aimed at taking out terrorist infrastructure in POK and Pakistan. Road ahead, Mr. Bhatia.
Thank you very much. There are 3 facets I would like to highlight very briefly. First, as an Indian citizen, I can say that every Indian citizen is filled with enthusiasm and hope that our government is able to deliver justice when justice is required. This is a moment of some pride, but not bravado. It shows that the government does what it says. The second facet, as a diplomat, as a former diplomat, I can say that our international diplomacy will receive much kudos around the world, deep appreciation that India is a patient country. India fights for its causes. But when purely diplomatic, peaceful means fail, then it has the national determination to move on to something more. And at the same time, I think the world would realize that, as you said earlier, it's a very calibrated, planned, thoughtful response. It has taken 15 days for us to build this up and deliver it. And so this is something very significant. And thirdly, as a scholar of the Indian foreign policy, I can say that the whole response is being done in a very controlled manner. I think, if I'm not mistaken, there's going to be a briefing very shortly from the government, and then perhaps the Prime Minister is going to address the nation. And I think the point that probably would be made is that India is determined to protect the security and interests of its citizens. It expects the world to understand India's rationale and support its fight against international terrorism.
Sure, sir. Thank you so much for joining us this morning. Mr. Bhatia, in your many years as a foreign services professional, I think the world is now watching to see what the Pakistan response is going to be like. And we've seen tweets and posts from a lot of foreign dignitaries, including the Secretary of State, including the US State Department, actually, saying that we urge both sides to de-escalate. Do you think global powers will be able to prevail on Pakistan at all to not escalate?
This is a $64 million question. We have to bear in mind that there are certain realistic factors. First, Pakistan leadership obviously has a domestic consideration or domestic constituency. But on the other hand, its economic vulnerability and its international vulnerability are also well known. So clearly, if the message from India is that we have done what we wanted to do right now, and if you behave, then we would consider our next step very carefully, then it can work. But at this stage, I think it's impossible and meaningless to speculate on what Pakistan will do. I think let Pakistan take its own decision. We have to be ready. And it's very important today that civil defense drills are going to take place. I think every Indian needs to fully collaborate and cooperate with whatever has been planned by the authorities. We should contribute our own might to the defense of India.
Absolutely, and so right. Mr. Bhatia, we'll leave it there, sir, but it's so good to get your comments early on. As a seasoned diplomat, important to get those. Thank you very much. Now, following the strike, several airlines have announced diversion and routes avoiding Pakistan airspace. Airports in parts of northern India, including Dharamsala, Leh, Jammu, Srinagar, and Amritsar, are closed until further notice. Several flights, including Air India, Spicer, and Indigo, have issued travel advisories. We're going to take a quick break now. What we'll do is we'll come back and we'll focus on some of the other big stories as well. So the India-UK FTA and textiles in focus. We'll be back with the management of Gokuldas Exports on the other side. Stay tuned. Welcome back. Good morning. We have, of course, the India-Pakistan situation, which, of course, is top of mind. And we've been updating you, and we will continue to update you in terms of what is happening out there. But last evening, you also had the India-UK FTA, which was signed. It's been a deal which has been negotiated for over 3 years and was finally done. And I think it's a big one, which I think perhaps sets the template for other bilateral trade deals with sort of other big trading partners as well. One of the sectors which I think has been in so much focus around this in a positive way is the textile sector, the labor-intensive textile sector. Siva Ganapathy is Vice Chairman and Managing Director at Gokuldas Exports. He's now joining us. Siva, good morning. Good to have you with us here. Thank you for your time. And thank you for joining us. I know you're unwell, so good to get you on. So tell us, Siva, and I think at this point in time, we can only talk in terms of some large numbers and maybe use experience from other countries which signed similar bilateral deals. Bangladesh, for example. What is the size of the industry now? Apparels, let's stick to that. What is the potential for it to grow to post this FTA?
So if you look at, Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large, thanks to FTA, thanks to duty-free access, because of it being a low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. So we get a level playing field with Bangladesh, and currently Bangladesh itself is facing some problems related to its own internal stability. On top of it, if India gets a level playing field with Bangladesh through this FTA, there is a good likelihood that a lot more orders will get spread out between Bangladesh and India. India, if you recall, has got a historically great affinity with UK. There is a large Indian diaspora. UK understands India well. And on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India, between goods that are produced in Bangladesh as well as in China. If you see China's exports to UK, out of the 5 billion, almost 1 billion is cotton-based garments. 4 billion is MMF, which will be a bit difficult to move out of China. But that 1 billion is a huge opportunity where we will have a 12% advantage in cost over China. So it's a huge opportunity, I would say. UK is a large market too.
Right. Siva, sorry. So $1 billion incremental opportunity because of this FTA for India.
That's what that's my reckoning.
And this 1 billion is overall textiles or apparels?
Apparel. I'm talking only apparel.
Simple. Okay. That is one. And just run us through the tariffs. You said we have a 12% advantage over China. And
That's
we are
correct.
now at par with Bangladesh.
That's correct. Going forward, as and when this FTA comes into effect.
Okay. And this is based on what the tariffs, what are Bangladeshi products tariffed at by UK and what are Chinese products tariffed at by UK compared to what we are now going to be tariffed at, right?
Correct.
So at par with Bangladesh, 12% advantage to China. Got it.
Right.
All right.
Right.
Hi, Mr. Ganapathy, and thanks a lot for joining in, sir. For your company per se, Europe as a percentage of your total mix, I think it was in mid-single digits. Could you help us out with your exposure to UK? What is it? And since now we have this FTA that will give us a bit of a tailwind, for your company, where do you see the UK market go up in terms of a contribution of revenues?
So historically, we've been focused on US market, which is a very large market, and we get, we were at level playing field with other countries because, United States charges the same tariff across the globe, barring some African countries. We do have UK-based customers, and currently our revenues from UK would be of the order of about 250 crores per annum or thereabouts. So about say 5% of our revenue. I see that can go up significantly. We do have a good mix of UK-based customers. We have fairly large customers that we work with, and we do see potential to expand that relationship. In fact, some of those will pretty quickly expand as we go forward.
No, I think that is interesting. Is there any way you're one of the larger players, Siva, with a lot of capacity?
Right.
How does this help this 1 billion incremental? Any way to look at how much could your share be?
See, I think, the larger players will definitely have an advantage. It all depends on, how much capacity one can bring to bear to take advantage of this. And, I'm also hopeful that with other FTAs in the pipeline, that is with EU and hopefully with US as well, we should see a good amount of tailwind for India. But in the meanwhile, if we stick to UK, I think, those who can put up capacities will have the advantage. We have capacities coming up as we speak. We have 3 new factories in the works, and we will work towards offering those capacities to customers.
Any big numbers? Any way to talk about those?
No, these are bit early days because these FTAs will have to be ratified by the different, by both these governments. It has to be announced. The custom portals have to be changed. I think, by the time the FTA kicks in or comes into effect, it'll be anywhere between 3 months to 6 months. I'm not sure of the timeline, but it should take some time. This is a good time for us to prepare ourselves, have more dialogue with the customers. And I think we should have a good, swing up from the second half of the year, or and really see that benefit coming, in the next financial year.
All right. So from 5% of a total contribution going to the UK, or as a percentage of your business, you have capacities coming on stream. For the time being, I think it's more than 80% to the United States. How much can the UK contribute as a percentage of your business mix, sir?
I think we can double, because it's off a small base, right? So we can grow. I mean, we can grow even more than that.
All right, I've got that. Siva, in terms of profitability, is there an advantage selling to the UK compared to other regions, or not really?
So, with FTA, always it benefits, right? So if there is a 12%, duty benefit, then obviously there is some benefit that one could, seek. So that should come in. It all gets competed away at some point. So, we will have to see how that plays out.
Okay, all right. So, I know we called you with regard to what's happening with regard to this UK FTA that's progressed, but what about in the United States? If you could just brief us about how have things moved in the last month, 45 days or so. Because of these tariffs that have come in place, has there been a big slowdown? There's a lot of uncertainty, I'm sure, out there in the US markets.
Yes, there is an uncertainty. There are twin uncertainties. One is uncertainty with respect to the tariff, and the other is the uncertainty with respect to how is the US market, the consumer market, going to pan out over the next 6 months to 12 months. So there's a fear that there could be some degree of recession or a slowdown, and brands are tweaking down their inventory just in case they don't, carry the risk of excess inventory, particularly carrying excess inventory at a higher price, paying higher tariff.
So are they asking for discounts, sir? Are they asking the global retailers?
Of course they are. So they're trying to, seek support from the supply chain, and there is a dialogue going on across the supply chain for some discounts for this 90-day period. The problem is beyond that. So if, for example, if an order is placed today, by the time the order gets delivered, it will be post the 90-day tariff window. And we don't know what the tariff is going to be post the 90-day tariff window. So how do you place an order now without having any clarity on whether the tariff, the incremental tariff, the reciprocal tariff, is 10%, 26%, 30%? What is that number? And how do brands place those orders? So this is the challenge that most brands have, and they are holding back order placement till they get some clarity. So this is going to impact not only the margins because of some of the discounts that we're negotiating with them. These are early days still, and because of order placement being held in abeyance because of lack of clarity on tariff.
Sure. All right, Mr. Siva Ramakrishnan, thank you very much for joining in and giving us your perspective on what's a landmark deal for India. The UK-India FTA finally signed. Of course, great news for apparel exporters, textile and apparel. And it's not just actually apparel and textiles, leather, gems and jewelry. There's a whole range of other sectors where tariffs become zero for Indian exporters. So big news coming in. And we'll discuss the other part of this as well, which is that from the India perspective, the duties on Scotch, UK Scotch or, liquor, EU liquor, those duties will be lowered as well. So we need to watch out for how Indian giants like, say, Radico or etc., how they deal with the competition. Okay, let's take a very quick break. Come back on the markets full throttle in just a bit. Asian markets are holding up. We'll talk about some of the key stocks in focus and look at the implied open. If you can actually get the implied open up, it was pointing to a lower start earlier, but then there was a bit of a recovery as well. 88 points down. That's what we're getting. GIFT Nifty up 116. Take a break and come right back. Welcome back. So we are getting ready for a very, very significant morning, a significant open as well. And as the implied sort of Nifty just told you, the expectation is maybe a 90-point hit. Let's get in a big market voice now to get some perspective on the situation on ground. We have Prashant Khemka, founder of White Oak Capital Management, joining in. Prashant, thank you so much for being. I know you were at the Berkshire Hathaway event and you're staying up just to take this call, but it's a big moment for the market as well. What's your sense? I mean, typically in the past, when we've seen terror instances, the market kind of takes it in its stride. What should we be expecting? I'm talking about the here and now, not the longer term story, but the immediate next couple of weeks. What's the advice you'd give to investors?
No, I agree, Surbi, with your assessment that in the past, when such events have occurred, they've then, de-escalated. So assuming the most probable outcome is that the situation would de-escalate, we should not have much or any material impact or lasting impact on the markets. The event, since it's very fresh, we may have a little bit of a, down open, but who knows, might, recover during the day as well. So I don't expect this to have much of an impact unless, of course, the low probability event, which is that if this continues to flare up, then it could create some choppiness in the market.
Prashant, what we have seen is this resumption of FII buying, right? And right in the run-up to Operation Sindoor, they've been putting in the money, always anticipating that something will happen. Do you see any change in that, any change in India geopolitical risk premium? And this is actually the timing in markets, it's all about timing, right? And this is happening at a time when there's a thaw on the US-China side. I mean, they're finally going to be sitting down and talking this week. And China's announced a stimulus. So will these two simultaneous events impact flows into India?
I think, again, investors, just as we were discussing, are aware that in the past when such events have happened, nothing of big significance has materialized. So I don't think, obviously they'll also be taking the cue from the market. If the market is down very substantially, then they'll get jittery as well. But if the markets hold up as in the past they have, the investors also would assume that this is something that's not going to be any different than what it has been in the past.
Absolutely. Prashant, hi. Morning, Prashant here. Just a quick, if you may want to listen into the next conversation because the other story, apart from India-Pakistan, of course, was the India-UK FTA, and I'm sure you've got thoughts on that as well. We already spoke with a textile company, Gokuldas Exports. They said incremental $1 billion opportunity for apparels out of India to the UK. And the next one, which has been long talked about, of course, is the alcohol space. And I think we've discussed this as well earlier. Now, the FTA has been signed after 3 years of negotiations. So let's actually welcome in the management of Radico Khaitan. Abhishek Khaitan is with us, Managing Director of the company, to run us through what the implications are. Abhishek, good to have you with us here. Thank you for joining us. First cut, impact of the FTA on the sector first, and then we'll come to Radico.
First of all, I would like to congratulate our Prime Minister, Shri Modi ji, and Piyush Goyal ji for signing the UK FTA that was long awaited. And now if I talk from Radico's perspective, we welcome the FTA move because as a company, we are also one of the largest importers of bulk scotch. We would be the largest importer, and we'll be importing about close to 250 crores of bulk scotch in the current fiscal. And also we are exporting our malts to UK, etc., so which becomes much easier. So from Radico's perspective, I think it's a welcome move. The final prints are still awaited. So, but on the whole, signing of the FTA is a good move by the government.
All right, Abhishek, give us some more details then. The duties have been cut from around 150% to around 75% straight away. And then they move to around 40% over a 10-year period. So what's the impact on the bulk scotch imports?
See, as I said, the final prints are weighted. So whatever the duty cut would be the cost advantage to Radico.
Okay, got that. Can you tell us a bit more about what you're exporting to UK? You said that, of course, a lot of the premium whiskies, it'll be easier to export, but some numbers will help. What's the quantum and the value that you're exporting to UK, and what kind of a boost are you expecting?
Yeah, we export our Rampur Indian Single Malt and Jaisalmer Indian Craft Gin to the UK.
Okay, yeah. So that is where you would expect them to get a leg up. I mean, those have done very well, of course, in the Indian market itself. What are the tariffs that you have to pay as of now? And I mean, to what extent do they come down? How soon? Can you give us some more detail?
So I think proportionately that will also go down. As I said, we've not seen the blueprint, so only after we see it, we'll come to know, but definitely it'll go down.
Okay, Abhishek, now the other thing, of course, is competition, right? UK brands which already are here, I mean, the price will go down. So you have same category brands even which perhaps will cost lesser. Could you tell us how that will impact Radico?
See, if you see already the major players are in India, and in India what we've seen, the good quality brands sell. And especially when you go at the premium end, it is more of the brand image and the quality of the product plus the distribution. So I think we don't foresee so much of competition coming in because already the global players are here. And in fact, by lowering prices, you are denting your brand image. So I think water will find its own level.
All right, sir, if you could just give us an example of premium Radico whiskey and say a comparable UK premium brand. How will pricing now look?
Yeah, I'll give you a straight-away example. Like when we launched Royal Ranthambore, we priced it 100 rupees higher than any bottled in India Scotch. So we have always provided good quality brands at a premium price, even compared to the multinationals. So I think pricing, more than pricing, it is the quality of the product which will sell.
All right, Abhishek, I'm going to press you a little bit. Give us an example with pricing numbers and how will they stack up against each other?
See, first of all, it also depends like what is the kind of price discount, what the competition will do. It's too much of a hypothetical question because lowering your price definitely dents the brand image. So we do not know how the things will play out, but eventually, say as a company, for us in Radico, we are the largest importer of bulk spirits. So our cost will go down for sure. And like even if you see a single malt, Rampur, the Rampur double cask is priced at 8,500, which is higher than any of the malts. So pricing, premium, it all depends on the product aspiration. So I think I think the consumer is smart enough. And as far as the local Scotch company, if they come, they have to invest a lot in distribution, etc., which is not that easy. And all the global players are already present here.
Okay. So, Abhishek, to wrap it up, I mean, just tell us, there'll have to be some tweaks with respect to pricing strategy, right? Maybe not Rampur, that's your flagship, premium most product, but across the rest of the portfolio, what changes should consumers and your shareholders anticipate?
No, I think we do not need to change our pricing strategy at all because the prices already are established. And what will happen is only if a few companies come and try to flood the absolute, like the price point of the BII, little bit lower than that. But then those will be secondary brands. So I think there has been many secondary brands which have come from there, but to have the right kind of marketing, distribution, etc. I think it's too soon to comment on that.
Okay, all right, Abhishek, thank you very much. Sorry, Nigel. But it's interesting.
Yeah.
I think what Abhishek is saying that he does not see too much of a impact at all for the alcohol industry. I must point out, though, Shireen yesterday evening spoke to the Alcohol Industry Association head of Anant, but he was complaining in a very loud and significant way that this is really bad for the industry. So I think for Radico, there is this bulk Scotch they import to blend with their own stuff. And I think there is significant cost saving there. And of course, for United Spirits, I think Mangalam will talk about this more in top 10. I think they import stuff in any case, so they are beneficiaries.
They're also beneficiaries.
But for other unorganized players, etc., maybe smaller brands who don't have this bulk Scotch import, maybe at the margin it perhaps is a little negative. We take a quick commercial break here. Let's get in Mangalam and others who are standing by on the top 10 stocks in just a bit. Stay with us.
Welcome back. You're tuned into Bazar Morning Call. As promised, let's get to the top stocks that we're going to be tracking for you today. CNBC-TV18's top 10 stocks come up for you on the screen, and our researchers are joining in. Manglam joins in first up to tell us about Godrej Consumer. Manglam?
Well, for Godrej Consumer, it was a largely in-line set of numbers because the company had prepped the street with its fourth quarter update itself, though there were a few positives there as well. What's good? Volume growth at 6%. The street was working with a number of 4 to 5%. The EBITDA came in at 760 crores. The street was working with a number of 730 crores. So to that extent, even the margins were slightly better than expectations. The India business revenue growth came in at 7.5%. The Africa revenue as well grew about 16.5%, so that's a positive. What's not so good, the revenue by itself as at around 3578 crores is slightly below street expectations, and as is the net profit because of an exceptional loss of 31 crores, and the overall revenue was lower largely because of Indonesia revenue being 1.2% and Latin America sales being 12% lower on account of currency depreciation. The company said demand conditions impacted by headwinds in urban consumption, but there are a few bright spots. Palm oil prices are off highs, and they are doing good volumes in household insecticides as well as home care. So the strategic outlook for FY26 extremely crucial. See the stock mild green today.
All right, got that, Manglam. Thanks very much. Let's talk about some oil and gas names, HPCL and Mahanagar Gas. Sudarshan, tell us more.
Morning, Surbhi. So it's green for both MGL and HPCL. For HPCL, like other oil marketing companies, HPCL too has reported earnings for Q4 that is much better than estimates. Both refining and marketing segment have reported earnings that were up sequentially as well as year-on-year, and EBITDA was supported by lower operating expenses and higher marketing inventory gains, and because of that you are seeing EBITDA that has come in at around 5,244 crore against expectation of 4,822 crore, and margin too has improved. It has come at 4.8% against our expectation of around 4.4%, and strong segment, that refining for HPCL, has helped company report gross refining margin of $8.40 per barrel against our expectation of $5.46. Now coming to MGL, recent price hike that company has taken, it has helped company to report improvement in the margin. Talking about the headline numbers, revenue was up 6%. It has come at rupees 1,865 crore against our expectation of 1,784 crore. EBITDA has improved by 21%. Margin has improved and has come in at 20.3% against our expectation of 18%. And because of the price hike, you are seeing an improvement in EBITDA per SCM, which was up 20% sequentially against expectation of 5% growth. And because of that, EBITDA per SCM has come in rupees 10 versus 8.30 that company had reported last quarter.
All right, Sudarshan, very helpful. Thank you very much for that. Let's now get to a couple of more names. Radico Khaitan, of course, we spoke with them just now with regards to the India-UK FTA, but numbers also came through, and then there is Kansai Nerolac. Magalam, take it away.
Well, we start with Radico Khaitan. Incredible numbers coming in. 21% growth in their revenue. The EBITDA has actually grown by 45%, taking the margins all the way up to 13.5% from 11.5% itself. And on the back of that, the net profit has surged 71% at around 92 crores. Overall volumes are up 28%. Prestige and above, that's premium products, volumes are up 17%. And the regular volumes were boosted by, the change in Andhra Pradesh. So as a result of which, there was a big jump. The debt also reduced year on year, so that's a positive. Add to that, we have the tailwind coming in from the UK-India free trade agreement. See Radico Khaitan in bright green today, but not so much for Kansai Nerolac. Why do I say that? Because, the revenues grew just about 1.5% on the back of volatile input prices and volatile forex. The EBITDA margin came down by about 90 basis points, and the net profit declined by about 10% as well. The company said that they are looking at tight liquidity and lower spending in the category, but there is gradual recovery in decorative. Automotive is doing well for them, but raw material as well as forex continue to remain volatile. See some red on Kansai Nerolac.
Okay. All right, Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about Paytm and Piramal Enterprises. Abhishek?
Paytm, the numbers were below analyst estimates. Revenue came in at 1,911.5 crores versus a Motilal Oswal estimate of 2,100 crores. Now, they reported a net loss of about 545 crores versus Motilal Oswal estimate of about 110 crores. And this loss was higher due to one of the exceptional items in the P&L. The contribution profit that soared up by 11.7% on a sequential basis. The GMV that that has slowed down. The growth rate over there is just 1.2% on a sequential basis. Total transaction is up 16.5% YOY and close to 7% sequentially. Piramal Enterprise, strong disbursements growth over there, 16.65% sequential growth in disbursements is seen over there. AUM growth remains steady at 17.2% YOY and more than 10.5% sequentially. However, the PNL was weak, so the NI growth was just 2.7% quarter on quarter, which suggested that the net interest margin might have been under pressure on a sequential basis. The PAT has come in at 102.4 crore. However, that is on account of the fact that they have used AIF provisions which got released into the PNL worth about 370 crores. Asset quality largely stable. Gross NPA ratio at 2.84% versus 2.85% in the previous quarter. Back to you.
Okay, all right, got it. Abhishek, thank you very much for that. Let's talk about KEI Industries, and it's a hat-trick of good earnings. RR Cable, yesterday we got one more, and today it's KEI. Yesterday was Polycab. Upasana, take it away.
Certainly, Surbhi. Well, good morning. Starting up with KEI. Well, company has reported good set of numbers. The revenue growth was much higher than the estimates. Now, this was because of the company's key segment, that is cables and wire, which reported a strong growth of 34%, and it outperforms its peers such as RR Cable, Havells, Polycab that have reported their numbers in Q4, and also much higher than the street estimates of 18% growth is what they were working with. Now, EBITDA and EBITDA margin was largely in line, but PAT was slightly higher than the estimates. Now, talking about FY25 revenue growth, it stood at 20%, which was slightly higher than the guidance given by the company, that was around 17 to 18% in FY25. Now, coming to Q4 numbers, the revenue growth stood at 33%, which was mainly driven by company's cables and wires segment, which the revenue growth was quite high at 34%, and margins also largely stood stable at 11%. Now, this growth in cables and wires was mainly driven by low tension, high tension cables and even house wires. Now, coming to overall EBITDA, it saw an uptick of 18%, margin saw a downtick of 60 basis points at 10.3%, and PAT saw an uptick of 35%. And lastly, coming to gross profit, it fell by 130 basis points to 23.7%. This is likely due to lag in the passing of commodity prices. So all in all, strong set of numbers from KEI Industries.
Absolutely. Thank you very much for that. The other one, of course, is BSC, which reported numbers. By the way, NSE also reported numbers yesterday. Vamakshi is here with details on BSC, the listed one. Vamakshi, over to you.
Well, absolutely, Prashant. Good morning. BSC reported a strong set of numbers, while the performance from NSE was rather weak. But let's focus on BSC then. BSC reported a revenue growth of almost 10% sequentially. Revenue came in at 847 crores. It's 10% higher than the consensus estimates, and this growth is largely being driven by the transaction charges, which were up nearly 20%, and other operating income, which was up nearly 12%. On the flip side, treasury income declined by nearly 9%, and services to corporates took a knock of almost 17%. The EBITDA margin saw a sequential improvement of around 58 basis points. The EBITDA margin now stands at 57.2%. It's, however, lower than what the street was penciling in. Now, this time around, there was a SGF reversal of almost 109 crores as compared to an SGF contribution that the company made in this previous quarter. And given that, there has been a net profit of almost 493 crores. This is an uptick of almost 125% sequentially, largely driven by the SGF reversal. The operational metrics, the average daily notional turnover saw a dip of almost 35% sequentially, but the daily premium turnover, on the other hand, saw an uptick of almost 35%. Overall, when we look at the numbers, it's a beat, going with the green for BSC.
Right, and the market share in index options as well, going up to around 20%. And now with the recent changes, they're hoping to make some inroads into the cash market segment as well. We'll keep an eye out on that one. Valuations not very cheap, but going with green on that one. Let's hop across to Ria. She's here to tell us about Prestige Estates. Ria?
Well, Prestige Estates will definitely be in focus today. They've achieved rupees 3,000 crores of sales for their project in Indirapuram. Remember, this was the first launch of the company in the NCR region, and this is within a week of its launch. The first phase GDV for this project is over rupees 9,000 crores, and after the second phase will be launched, the total GDV for the project is expected to cross rupees 12,000 crores. Now, remember, after the company had announced the launch of this project, Morgan Stanley had upgraded the stock to an equal weight rating with a target price of rupees 1,370. CLSA had also maintained its outperform rating on the stock with a target price of rupees 2,380, saying that they believe that the company can sell around 60 to 70% of this project in NCR in FY26 itself. Today, after this announcement, the management has said that they have significant launches planned across the country in Bangalore, Chennai, NCR, Mumbai and Hyderabad as well. So positive triggers for the stock, and we're expecting it to open in the green today.
All right, Riya, thanks very much for that. Quickly recapping our list of stocks to watch. We're looking at Godrej Consumer, Radico Khaitan, HPCL, MGL, KEI Industries, BSC and Prestige Estates on the back of positive news flows on the green side. Kansai Nerolac, Paytm and Piramal Enterprises are stocks that could open in the red because of some negative news flow around them. Take a very quick break. We'll come back on the other side. We'll, of course, discuss some stock developments with Siddharth Khemka and also get you the latest on ground in terms of the security drill and other defense-related developments. Welcome back. Well, we'll start getting some of the market cues and reactions in about 5 minutes. We'll see what the pre-open is indicating. Because till now, what the anticipation is that we'll probably start about 80 points lower as the market digests the overnight developments. We have our colleague Parikshit now joining, and there we go. Okay, the implied open has actually reduced that cut. It was about 88 20 minutes ago, and now it's about a 60-point drop. That's the implied open. We have Parikshit joining in. Parikshit, what a night. But lots happening on ground today. There are the defense safety drills that are ongoing. I believe there's an army briefing as well. Just run us through what we can expect over the next couple of hours, perhaps.
Well, it seems that India was planning for this over the last few days. Just yesterday, a notice to airmen was issued about restrictions on airspace use in areas in Rajasthan and along the western border with Pakistan. So all these airports will see restricted operations because the Indian Air Force is carrying out high-intensity drills on the 7th and 8th of May. Having said that, we are also looking at mock drills all around the country. And this is happening because India is testing its civil defense preparedness for the first time since 1971. And we're looking at drills whereby air raid sirens will go off, civilian control rooms will be tested, civil defense teams will be assessed for their ability to communicate via hotlines with the Indian Air Force as well. We're looking at training for students and civilians in different parts of the country, what should happen in case there is a need for evacuation, where to take shelter. So all these training mechanisms will be done to make people aware of national security needs during this hour. Why is this all being done? The Indian Army and the Indian government statement on the retaliatory strike was very clear. We have carried out a non-escalatory strike on Pakistani terror groups only. There were 9 targeted strikes, and this was not to attack any economic installation, vital installation, army or civilian installation in Pakistan, but only terror gangs which have been perpetrating violence against India and were involved in the Pahalgam attack. So our response has been very measured, and that's the likely tone that the Indian forces and the Ministry of External Affairs will take in that press conference at 10 a.m. this morning. But at the same time, when you carry out a strike of this magnitude, which is bigger than Balakot, what it means is that there could be an escalation and Pakistan may try and take things a few notches higher. So one cannot rule out the possibility of a wider escalation. And that's why these civil defense mock drills are taking place all across the country at different timings. So this will take place at schools, this will take place in civilian areas, near certain religious places as well. So it's pretty comprehensive, and this is not the last of it. We're possibly going to see more such mock drills over the next few weeks, and India is going to continue taking measures to economically and diplomatically isolate Pakistan as well.
All right, Parikshit, thank you so much for that. And might I add, the color that you and I are both in today, I don't know if it's a coincidence or not, but it's the color of Sindoor. So in solidarity, we stand. Thank you so much for the update. Nigel?
Well, that's right. Let's move on then. Let's talk about a couple of stocks. As promised, I think we have Sid Kemka who joins us on the show. Hi, Sid. Good morning and good to see you win. Well, let's focus on a couple of stocks. The India-UK FTA, well, that's moved forward. And that'll be good news for a couple of alcohol players, namely United Spirits, because it'll help on volumes. Margins, it may not help, but volumes could move up from here on. So we'll have to see how that goes about. So your view on that. And also we had Gokul Das who joined us earlier today. They said there's $1 billion opportunity for Indian makers, to pull some share from China as well as Bangladesh. How do you approach both these two sectors?
Definitely. Good morning, Nigel. So good to see you. I think that's a big positive news. After many years of negotiation, finally India has managed to get the free trade agreement done with UK. And looking to increase the trade over the next few years. So I think one of the biggest sector which will benefit definitely is the alcohol beverage segment. The reduction of import duty from about 150% to 75%, we believe should lead to about a 7.5% benefit at a consumer level. What we see is that customs duty is roughly around 15% of the current MRPs. And we believe that mostly these companies should be passing on these benefit to the consumers, making these premium brands and the Scotch whiskies making more affordable and to gain market share. So definitely, I think in that space, United Spirits is the largest player. There we could see a sharp growth or a good growth and market share gain in the premium segment where your margins are much better. So overall volume and value growth through enhanced accessibility of premium products, improved cost economics, both for the import of some of these raw materials plus the finished goods. So overall, I think that is pretty positive. Overall, for United Spirits, also we believe that the consumer trends in upgrading and the increased frequency that is driving good growth, and United Spirits is well positioned to capitalize on this large opportunity of the alcohol beverage industry in India and as an overall. So we expect margins to remain healthy and sustain in the range of 17.5%, and see that United Spirits could be a big beneficiary of this UK free trade agreement.
Siddharth, hi, morning. Wires and cables. electrified this season, right? All the stocks have done well. Everybody's come out with good numbers. And KEI, I think the growth rates are higher than even the others. Polycab and RR Cable. Do you like any of the stocks?
Yeah, morning, Surbi. I think yes, you can say a hat-trick in the sense after RR Cable, strong numbers and pretty strong commentary. Polycab followed through and then KEI. So we like the space. We believe that post the correction after the news flows of both Birla Group entering into the phase. Adani Group did a joint venture, but the details are not yet out of what the plans are, how much and when the plants would be. So to that extent, I think the completion is still 12-18 months away. Until that time, we see strong growth recovery in this space. RR Cable is something which is which has given out strong outlook in terms of 18-20% growth in the cables and wire segment, 25% growth in the FMEG segment. I think that is something that could be the outperformer going from here. Valuations are pretty comfortable, or you can say among the three, RR Cable is the cheapest in terms of valuation at about 30 times compared to about 35 to 38 times for Polycab and KEI. Polycab is something that we continue to like, is a market leader, has the most diversified product profile. And now with KEI also giving out with strong numbers, I think the space should do well. But what we like, A, Polycab because of its market leadership, and B, I think RR Cable because of its comfortable valuation.
All right. Sid, stay with us. We'll keep coming back to you. By the way, you saw the GIFT Nifty, the pre-open session changes coming up. But those are very initial rates, and it usually takes at least 5 minutes for things to start to settle down a little bit. And I think they already are. I saw 350 points lower. It's down about 200 now. Now, let's get back to the big story, right? This is Operation Sindoor. Several airlines have announced diversion and routes avoiding Pakistani airspace. My colleague Shireen is joining us from Delhi. Shireen, good morning.
Morning, Prashant. Well, of course, you know, a lot of this is in developing stages at this point in time. But what we do know, and it is important to put perspective on this because several developments have actually taken place. There is Operation Sindoor, which is the operation that happened overnight. But even prior to that, there was a note to aviation companies, to airlines, to airport infrastructure in relation to the drills that are going to be underway over today and tomorrow. And of course, there are also Air Force exercises and the Air Force had also put out a statement. So all of that must also be seen in conjunction with the developments that have happened overnight. So what it essentially means is that there will, as a first order impact, there will be disruptions as far as airline travel is concerned. So you've already started to see airlines put out on their websites, on their social media handles about disruptions, about delays and so on and so forth. So be prepared for that. Now, in terms of airport infrastructure, airports like Srinagar, Amritsar, Dharamshala, Leh, these at this point in time are shut for any civilian purposes, and that is the information that we're getting. Of course, we are expecting the Aviation Ministry to put out an update shortly. Perhaps there will be an interaction as well that will give us clarity on what this also means. Because remember, Pakistan had already shut its airspace. So what you had started to see was that Indian airlines like Air India, Indigo, etc. were no longer flying over Pakistan airspace. But what we had also started to see over the last 48 hours was that even European carriers like Lufthansa, Swiss, even the Middle East carriers were then avoiding Pakistan airspace, which had meant longer air travel. But with this escalation that's happened overnight, what this is going to mean, in terms of flight and travel plans is going to be a question. We've started to see advisories come in. UK has issued an advisory cautioning people about travel. So we will perhaps start to see that play itself out as well. But outside of travel, crucial meetings to watch out for. There is going to be a cabinet meeting in a short while from now. There is going to be a Cabinet Committee of Security meeting as well. So we will perhaps get more appropriate response in terms of what we should expect as the next steps. Meanwhile, the Pakistan side is also issuing statements. Of course, we must clarify unequivocally. This is information that the government of India has put out, as well as the Ministry of Defense has very clearly refuted, calling the Pakistan claims of shooting down Indian Air Force planes as false, as fabricated, as fake. So that is very important. In fact, we've seen Pakistan government officials and ministers going on the air and repeating that claim. So it's important to note that that is being rubbished by the Indian defense establishment as well as by the Indian government. There is, as you can see on your screens, a fact check that's been put out. So it's important to clarify that. But today is also the day that we will see those civil preparedness drills across the country. And of course, our colleagues are going to be targeting that. And that is going to be an important aspect of the Indian response. Important to also highlight, and this is something that the former Army Chief General Malik told us here on CNBC-TV18, that while whatever happens at the borders happens, what we must also be mindful of are cyber attacks, and specifically cyber attacks on critical installations in India, on business houses and so on and so forth. And so we are in touch with the government to try and understand what is happening on that front, because that is going to be an equally important aspect as part of the current operation that's underway. So far, we're still awaiting a response on whether we've seen an escalation as far as cyber attacks and cyber threat is concerned from Pakistan. Reactions already coming in from the US. You've seen President Trump react to this in the Oval Office. You've also seen Secretary Rubio saying that he's been in dialogue with both sides, India and Pakistan, and they're hoping that this matter ends quickly, in the words of President Trump. We've seen other governments react as well. Israel coming out very strongly in support of India. The Chinese have issued a statement just a few moments ago asking for restraint. Also important to note that there is going to be a very crucial meeting of the IMF. The IMF meets on the 9th to take stock of the bailout package for Pakistan. So that's going to be another very crucial meeting to watch out for. But a lot of moving pieces at this point in time, but there are crucial meetings lined up, and of course there are these drills that are going to be underway across the country, and we'll keep you posted on all of that.
Absolutely. Very, very helpful context, Shireen, and we'll keep coming back to you as developments play out and sort of news keeps coming in. So important to track. I think we come to the end of the pre-open session. Maybe we could just take a quick look at what's happening on the Nifty before we get in Mitesh and Sudarshan with what they'd want you to do in terms of trading action. 150 lower is 0.6% down on the Nifty is what we have. By the way, while our markets will start to trade, this news flow is at least a few hours old, more than a few hours old. Global markets and Asian markets, etc., have all been trading. And if you look at Asia and what's happening there, I mean, markets have not even blipped at all, any of the regional markets, nearby markets. And if that is any indication of, at least expectations, I mean, I think the expectations very clearly, even before the strikes, has been that it'll be a measured, calibrated response, and that's it. And I think that continues to be the case. And the strikes themselves, the language which our forces and the Defense Ministry used to describe the strikes was exactly that, which is not targeting civilians and, of course, military targets and terrorist infrastructure, etc. So that is something important to point out. Sudarshan and Mitesh are with us with what they'd want you to do in terms of trades. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. What would you like viewers to do?
I think, the failure of the Nifty to get past 24,500 means that we are back into some kind of range, and 24,250 is the midway pivot. But I think we might even end up testing the lower end of the range, which is around 24,000. In the worst case, 23,850. So I think we'll try to look at reversal patterns on the hourly, half-hourly charts over there. And that will be the zone if we get closer to 24,000, when we'll start fishing for long opportunities.
Okay, fair enough. Sudarshan, what about you? What would your framework be?
Well, see, markets hate uncertainty. That uncertainty is now behind us. Today is a buying day. What it means is that we have been talking about buying on a dip, where we are getting a dip, and the only point is a question of tactics. Wait for a little while, let the market stabilize and go long. Just be on the long side of the market and buy.
All right, got that. Gentlemen, let's also boil it down to some stock strategies. Sudarshan, morning. What would you go with?
Yeah, good morning. Well, I would go and buy Bajaj Finserv, stop under 1988. Balkrishna Industries is a buy with a stop under 2668. Biocon is also a buying opportunity with a stop under 334. My only intraday short is CAMS, which has a stop above 3678. But broadly, I'm using this dip to go long.
Okay, got that. Using the dip to go long and a couple of stocks that were mentioned by Sudarshan. Mitesh, coming across to you, what are the stock specifics you're looking at?
I have a mix of buy and sell calls. For me, Biocon is also a buy. Sudarshan also mentioned that. Look for targets of 355 and a stop below 335. HUL is a buy with a stop at 2360 or just below it for a target of around 2430. And on the selling side is Coal India with a stop at 384 for targets of 365, and ABB sell with a stop just above 5400 for targets of 5200.
Okay. All right, gentlemen, thanks very much. We'll come back to you, for some more advice a little later. Pre-open has settled. We have about 3 minutes to go for the actual rates to kick in. 146 lower is what the Nifty is right now indicating, which is a little more than the implied open. Let's see how this plays out. The Bank Nifty is down about 0.5% at this point, and the mid-cap index, like yesterday, is seeing a slightly broader decline. So perhaps a little more cautiousness in the broader market. I'm just looking out for some of the stocks in this, India-UK FTA deal, the companies that stand to benefit. So look at Gokuldas, 6%, United Spirits, 2.5%, and even Radico, for that matter. Some of these stocks are showing a little bit of green, though otherwise it's a quiet start. BSC, the other one, even Sula for that matter. So some of these Alcobev stocks and textile stocks are positive.
Gokuldas, we should just look at it. Did we pull it up?
Yeah, 6%.
6%
up in the pre-open.
Okay. $50. And United Spirits and Radico, the other names which should be mentioned, maybe just quickly put those up as well.
And if you can get KEI as well, maybe.
Yeah.
KEI Industries, good set of results for the fourth quarter. And the expectation is it will have a positive start, flat actually on KEI at this point.
Yeah. Let's just look at the two other names which reported during closing the last hour yesterday. Bank of Baroda, shares were down 10%, smashed. And there was asset quality pressure. NIMs were under pressure, nothing on it for now. And CG Power was a disappointment. CG was a bit of a surprise. And we'll have these come up as well. CG is down about 3.5% or so this morning after yesterday's near 6% odd slide. I think we have Pankaj Tibrewal, founder and chief investment officer at Ikigai Asset Managers, now joining us. So let me welcome him in. Pankaj, good to have you with us here. Quick thoughts before market open. So got about 90 seconds. What are your first thoughts, reactions to the strike, and what does it mean for markets from here on?
So Prashant, we all expect it to be a measured and a calibrated strike. And over the last decade, we had two instances in a smaller manner like this. One was the Uri, and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%. So actually, towards the end of Kargil war, actually markets did well. So we have to see how it escalates. Initial knee-jerk reaction could be negative, but I think it will be a great opportunity to increase your equity exposure, and we'll discuss what are the 5-6 reasons which are making us positive from a medium to slightly longer term outlook on Indian equities.
All right, Pankaj, we're going to hear in from you on those important sectors that you're looking at. For the time being, I think we need to go to market opening, which is indicating we start off with a cut of around 150 points, and there are just 190 stocks that are advancing as of now.
It can change pretty quickly given how developments and indications start to come in on the sort of India-Pakistan story. Well, what do we have? 100-point lower is actually already starting to come off from where we started. So about 0.4% down, 24,277 is where we're at. You've got the Bank Nifty, which is down about 0.2%, 54,180. The mid-cap index is starting about a 0.25% lower, and I think the small-cap index will come up on your screen. I'll give you a quick sense of how we are starting. 0.5% down, 16,120 on the small-cap index. 10:1 in favor of declines is what you have on the overall NSE board. And of course, as expected, about 38, 39 stocks are lower and 10, 11 stocks are higher. So sharp recovery at play. So from being down a half, we are down about 0.15%. So barely anything at all. And this is what I'm saying. It'll move very fast if the market starts to get a whiff that what has happened, that's it, and nothing more. So 24,350 on the index.
You know, it takes me back to the that dreadful day, 26/11, the Mumbai terror attacks. I remember even on that day, even with the uncertainty, the market has a mind of its own, and it decided to close higher. Anyway, now it is financials that are leading this recovery. So let's look at the upside first. Hindalco, Shriram Finance, Geo Finance, SBI Life, so Axis Bank, cutting across the board. Most of these names are on the upside for the time being. Tata Motors up about 2% as well. There's BEL, which is seeing some buying. Hindalco on the upside as well. So these are some of the gainers on the upside. Coal India, Apollo Hospitals, these are the names on the upside. Largely, it's all about the banks. Let's see the downside, because the Nifty is still lower, about 20 points. So Asian Paints, HUL, Lever, FMCG names are on the lower side. IT is a bit lower as well. HCL Tech, TCS as well. Slightly lower. Maruti, Ultratech Cement, Adani Ports, Infosys. These are some of the other stocks. So the early trends are that financials are trying to fight on the upside, and it's tech and FMCG, which is slightly lower. But look at the mid-caps, Nigel. I mean, that index started lower, already bounced back, and now it's notching a gain of 0.5%.
Well, in terms of top gainers today, look at the BSE. You know, valuation-wise, that stock is not cheap. They have market share in index options has gone to 20%. The street loves that. Valuation is not cheap, mind you, but the street likes those numbers that they have given. And that's why that stock, after having such a big run, it's up close to around 6% as we speak. So big one, a big positive reaction out there. Aarti Drugs, that's the other one that delivered a fairly good set of numbers. So that stock as well is bursting away. And take a look at Paytm. From the lows of the day, what a beautiful bump up we have seen on that stock. It's recovered close to around 5% from the day's low. It started off with a cut of close to around % or thereabouts. Tata Motors, that could be one of the potential gainers from this India-UK FTA. And that's why, in fact, that stock is bounced back. It's up close to around 3%. Then the sector that's really in focus is because of that commentary we got in from Gokul Das. They said that currently India exports to the UK is close to around $1 billion. And there's probably another $1 billion of opportunity out there. So Gokul Das is higher, but take a look at a couple of these other names. SP Apparels, that's up close to around 7-8% or thereabouts. You have Indocount as well that's joining in the gains. And KPR Mills, the other one in there, that's bursting away as we speak. So plenty of winners out there. And just as we do this market check in the first 2 minutes of trade, the Indian markets, it appears for the time being, we're looking ahead. The uncertainty is behind. The Nifty is on the verge of moving into the green. The Nifty Bank has recovered 500 points from the low point of the day. And from 190 stocks that were advancing, currently you have 690 stocks that are advancing. Things are still very, very fluid. But for the time being, I think the street was waiting by, for this geopolitical risk to settle down. And it appears, at least as of now, we're looking ahead.
No, absolutely. And I think market in the green now. So 24,384 is where the Nifty finds itself at. This is not, I mean, markets are collective wisdom. And the expectation is that, what's happened, there is no escalation is really priced in that sense. And that the fact is that this is it, and let's sort of move ahead. And actually, it has been, as we've been pointing out, the local crowd, the HNI crowd, who in a way earned their stripes. I mean, the last big call that bunch made is collectively was, that $1 billion they bought during the 4th of June, the election day low. And that turned out to be correct. And they've been sitting on the sidelines expecting something. Now that something has happened, we've struck terrorist strikes across the border. And now we move on. I think that's broadly the expectation as things stand right now. Nothing very much on the wicks as well. So it's kind of flattish to even slightly in the green on the Nifty. Surabhi.
Yeah, no, absolutely. And I think that, like you're saying, Prashant, collective wisdom, because these are precise strikes. They're at terror facilities. It cannot be denied. It's backed by evidence. So easier to perhaps convince the international community as well, if need be, on the need, the mode, and the targets themselves. And perhaps that's why there's hope that this will not escalate. Just one or two more stocks. Prashant was talking about CG Power, which reacted quite negatively yesterday after numbers. That's recovering. Financials are in general doing very well. Look at Chola Investments, look at Muthoot Finance, look at Aditya Birla Capital. There's a wide move beyond the blue chip banks today on the financial side. KI Industry started lower, but it's recovered. It's moved higher. And then I go back to financials, Piramal Enterprises, Poonawalla Finance. So it's a big move across NBFCs today.
Well, that's right. Also pull up Welspun Corp. They won another order, earlier, I think an hour or so ago, it came up on the exchanges. So that stock is well in focus because now the order book has ballooned up to around 20,000 crores or thereabouts. So that's why that one, from starting off in the red, Initially, in fact, now that one has moved into the green. Let's get in Nilesh Shah, though, founder and CIO at Envision Capital, who joins us on the show. Hi, Nilesh. Good morning, and thanks a lot for joining in. Well, for the time being, just looking at the screen, it appears the street wants to look ahead. The geopolitical risk for the time being appears, that's settled down. And now the uncertainty is behind us. Would that be the way you're looking at the markets from here on? We get back to looking at fundamentals. Trump's tariffs have been digested. And now, in fact, maybe part of the geopolitical risk as well is behind us.
Absolutely. Clearly, the geopolitical risk is behind us. The uncertainty has probably come to an end. Though there'll still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us. And markets are going to be back focusing on fundamentals, earnings. India macros have never been as good as they are today versus what they have been over the last maybe couple of years or so. So I think on the whole, uncertainty is behind us. Macros are getting better, and fundamental earnings kind of continuing to be very, very stable. So I think on the whole, continue to be very, very positive.
Nilesh, hi, good morning. Let's just talk about the India-UK FTA and any portfolio companies for you which get a leg up, bump up.
Absolutely. The Alcobev space clearly benefits from this FTA with the United Kingdom. At one level, United Spirits, which we own, clearly is going to be able to import at a lower price. And therefore, that should basically drive a bit of its margins. But more importantly, local players who have in the high-end segment where premiumization has been a kind of a theme or a growth driver for them. Companies like Radico Khaitan, which we own, they will basically also benefit as they will get to import basically the Scotch at a much lower price. So that will also improve their margins. And I think they just announced their results yesterday, where they basically announced a very strong double-digit revenue growth and margin expansion. So I think alcoholic beverages is a space which anyway I think has been on a very, very strong footing with domestic demand and premiumization. I think it stands to very clearly benefit with this free trade agreement with the UK.
Okay. By the way, just looking at some of the updates our colleagues have been sending in. So while the strikes are done, we need to see what's happening along the line of control. And there, the reports on civilian casualties, heavy shelling, all of them are still coming in. Nilesh, hi, morning. Good to be getting perspective from you today. So from the market standpoint, how should we be reading? Because the mix is getting only thicker and thicker. There's local geopolitics. We need to see what the Fed does tonight. Chances are they'll do nothing. They'll remain, steady on rates. And there is this potential trade thaw between China and India. So would you expect the market to significantly move higher from here in the coming weeks and months? Or do you expect more consolidation after the April rebound?
Well, there could be some consolidation, given that we've had strong up moves in March and April, especially from the lows of February and early March. So clearly there could be some consolidation, as undoubtedly there is a lot of noise in terms of what's happening globally. So that's something which could ensure that the markets will have probably some up moves and maybe some kind of down moves as well. But on the whole, after this up move, expect it to be basically now range bound. Maybe a couple of months from here could be time zone of consolidation. And as corporate India stands to kind of benefit from lower crude oil prices, lower interest rates, I think all of that will begin to kind of get reflected in their margins. In addition to that, the rural economy has been buoyant. Urban is expected to bounce back with lower interest rates. A couple of important developments which happened in April around manufacturing, where the demand for jobs under Manrega actually declined after 6 months, and manufacturing activities at a 10-month high. These all augur well and point to essentially the times ahead. So yes, there would be consolidation, which I believe would be healthy from a medium to long-term direction of the markets.
Okay, absolutely. We, of course, have Pankaj as well, who's been waiting by while we were reading all the rates. So thanks to both of you. Very important morning, and we need the right perspective. So Pankaj, going back to this, and okay, let me get down to defense. I'm not saying it's linked to today's developments, but in general, when we talk about the rebound through April, defense has been the best performing sector. I was looking at the Nifty Defense Index. It's up about 11%. Now, I don't know how much was sentiment in this anticipation, how much is reality. Orders are coming in. Operational performance has been looking good. Pankaj, would you play that space? If yes, how?
Surabhi, yes, I think defense has been a strong performing space, not only because of the Indian geopolitical situation, but what is going around the world. And it's very surprising that till few years back, India was the net importer, and nobody ever visualized that India will also start exporting defense equipments. And if you look at some of the companies in the private sector, they received the order from the government later on, but their export order book was quite healthy, which means that India can, over a period of time, become an export hub in many of the defense equipments and ammunitions. So yes, clearly you have to be very stock specific, but be very mindful of the fact that in many defense companies, the regulator, the customer is only one, which is government. And there the business risk is always high. So you need to buy at a reasonable valuation, make sure that you don't overpay for some of those while getting flowed in the narratives.
Pankaj, another space you've liked is auto ancillaries, right? And you've liked it for local reasons and auto ancillaries for non-auto reasons. But there's also this leg up to those players, understandably, because of the India-UK FTA. Of course, one will have to be selective in terms of who sells there, etc. Any thoughts there, Pankaj?
So, Prashant, our thought is that there are many auto anchors in India which are pivoting themselves from pure auto anchors to non-auto also. And recently, we happened to visit few of those companies in the month of Feb and March. And what we were surprised on the shop floor to see many global customers around it. And when you speak to those global customers, and these are large multinational companies, they say that you had a vendor base out there in Europe, some in China, and their longevity is in question. And we want to have a couple of suppliers, whether it be aerospace, defense, or semiconductors from India who are good in precision engineering. And many of these companies are very good in metallurgy, very good in cost competitiveness and quality benchmarking. So we believe that over the next 3 to 5 years, many companies will pivot from pure being auto ancillaries to non because their precision engineering is quite good. And we are quite positive on few of them. Their non-auto component may be 5-10%, but over the next 3 to 5 years, we believe that that component could move to 30 to 40%. And hence the cyclicality of the auto would be a little bit arrested. So I think that's the way we are looking at few of the auto anchors in India, which will have the opportunity to participate in the industrial part of growth.
No, absolutely. Pankaj, well explained. Let me actually welcome in someone who you know very well, your ex-colleague, ex-boss. Nilesh Shah is with us, Managing Director at Kotak Mahindra AMC. Nilesh bhai, good morning. Good to have you with us here. We are speaking with Pankaj Tibrewal, and we have Nilesh Shah of Envision with us as well. What is your sense, Nilesh bhai, on the strikes and whether just looking at the market, the collective wisdom seems to suggest that expectation is this is it. It's been done responsibly. The statement from our side is that it's calibrated, aimed at military and terrorist infrastructure. Would you go with it, that no escalation and this is it?
So as a patriotic Indian, undoubtedly, Pakistan deserved a harsh response. And at least this is a beginning. From a market point of view, clearly the global support is with India. I believe in one of the news briefing, US has warned Pakistan, don't even think of retaliation. So hopefully Pakistan will realize that they should not escalate with a bigger country like India, which is far, far superior to them. The market obviously is right now looking at UK FTA. It's a deal which is truly amazing. It will open up many of our companies to cater to UK market. Normally the reaction post a conflict will be negative for the market, but I think the positive opening is obviously driven, one, by the fact that we believe this conflict will be limited. There will be no escalation from Pakistan's side. And second, the UK FTA deal is truly remarkable for Indian economy.
So, Nilesh, good morning and great to have you on. The market seems to be marching ahead. What's the sense? I mean, then we get back to asking more basic questions. Let's just for a second, expect or hope or assume or pray that this is contained. We've done what we had to do, and then now there is no major escalation. Then we go back to asking the more regular questions about valuations and earnings, Nilesh. We're also coming to the fag end of the earnings season. From that lens, how does the market look now?
The earnings season, surprisingly, has been quite okay. So far, about 100-odd plus companies have come out with results. And it is little above expectation from a collective point of view. Now, normally, good results come first, bad results come later, so things can change. But so far, the earnings season is ahead of expectation. We should be ending Nifty 50 anywhere between 1,050 to 1,060 for FY25. The second thing, many a times on CNBC studio, I have mentioned, "Subah ka bhula, sham ko ghar laut aayega." This was in the context of foreign portfolio investors who were selling India between October 24 to March 25. They have started...
Nilesh, sorry, Nilesh, you always put it so beautifully. Subah ka bhula, sham ko ghar to aaya. But abhi wo wapas jayega kya? Given the geopolitical issues and the fact that there is a China-US trade deal perhaps in the works finally. Could that be a risk?
Subah ka bhula, dopar koi ghar laut aaya. तो अगर वो निकल के गया तो भी शाम तक तो जरूर
शाम को आ ही जाएगा. Got that point.
We could never anticipate FPI buying during this kind of conflict season. And it's not that this was unknown. This was known. So clearly it is the flow-driven market right now. FPI buying has pushed our market up. Domestic flows have been strong in the month of April as well as first few days of May. Put together, I will say we are a fair value market. Earnings season is little ahead of expectation. And flows have been strong. And it is the flows which are driving the market.
Nilesh bhai, the question is I'll go quickly, like a rapid fire. One sector which you're most bullish about, Nilesh bhai, your team is most bullish about?
You take an easy route, whatever Pankaj says.
Nice one.
Pankaj is smiling ear to ear. No, I'm not going to... I know what Pankaj is bullish on, auto anchs, and I think we spoke about a bunch of other areas, but banks, Nilesh bhai?
So on the banking side, clearly we are seeing that there is a differentiator coming.
Yeah.
Some banks have been able to deliver better results. Some have not been able to deliver better results. So focus on banks whose credit quality is good and whose liability franchise is strong.
Okay, got that. Nilesh bhai, thank you very much for joining us. Good speaking with you and good getting that perspective. Nilesh, the other Nilesh, this is to you. Same one.
The same question, Prashant?
Yes.
I'd probably say take three sectors. One is essentially home finances. I think they will benefit and you're going to see some step up in demand. Second is alcoholic beverages, and third is payments. I think these three, according to me, would be standout sectors or opportunities.
Okay. And I think we've discussed some picks from each of these spaces earlier on as well. Pankaj, we already got yours. So thank you very much, Pankaj and Nilesh, for joining us. Shorter conversations today, but we've got a big earnings track lined up as well. So let's get to it. I think KEI Industries, Nigel, with us?
Well, that's right. Let's focus on KEI Industries. The stock is reacting to a good set of numbers. Let's discuss the way ahead. We're joined by Mr. Anil Gupta, Chairman and Managing Director at KEI Industries. Hi, Mr. Gupta. Good morning. Thanks a lot for joining in and congratulations on a solid showing in the past quarter. A couple of questions, though, with regard to the past quarter first. Your exports have gone up quite a bit, I think so. It's gone up by close to around 3.3 times, and it constituted close to around 16%, I think, of the mix. Could you tell us, did you find a new geography? Is this something that you can sustain with regard to the export market? And also, how is domestic demand? What does it mean in terms of a growth guidance for this year? That's FY26. Please go ahead, sir.
Thank you, Nigel. If you recall, I've been consistently saying in my 3 quarters last commentary that we are focusing on export, and export will see a substantial jump in the coming quarters. And we are witnessing this quarter, last Q4, we have grown by 92% in exports. And I think this momentum will continue, and we should be seeing around 16-17% of exports from in our total sales in the coming year. It could go further, but we are still not having adequate capacity to increase it substantially, which should come by another 3 to 4 months. We should be getting our new capacities online in our new capex coming up at Sanand. And so far as domestic markets is concerned, the momentum is good, especially in terms of renewable energy space and also data centers and infrastructure, as well as real estate. So I think that we expect to grow by 17 to 18% in this financial year also. Last year, we have grown by around 20% compared to our guidance of 18%. And we have slightly grown better, and export momentum will continue.
Okay, all right, got that. So, last time as well, you promised 17 to 18%, but you did 20%. Do you think the odds are that this time around as well, you outbeat the guidance that you have given? And also, if you could help us out, what is the margin outlook? Because input costs have come down. You're going to be ramping up production as well as capacity, so operating leverage will play out as well. What's the margin number we should work with?
Input, in the past also, you must have seen that when the input rises, it has not impacted our margin. We are working very calibratedly, in calibrated manner in ensuring that our input and order book are a little bit of matching. So we have never lost in our EBITDA, maybe 0.5% here and there, even when the volatility was very high and the copper and aluminium went up very high. Even then, we did not lose. And I don't want to benefit from commodity fluctuations, because then it is a risky game. And margins should continue to be in the range of around 11%, what we have achieved, at least for this fiscal. I don't want to be too bullish on predicting higher margins. Maybe we will try to get definitely better margins.
Okay, so 11% is something we can at least work with for now. Got that, Mr. Gupta. Thank you so much for joining in. So just take us through what the big drivers are going to be. I mean, fourth quarter was good, I think, pretty much across the board. High tension, low tension, all kinds of, segments, even the wire segment. But basically, when you are talking about 18% growth in FY26, what will be the drivers of that growth? And along with the volume expansion, I mean, are you thinking of price hikes at all?
The growth drivers will be, I mentioned that the energy space, especially the renewables, the growth in the development of solar and wind energy projects, and consequent battery storage systems, pump storage projects, and consumption of energy projects like data centers, infrastructure, industrial, new manufacturing, industrial plants, and as well as the real estate. So this whole space will, should continue to grow, and I think we should see a good year ahead in the coming year as well.
From your, various product segments perspective, within that, I mean, what should we expect on the product mix side and the, KEI's own business segments? Which ones will perhaps be driving this growth?
In my opinion, all our business, segments, all verticals will be driving this growth. Means whether LT, HT cables, extra high voltage, or domestic market and export. I think all verticals should be growing in the similar fashion. And yeah.
Okay, and are you thinking of price hikes at all? I don't know if Q4, if you undertook any, but going into this year, moving forward, any price hikes?
Price hikes are always in line with the movement of commodity prices. Price hikes as well as price reduction both goes in the similar manner with respect to the commodity variation.
All right, Mr. Gupta, but EHV, that revenue seems to be under some pressure. But you're confident that it will bounce back?
At the moment, our order book in EHV is around more than 600 crore, and it is already bouncing back. There was some let up in the EHV segment, but we completely utilized our capacities by increasing our production of high tension cables on the similar machines and grow by 46% in HT cables in the same plant.
All right. Thank you very much, sir. Thank you for joining us, and good to get that clarity from you. The other set of numbers which came through, of course, was Polycab, right? I mean, same space. Let's get the management on. Numbers were in line with street expectations. Stock actually did well yesterday. Mr. Inder Jaisinghani, Chairman and Managing Director, and Gandharv Tongia, Executive Director and Chief Financial Officer at the company, are with us now to take some questions. Gentlemen, thank you very much for joining us. Good to get both of you on. Could you give us a sense of what has been the volume growth? Mr. Jaisinghani, this question is for you. What is the volume growth that we've seen for FY25? And what is the volume growth that you are expecting for the company in fiscal 26?
And before I specifically deal with your question, let me also give you a broad flavor of the earnings. This was the best quarter as well as the annual performance in the history of the company. We were able to breach 22,000 crore rupees of top line, as well as 7,000 crore rupees of quarterly top line. The profitability was all-time high.
Gandharv, if I can just come in, we have all the numbers, and all the numbers are going to come up on screen as graphics. So if you can we have a lot of questions and limited time, so go on, please.
Yeah. As far as volume is concerned, it was in the fourth quarter mid-teens. The domestic business grew at a very healthy rate. There was a bit of a rollover in the exports order, and that is where the exports performance in the fourth quarter was slightly softer. But on an annualized basis, exports did well. And the next quarter as well as the next year looks very promising for both exports as well as domestic business.
So overall volume growth in FY26, Gandharv, if you can give us your expectation?
So this, we don't give annual guidance. We released our 5-year guidance in the last quarter, wherein we have guided that we'll continue to grow at 1.5x of the industry growth rate, which was a trend even in the last few years. And as far as the second business is concerned, FMEG, there will grow probably at 2x of the industry growth rate.
So, some indication of top-line growth will also help, Gandharv, because in FY25, you did 22,400 crores. The earlier stated sort of round figure target was 20,000 crores, and the company's already surpassed that. You've achieved that. So how much over this can you build? Volumes, you've given us some indication, but in terms of top-line growth, in terms of margins, some indication of what the year looks like?
Sure. So let me give you a business-by-business breakup. 84% of our business comes from cable and wire. There, the industry growth rate is expected between 1.5x to 2x of the real GDP growth rate. And on top of it, we believe that we would be able to grow at a 1.5x of the industry growth rate. So that this number, with some assumptions, likely to be in mid-teens. As far as FMEG is concerned, the industry growth rate in general is in high single digit or just touching the double digit. And there we believe that we should be able to grow anywhere between 1.5x to 2x of the industry growth rate, which means high teens. So that is how we are looking at. We have not given a number-specific guidance, unlike the previous transformational project, but that is how we can compute the likely numbers in.
Okay, so that's top line. Now, on the margin, I want to understand whether this extremely good performance at the end of Q4, I mean, your margins are at 14.7%. Q4 number is substantially higher than the full year FY25 margin number, which is, I think, closer to 13%. So the run rate of Q4, is that sustainable? Should we expect 14% kind of margins for the full year, FY26?
So, Surbhi, we gave our guidance on EBITDA margin as well in the last quarter. In the next 5 years, we believe that the EBITDA margin in cable and wire business should be between 11 to 13%. And if you see our annualized EBITDA margin for fiscal 25 was also close to 13.1%. We believe this is a sustainable margin. As far as FMEG is concerned, which is the second business, it contributes almost 7 to 8% to our top line. It was a loss-making business till December. In the March quarter, it turned out to be a profitable business. And there we believe gradually and slowly, we should be able to get to 8 to 10% EBITDA margin in 5 years from now.
All right. Good morning, gentlemen. Good to see you all in. Just to reconfirm, FMEG, it's turned into the black. It continues in the black from here on, right? We continue to see profit numbers.
Yeah, so directionally, yes, it's quite possible a month here and there, a quarter here and there. But as far as annualized numbers are concerned, looks like that we should be able to go back to the guidance which we gave earlier.
Okay, all right. I need to compliment you all because on the cables and wires business domestically, your market share has gone up, if I remember correctly, from late teens. It's gone up to around 26%. Even in the last year, I'm going by Jeffrey's note, they're saying that you've gained by around 100 basis points. So good going out there. Now the question is what happens from here on? You have two big players that are eyeing the industry. You all have been quite confident that the industry can absorb more number of players. What's your comment with regard to that? The Bidlas and the Adanis are eyeing the space that you all have been dominating. Where does your market share settle at? And what do you make of the competition that's coming in?
Basically, market is growing. And we are already working from last so many years. So unorganized market also is there. So I think so. Organized market is going to be remain same or little bit increase. Unorganized market will be difficult because everybody now, people are looking for a quality buy. So they will buy of the all organized sector. So anybody will come, demand is increasing much more in building construction line. So I think so it is not going to hit anybody, but at least in initially year when they come, 1 or 2% margin will go down, especially that wires. But within a coming time, who's going to give a service and all, and whose market already there, whose brand already established, I think so nobody will have a much problem in that.
So you believe that the industry is big enough, the ones that will lose out is the unorganized players, and the market is big enough to absorb two big players. But can you hold on to this market share? You'll have gained 100 basis points. What is the ballpark number you'd like to work with going ahead?
We are working for a network, and I think so we will remain that and definitely get a little increased market share.
Right, Gandhar, you want to give us a number, I think so.
Yeah, I think you wanted to know number. That is why.
Yeah, go for it.
Yeah,
go for it.
The industry size, Nigel, is around 95,000 crore rupees as of now, give and take some number. And we believe that industry will continue to grow anywhere between 1.5x to 2x of the industry, GDP growth rate. So in 5 years, roughly, you can assume that this number is likely to be around 1.5 lakh crore, give and take whatever, some numbers. As of now, the unorganized is around 25-27%. We believe this number will materially go down in the years to come. And this is what we have experienced even in last 10 years. And any new player, including the large players like us, would continue to gain market share at the cost of unorganized. And that is where we are confident, that is what even Inder Bhai was alluding to, that market share gain will continue even in the years to come.
All right, not being specific with the number, but sounding confident. Very quickly, finally, Gandhar, since it's our first interview of the fiscal year, just give us an update. You have ongoing capex. How much money are you spending on capex? Just the cash position in the company, and would you think of raising equity capital at any point in time this year?
So we have around 2,400 crore rupees of cash in the books of the company as of 31st of March. As part of our project Spring Guidance, which is a 2030 project, we have given guidance of 6,000 to 8,000 crore rupees of capital outlay or capex in next 5 years. And all of this will come through internal accruals. We don't intend to raise any capital as of now. And we have also improved our dividend payout ratio. It was 30 rupees per share in the fiscal 24. And yesterday, the board has approved the payout of 35 rupees per share.
All right, Gandhar, we'll leave it there. Congratulations, and you guys have executed superbly. Best of luck for that. Mr. Jaisinghani, thank you, and good to see you as well, sir. Appreciate it. Well, I think, it makes sense to just go back and take a look at what the market is doing for a brief bit. We're down 35 points on the index, so nothing. I mean, we turned into the green. We were up, I think, about 30, 40 points. We're down about 40. But I think the one turn which is not surprising is Radico. Radico was up 5%, 6%. It's down 1.5% now. It was what it was with that 5% surge, but it just didn't seem right because they will save on those 250 crores worth of import of bulk scotch. But what is not clear is, although the management did say they don't have to change pricing strategy as well, but it's too early. There will be a lot of foreign competition at better prices, lower prices, which will come in. So we'll have to see that. Let's just look at United Spirits as well. That was a bit of a clearer kind of a story, I think.
Has
but
also
here
turned
also,
negative, yeah.
there is a bit of a sort of pressure, which is actually coming through. But, purely on FTA, keeping everything else same, I mean, I think the better placed player, of course, is United Spirits. But the one which went up 5-6% was Radico. And I think that has promptly come down. This is also now turned absolutely flat. Ajay?
No, just because United Spirits, the problem is that volumes will improve, but there's a cap on the margin itself, Scotch at around 10%. And also there's that fear that since they're going to be gaining something, what about the domestic, the states out here? Will they put in some tax as well? So that's the fear. After starting off gap up, that one as well has hold off because it could help volumes, but there are other factors you need to take in mind, as Manglam as well pointed out earlier today.
Okay, that's on the Alcobev stocks. The rest of the market, again, looking at some red right now, 50 points lower. It's actually the big boys, L&T, Reliance. These are the kind of stocks that have seen some selling pressure in the last 15, 20 odd minutes. So let's just pull them up. There you go, L&T, Reliance. These are some of the bigger names that are pulling things down. Even ITC, for that matter, Lever. Some of them are turning now on the south side. We'll take a very quick break. But we'll come back on the other side. More earnings conversations also lined up. We'll have Alembic Pharma's management with us.
Okay, welcome back. Let's talk about the pharmaceutical space now. Alembic Pharma is the company in focus. Numbers have come through for the fourth quarter. Margins are lower year on year. Revenue is better than expectations of around 8% growth. Let's get more perspective going with Shaunak Amin, Managing Director at Alembic Pharmaceuticals. Shaunak, good morning. Great to have you with us here on the program. Thank you for your time. Prashant this side. Before we get to Alembic and the numbers and prospects business-wise, let me just quickly touch upon what is top of mind for many investors, which is the executive order which was signed by President Trump in the US, basically signaling a clear intention to onshore as much pharma manufacturing as possible. They're talking about reducing the amount of time to approve domestic pharma manufacturing plants. They're talking about increasing the fee for inspections of foreign manufacturing plants and highlighting, the 5 to 10 year plan for the greenfield build is unacceptable. They want to do it faster, much faster. So I just wanted your sort of thoughts on this in terms of what are the implications at an industry level and maybe then for Alembic as well if this were to happen. Go on.
Yeah, so I think when you look at this order, I think it's not necessary. You got to take it in the right perspective to start off with. It's not just in terms of generics, but it's also in terms of global pharmaceutical production that goes out of the US, of which all patented products are a much larger share of this. So it's in context of that. So I think first you got to put the perspective correct from that point of view. It's not targeted towards generics per se. On this, it's still very early days. We're talking to our partners, our business partners in the US, as well as there's a lot of talk within the industry. I think at this point in time, it's too early to have a directional view on this at this point in time. So I think it's still early days, but like I said, I think it's going to be, I think the industry will have to navigate this as a whole. I'm sure I think both governments are talking to each other on this consistently, and I think it's still very early days to take any directional position on this for us at this point in time.
No, absolutely. Shaunak, it's not obviously targeted, as you said, towards generics specifically, and take that point. Two other things I want to point out. One is that this is not tariff related. This is more to do with what they call national security, onshoring manufacturing. Because I remember having this conversation with the management of Lupin. They said, well, we charge about 10% on $400 million worth of US imports. We import about $800 million worth of drugs from the US. We charge about 10% on about 50% of it. So it's not much we can do away with it. But this is not about tariffs and reciprocity. A second thing, cost of manufacturing in the US is by some estimates, 5 times, 10 times compared to what it is in India. So is it going to be feasible, Shaunak? Will this work out?
Like I said, I think it's too early. I'd rather not. Like I said, it's too early to make take a directional view on this at this point to get into discussions of onshoring in the US or not. So like I said, it's too early for us to really come out with these statements. I think
I'm not asking for impact on you. I'm saying, is it prohibitively more expensive to make in the US?
I think
at a broad level.
I think it's prohibitively expensive to make anything in the US versus India. I think if you look at it from that perspective. So I think it applies to all sectors, not just pharmaceuticals. So I think your statement's correct.
So, okay, Shaunak, so now let's talk about the numbers as well. US has actually grown very well for you.
Yes.
Growth in the business is 20%. So I just want to understand whether, I don't know if pre-buying is the right way of calling it, but because there was this sword hanging on us about impending tariffs, was that an element that boosted sales, US sales in the fourth quarter?
No.
Or is it entirely organic?
No. So like I said, we've been talking to our business partners at this point in time in the US, the people we supply to. And at this point, none of them have given us a direction on whether they'd like to make some early purchases at this point in time. So all Q4 sales were pretty much, there was no stocking up at this point in time. The US sales was largely on a back of a stable volumes plus some good launches across all our product therapies.
Okay, so all things being equal, and as of now, if there is no prohibitive, adverse policy announcement from the US, what are you expecting from that business this year in terms of, revenue expectations, launches, margins, the general sense of pricing?
Yeah.
Just give us an outlook.
Yeah, so, honestly, we maintain the current view. I think we expect this trajectory to continue going forward. But as an organization, we don't give a forward guidance. You guys know about this quite well. So it's hard for me to project at this time. But I think at this point, if you could put it, I think the worst is behind us from 2 years ago in terms of price erosions. I think we have a good pipeline of launches lined up this year. Plus, I think we're getting stable volumes across the board. So I think we expect this directional movement to continue in the coming quarters.
Yeah. All right. Hi, Shaunak. Good morning. Good to see you in. This is Nigel on this side. I went through one of our interviews that we had early in the fiscal, and you had promised a couple of things, and you more or less achieved that. On the animal health side, you were talking about, I think, a 20% growth. You're almost doing, I think, 100 crores per quarter.
Yes.
On this sort of a base, do you expect this momentum to continue? And also on the margin aspect, you said directionally you're heading towards 20% when we spoke last time around.
Yes.
But this year, what kind of a margin improvement can we look at in comparison to last year?
Yeah, so I think animal healthcare has been a real bright spot for us.
Yeah.
And we expect this to continue. There's no data per se in terms of market movement or general market trends on this, but I think we're quite confident looking at our base work to continue this growth trajectory. In terms of the margin movement, let me put it this way. I think the current margins were comfortable with this level. I think quarter to quarter margins do change based on product mix sales. And that's hard for me to project at this point in time. But like I said, we're comfortable at these margin levels, but obviously as the product mix keeps on evolving, we try to move towards the 20%, but I can't give any firm guidance on that at this point in time.
Got that. Shaunak, with regards to the India-UK FTA, does that benefit Alembic in any way?
At this point, not materially.
Okay, not materially. But you do sell into the UK?
It's a very tiny percentage of what we sell.
Okay, I'm sorry to press just about the US Trump thing one more time. The US FTA has officially shifted its policy. They are now talking about more, let me just sort of open this. They're talking about more unannounced inspections. They're also highlighting that foreign companies have enjoyed a double standard given advance notice before facility inspections. American manufacturers, they're saying, were held to a more rigorous standard with no such warning. I mean, this is, and this is the US FDA kind of after the executive order.
Yeah.
Any thoughts?
So I think as a company, since, me and my brother have been running it, I think strong quality and regulatory compliance has been a hallmark of Alembic over the last 10 years. We have an excellent track record on this. Honestly, we welcome this move because we are committed to quality and, compliance totally on this. And that's one part of our key strategic initiatives, over a decade now. So honestly, we welcome this move.
Okay. All right, Shaunak, thank you very much for joining in and giving us perspective on the numbers and, of course, the environment in one of your key markets, which is the US. Back to stocks then, and let's see what the screen is telling us now. Range-bound, the Nifty is down about 30-odd points. Mid-cap index is positive. The bank Nifty is positive. Let's go back to Mitesh for some advice then. Mitesh, on the index, what would you do today?
I've been avoiding trading the index, believing that we'll be ranged. But I think Sudarshan mentioned this buy on the opening gap down. I wasn't very sure. I think that responds very well. So congrats to him. But I still believe that we'll be in a range of about 24,500 to about 24,000 broadly, give and take a few points here and there. So trading has to be stock specific. I have a buy on Tata Motors. A buy with a stop below levels of 655 for targets of around 690. And the other stock which I like is Paytm. Strong price action taking place over there. And the weekly charts are very good over here. So maybe this will give a reversal, which will be interesting. So buy here with a stop at about 844 for targets of around 900.
No, absolutely. Got that. By the way, I have to point out that market breadth is negative. So it's about a little over 2:1 in favor of declines. But there's a fair bit of volume activity on the upside and lots of stuff moving around. CG Power, which reported and kind of fell about 6%. It came in the last hour yesterday. It's coming back up about 3.5% and a bunch more, which we will address. We continue to focus on Operation Sindoor and, of course, markets as well, implications therein on the other side. Coming back with a full panel.
Well, we continue to update you on the situation that has been developing overnight. Operation Sindoor being launched by the Indian Armed Forces, targeting 9 sites. These are 9 sites that are not affiliated to officially the Pakistan military or Pakistan civilian infrastructure. These are terror camps run by organizations like the LAT, the Jaish, etc., that have been targeted, and that is the statement that's come in from the Indian Armed Forces. We will, of course, hear from them for a more detailed view and perspective on Operation Sindoor in a short while from now. We're also at this point in time seeing reactions coming in from various quarters. You've seen Secretary Rubio as well as President Trump say that they are in dialogue with both India and Pakistan, asking for restraint. China has issued a statement as well. The UK has issued an advisory. So there are foreign governments responding to the situation. Israel coming out very unequivocally in support of India's operation, saying that terror should have no place to hide. Joining us now to understand the impact and the implications of Operation Sindoor, Manjeev Singh Puri, Adjunct Distinguished Fellow at Gateway House and former diplomat. Also with us, Deepak Bhojwani, the former Indian ambassador to Latin America. Gentlemen, appreciate you joining us here on the program. Ms. Puri, if I could start by asking you, Operation Sindoor launched overnight, targeting 9 specific sites in Pakistan-Occupied Kashmir and in Pakistan. The significance of the operation and the significance of the sites that have been targeted by India.
Jane, good morning to you. First of all, I must say this was expected and it was the need of the hour. It was necessary for India to respond to Pakistan, which had carried out a heinous terror attack within India and disrupted life for common people who have come from across the country. Absolutely right. Look, in my opinion, we have done the right thing. We have targeted areas which are associated with terror, which are associated with terrorist camps. We've been clear that we have avoided Pakistani civilian areas and even their military. We've done this in a precision manner and, as the press statement says, in a non-escalatory manner, which is why the rest of the world has said, look, you have a right to be able to take action against what was done about you. And that is very, very important in what we have stressed. For me, 2 places are particularly important, Bahawalpur and Muridke, because these places are not exactly next to the border where only these LATs, etc., are known camps, forward camps are there, but where fundamental bases are there. So what we've done is right. It gives a strong message to the Pakistanis and, of course, the world, as well as our public, that, look, we are strong, we are determined, and we will give a fitting reply if such kind of things are ever done on the soil of India.
Absolutely, a fitting response there from India. But Mr. Bhojwani, let me bring you into the conversation as well. As we just heard there from Mr. Puri, the significance of the sites that have been targeted as part of Operation Sindoor. But more importantly now, the response that we should be prepared for. Of course, you know, it would be foolish to speculate on how Pakistan intends to respond. But given the political pressure, given the global pressure that is also at this point in time being exerted on Pakistan, we heard from President Trump as well as Secretary Rubio asking for restraint. Do you believe that Pakistan finds itself somewhat boxed in a corner today? They've also got that crucial IMF meeting coming up on the 9th, which will determine in many ways the economic future of Pakistan as well.
Shireen, I think Pakistan has been in kinetic response mode for the last perhaps 2-3 decades. Their sponsorship of terrorism is a known fact. That's why they're on the Financial Action Task Force grey list. They should be on the blacklist in many ways. But the fact of the matter is that they are getting financing from Saudi Arabia, which has given them, I think, billions of dollars in terms of deposits in their treasury. China, of course, which is financing the CPEC, and even other countries. In fact, now the IMF is talking to them also. So the Pakistan keeps slipping out of the net somehow every time we tighten the noose. But the problem is not that. The problem is that even if Pakistan was to develop economically, they have this base, this matrix of terror organizations, which is also fed. And as Ambassador Puri was implying, it's basically state-sponsored. So we have to address that issue. And what's happened, as we see through this century, at least 2008, 2016, 2019, our response now has become asymmetric. Because while they do things clandestinely, we believe we have the right. And in fact, it seems that implicitly the international community has accepted that the right of hot pursuit and the right even of retaliation of the sort we've done today, we did in Balakot, etc., are accepted. And I think we should take our government at its word when it says we were not targeting neither civilians nor Pakistan military. If there is collateral damage at all, that's the fault of the terrorists who are housed there, and particularly deep inside Punjab. So I think what we've done could be called fairly surgical. Of course, the Pakistan Information Minister Tarar was claiming on BBC earlier this morning that they've shot down 3 of our planes and a drone. We've denied that. And there's a briefing to be done shortly by the MEA and the MOD. Let's see what we get from there.
Yes, we are awaiting clarity from the MOD as well as the MEA. And of course, since morning, the Indian side has refuted those claims that have been made by ministers of the Pakistan government, claiming that the Indian Air Force planes have been shot down. That has been refuted by the Indian government so far. Ambassador K.C. Singh also with us. Ambassador Singh, appreciate you joining us. Both Ambassador Puri as well as Mr. Bhojwani there, talking about the message that this Operation Sindoor sends out, as well as the global response and the global reaction. Do you believe that, given the fact that India has gone after very specific sites, 9 sites specifically, and has called its response non-escalatory, will make it harder for Pakistan to try and gather any kind of global support at this point in time?
I think globally it's an ideal time to be taking action like this, because President Trump has created enough disruption and distraction. So Europeans are busy. Germans spent the whole of yesterday electing a chancellor. Canadian Prime Minister ticked off the president. So, all kinds of things are happening. But we must remember that Pakistan, we shouldn't just write it off, because it's not a question. We always make a mistake between equating Pakistan with Pakistan's army. Pakistan's economy may be going downhill. Pakistan may be in economic distress. Pakistan army is in no distress. It's an army that controls the country, not the country controlling the army. And that's why that intemperate lecture by the army chief over 2 weeks ago, which was a signal that something was afoot and we should have been prepared for it. But I think what India has done, number one, having set a certain bar after Balakot, there's no way that India could not have reacted, and particularly a BJP-led government. It was expected that there will be a kinetic response. But we've combined it also with the putting Indus Water Treaty into abeyance, and also by using the gates of the rivers to control the water and then release them. So water has also become a weapon at a time that Pakistan requires. We can't completely stop the flow because they are run-of-river projects, but we can always reduce the flow and then increase it and cause disruption in Pakistan. So they have to take a call. And the other thing is that I don't think Indian planes, according to international reports, Indian planes did not cross the LOC or the Indian border. And that's why you'll see all the targets are within about 100, 120 kilometers of the border or the line of control. So what does Pakistan do? Now, Pakistan normally retaliates the same way. We've not attacked a military target. What target will they attack here, where there are terrorists attacking Pakistan? We don't have terrorists attacking Pakistan. But the only problem is that they will go on a PR thing. Because in Muridke, their leadership is not there. LET is using a front of schools, hospitals, charitable organizations. We might have taken out their headquarters, but they'll make it a big case of innocents getting killed, civilians getting killed. Similarly, in Bahawalpur, Jaish-e-Mohammed is no longer. They were, in any case, they had moved out of there, but they would have emptied out. But nevertheless, they will have basic workers and headquarters. And I think an attack, even if it has limited loss in terms of life or buildings, a signal was important to send to these terrorist organizations that you can't hide in Pakistan behind charities and charitable organizations with the protection of the Pakistani army, and India will not come and touch you. Remember, even in during Balakot, we did cross the international border because Balakot is not in POK, but that was still in areas contiguous to Kashmir. This time, it's plain and simple. in the heart of Pakistan. Now, let's see what they do. And that is why I think India is expecting a reaction in the border areas within 100 odd kilometers. That's why we stopped the flights in Chandigarh and Rajasthan, Srinagar, and so on and so forth. And then India will have to take a call because you have to be ready for an escalatory response depending on what Pakistan does. Internationally, I don't see any problem. The world is distracted. And with Trumpian rules of the powerful deciding, if he's saying Russia did not attack Ukraine, Ukraine attacked Russia, he's got a history all topsy-turvy. He thinks that Pakistan was created 1500 years ago. So you're dealing with a person who's completely mixed up on history, current relations, international relations. So keep him humored. I think he'll keep out of it.
Gentlemen, very important insights coming in. I will request you to hold on for just a moment. Our colleague Parikshit Luthra is standing by. There is a MOD press conference expected shortly. Parikshit, what are you picking up at this point in time, and how long before we hear from the government?
Well, the Foreign Secretary Vikram Misri has arrived at the National Media Center where that press conference is going. In fact, you can see his team just walking beside me right now. Having said that, there will be statements read out by the Army, Navy and the Air Force. The Foreign Secretary will be taking questions from the media. We believe they will also show maps of locations which have been targeted. Now, just to run our viewers through the significance of these targets, Bahawalpur, located around 100 kilometers from the international boundary, is the headquarters of Jaish-e-Mohammed. Muridke, 30 kilometers from the border, opposite Samba, LET camp. Terrorists of the 26/11 Mumbai attacks came from here. You have Gulpur, 35 kilometers from LOC, Poonch, Rajouri. This is an area where the attack on Poonch on 20th April 2023 was perpetrated from. Then another LET camp in Savai, 30 kilometers inside Pakistan-Occupied Jammu and Kashmir, Tangdhar sector. Bilal camp, which is a Jaish-e-Mohammed road launch pad. An LET, a Lashkar-e-Taiba Kotli camp, 15 kilometers from the LOC opposite Rajouri. Barnala camp, 10 kilometers from the LOC opposite Rajouri. Sarjal camp, Jaish-e-Mohammed camp, about 8 kilometers from the international border. And Mehmoona camp, 15 kilometers from the international border, which is a Hizbul Mujahideen training camp. What we've been told, that artillery guns and drones were used by the army to target 7 of these terror launch pads. Two launch pads, terror launch pads, which are 100 kilometers from the border, were targeted by the Indian Air Force. So we used precision munitions, and the Indian Army continuously saying that we acted with restraint. We did not target any economic or civilian or vital installation in Pakistan. This was targeted only at terror camps. Having said that, Pakistan has been resorting to very heavy shelling, artillery shelling, since 1 a.m. in the night. That was the time when the operation happened by India. We believe from sources that it lasted around 20 to 25 minutes. And immediately after that, Pakistan stepped up the level of firing and the kind of weaponry used in firing against India. Since then, artillery firing has not stopped. It continues. We believe 8 civilians have been killed and 2 people have been injured. These are the numbers coming from the Indian forces so far.
Well, thanks very much, Parikshit. We will, of course, come back to you as that press conference gets underway. Remember, as Parikshit was pointing out, a joint press conference, and we're just a couple of minutes away from that. But, Mr. Puri, if I could come back to you, one, of course, is what we're seeing happen in areas like Poonch, etc. And as per Indian Army sources, 8 civilian casualties being reported so far, 2 injured. What would you expect, at least along the border areas, as a response from Pakistan over the next few days?
Shireen, look, I have no doubt that the Pakistanis will respond in terms of shelling and so on and so forth. I am not so sure about their undertaking sort of surgical strikes or this kind of action within India, distance away from the border. I'll tell you why I think so. You know, there was a need for us to retaliate in the way we did, also in terms of the domestic political opinion. In Pakistan, the opinion which is being created there is that, you know, we are being unfairly targeted. They have detracted from the fact that they were the source of the terrorist act insofar as their own people are concerned. Secondly, let us not be we should be mindful of the fact that the world knows, the world has awoken to this fact, and they are talking in terms of de-escalation, etc. While they may be distracted in other ways, and Ambassador KZ Singh is absolutely right, the world is in a topsy-turvy state. But the fact of the matter is that we are interested in interacting with them. They have a certain worldview on this entire thing. And so the question of keeping everything measured would be important, which is why we have been very strong in stressing that A, there's been no targeting of civilians, even military facilities, only terrorists, and B, that it is not an escalatory move, but really simply retaliating to what they did, which was an act of terror. This is particularly important. Of course, the rest depends on the Pakistanis. If they escalate, I have little doubt that the Indian armed forces are more than prepared for giving them a bloody nose, which they will remember for a fairly long time. But in that sense, in a sense, for the moment, the ball is in their court.
The ball is in their court. But, you know, to the point that was being made by Ambassador Singh as well, Mr. Bhotwani, if I could get you to comment on that. The role of the Pakistan Army, as he said, the Pakistan government may find itself in a precarious fiscal position and its economy may be in dire straits, but the Pakistan Army finds itself in no distress. And especially given the kind of commentary that's been coming in from the Pakistan Army officials, you know, do you believe that there is likely to be dissonance between what the government may wish to do and what the Pakistan Army intends to do?
We'll have to see how it plays out, but my feeling personally is that the government will have to go along with what the army says. There's far too much political pressure on them to look strong and to look like they intend to retaliate, even though they may not want to. Of course, they've got more pressure internationally than we do, and that was evident in the recent UN Security Council meeting, where we were not present because they're non-permanent members. They called the meeting, but from today's reports, it appears that they didn't get what they wanted, and a lot of members of the Security Council were questioning them on what they were doing and what they planned to do about LET operations. Now, basically, the Pakistani army is in control of that country. They've proved it time and again, despite the popularity, the apparent obvious popularity that Imran Khan enjoys, and the fact that he should have won the election and been elected. But they managed to keep control of that country against all odds. So they clearly run the show. And this, let's not forget, is an absolute military operation. So there's no question that the civilians will be told to take a back seat, and they'll be told that the army will see what it wants to do. Of course, there will be constraints on the army, not just international. Even the fact that today India is far better prepared than it ever was. Forget about 2008, even then in 2019. We won't be losing any aircraft, as we haven't apparently, if the government is to be believed. And I think the army will have to reconsider anything it might want to do overtly. But that doesn't mean to say they will not continue with their covert operations, which I believe will not stop. Now, that is a longer game. Have to play and bring such pressure to bring on them, to bear on them, that they will have to roll back their support of these elements. While we here in India, in Kashmir, I was there last September, the atmosphere was fantastic. Clearly, there are either cells or rogue elements who have been, of course, sponsored by the Pakistani side, who are doing this on our side, okay? And we also have to keep in mind that there's Pakistani infiltration too. So that, I suspect, is going to continue. And we'll have to play the long game too, but with increasing pressure on Pakistan. And the army will just have to live with it or give up.
Well, the military response aside, Ambassador Singh, what would you expect as we play this out over the short to medium term? What would you now expect as the next steps from India?
Well, the next steps are you await what Pakistan does. I don't think the Pakistani army will just lump it. They have to retaliate symbolically. There will be a kinetic response. You remember, even in 2019, they supposedly attacked an Indian camp, but didn't actually hit the camp. They hit the outskirts of the camp. So it was a symbolic attack. It's possible that the attack may be more symbolic than real. After all, they can't go after these civilians in the Jammu and Kashmir area. They claim they are their brothers. So where do you attack? You attack into Indian Punjab, Indian Rajasthan. What is the target you choose? There is no one here who is supporting terror in Pakistan. But just to give you an example of the control the Pakistani army has, just about a week ago, their DG ISI has been made their national security advisor. So he is sitting in the cabinet. So they've not even left it to imagination that they control it. The Pakistan PM had gone to the army headquarters for a briefing just a couple of days ago. So I mean, this is an open secret. This is not something which is new. And Sharif is in any case a very weak prime minister, because the real powerful figure is Imran Khan, who's been put in jail by the Pakistan army, and the price for that, price that the Sharifs are paying for being made the prime minister and putting the tiger in the cage, is that they'll do exactly what the army wants. And we have an army chief for a change who appears very bigoted, appears very, very aggressive. And therefore, he'll have to now live up to his image. He'll have to take it to the next step. It's possible that if he's not able to play it well, he gets sacked. And that may be good for India and Pakistan. But at the moment, I think we'll have a chapter or two of this game yet left.
Yes, and of course, at this point in time, the Pakistani army chief, these are comments that are coming in from news agency Reuters, saying that 26 civilians have died and 46 have been injured on account of the Indian army action. There are also comments suggesting that the Pakistan defense minister said that if India halts operations, it will not take retaliatory action. But these are not verified comments. We're still trying to verify where this comment has been made, and if at all it is factual or not. There is, of course, as much as military action, there is plenty of action online as well, social media abuzz at this point in time. So we need to verify those comments. But what Reuters is reporting, the Pakistan army chief is saying that the Indian action operation Sindoor, 26 civilians dead, 46 injured at this point in time. Still waiting for the MEA and the defense press briefing. But gentlemen, thank you very, very much for joining us here this morning. We will, of course, come back to you for more insights as we hear from the government and bring you back on CNBC-TV18. But many thanks for joining us here with your views and your perspective on how you expect things to pan out from here. That's the situation at the moment. Standing by for the MEA and defense press briefing. The stock markets at this point are trending lower, but along expected lines. We will come back after a very quick break. Stay tuned.
Welcome back. Markets, of course, are down about 40 points. Up and down a few times over since the morning. We kind of started with about a 50-point cut. We went up 50 points, and now we are back down about 40 points or so on the index. So that's the overall picture. Overall market breadth is trending slightly lower. Nothing major. 800 up and about 1,700 stocks are lower. That's the NSE advanced decline ratio. A lot of stocks moving, and I'll get to that in a bit. By the way, we are, of course, waiting for the Operation Sindoor briefing. If you're tuning in, and of course, we've been sort of covering this for the last few hours, the Indian Armed Forces launched Operation Sindoor earlier this morning, hitting terrorist infrastructure in Pakistan and Pakistan-Occupied Jammu and Kashmir. These were focused strikes which were carried out on 9 terrorist infrastructure sites, and some of them, of course, are coming up on your screens as we speak. It's been a sort of by the state, as far as the statement is concerned, from the forces, from the ministry, etc., focused strikes, not targeted at civilians, but at military facilities, military sites, terrorist infrastructure, etc., which has been taken out as part of these strikes. Lots of information, of course, coming in. There are comments from around the world. President Trump earlier was asked about it. He said, well, he hopes it gets over soon. U.S. Secretary of State Rubio has essentially said that, he's kind of sort of in touch with both sides, and he hopes that this does not escalate further, and that there's a quick end to this, and so on and so forth. So, and of course, leaders here, cabinet ministers, many of them, of course, sort of expressing solidarity with the forces and sort of talking about the operation which actually has been carried out in the early hours today. So this is the sort of latest as far as developments are briefing, and I think the briefing will be addressed by, there'll be the Foreign Secretary, there'll be a representative from the forces, actually from the Army and from the Air Force as well. As we wait for that, and that should happen quickly, just want to take a quick look at some stocks which are moving as well overall as far as the markets go. You basically have a Radico which will come up on your screen. It's turned sharply down now. It's now, I think, almost about 9% off the highs of the day. So that's a very large turn off the highs. The high was about 26.65, and we're at about 24.50 now on Radico. So I think that's the big turn of the day that we are seeing. Apart from that, I mean, I think you got BSC and Tata Motors and Paytm and Sonata Software and KEI, CG Power, so many names. Wellspun Living is another one, which I just want to point out. That's up 14%. I think that's on the back of the US-India FTA. I think those are visuals coming in from this briefing room, from the briefing hall in Delhi. And we should be able to cut across to it any moment now. So just waiting. As you can see, you've got, I think officials getting ready there to brief the media, which is gathered. I think the statement is going to be read out. Let's cut across.
नमस्कार। इस ब्रीफिंग में शामिल होने के लिए आप सभी का धन्यवाद। जैसा कि आप सभी जानते हैं, 22 अप्रैल 2025 को लश्कर-ए-तैयबा से संबंधित पाकिस्तानी और पाकिस्तान प्रशिक्षित आतंकवादियों ने भारत में जम्मू और कश्मीर के पहलगाम में भारतीय पर्यटकों पर बर्बरतापूर्ण हमला किया। 25 भारतीयों और एक नेपाली नागरिक को कायरतापूर्ण मौत के घाट उतार दिया गया। मुंबई के 26 नवंबर 2008 के हमलों के बाद यह भारत में हुई किसी आतंकवादी हमले में मारे गए आम नागरिकों की संख्या की दृष्टि से सबसे गंभीर घटना है। पहलगाम का हमला अत्यधिक बर्बरतापूर्ण था, जिसमें वहां मौजूद लोगों को करीब से और उनके परिवारों के सामने सिर पर गोली मारी गई। हत्या के इस तरीके से परिवार के सदस्यों को जानबूझकर आघात पहुंचाया गया। साथ ही उन्हें यह नसीहत भी दी गई कि वे वापस जाकर इस संदेश को पहुंचा दें। यह हमला स्पष्ट रूप से जम्मू और कश्मीर में बहाल हो रही सामान्य स्थिति को बाधित करने के उद्देश्य से किया गया था। चूंकि पर्यटन फिर से अर्थव्यवस्था का मुख्य आधार बन रहा था, इस हमले का मुख्य उद्देश्य इसे प्रतिकूल रूप से प्रभावित करना था। पिछले वर्ष आप सभी जानते हैं 2.25 करोड़ से अधिक पर्यटक कश्मीर आए थे। इस हमले का मुख्य उद्देश्य इसलिए संभवतः यह था कि इस संघ राज्य क्षेत्र में विकास और प्रगति को नुकसान पहुंचाकर इसे पिछड़ा बनाए रखा जाए और पाकिस्तान से लगातार होने वाले सीमा पार आतंकवाद के लिए उपजाऊ जमीन बनाने में सहायता की जाए। हमले का यह तरीका जम्मू और कश्मीर और शेष राष्ट्र दोनों में सांप्रदायिक दंगे भड़काने के उद्देश्य से भी प्रेरित था। इसका श्रेय सरकार और भारत के सभी नागरिकों को दिया जाना चाहिए कि इन प्रयासों को विफल कर दिया गया। एक समूह ने खुद को रेजिस्टेंस फ्रंट TRF कहते हुए इस हमले की जिम्मेदारी ली है। यह समूह संयुक्त राष्ट्र द्वारा प्रतिबंधित पाकिस्तानी आतंकवादी समूह लश्कर-ए-तैयबा से जुड़ा हुआ है। यह उल्लेखनीय है कि भारत ने मई और नवंबर 2024 में संयुक्त राष्ट्र की 1267 कमेटी की सैंक्शंस मॉनिटरिंग टीम को अर्धवार्षिक रिपोर्ट प्रस्तुत की थी, जिसमें TRF के बारे में साफ इनपुट दिए गए थे। इससे पाकिस्तान स्थित आतंकवादी समूहों के लिए कवर के रूप में TRF की भूमिका सामने आई थी। इससे पहले भी दिसंबर 2023 में भारत ने इस टीम को लश्कर-ए-तैयबा और जैश-ए-मोहम्मद के बारे में सूचित किया था, जो TRF जैसे छोटे आतंकवादी समूहों के माध्यम से अपनी गतिविधियों को संचालित कर रहे हैं। इस संबंध में 25 अप्रैल को UN सिक्योरिटी काउंसिल प्रेस वक्तव्य में TRF के संदर्भ को हटाने के लिए पाकिस्तान के दबाव पर भी ध्यान दिया जाना चाहिए। पहलगाम आतंकवादी हमले की जांच से पाकिस्तान के साथ आतंकवादियों के संपर्क उजागर हुए हैं। रेजिस्टेंस फ्रंट द्वारा किए गए दावे और लश्कर-ए-तैयबा से ज्ञात सोशल मीडिया हैंडल द्वारा इसको रीपोस्ट किया जाना इसकी पुष्टि करता है। चश्मदीद गवाहों और विभिन्न जांच एजेंसियों को उपलब्ध अन्य सूचनाओं के आधार पर हमलावरों की पहचान भी हुई है। हमारी इंटेलिजेंस ने इस टीम के योजनाकारों और उनके समर्थकों की जानकारी जुटाई है। इस हमले की रूपरेखा भारत में सीमा पार आतंकवाद को अंजाम देने के पाकिस्तान के लंबे ट्रैक रिकॉर्ड से भी जुड़ी हुई है, जिसके लिखित और स्पष्ट दस्तावेज उपलब्ध हैं। पाकिस्तान दुनिया भर में आतंकवादियों के लिए एक शरण स्थल के रूप में पहचान बना चुका है। यहां अंतर्राष्ट्रीय स्तर पर प्रतिबंधित आतंकवादी सजा पाने से बचे रहते हैं। इसके अलावा पाकिस्तान ने इस मुद्दे पर विश्व और फाइनेंशियल एक्शन टास्क फोर्स जैसे अंतर्राष्ट्रीय मंचों को जानबूझकर गुमराह करने के लिए भी जाना जाता है। साजिद मीर का मामला, जिसमें इस आतंकवादी को पाकिस्तान ने मृत घोषित कर दिया था और फिर अंतर्राष्ट्रीय दबाव के परिणाम स्वरूप वो जीवित पाया गया, इसका सबसे स्पष्ट उदाहरण है। ये स्वाभाविक है कि पहलगाम में हुए इस हमले से जम्मू और कश्मीर के साथ साथ भारत के अन्य भागों में भी आक्रोश देखा गया। हमलों के बाद भारत सरकार ने स्वाभाविक रूप से पाकिस्तान के साथ संबंधों को लेकर कुछ कदम उठाए। आप सभी उन निर्णयों से अवगत हैं जिसकी घोषणा 23 अप्रैल को की गई थी। तथापि यह आवश्यक समझा गया कि 22 अप्रैल के हमले के अपराधियों और उनके योजनाकारों को न्याय के कटघरे में लाया जाए। हमलों के एक पखवाड़े के बाद भी पाकिस्तान द्वारा अपने क्षेत्र या अपने नियंत्रण वाले क्षेत्रों में आतंकवादियों की इंफ्रास्ट्रक्चर के विरुद्ध कार्रवाई करने के लिए कोई स्पष्ट कदम नहीं उठाया गया है। उल्टे वो इनकार करने और आरोप लगाने में ही लिप्त रहा है। पाकिस्तान आधारित आतंकवादी मॉड्यूल्स पर हमारी खुफिया निगरानी ने संकेत दिया है कि भारत के विरुद्ध आगे भी हमले हो सकते हैं। अतः इनको रोकना और इनसे निपटना दोनों को बेहद आवश्यक समझा गया। आज सुबह, जैसा कि आपको ज्ञात होगा, भारत ने इस तरह के सीमा पार हमलों का जवाब देने और उन्हें रोकने तथा उनका प्रतिरोध करने के अपने अधिकार का प्रयोग किया है। ये कार्यवाही नपीतुली, नॉन एस्केलेटरी, आनुपातिक और जिम्मेदारीपूर्ण है। यह आतंकवाद की इंफ्रास्ट्रक्चर को समाप्त करने और भारत में भेजे जाने वाले संभावित आतंकवादियों को अक्षम बनाने पर केंद्रित है। आपको यह भी स्मरण होगा कि 25 अप्रैल 2025 को संयुक्त राष्ट्र सुरक्षा परिषद ने पहलगाम आतंकवादी हमले पर एक प्रेस वक्तव्य जारी किया था, जिसमें आतंकवाद के इस निंदनीय कार्य के अपराधियों, आयोजकों, फाइनेंसरों और प्रायोजकों को जवाबदेह ठहराने और उन्हें न्याय के दायरे में लाने की आवश्यकता पर जोर दिया गया था। भारत की आज की इस कार्रवाई को इसी संदर्भ में देखा जाना चाहिए। Good morning. Thank you all for joining this briefing. As you are all aware, on April 22, 2025, Pakistani and Pakistan-trained terrorists belonging to the Lashkar-e-Taiba carried out a savage attack on Indian tourists at Pahalgam in Jammu and Kashmir in India. They murdered 26 people, including one national of Nepal, causing the largest number of civilian casualties in a terrorist attack in India since the 26 November 2008 attacks in Mumbai. The attack in Pahalgam was marked by extreme barbarity, with the victims mostly killed with headshots from close range and in front of their families. Family members were deliberately traumatized through the manner of the killing, accompanied by the exhortation that they should take back the message. The attack was clearly driven by the objective of undermining the normalcy returning to Jammu and Kashmir. In particular, it was designed to impact the mainstay of the economy, tourism, with a record 23 million tourists visiting the valley last year. The calculation, presumably, was that harming growth and development in the Union Territory would help keep it backward and create fertile ground for continued cross-border terrorism from Pakistan. The manner of the attack was also driven by an objective of provoking communal discord, both in Jammu and Kashmir and the rest of the nation. It is to the credit of the government and the people of India that these designs were foiled. A group calling itself the Resistance Front has claimed responsibility for the attack. This group is a front for the UN-proscribed Pakistani terrorist group Lashkar-e-Taiba. It is notable that India had given inputs about the TRF in the half-yearly report to the monitoring team of the UN's 1267 Sanctions Committee in May and November 2024, bringing out its role as a cover for Pakistan-based terrorist groups. Earlier too, in December 2023, India had informed the monitoring team about Lashkar and Jaish-e-Mohammed operating through small terror groups such as the TRF. Pakistan's pressure to remove references to TRF in the April 25 UN Security Council press statement is notable in this regard. Investigations into the Pahalgam terror attack have brought out the communication notes of terrorists in and to Pakistan. The claims made by the Resistance Front and their reposting by known social media handles of the Lashkar-e-Taiba speak for themselves. Identification of the attackers based on eyewitness accounts as well as other information available to law enforcement agencies has also progressed. Our intelligence has developed an accurate picture of the planners and backers of this team. The features of this attack also tie in with Pakistan's long track record of perpetrating cross-border terror in India, which is well documented and beyond question. Pakistan also has a well-deserved reputation as a haven for terrorists from around the world, with internationally proscribed terrorists enjoying impunity there. In addition, Pakistan has been known to willfully mislead the world and international forums, such as the Financial Action Task Force, on this issue. The Sajid Mir case, in which this terrorist was declared dead, and then, in response to international pressure, brought back to life, found alive and arrested, is the most glaring example. The latest attack in Pahalgam has understandably generated deep anger in Jammu and Kashmir and in other parts of India. Following the attacks, the government of India naturally responded with a set of initial measures relating to our engagement with Pakistan. You're all aware of the decisions that were announced on the 23rd of April. However, it was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice. Despite a fortnight having passed since the attacks, there has been no demonstrable step from Pakistan to take action against the terrorist infrastructure on its territory or on territory under its control. Instead, all it has indulged in are denials and allegations. Our intelligence monitoring of Pakistan-based terrorist modules indicated that further attacks against India were impending. There was thus a compulsion both to deter and to preempt. Earlier this morning, as you would be aware, India exercised its right to respond and preempt as well as deter more such cross-border attacks. These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. You would also recall that the Security Council on 25th April 2025 had issued a press statement on the Pahalgam terror attack, underlining, and I quote, the need to hold perpetrators, organizers, financiers, and sponsors of this reprehensible act of terrorism accountable and bring them to justice, unquote. India's latest actions should be seen in this context. Joining me for this briefing on our actions earlier this morning are Colonel Sophia Qureshi and Wing Commander Vyomika Singh. I will request them to share some details regarding Operation Sindoor with all of you.
सुप्रभात देवियों और सज्जनों, मैं कर्नल सोफिया कुरैशी और मेरे साथ विंग कमांडर व्योमिका सिंह आज आपको 6 से 7 मई 2025 की रात 1:05 से 1:30 बजे के बीच भारतीय सशस्त्र बलों द्वारा अंजाम दिए गए ऑपरेशन सिंदूर के बारे में जानकारी देंगे। ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया। पाकिस्तान में पिछले 3 दशकों से टेरर इंफ्रास्ट्रक्चर का निर्माण हो रहा है। इसमें रिक्रूटमेंट, इंडोक्ट्रिनेशन सेंटर्स, ट्रेनिंग एरियाज व लॉन्च पैड शामिल थे, जो पाकिस्तान और पाक अधिकृत जम्मू कश्मीर POJK दोनों में फैले हैं।
Operation Sindoor was launched by Indian Armed Forces to deliver justice to the victims of Pahalgam terror attack and their families. 9 terrorist camps were targeted and successfully destroyed. Over the last 3 decades, Pakistan has systematically built terror infrastructure. It is a complex web of recruitment and indoctrination centers, training areas for initial and refresher courses, and launch pads for handlers. These camps are located both in Pakistan as well as Pakistan-Occupied Jammu and Kashmir areas. Some of the well-known training camps are located, as you can see on the screen. They are distributed from Savai Nala in the north, counting to approximately 21, ending at Bahawalpur to the south.
इन लक्ष्यों का चयन विश्वसनीय इंटेलिजेंस सूचनाओं के आधार पर हुआ, ताकि आतंक गतिविधियों की रीढ़ तोड़ी जा सके, और यह खास ध्यान दिया गया कि निर्दोष नागरिकों और सिविलियन इंस्टॉलेशन को नुकसान न पहुंचे।
The selection of these targets for Operation Sindoor was based on credible intelligence inputs and role of these facilities in perpetrating the terror activities. The locations were so selected to avoid damage to civilian infrastructures and loss of any civilian lives. This was done with due diligence, and the camps selected for targeting and their engagement will now be shown to you one by one.
POJK के टारगेट मैं आपको बताना चाहूंगी। सबसे पहले सवाई नाला कैंप मुजफ्फराबाद, जो कि POJK के लाइन ऑफ कंट्रोल से 30 किलोमीटर दूर है। यह एक लश्कर-ए-तौयबा का ट्रेनिंग सेंटर था। 20 अक्टूबर 2024 सोनमर्ग, 24 अक्टूबर 24 गुलमर्ग, 22 अप्रैल 2025 पहलगाम, इन हमलों के आतंकियों ने यहीं से प्रशिक्षण लिया था। सैयदना बिलाल कैंप मुजफ्फराबाद, यह एक जैश-ए-मोहम्मद का स्टेजिंग एरिया है। यह हथियार, विस्फोटक और जंगल सर्वाइवल ट्रेनिंग का केंद्र भी था। गुलपुर कैंप कोटली, यह LOC से 30 किलोमीटर दूर था। लश्कर-ए-तौयबा का बेस था, जो रजौरी, पुंछ में सक्रिय था। 20 अप्रैल 2023 को पुंछ में और 9 जून 2024 को तीर्थ यात्रियों के बस हमले में यहीं से आतंकी को ट्रेन किया गया था। बरनाला कैंप बिम्बर, ये LOC से 9 किलोमीटर दूर है। यहाँ पर हथियार, हैंडलिंग, IED व जंगल सर्वाइवल का प्रशिक्षण केंद्र था। अब्बास कैंप कोटली, यह LOC से 13 किलोमीटर दूर है। लश्कर-ए-तौयबा का फिदाइन यहाँ तैयार होता था। इसकी कैपेसिटी 15 टेररिस्ट को ट्रेन करने की थी। अब मैं पाकिस्तान के अंदर के टारगेट से अवगत कराना चाहूंगी। पहला, सर्जल कैंप सियालकोट, यह अंतर्राष्ट्रीय सीमा से 6 किलोमीटर की दूरी पर है, सांबा कठवा के सामने। मार्च 2025 में जम्मू एंड कश्मीर पुलिस के 4 जवानों को की जो हत्या की गई थी, उन आतंकवादियों को इसी जगह पर ट्रेन किया गया था। दूसरा, महमूना जाया कैंप सियालकोट, यह 18 से 12 किलोमीटर IB से दूर था। हिजबुल मुजाहिदीन का बहुत बड़ा कैंप था। ये कठुआ जम्मू क्षेत्र में आतंक फैलाने का नियंत्रण केंद्र था। पठानकोट एयरफोर्स बेस पर किया गया हमला भी इसी कैंप से प्लान और डायरेक्ट किया गया था। मरकज ताइबा मुरीदके, यह आईबी से 18 से 25 किलोमीटर दूरी पर है। 2008 के मुंबई हमले के आतंकी भी यहीं से प्रशिक्षित हुए थे। अजमल कसब व डेविड हेडली भी यहाँ ट्रेन हुए थे।
आगे दूसरा आया। टारगेट 10 हुआ, एंक्लोजर सेम ही है। 7 इट इज हिट द टारगेट। हाँ हाँ। आ गया सर, इम्पैक्ट।
मरकज सुभान अल्लाह भावलपुर, ये इंटरनेशनल बाउंड्री से 100 किलोमीटर दूर है। जैश-ए-मोहम्मद का मुख्यालय था। यहाँ पर रिक्रूटमेंट, ट्रेनिंग व इंडॉक्ट्रिनेशन का केंद्र भी था। शीर्ष आतंकी अक्सर यहाँ आते थे। मैं आप सबको बताना चाहती हूँ कि किसी भी सैन्य ठिकाने का निशाना नहीं बनाया गया और अभी तक किसी तरह की नागरिक क्षति की रिपोर्ट नहीं है। धन्यवाद। जय हिंद।
The strike on the terror camps were undertaken through precision capability, as shown to you. A niche technology weapons with careful selection of warheads was ensured so that there will be no collateral damage. The point of impact in each of the target was a specific building or a group of buildings. All the targets were neutralized with clinical efficiency, and the results reiterate the professionalism of the Indian Armed Forces in the planning and execution of their operations. No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian Armed Forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation. Jai Hind, and thank you very much.
Ladies and gentlemen, friends in the media, I ask your indulgence today in view of the fact that this is still an evolving situation. We will therefore not be able to take questions and answers today, but we will come back for more updates and more briefings shortly. Thank you all very much for joining us this morning. Thank you. Jai Hind.
Well, I have to say that is an absolutely fantastic briefing by the the armed forces clinical operation, and the briefing was also clinical, precise, to the point. And that small things. I mean, the video played, and you could see the operation being carried out. So I think leaves nothing in doubt in terms of what has happened, the visuals which played on. We also could hear the operations chatter which was going on, I guess, while the operation was actually going on. So I think, a great briefing, and of course, no questions, as the Foreign Secretary towards the end said, this is an ongoing, evolving situation, and there'll be an opportunity for Q&A later. But I think this really adds credibility to what India has done last night, early this morning, in terms of the strikes that it's carried out across 9 states. 9 sites to take out this terrorist infrastructure. So very pointed information being presented, how many kilometers each of these sites were from the international border, what has been done, what actually was happening from in each of these locations. Examples, of course, given of which of these bases were used in which of the earlier sort of terrorist attacks in the country, and really, I mean, a really well-crafted briefing, if there is one. The entire presentation began, of course, with visuals of all the terrorist attacks that India has suffered. I think it started with the Parliament attacks back in 2004, the Mumbai attacks in 2008, and so on and so forth. And of course, and then it kind of sort of, opened up to the operation that is Operation Sindoor, which was carried out in the wee hours of today. Really on the front foot, putting out what we've done with the explanation, with the evidence. And of course, now I think little doubt in terms of what really has happened, why we've done it. I think it's for the world to see really which is coming through. I think towards the end, there was this one comment that, we are prepared in case Pakistan tries any misadventure, tries to kind of retaliate in any way, to do anything. I mean, there will be a well-adjusted response if that were to happen, and we are ready to deliver that response. I think extremely well-crafted briefing, I have to say. The market, by the way, has been, of course, paying attention. I think this is the big story, the only story, I would say, down about 25 points on the Nifty. Nigel.
Well, that's right. Symbolic women armed forces as well, addressing the media out there, not leaving anything to doubt, because in the past, the enemy has been they have been leaving various loose ends. Here, we're putting out evidence out there as well, extremely well-crafted media interaction, and also towards the end saying that this is our action that we've taken as of now. But if Pakistan wants to do anything adventurous on the border, we are prepared to take them on yet again. So strong message being sent out with the evidence out there. And in fact, they can't be in denial any longer. We've put out the evidence. We've said what we have done. Now, hopefully, there is some de-escalation from here on. But in case, they choose to retaliate, then our armed forces are ready. And I think the markets as well, more or less flattish, with a mild negative bias, which is par for the course.
Absolutely. And I think, we'll of course get you more opinion after this briefing. Now that we've heard officially from the government, we'll try and get more reactions through the course of the day. What we'll do is we'll take a quick commercial break as well, so I have to do that. But coverage on Operation Sindoor and markets, of course, continues. Lots of earnings to track as well, so coming back with all of that.
Good morning and welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. And Hormuz, you must say, it's a fairly mature reaction coming in from the markets. A bit choppy. The first tick was in the red. I think the Nifty straight away opened down about at 24,220. Instantly recovered back, and then it's been a little bit up and down. But as we speak, at 11 o'clock, Nifty Sensex down close to about 0.1%. Mid-caps are recovering from the 2% fall that we had yesterday. Watching the geopolitical developments, we just heard the Ministry of Defense press conference, but so far, market is not pricing in any sort of an escalation going by the price action. And, what's helping on the sidelines is the fact that both domestic and FPIs are buyers in the market. So the flows have been very strong, and that's propping the markets as of now.
The flows have been very strong. I was just reading up in the morning that 44,000 crores is what the FIs have pumped in over the last 14 trading sessions, where they have been net buyers, and 14 straight sessions as well. So that is some support that's coming in from the foreign investors as well. Domestic investors, of course, they have been the ones that have been doing the heavy lifting all along when the FIs were the net sellers in this market. But yes, as Reema was just highlighting, a very mature reaction to the ongoing escalations between India and Pakistan there. Absolutely at the flat line.
Let's call it retaliation instead of escalation.
Of course. Yes, retaliation, of course, in reaction to the deadly attacks in Pahalgam last month. So, of course, the index is at the flat line, but then you can't take away from the fact that there are a lot of earnings reactions that are continuing. There are plenty of earnings that are to be reported today as well, particularly from the broader markets. And you take a look at BSE, that is now up 8% as we speak. So that is an earnings reaction that's doing well for itself. Piramal Enterprises is doing well for itself, 6.5% higher. But one that's standing out today, though, is Paytm. It's 7% higher in today's session. And of course, the management commentary also reflecting the fact that there was a net loss, yes, but then of course that was because of some exceptional items, and they are well on course for operational profitability and net profitability as well in FY26. A couple of price target raises also coming in for Paytm. So 7.75% higher there, almost at 900 now is Paytm.
And there was one important thing in the conference call about the merchant discount
the MDR,
rate,
yes.
the MDR, which is currently zero on UPI charges. So Paytm doesn't earn anything. But on other forms of payment, like credit card, you have an MDR rate of 2.5%. And I think what the management said in the conference call is that regulations on MDR on UPI are likely anytime soon, and they could see conservatively a benefit of about 7 to 8 basis points. So that's going to be a big catalyst that the street is going to be watching when it comes to Paytm stock. Clearly higher, 8% up. But Bank of Baroda had an operationally weak Q4. Yesterday, stock was down 10%, and today as well, it's down nearly 0.5%. No improvement in the stock price. Slippages remain elevated, and the street was disappointed by the NIM's performance. Sequential decline in the net interest margins, and margins have come in at a multi-quarter low. CNBC-TV18's Lata Venkatesh spoke to the MD and CEO of the bank, Debdatta Chand, and began by asking him about the slippages and the way forward. Listen in.
On asset quality, we have one of the best quarter we have for last many years now. On the slippage side, let me address that. On a full year basis, the slippage has been much lower. At the same time, the recovery has been much higher than the last year. And specifically coming to the quarter ending Q4 of FY25, the slippage is 2,800 crore, which is equally the same like the same slippage in the last quarter of last year. And sequentially also, the slippage is only higher by only 300 crore. Wherein the recovery for the same quarter to quarter, let's say Q4 over Q3, it is in excess of 300 crore incremental. So in that way, slippage is much under control. And we have been saying that on the asset quality, as I said, one of the best quarter. The GNP has been trending downwards for last many quarters and many years now. The net NP is down from the GNP is 2.26, is one of the best in the 13 years now. The slippage ratio, we had given a guidance of 1 to 1.25, whereas the slippage ratio for the full year is 0.78. And as compared to the last year, from 0.99, it has gone down to 0.78. The credit cost is all-time best now. The full year is 0.47. So I think asset quality-wise, there should not be any concern with regard to any slippage. The bank has the best of asset quality for Q4. The 300 crore of additional slippage, no way any impact to me, because the incremental recovery has been much higher than that. So in that scenario, this is not a concern as far as the bank is concerned.
I take your point that the investor community will be reassured by what you're saying. But net interest margins was perhaps the other talking point. in the market, coming down to 2.86. That's almost a 10 basis point fall from quarter ago, and of course from year ago it's looking like almost a half a percentage point fall. Is this the lowest? Do you see it improving?
See, we're given a guidance to the market for the full year at 3 to 3.10, right? And in that scenario, the global NIM is at 3.02.
Okay.
And the domestic NIM is at 3.18. And since we run a large international book where the margin is less, so the global is slightly below the domestic NIM. Saying so, if I look at my the NIM on a quarter-to-quarter basis, the deposit actually, I'm carrying a rate-sensitive liability. I always said that my liability should react to the market in terms of the elevated cost. And that precisely happened. So going forward, the outlook is that I think the cost of deposit has picked out as far as the Q4 is concerned. There are two scenarios we are migrating while migrating to the Q1 of this year. That there is a rate cut or repo 50 bps that happened to the market in that way. At the same time, the liquidity has changed from a deficit to surplus for Q1. So considering both the scenario, I don't think any further pressure on the margin going forward. Rather, we have come true to our guidance in terms of the margin guidance 0.1. And for a full year NIM of 3.02, I think I am on the top quartile in terms of the large PSB peers. So there are very few maybe higher than me. So
but the overall NIM of 2.86 will be bottoming out. Do you think you will go above 3 in your overall NIM, that is domestic plus international, in the current quarter, April, May, June?
As far as quarter to quarter, yes, it has bottomed out, but let us also be mindful of two scenarios when you look for the full year FY 25-26. One is a case where the repo rate cut has happened, so as the BRLR has gone down, right? At the same time, the deposit, we have moderated on the wholesale deposit that we see there is a cost moderation therein. On the retail, we reduced the peak rate from 730 to 710. So, but again, fresh deposit can only contract reprice at a new rate, not the old deposit. So there will be some lag effect on that. So the moment you migrate to Q3 or Q4, I think we'll catch up to a normalized margin of around 3% going forward.
Okay, I get that. Will your advances continue at nearly 13%? Many banks have guided for a lower advances growth.
We had a very strong, as you said, very strong advance growth last year. Actually, the domestic advance at 13.7%, and the global is at around 13%. We had given a guidance of 11 to 13, but we are again above 13 in that way, right? So that's point one. Secondly, my sense, retail continue to grow at 20%. One numbers you would have seen, the MSME and Agri growth, the growth for March 25 is 14.2%. So scenario when the liquidity back into the market now, I think we can upsize the growth by 1-2% more rather than maintaining the growth. So I'm quite hopeful of, upsizing the growth going forward.
So you're guiding for 14%?
We'll give a guidance on that matter, but we retain the guidance at 11 to 13, but we'll definitely exceed 13%.
Okay. Oh, that's good to hear. Now, let me come to the slippages, or rather the credit cost part again. With the recent decision of the Supreme Court in the Bhushan Power case, you have an exposure, I think, over 1,000 crores to Bhushan Power, which you got from JSW Steel. What happens to it? Have you to return the money? Will that alter your provisioning credit cost in any way?
See, as you said, my exposure is not significant. It's less than even 0.2% of my corporate book. So exposure is quite less. So it's a judicial process. So there is sensitivity surrounding the process. So let us respect that for the time being. For us, actually, adding any comment at this stage would be slightly premature.
Okay. What exactly is the exposure, sir?
And normally bilateral we don't disclose, but it is less than 0.2% of the corporate book.
Okay. Okay. No, I don't know if you can comment on this much. There is a point of view that even if this money has to be returned by the banks to JSW, the liquidation of the plant, liquidation of the company, Bhushan Power, will bring back maybe even more. There is a point of view like that. Would that be one way to look at it?
Slightly difficult because, again, the entire process is being guided by legal advice on the matter. So, actually, as a COC, I think and the COC would take a call based on all these factors therein. There are legal counsel, advising on the matter, and possibly going forward, we'll hear more on that.
Management there of Bank of Baroda, they're pretty much the accident of yesterday's trading session after its numbers ending almost 10.5% lower. The stock, though, has recovered slightly from the lows after that management comment, after the interaction there with Lata. But just before we take that break, just pull up the India Wix. And at one point, the Wix was up close to levels of around 20. That has seen a sharp fall from the highs after the briefing that has taken place from India with regards to the retaliatory attacks that have taken place. The Wix now down around 3% compared to earlier levels that were touching close to 20. So keep an eye out on the Wix as well. Take a short break. Up next, we'll be joined by the management of Newgen Software to discuss their results and the road ahead for the company. Stay tuned.
Welcome back. Newgen Software recently reported their Q4 numbers. The company saw the net profit surge nearly 22%. Margins expanded. The top line growth was close to about 14%, but that is lower than the 20% run rate that the company has been enjoying. In fact, Q4 was a 14% revenue growth. Q3 was 18%. And prior to that, the company's top line growth used to be close to about 20%. In fact, even higher than that. Virender Jeet, CEO of Newgen Software, is now with us on the show. And just to put it in context, numbers came out on Friday during market hours. Virender, thank you very much for joining in. First, if you could talk about your top line growth. There seems to be a bit of a slowdown, 14.5% in Q4. What led to the weakness compared to prior quarters' historical growth rates? What can you guide in FY26? Can you maintain a 20% sort of a run rate or do better?
Good morning and thank you for having me out. We have constantly grown at 20% for many years. Almost from 2013, it has been the trajectory apart from a couple of years. So there's, just to look at in the near future, there's no reason why we should not be able to maintain that. Having said that, looking at what has happened over last 8 quarters, also I think last year we had grown at almost 40% on Q4. I think it was a very heavy base. For the year, we did grow at 20%, which is in line with what our expectation is. We did expect to really grow by a few more percentages, but I think we had some amount of deal slippages and other things, which normally happens in the business. We closed a good year. In fact, as you rightly said, overall we grew at 20%. Our margins expanded. We had 40% growth on license, which is actually determinant to our future growth because the downstream revenue kicks in. And also we had a phenomenal 62 deal wins. And the new logos, not only the deals from existing accounts, but especially from the new ones. And I think it was broad-based. And US fired. We did 20% growth out there. APAC fired in a big way. I think it has been healthy. What has happened is, as we are slightly increasing the number, the lopsidedness of revenue growth, which used to be happening, the Q4 and Q3 used to be almost around 60-65% of our business, has now moderated to around 55% of our business. which is, I think this phenomena will continue. We may have higher growth quarters in Q1, Q2 because relatively the numbers of Q1 and Q2 are lower. And Q3, Q4 may not be at the same percentage point, but at an annual level, we'll continue to maintain the growth momentum.
Okay, so you're saying that 20% growth run rate should continue FY26 onwards, as you did in FY25. The Q4 moderation in the top line was on account of a higher base and certain deal slippages, which are normal. It's not to do with the macro uncertainty that we're seeing. Is that correct?
Yeah, absolutely. I think there's nothing, as of now, we don't see any uncertainty in the business or nothing is coming up on the radar.
Well, Virender, good morning. Thank you for joining in. Now that you're saying your FY26 will also continue to grow at 20%, but what about your other businesses, right? Because the banking vertical growth slowed to 10%. Your bookings for the full year grew at only 10%. In FY24, they were up 23%. What is the current situation that you are witnessing on the ground? I know you mentioned that you are not seeing any uncertainties as of now, but are you seeing any delays in spending, delays in decision making, considering all the uncertainties that are prevailing around the globe right now?
The way we see our business, we are pretty diversified. This is one thing very unique to us. If you look at our businesses are quite evenly spread around India, Middle East, Africa, US, and APAC. So a single territory pain or a kind of an uncertainty we don't see the impact that drastically at other companies do. The other thing is also it's diversified across 3 verticals now. Though banking is a larger part of that, but also the insurance and government are becoming sizable. And then if you look at the client concentrations are very, very low. I think it's quite spread. We do business with almost 500 clients and nothing is very materially big. We still are a kind of a relatively smaller company. And typically our deals are more tactical and strategic. They're not really large strategic deals for the clients where they could have an impact of non-decision making. We still, they're championed around a cause which is very urgent for an enterprise. And we have seen both an upturn where we are servicing growth or we are servicing optimization or cost. We have relevant use cases in the market. I don't see any challenges as of now. But having said that, right now the levels of uncertainty in the market are very, very different, which nobody has seen, and we don't know how the whole market will shape. Right now, we don't see those things coming to us, but I think we'll have to wait and watch.
Okay, your deal bookings are, I think, at 1,664 crore for the full year. That's a growth of 10%, and this is lower than the 20% or 20% plus growth that you had in the prior quarter. What's the reason for that? And will this not make achieving that 20% growth challenging for you in the subsequent year?
Yeah, I think this is a good indicator, but not the only indicator. Most of our, the way we look at our business at the beginning of the year, almost 70% of our business comes from the contracts which is either in renewal stages or which has been already booked, which we call business in control. We are roughly at a business in control number of 1,250 crores, which is almost 20% up than last year. And then we do have to get new deals and new logos and new license wins this year, which is not going to be significantly different than what we have done last year. So while the order book of a previous year is an indicator, but it's not the only indicator. More the outcome of this year will determine about the sales which happens in this year and the license revenue we realize in that year. Our Q1, Q2, Q3 order books were leaner. You're absolutely right. But Q4, our order book on a year-on-year grew by almost 27%. So I think there's a change in that trajectory also. And we think in this year, we should be able to build the businesses and realize the revenue on that front.
Okay. US, your investments in US seem to be yielding results now. I think your US revenue growth was about 39%. You added 10 new logos in US across various sectors, banking, healthcare, insurance segments. When will that, even the deal wins were fairly strong. What is the outlook on US, the kind of growth? How much will it contribute? What is the growth that you anticipate in FY26? And when will the deal wins, one in US, flow through into your top line? When will they start getting executed?
You're absolutely right. I think we have been investing for a very, very long time, and it has been a hard work. And I think we have built a successful customer base of around 70 customers in US now. And last quarter, you're absolutely right, was a good quarter for us. We had more than 10 wins, and these wins are typically in larger accounts. So we have pivoted from smaller accounts in smaller banks and insurance to larger entities. A lot of our deals, the revenue starts flowing in 1 year to 2 years. That's the time frame, and the deal gets almost consumed in that kind of a thing. But since our downstream revenues from these deals are also all about renewals, expansion of licenses and those things, they will continue to grow as accounts with us. Last quarter, from the number point in terms of the number of deals, has been the first quarter we have. I think we'll have to wait and watch for a few more quarters to see how much of strong base and trend we have established. But surely our investments in insurance vertical and health, which we started around 12, 13 months back, have started yielding results. Now we have got successful wins in both the areas. And banking, we keep on, again, grinding and getting few more deals out there. So if all three fire, then we'll always keep on repeating such performance. But I think we'll have to wait and watch how permanent it is this. We think the US should lead the future growth of the company. So predominantly, I think we expect that in next 2-3 years, US becomes the larger market share where we come. But I think it's work in progress and we'll have to.
How much would US contribute?
You see, generally what I think right now, the US is roughly around 22-24.5% of our revenue. But while as globally the spend for our kind of areas, US is around 60% of that. And right now our sizes are small, but as our size becomes more close to a larger company, the US should be in the same range of almost contributing 50% of our revenue.
All right, Virender, we'll hold you to these numbers. There are still a lot more questions to ask you, but running out of time. Thank you so much for joining us today. Wish you good luck for the rest of the year as well. There is a management there on Nugent Software, confident that the US could become the primary contributor to their revenue in the next 2 to 3 years. Take a short break. The management of JBM Auto joins us on the other side. Stay tuned. Welcome back. Continuing with earnings conversations, then Nishant Arya, the Vice Chairman and Managing Director of JBM Auto, is joining in now to discuss the road ahead for the company. Nishant, good morning. Thank you for joining in. It's a marginal deviation, but you had guided for 6,000 crores of revenue in FY25. You've ended at 5.5. But what are you penciling in now for FY26 with the kind of situations that you are facing on ground right now?
I think we are, as you would see, the EBITDA percentage has grown substantially, almost 1% from FY24 to 13.3%. And clearly, we are seeing that today the kind of market scenario for e-mobility is growing substantially, and we are having a very strong order book. Just recently, our tie-up and alliance with Hitachi is also going to play a critical role in enhancing analytics and performance of our EV products with their global technologies. And I see that now with the UK-India FTA, a lot of new market opportunities will also open up for Indian companies like us who are very well poised with the whole EV ecosystem.
I'll get to your UK exposure in just a bit, Nishant, but just to confirm numbers, you mentioned 6,000 to 6,500 crores for FY26, if I heard you correctly?
Yes, yes.
So 6,000 is what you were projecting for FY25. You made 5.5. Now you're projecting 6 to 6.5 for FY26.
Correct.
Right. So, and now coming to the FTA bit, do you have any exposure to the UK market currently? And if not, then how do you see this as an opportunity for a company like yours for the UK market?
No, I think UK market will be a very important market going forward. I think until now, the import and the tariff barriers were a big concern, but automotive sector being in the 99%, which will be tariff-free, that will be a big game changer. And having a right-hand drive product from India, which we are already looking at for exporting to new markets, I think this would be an ideal market for us to enter.
Do you have presence in UK?
No,
Right
we don't
now?
have any presence in UK as of now. Yes.
Okay, but are you planning to?
Yeah, now
say in the next 1 or 2 years?
definitely we see that we would be looking to enhance our presence in the UK. We already have presence in other parts of the world, like in Middle East, Africa, in Asia Pacific, and Europe, but not in UK.
No, so how long will it take for you to establish a presence?
I think,
can you get some revenues in FY26? Because I'm sure there is an entire procedure which goes behind this.
Yeah, definitely. I think we would be looking to see how we can create business opportunities in this year and realize them in the beginning of next year.
Since we are on this subject, Nishant, could you also share us a breakup of your domestic to exports breakup in FY25? What are you targeting for FY26? And what's your take on the overall export market in the geographies that you are present in? How much do you plan on growing it this year?
No, so in FY25, we were 95% plus domestic and close to up to 5% exports. Now this year we're trying to see how we can double it up to close to 10% exports.
So you want to take it? Yes, please go on. Please go on.
Yeah, and primarily in Europe, Asia Pac, and Middle East, Africa.
So you're planning on doubling your export share to around 10% in FY26 is what you're saying?
Correct.
Right. Okay. And what about your launch pipeline? Any new launches that are in the works anytime soon?
Yeah, this year we are planning to launch 4 new products. And we'll be talking about it soon in the next coming months.
Okay. For your platform, JBM Eco-Life Mobility, that houses, I think, the gross contract special purpose vehicle, you were looking to secure some more funding. Is that correct?
Yes.
Okay. So where are we? Because I think you raised money in September of last year for the Eco-Life platform, but I think you were scouting for some more money.
Yeah, so we have raised money from ADB, AIIB recently as well. So that has been concluded. Yes.
That was in September of last year, right?
Also in month of March. So also in month of March, we have closed a few more rounds with ADB and AIIB.
And how much was that?
So we are starting with about 200 crores and we'll be growing further as new projects come along.
Okay, and how will this change your, at the consolidated level for JBM Auto Limited, JAL, the listed entity, how will this change the debt profile? Because now you need to infuse less money into the platform. So
we are trying to see that the platform becomes self-sufficient. So platform becoming self-sufficient is very important because then it can generate cash from its existing SPVs and new SPVs and fuel its own growth for the future.
Nishant, is the OEM business, the segment performance, does that remain a cause of concern for you? How do you see that shaping up this year?
No, that is not a challenge because as you see, even last year, the OEM performance profitability has increased multifold, and definitely in this year, we would be looking at higher volumes because the first half of the last year, due to different elections and different changes in multiple states, things were a bit slower. So I think now things are on the right track with very strong policy framework and deployment plan. So from the beginning of this year, the things are in the right direction.
Nishant, very quickly, one final question. There was a lot of M&A activity taking place in your field right now. Were you in the fray for SML Isuzu? Just to hear it from you. And are there any inorganic growth plans in the pipeline for FY26? Are you looking at something?
No, so as I said that I would not like to comment on market speculation even earlier. So we were not looking at SML, and definitely as something comes up, which we are looking at inorganically, we'll share with you.
Has something come up?
No, not right now.
Not yet. All right, Nishant. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of JBM Auto. Take a short break. The markets continue to remain around that 24,350 mark. We discuss the road ahead for the Indian equities with Mihir Vora from Trust Mutual Fund on the other side. Stay tuned.
Welcome back. Mihir Vora from Trust Mutual Fund is now joining in to navigate the market volatility, the headlines, and what investors should be doing with their money in such a situation where tensions are running high between India and Pakistan. Mihir, thank you very much for joining in. So long-term history tells us that generally, even when tensions are high, it's not that there is a material damage to the markets. We generally tend to move on. But in the near term, as we navigate the here and now, what's the advice that you're giving to clients now?
So,
I think you're on mute. Yeah, go ahead.
Yes, hi. Can you hear me?
Can hear you loud and clear.
Okay, great. So obviously markets will remain volatile around such events. But to some extent, since it's been a couple of weeks since the terrorist incident happened, the markets have been expecting some action. Last time, I think in 2019, there was a couple of months of gap between the event and the action. This time around, it has happened much faster, I guess. So to that extent, partly such action was expected. The timing, of course, was not known. So, I mean, once you're past the actual event, probably the market start looking a bit more forward. Now, I think the ball is in the enemy country's hand to basically take a call on how much they want to escalate the situation. Because I think India has done what it needed to do, and probably there might be some more going forward. But more or less, I think the big event is past us. The markets have been actually kind of discounting this, and in spite of knowing this, impending action to some extent, the markets have been quite stable. What has happened, I think, is over the last 20 years, we've gone through a learning curve. And the big picture is that even though such events happen, they have not really escalated into a wider conflict. So that's the learning over the last 20 years. And second is that the Indian economy itself has grown so large that even if there is some skirmish, the economic implications in the long term are not that significant. So I think these two learnings are very significant over the last 20 years. And the third portion is, of course, the fact that both FII flows and domestic flows are quite robust in the last few weeks. Domestic flows have been robust for the past few years, which was not the case, say, 10 or 20 years ago. So I think the bottom line is that the Indian investors have gone through this learning phase. Domestic flows are strong. And basically, unless this thing escalates into a wider conflict, the markets are able to absorb such shocks.
Mihir, good morning. Thank you for joining in. The other big factor that has been the determinant of the market moves have been earnings, and there was a lot of fear that the fourth quarter earnings may also turn out to be as bad as the third quarter was, but that has not been the case, at least for majority of the companies that have reported so far. Do you see this improving further as we go into FY26, because then the low base kicks in as well, and that acts as an additional kicker to move the market higher?
Yes, that's been our base case in any case. But so far, the earnings season has been a mixed bag. I wouldn't be very euphoric about it so far. At least the large caps have not done too much in terms of earnings surprises, but they haven't been major disappointments too. So I would say it's been a mixed bag with single-digit kind of earnings growth expected for the March quarter that just went by. Going forward, as you rightly mentioned, there is a low base, especially in the June and the September quarters. The base is far lower because we saw that the government spending in the quarter of June 24 and September 24 really was low, and there was a big break, I would say. So that base should help us going forward, and that's been our base case going forward. Large cap earnings growth expectations are still probably high single digits. Small cap earnings growth expectations are a little better at about 15%, and I think so far that assumption still holds.
So Mihir, are you all fully invested at Trust Mutual Fund?
Normally, we tend to be fully invested. We don't keep more than 5 to 10% cash, and that's the current situation also.
So incremental money that's coming your way, where are you deploying it? So tell us the actions, the portfolio changes that you did in the month of April.
Broadly speaking, we haven't done too many changes in April. We had done some changes in Jan-Feb, essentially shifted a bit in favor of larger private sector banks and NBFCs, added a bit to some of the cyclicals again, which we have trimmed a bit. But apart from that, no major changes, I would say.
The two themes, Mihir, that I wanted to ask you about, where there is rising competition. You just saw a downgrade coming in for DMart earlier this morning over this rising competition. So how do you approach this retail / hyper-local retail space? And you can combine that with the quick commerce players as well. And the other one is the wires and cables space, where after the foray from Ultratech, from Adani, the numbers that have been reported so far by the incumbents have been fairly resilient.
Sure. So on the quick commerce space, we have some exposure because we do think it's a growth segment. However, there has been disappointments in the last couple of quarters. The assumption was that we probably may not see as intense competition in the 10-minute delivery, 15-minute delivery space. But I think companies are not taking any chances and investing for the future, so to say, which is depressing margins to some extent. So it's kind of a mixed bag. We're not taking a big call either way. We have some holding. We are sticking with it. As far as the cable space is concerned, there is a concern of competition. But I think beyond the point, maybe valuations are catching up, though we don't have much exposure to this space. But the sector has been lackluster in terms of earnings growth for quite some time. And maybe the base effect is now catching up, I would say.
The Alco-Bev sector is in focus today on the back of the UK FTA. Is this a sector that you have interest in? Is it a part of your portfolio? Any stocks here?
Yes, we do have some mid-cap exposure in the Alco-Bev space. But that's more because of the fact that we do believe that premium consumption items will continue to grow well. And, spirits are, of course, to some extent discretionary. And we have seen the industry growing more because of premiumization, so which fits in well with our thesis of premium consumption. So we have some exposure there, yes.
Mihir, pleasure having you as always. Thank you so much for sparing time and joining us today on the show. Mihir Vora there of Trust Mutual Fund. Take a short break, continue with earnings conversations. Amit Agarwal, the Executive Director and Group CFO of DCM Shriram, joins us on the other side. Stay tuned. Welcome back. Continuing with earnings conversations, then we're now being joined by Amit Agarwal, the Executive Director and Group CFO at DCM Shriram, to discuss the road ahead for the company. Amit, good morning. Thank you for joining in. Get it straight off the bat. What are the kind of growth targets that you are penciling for FY26 now, considering the situations that are developing both in the country as well in terms of the economic growth, of course, and the geopolitical tensions overseas when it comes to tariffs and all of that? What are the kind of growth targets for FY26?
Yeah, I think for us, we've completed our capital expenditure programs in chemicals. A large part of it has been completed, which happened in the current financial year, the year gone by. And in this financial year, also, we are completing a couple of projects. So what I feel is that a lot of growth is going to be volume driven. The project which we completed last year will have full year impact this year. Some of the projects which we are completing in early part of this year, they will have an impact this year and next year. Similarly, next year also, early next year, we are completing some projects. So it is a continuous pipeline of volume growth that we're looking at in chemicals, some of it in sugar. Similarly, in our Fenesta and Farm Solutions business also, we're looking at volume growth. So I think that's the best part, that our growth going forward will be driven by volumes.
And what are the kind of volume growth that you're expecting this year, Amit?
See, I think if you are wanting to understand in terms of revenue, so I feel on a conservative basis, we should see a 10 to 15% revenue growth year on year.
10 to 15%. Similar to last year, you ended FY25 with 11% and FY26 should also be 10 to 15%. Chemicals is about 20% of your top line right now?
Chemicals would be close to about 25% of our top line.
25. And now with the expanded capacity coming on stream, what is the guidance on chemicals revenues and how much will it contribute going forward? And will there be any change to your EBITDA margins in the chemicals business?
Yeah, so I think in the coming year, majority of our growth in bottom line, a large part of it will be driven by chemicals business. They will form a large part of our profitability. And even on the top line, from current about 20-25%, they will be in the range of 25 to 30% in terms of top line.
Okay. And what would the growth be? You're saying the revenue contribution should inch up closer to 25-30%.
Yes.
And what would the revenue growth and even the margin improvement? Because you're saying that will be the dominant driver for your profitability.
See, I think, as I said, for our kind of businesses, what we look at is how we are growing our business in terms of volumes, because that defines the growth. And the other thing is what we are doing on the cost side. So we have been taking cost side initiatives in terms of power plants, in terms of green energy. I think those are things which are in our control, and that helps our margins. Now, specific to your point on margins, last year, full year, we had a margin in chemicals of about 17% at EBITDA level, and Q4 was about 20%. So given, the way industry is, the way we are seeing trade wars and things like that, I don't think it's right to give what the number can be. But best case, we do expect to be operating in that range on higher volumes, which means higher profitability.
So in that case, Amit, what are the kind of margin targets that you are penciling in? Do you expect to remain in this 11 to 13-14% range for FY26 as well?
I think so. We should be in that range.
All right. And what about the ECH plant, Amit? There have been several delays, right, with regards to the commissioning of the plant. There were supposed to be trials in the fourth quarter as well, and expected to be commissioned in the fourth quarter. Where do we stand on that regard?
I think we have completed almost 99% of the project, right? It is just that some equipment is, having some technical issues. Now, somewhere where we invested almost 4 large projects got implemented in last 2 years, I would say, in terms of commissioning. We can have a problem in one of the projects, which is can always happen. But we're looking into it, and I think our trials should start now by this month end, and we should be commissioning in early June.
What's the broader outlook for sugar, ethanol, and even the Fenesta business? What would be the key milestones the company is likely to achieve in these 2 segments?
See, sugar this season wasn't very good, given the fact that the sugarcane production was low in the country, and therefore production levels came down. Even the recovery levels came down. So I think there is scope. If you say next year, obviously there is scope for increased volumes in sugar as well. But I think what's important in sugar business is or industry, I would say, is for the government to look at a holistic policy for sugarcane cultivation, how it can be improved, and also for a better policy for manufacturers, both for sugar as well as ethanol. Although we feel in this year it should be better, given, I mean, hopefully the overall sugarcane production should increase. Therefore, it should be better off. But then, there are a lot of issues like crop economics, climate challenges, diseases. I think these needs to be looked at more holistically for a long-term stability of sugar business.
What about the margins and the top line growth for the sugar business, Amit? Have you set any targets for that?
The sugar business is very difficult to set targets for the margins. It's so sensitive commodity, both on the feedstock side as well as on the output side. So it's difficult, but we do expect margins to be better.
Do you have any exports?
See, exports is driven by how much government allows. It's purely, completely regulated sector, both on the input and output side.
Okay, so what was the export contribution?
Last year, not very significant. I think overall profitability, maybe 5-6 crores would be.
Okay. And is that likely to change this year?
I don't think so, because production levels have been low this year. Inventory levels in the industry have been low for sugar. So I do expect some production, but not very significant.
Now tell us more about your recent acquisition, Amit, the DNV Global, the rationale, the opportunity that you're seeing from this acquisition, and how is it likely to contribute to your P&L this year?
So one, I think we are very excited with this acquisition because it's a new area that we've entered into, which is an adjacent to Fenesta, the windows and doors business that we have. Now, currently the way this business acquisition is being looked at is more in terms of backward integration, because it will help us innovate on hardware faster, and it will also help us give better customer experience. So that's the whole objective to start with. Going forward, futuristic, what we look at is this as another vertical or another revenue stream where we get into more innovative hardware, and where we sell it as a product, as a revenue stream direct to customers as well. So it's a bit of a long-term story. I think this will shape up over a period of next 2 to 3 years, but we are very excited with this new entry.
But does it start contributing meaningfully this year, or you'd see meaningful contributions only 2 to 3 years down the line?
Meaningful will be 2 to 3 years down the line.
Right. All right, Amit, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of DCM Shriram on their quarterly results and the road ahead for their. Take a short break. More on the markets on the other side.
Welcome back. Gokuldas exports is now up 16%. It's moved up on very large volumes, now approaching the 4-digit mark on Gokuldas exports, 990 in terms of a stock price. BSE, Bombay Stock Exchange, also hit a fresh 52-week high. The stock is close to 6,800 rupees. The intraday high today was, I think, 6,847. So it's made a new fresh 52-week high on the back of the Q4 numbers. 10% revenue growth quarter on quarter, 75% on a year-on-year basis. And the company is also gaining market share in the options category. Motilal Oswal here has put a target price of 7,600 and they're valuing Bombay Stock Exchange at 45 times. We spoke about Paytm and how that's a big mover. Another one is Piramal Enterprises. Again, on the back of their numbers, Piramal Enterprises is up close to about, I think, 7%. And in the conference call, the management has guided for a 25% year-on-year growth in the total AUM, primarily driven by growth in the retail loan segment. So good quarter, and the company is guiding for a 25% top-line growth next year. Ather is another big mover. Yesterday, day one of the listing, subdued day, but today it's bounced back. Indian Hotels too, despite good numbers, came in for profit booking, and the stock has rebounded smartly. KFin, Kajaria Ceramics, Parag Milk, IFL Finance are some of the other big movers in the mid-cap space. We leave the Nifty at that 24,350 mark, mildly lower. Things have quietened down on the index. With that, it's a wrap on this show. Thank you very much for watching. Stocks stage a smart recovery after a weak open as investors shrug off fears of a conflict escalation with Pakistan and focus on the positive developments on trade. Auto and utilities lead the charge while FMCG and healthcare drag.
India and the United Kingdom have concluded a historic free trade agreement 3 years after negotiations were launched. The pact covers almost all tariff lines with duty-free access for Indian exports and revised tariff lines for imports. Alcobev, textiles and autos will be the key impacted sectors.
Indian Armed Forces launched precision non-escalatory strikes on 9 terrorist bases in Pakistan in response to TRF's terror act in Pahalgam. No civilian casualties were noted and no military establishments targeted in the non-escalatory strikes.
US and China have agreed to hold formal talks on trade later this week with Treasury Secretary Scott Bessent and Trade Representative Jameson Greer representing the US in the slated icebreaker in Geneva. Experts, however, don't expect a deal anytime soon.
Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Manglam Malu. Well, it's definitely been a nervous session, you'd have to say, for the markets. Yes, there is an intraday recovery which has taken place, but I think the street is definitely going to be watching developments. While on one side we have all of the positive developments with regards to the FTA, the free trade agreement, as well as the talks with China on trade agreements as well. The other side, we obviously do have these geopolitical concerns which are making the market a bit nervous at this point in time. So currently, advanced decline ratio a bit even keel. We have the Nifty, which is absolutely flat, as you can see, and the broader markets are showing a little bit of color, so up around 1.2% currently for the mid caps. Hi, Manglam.
Hi, Ekta. Nervous yet mature. We are fairly consolidating right now, not very different from what it was earlier itself. And post the briefings that came in from the Ministry of Defence as well, which were fairly specific, we did see a decline in the India VIX, which had spiked ahead of the briefing in anticipation of what would be the contents of those briefings itself. And as all eyes are on, the updates coming in from the border and Operation Sindoor, we have Parikshit joining in to get us up to speed with what the latest is out here. Parikshit.
Well, yes, of course, there was that exhaustive, comprehensive briefing that was held by Foreign Secretary Vikram Bisri and Colonel Sophia Qureshi from the Army, and also Vyomika Singh, the Wing Commander of the Air Force. A very strong message, a symbolic message also being sent out by the Indian forces and the government that our strike has destroyed all 9 targets. These were terror camps operating in Pakistan. 7 of them were targeted by Indian artillery and Indian drones by the Indian Army. 2 by the Indian Air Force. Some of these targets were 100 kilometers away from the border. Some were within 15 to 25 kilometers. So the shorter targets were taken care of by the Army and the longer targets were taken care of by the Indian Air Force. We used precision munitions in these strikes to attack ground targets, such as all these terror camps. Our attempt was to eliminate Pakistan's ability to carry out terror strikes against India. This operation is not over. We've been told the operation is ongoing. There will be more updates over the next few days. There is a high alert all along the LOC. In fact, Pakistan, immediately after the operation, which lasted for about 20-25 minutes, opened fire in a very heavy manner. In fact, heavy artillery shelling from Pakistan all along the LOC and the international border has been continuing, especially in places such as Poonch. Civilian areas have been evacuated. 8 civilians, we believe, have been killed. 2 have been injured. And the military operation now continues. The airspace in airports all along the border have been shut down. This is because of the military exercises and the operation that is on. And heavy security in all vital installations and critical areas all around the country.
Okay, all right, Parikshit, stay on. We do have more questions for you. But in the meanwhile, Foreign Secretary Vikram Misri, in his first response since India launched strikes in Pakistan, says it was deemed essential that the perpetrators be brought to justice. Let's listen in to his comments and the force's response to the strikes.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. It was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया। किसी भी सैन्य ठिकाने का निशाना नहीं बनाया गया और अभी तक किसी तरह की नागरिक क्षति की रिपोर्ट नहीं है।
All right, let's stick with this itself. In response to the growing national security concerns, nationwide civil defense drill is scheduled today in 244 districts. What are the details about these mock drills, and what do these mock drills entail? What would be some of those important of the 244 districts that there are? Let's go back to Parikshit for the same. Parikshit, there's a civil defense drill as well.
That's right. In fact, just to tell our viewers, the last time that we saw these nationwide mock drills or wartime mock drills taking place was in 1971 when the Indo-Pak war broke out. Even during the Kargil war in 1999, we only saw very limited mock drills in some places along the border, not pan-India. So clearly, this is an exercise to prepare and sensitize civilians about what's happening nationally, about to align them with the national security and military operation that is underway across the LOC. Clearly, the operation for Sindoor must have begun immediately after the Pahalgam attack. And similarly, the need was felt to have these mock drills around the country to make sure that the citizens are motivated, they're aware on how to protect themselves in case of a hostile attack. This doesn't mean that we're wanting war or we want a hostile attack. But the fact is, when you carry out a kinetic strike of this kind against Pakistan, where you use artillery guns, where you use fighter jets to carry out terror strikes against the border, then you cannot judge or fix the response of the other side. That's not in your control. There is every possibility that Pakistan may preemptively or may actually want to escalate the situation, and it could lead to a full-blown conflict as well. So one has to work with that eventuality in mind, and that's why these nationwide mock drills are taking place to teach people how to evacuate in case of an emergency, where to hide in case there is an air siren which goes off, how to defend yourself in case of a hostile attack, how to come to the rescue of people who have been injured. How should children, how should college students be trained? So there are awareness camps going on. Of course, hotline centers will be established on how the civilian defense teams should cooperate with the Air Force and the Army in case there is any kind of attack or distress situation. The response times of different teams. Now, we must tell our viewers, the civil defense teams comes under the Ministry of Home Affairs. It is a separate department, Department of Civil Defense. You've got 6 lakh civil defense volunteers across the country. Every state government has a civil defense department, and anyone can join these departments voluntarily. Currently, there are about 6 lakh, and we hear from our sources that the government wants to take the enrollment in civil defense teams to somewhere around 18 lakhs. So they want to motivate people to be a part of this national security operation, be mentally aware about what's happening, and sensitize others about the gravity of the situation as well. So 244 districts. Why 244? Because these are areas where the Civil Defense Department of the government has a base in the country. So these are the only places where people can enroll. And in the coming days, you are likely to see more such mock drills happen in schools, in districts, along border areas, all over the country.
All right, Parikshit, thanks a lot for that. So that's the update as far as the mock drill is concerned. As Parikshit was speaking, there was a slight recovery in the markets. The markets have been consolidating around the flat line by and large, but right now it's just a wee bit of recovery, and it's led by a couple of these Adani Group names. So pull up Adani Ports, that's moved higher. We're seeing some traction in,
I think we have the Prime Minister who's addressing the media. Let's cut across.
Reflects this spirit from launching a small rocket in 1963 to becoming the first nation to land near the south pole of moon. Our journey has been remarkable. Our rockets carry more than payloads. They carry the dreams of 1.4 billion Indians. India's achievements are significant scientific milestones. Beyond that, they are proof that the human spirit can defy gravity. India made history by reaching Mars on its first attempt in 2014. Chandrayaan-1 helped discover water on the moon. Chandrayaan-2 gave us the highest resolution images of the moon. Chandrayaan-3 increased our understanding of the lunar...
All right, those are some comments from the Prime Minister on Chandrayaan. We'll just keep an eye out on any further commentary coming in on the developments of last night from the Prime Minister. But meanwhile, as we were talking about, the markets, there have been individual stocks which have been spiking. What we'll do is actually take a short break, come back. On the other side, we have a couple of result reactions to talk about as well. It's been that kind of week, a bunch of results and a lot of news flow that has come in as well. Himanshu Baid of Poly Medicure joins in to discuss their fourth quarter numbers.
Welcome back. Well, you're still tuned into Halftime Report on CNBC-TV18. Let's talk about a couple of companies now. And in fact, the first management on the show, Poly Medicure, they reported what was a good set of Q4 numbers. Revenue's grown 17% year on year. Margin has increased by around 15%. So to talk more about the earnings, we have with us Himanshu Baid, who's the MD of the company, joining in there. Mr. Baid, thank you very much for taking the time out. This revenue growth, which has been quite strong. First, I just want to narrow in on the domestic business, which has, been quite strong for you. I think it was over a 20% growth that you recorded, and there was a recovery that you've alluded to in the past 2 quarters as well. Just give us a sense in terms of what went right for the domestic business in terms of, say, renal care, your other segments, and what are you guiding for?
See, domestic segment on the renal side has done very well. We have grown around 60% year on year. And that was the guidance we had given in the beginning of the year, that we'll grow by 50%. Then we launched 2 new divisions in cardiology and critical care. So these 2 divisions are very new. We've hired around 70 people in those 2 divisions, but this was the first year, last year. Now this year, I think they will also grow quite rapidly. And that's the plan for, we also launched our new drug-eluting stent early this year. So all this is part of the domestic business. And this year, I think probably domestic business will grow much faster than the export business. We are probably expecting a growth between 25 and 30%.
All right, 25 and 30% coming in from domestic business. If you could give us a sense on a couple of things. You said renal business has grown well. Yeah. Last year, your target for the full year was 140 to 150 crores. Wonder whether you've achieved that or not. What's your target for next year? And also the cardiology business, what's your target for next year? Along with the margin band. I remember you typically give a 25 to 27% margin band.
So on the renal side, you're right. We have crossed 150 crores of revenue in this current last financial year. And in the current year also, we expect to grow by around 50% again. That's the plan for the renal business growth. Cardiology is very new, but because the base is very, very low right now. But our plan is to probably do 25 to 30 crores of revenue this year, and then grow more substantially in the coming years once we get more regulatory approvals in other markets. But this is just a beginning, so I don't have too much comment on that business, but it's going to grow during the year substantially.
And what about the margins? 25 to 27%, is that on the cards in FY26, or do you believe it can outperform that?
I think we will stick to that 25 to 27% EBITDA margin for the full year. And I think we'll be very consistent on that. So we'll continue with that, guidance.
Okay, so you're looking for 25 to 27% margins. You're looking for probably, revenue growth of over 20% in your domestic business. The renal business, how much are you looking to probably take it to? What's your eventual
we should
target?
grow, over 50% this year. And that is what we're planning again for this current FY26 also. So hopefully we should end, around 225 to 230 crores of revenue from the renal business itself.
Okay. Tell us about the export markets now. Maybe if you could touch upon Europe, how that particular business did for you. There were some new launches there.
So Europe is slightly lower in Q4 compared to, let's say, Q1 to 3. And I think we have seen a lot of geopolitical shifts, changes happening in Europe also. So there's a slight slowdown there. But what we are doing is we're trying to recover it maybe through domestic growth, higher domestic growth. But overall, if we look at the full business, we should be looking at around 20% plus over growth for the whole year in the financial year.
That's for the exports business or the overall business?
Could you repeat that again, please?
Is that 20% guidance for the overall business or just the export business?
No, for overall business.
Okay, so that means your exports will grow below 20% because 2/3 of your revenue coming from exports, 1/3 from domestic. Domestic, you expect to grow between 25 to 30%.
See,
so exports grow between.
That is the current scenario which we see, but I think some things may change as time progresses. But overall, export has been our core focus, core business. But domestic has done very well. I think in Q2, Q3, Q4, we have done very well in domestic markets. So I think we continue to grow, but I think we have some new approvals which are in pipeline, new certifications. So hopefully the growth should come back. But we are probably guiding for export growth to be between 15 to 18% right now this year.
Okay, so export growth of 15 to 18%. Mr. Baid, I wanted to also touch upon the CDSCO license for this drug-eluting stent. You just about, I think, got approvals in place last quarter.
Yeah.
Has that taken off in terms of sales?
Yeah, it has already started. So we have started sales. We have already implanted over 200 plus stents, in different patients. And we have also signed up for a clinical registry where we will do clinical trials for over 2,000 stents. It will be the largest registry in India to be done ever. So we are already working on that. And some lot of other new devices are going to be launched during the year in cardiology space.
So give us, specifically on the stent business itself, how much are you generating and what is your outlook in terms of, say, growth or in terms of other products that you might introduce?
See, I think stent is a very, very new business for us. So it's very hard to guide right now. So probably we'll need 1 or 2 years before we know where we are heading. But we see a huge potential because we have a couple of new designs which we are launching, a couple of new technologies we are launching. So they're very promising. And it's just a start. We are building up the business right now. So it will be very hard to comment, but yes, we should end between 25-30 crores of revenue in cardiology, which has just begun for us. And then we start scaling up in coming years.
And what about the medical devices market on the whole? I remember you had invested about 500 crores or committed a 500 crore investment in production of medical devices. What is the typical revenue run rate on an investment like this over the long period?
So typically, so the 500 crore investment will happen by, let's say, end of FY26 or let's say end of calendar year 26. And so we have already started, working on 3 new manufacturing facilities, again, to augment capacity on the renal. Some of it will go for cardiology expansion, some new devices. So that's already happening right now as we speak. So typically in our industry, investment to revenue is around between 1.2 to 1.5. That's probably how it works.
So you expect about 600 to 750 crores coming in by FY27 or 28?
That's correct. That's correct.
Okay. I just wanted to come back to the renal care business, considering that you're seeing such strong growth. You are installing quite a lot of dialysis machines, if I'm not mistaken. Just tell us about how many probably in a month that you install. Where are you seeing this demand come in? And are you seeing competition in the space? Have exports reduced within the industry simply because there is indigenous manufacturing taking place? And what is the market looking like there?
See, the biggest challenge is in dialysis business is the reuse currently in these devices. And we see that, currently the dialysis filters are used 5 to 6 times in India. The tubings are used 5 to 6 times. And probably that is a big deterrent for the growth in the market. But in spite of all the challenges, because we were the first company to launch such products in the market in India, including the machines. So we have seen a good traction, for making India products. And this year itself, we are targeting to sell around 500 to 600 machines. So typically it will be between 40 to 50 machines a month. And, we see a good traction. And as we increase manufacturing capability and more local indigenized parts and components, I think we'll be able to reduce cost and actually, bid for larger contracts.
Right. And I remember you had some money coming in from PLI as well. You expected revenue from PLI-linked products to be close to what, 100, 150 crores? Where does that number stand?
Input from PLI right now, because the scheme was, not very, well designed, I would say. And I've been requesting the government to actually, reconstitute the scheme, but probably that's not happening. So we eventually didn't get anything for first 3 years from PLI from the renal business. So this is without the support of PLI. But I hope in next 2 years we might get something if we cross certain revenue targets for renal business.
Okay, all right, Mr. Baird, thanks very much for joining in and giving us all of those details with regards to the business. Well, very strong guidance which is coming from the management about FY26. They do expect margins to maintain between 25 to 27%. Domestic growth should be above 20%. Overall growth should be around 25%, led by the domestic business, and renal care would be one of the key drivers there. Those are some numbers on your screen. Car trade tech is up 6.5%, reacting to a 16% growth in terms of revenue. We'll take a break, but Pritesh Mehta will join in to discuss technical. Stay tuned.
Welcome back. Absolutely flat for the Indian indices, but a big surge in the profitability of car trade tech, and that explains why the stock has seen such a big spike post their numbers as well. 17% revenue growth, as we pointed out before going into break, but it's been on a strong uptrend all through today's trading session so far. The net profit up 86% implies margin expansion coming in as well. But the F&O pack of the day, if you look at it, the Nifty bank as well as the mid-cap index, absolutely flat for the Nifty and the Nifty bank. The mid-cap index is doing a lot better, but the market has been consolidating, not just today, over the last 4 or 5 trading sessions itself. If you look at the Nifty days high, it has been coming down for the last 4 trading sessions. On May 2nd, the high was 24,589, then 24,526, lower to 24,510, and today's high, 24,450. But what's heartening is that lows are getting protected between 24,250 to 24,400 itself, and that's extremely positive from a consolidation and a mid-cap index standpoint, and that explains why the advance decline today is also firmly in favor of advance, about 1,500 stocks in the green for about 1,000 in the red itself. Post the Ministry of Defence briefing, we also saw a big gash in the India VIX, so telling you that there is some risk which is likely to be back on the table as fears subside a little bit. But amidst all of this, the street does not believe a big move on either side. Everyone's betting for consolidation. Why do I say that? Because look at the 24,300 put that expires tomorrow, has a premium of 40 rupees. The 24,400 call, again, this expires tomorrow, has a premium of 50 rupees. Even if you're selling both of them, you're playing for a broad range of 24,200 at the lower level to 24,500 at the upper level. That's exactly what the street is betting for. Were we to break out, maybe protection in calls are bought at around 24,500 at 23 rupees a pop. But individual stocks, that's where the story is. BSE is seeing a lot of long positions being added post their numbers. And also SRF, 4% up move is what we're seeing on that stock with a big jump in the open interest. So that's the setup from the F&O space sector.
Okay, all right. So that's what's taking place in the F&O space. We have Pritesh Mehta joining in to discuss the technicals this afternoon. Then Pritesh, hi, welcome to the show. Well, there's definitely more traction in terms of the mid-caps at this point. So give us a sense in terms of, specific stocks that you would be recommending.
Yeah, thanks for having me on the show. Good afternoon. Also, despite plenty of action and noise in markets, our indices have been resilient. It has avoided resistance, but it is not reacting downside. It is a good thing. Bank Nifty financial are still the leaders. Mid caps are doing well, as you mentioned. In fact, they are outperforming. Breadth is also mixed. So, and despite everything going around, globally also and on the border also, markets are reacting. It's a very good sign. For us, I think 24,200 is an important support. And if you look at the peak which was made in the month of September 2024, and thereafter the low in March 2025, index has spent most amount of time around the zone 24,400, 500. So we need to take that zone out for fresh momentum to kick in. Till that time, at best, I think we are going to go through a period of time-based correction, nothing more than that. And talking about the stocks, we have two recommendations on the upside, on the buy side. The first one is buy on TVS Motors. Now, see, the stock peaked out in September 2024. Thereafter, there was a sharp correction, but it defended the peak of 2023 and rebounded thereafter. We have seen a pattern of bullish anchor column and follow-through moves coming in. So buy for a target of 3350, and stop loss would be around 2600. The second one is buy on power grade. I think power space is likely to be a good, going to lead from the front even from here on. So when we talk about this particular stock, it had a corrective move in last few months. Thereafter, it formed a base around 2-year mean and recovered, and now it is coming off a small consolidation base. So buy for a target of 345, and stop loss would be 300.
You spoke about TVS Motors. Do you have a view on Tata Motors? Because stands to benefit from the India-UK free trade agreement. Currently, the stock had been, beaten down almost, 30-35% from the highs, is attempting a bit of recovery. What do you make of Tata Motors chartically?
Yes. So when we look at the auto pack, we like Eicher Motors, we like TVS Motors, and also Ashok Leyland, one stock that can do well. It could be a joker in the pack. It could outperform big time. But Tata Motors, I think after a sharp corrective move, it is holding on to support, but it is lacking that consistent move on the upside. So I think it is going to take its own time, and rather we should focus on stocks which are outperforming rather than putting our hands in Tata Motors right now.
Okay, all right. So stay away from Tata Motors. Well, Pritesh, thanks very much for joining in and taking us through all of those recommendations that you have. We'll take a short break now. But up next, the management of Aarti Drugs will join in. That stock is buzzing about up around over 5% and they'll be in to discuss the quarter gone by. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, for the markets, it's pretty much consolidating right now for the Bank Nifty, the Nifty and the Sensex, and the mid-cap index currently outperforming. So it's pretty much status quo in terms of the indices and how they're moving on a larger scale. The advanced decline ratio, even keel at around 1:1. Let's get talking about a couple of big movers then. The other one, which is on our radar today, is Aarti Drugs. That particular company gets around 82% of its sales from the API space and 9% in terms of formulations. It came out with its numbers. It was around a 9% growth in terms of revenue. As you can see, the stock is shot up around 15-odd%. Margins also were at around 14-odd%, flattish on a year-on-year basis. But there's been a recovery which has taken place this quarter for the company, especially in the API business. So let's start with that. We do have the management joining in to discuss the numbers. Adish Patel is here with us. Adish, hi, welcome to the show. Well, let's start with, the revenue part of it, because you did mention that API prices were a bit subdued. How did this quarter pan out for you in terms of API prices and the overall revenue growth that you've clocked of around 9%?
Yeah. So the API prices have stabilized since December quarter, which is a good news. And that was the main reason why our second half of this FY25 showed a good improvement in gross contribution margins. And now that it has stabilized, we feel that now we have to work more on the expense side of the manufacturing part to improve our EBITDA further. So in this quarter, we already clocked an EBITDA margin of around 14%, whereas on the standalone basis, it was around 14.5%. So going forward, if formulation business improves more on the margin front, then the margins of 14 to 15% is not far off for us on a consolidated basis.
All right, margin to 14 to 15%, not too far on a consolidated basis. What is your revenue prognosis for FY26? How much comes in from exports? What's your domestic sales guidance? And, in the revenue, what would be the volume? How do you expect prices to move?
So the prices have stabilized now. So we don't foresee any change in pricing scenario as of now.
Got it.
But when it comes to projecting FY26 versus FY25, the first half, we might observe a negative price variance of roughly around 4%. But that was because in the last year, we saw some price decline quarter on quarter. On that account, we are forecasting around minus 4% for the first half. The second half won't see any price decline year-on-year basis for FY26. And whatever growth we are forecasting for FY26 purely on the volume terms, hopefully the current demand continues like this in the coming 4 quarters, and with the addition of 2 more products, salicylic acid and a couple of methylamines, we feel that volume growth should be pretty easy for FY26.
How much? How much volume growth, Adesh?
So around 10 to 15% is what pessimistically we are targeting.
Pessimistically?
Pessimistically, wow.
So that's your base case scenario, you're saying?
Yeah, yes.
So what's your optimistic scenario?
So the thing is, salicylic acid has a full potential of around 250 crores per annum. Methylamines, even though it is 200 crores, but 50% of it will be captively consumed by us for our anti-diabetic product, metformin, which is quite big for us, around 12% as far as revenues are concerned. So it will be both these projects will be helpful on 2 fronts. One is backward integration, improving the gross contribution, and other is on the sales side. However, I would like to point out that as far as salicylic acid is concerned, so we have been taking big losses for each quarter in FY25, almost to the tune of around 6 crores at a PBT level. So once we reach around 700 tons to 800 tons per month capacity utilization, we'll be breaking even. So that will be additional jump in terms of profit margins for us.
Okay, all right. Well, Adish, while we've spoken about the numbers, I just want to touch upon your Tarapur plant. You did receive a voluntary action indicated status for it. Correct me if I'm wrong, did it have prior issues when it came to the US FTA?
Yeah. So that Tarapur plant was under import alert from quite a long time, actually. So we were quite thrilled the import alert was removed from that facility, and now we are approved to ship to US from that facility. However, it will take some time to ship to US directly. But the thing is that stigma associated with the import alert with the facility was also hampering our sales in the European markets from that facility. So that will pick up pretty fast, whereas the US will take around 12 to 24 months to come in a meaningful way.
So right now,
what could the revenue be from this plant for both the US and Europe once it scales up?
Yeah, so whatever facility we have right now, that can give around some 85 crores of revenues, but then the profit margins would be really high, which will almost margins would be double or triple what we make in ROW market. Whereas we have more land parcel in the under the same FEI number, which we can put another facilities and double the revenue potential from that facility.
So, the US was a small part of your business. Now you're probably going to go, full tilt on the US business. What is the plan? Do you want to become a formidable player in the US, or, you want to keep it under, say, 5-10% in terms of total revenue?
See, our target would be to keep on improving on it. In fact, after receiving this US FDA approval, we are confident, and so we want to make a move for our metformin facility as well, which contributes around 12% to our revenues. So we are filing USDMF in this particular year for metformin, and we would like to get that plant also US FDA approved. We already have European approval for that plant, but US FDA would be helpful.
Okay, before we let you go, Adish, there was that UK FTA which was signed yesterday. Any impact on the API space which would benefit you all?
Can you elaborate on that?
The UK free trade agreement was signed with India. Just wanted to understand whether any impact would come in on API supplies from India to the UK,
okay.
And which would, which companies such as yours could benefit from?
Okay, so we don't see any immediate impact because we don't see much formulation facilities in UK. It is mainly in the other parts of Europe like Italy, Spain, and Germany. Okay. And other formulations are going directly from from India and China to the Europe. So from API perspective, it may not make that big of a difference for us.
And you still hold on to that 4,000 crore revenue target by FY28 guidance, right?
No, we actually slightly have to revise it down.
All right.
So what we feel that we will still try to make 3,000 crore plus in 2 years' time. And from there onwards, we will take another step to 3,500. This is purely based on the fact that the API prices have corrected tremendously over the last 18 months.
And how would your revenue mix look then? Because right now you have nearly 80% coming in from API formulation, which is about 5 to 8%. You wanted to double it over the next few years as well. Then there's specialty and intermediates, etc. So what does your revenue mix look like at, say, 3,500 crore revenue by FY28?
So what we foresee is that the growth in API won't be that high, but intermediate nutraceuticals and spec chem, these three segments will grow more in the standalone company. And that will be similar to so formulation may not be going upwards of 15%, but the spec chem, intermediate and nutraceutical, that segment can, almost double, which is around 8%. So it can go like 15-20% as well.
Okay. Any other plants which are under the US FTA scanner, or was it only the Tarapur API facility?
Tarapur, then Sarigam, which we will like to file. And we got US FDA approval for our oncology formulation plant in Baddi this year itself.
Okay. All right, Adish, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Aarti Drugs. That stock is up 14.5% doing well in today's trading session. A lot of bullish comments coming in, except for the fact that they had that 4,000 crore target. They're now looking at around 3,000 to 3,500 odd crores. And that is because of the subdued API prices that they are dealing with at this point in time. So that would be one of the key reasons. But nonetheless, we need to take a break on that note, but we'll get you more on the markets. A lot of stocks buzzing around. More on the other side. Stay tuned.
Welcome back. Look at a couple of these pharmaceutical stocks. They're spiking right now. We have Glenmark Pharma, which has moved to the high point of trade. Even from the chemical standpoint, we spoke about fresh longs being added on SRF. That stock too has moved to the high point of trade. L&T from the frontline space has moved higher. Titan, ahead of numbers tomorrow, has moved higher. Has had a listless week so far. It's largely flat, but ahead of numbers, seeing some traction. But the US FDA says that they are planning to expand unannounced foreign inspections. Ekta, is this a cause for worry?
Well, Manglam, interestingly, that's always been the agenda for the US FDA. So they have always wanted to have unannounced inspections, but now they've come out with a press release stating it. And the tone of the press release was more different than what we've seen in terms of US FDA communication earlier. So I think that is probably the key difference. So what they have said is that the US FDA will be expanding unannounced foreign inspections. They are building on a foreign unannounced inspection pilot program that they ran in India and China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies do. US firms already face surprise checks, according to them, and foreign sites often show more violations despite advanced warnings. So what they are trying to do is to make it completely objective. For example, investigators will refuse industry-paid travel such as stay, food, etc. FDA, to put it into perspective, conducts 12,000 domestic inspections per year and 3,000 foreign inspections in more than 90 countries every year. Remember, India has the largest number of FDA plants worldwide. Now, surprise, except for the US in terms of the foreign ones. Surprise checks, according to the press release, says that it helps catch bad actors who falsify records, conceal violations. FDA can act against inspection delays, denials, limitations, refusals. Now, the goal for them is safer, legitimate products for Americans and a new phase of tougher, smarter oversight. So what happens is that obviously you don't get time to prepare and you have somebody knocking on your door. You can't hide any kind of mistakes that your plant would be making, and that's the objective, to get a safer medicine out there, to make sure that there's no data integrity and there are no other issues which are present in plants. So from their perspective, it's quite fair, and they have been wanting to do this for a while, but now they've made it official.
Take that point, Ekta. Thank you so much for that. Seems like there'll be a little more work for you as well, tracking all these surprise, announcements that may come by as well when it comes to US FDA investigations, inspections. They've been happening so far, but the company has gone ahead and put it out on paper this time around. I'm looking at Radico Khaitan. It's our special Insight Edge segment. Why am I looking at that stock? Reported a very strong set of numbers. Revenues grew 21%, EBITDA grew 45%, margins expanded as well, and we saw the net profit surge around 71% as well. What was positive, however, was that volumes grew 28%, prestige and above grew by about 16%, and we saw overall volumes being boosted by change in Andhra liquor policy. Add to that, their net debt reduced too. All of these factors are positive. And add to all of this, we had the UK FTA, or the free trade agreement, that was announced as well. There are a couple of reasons why the stock might be lower in today's trading session. One, the street believes that this volume surge seen in the fourth quarter may not sustain because it was boosted by Andhra liquor policy. So this kind of momentum is unsustainable. Secondly, there is some profit booking. There are fears of cheap UK scotch coming to India and competing with some of these products in India. The thing is, Ekta, if you are selling liquor in India, you have to go through not only state-wise regulations, you have to get the central approval. So it's not very easy for foreign brands to come into India and directly compete with our players. There is, reduction in duty from the UK, but that is central. We have state taxes as well, and the states haven't moved on taxes yet. So if state taxes increase, then the entire benefit of sourcing bulk scotch would be negated. So that's another uncertainty that the street is looking at. And finally, apart from all of this, there's just a wave of profit booking that we're seeing in the market right now. Nothing really to worry about. We spoke with the management, about their Q4 numbers, more importantly, the outlook for their business next year. And this is what Abhishek Khaitan had to say.
We expect the momentum to continue. And as we have always maintained, our focus is on the P&A category, which we want to grow by at least 15% for the next 2 to 3 years. So seeing the momentum in all our brands like Magic Moment Vodka, which has crossed 7 million cases, our 8 p.m. Black, our After Dark, all the P&A Royal Ranthambore, which we launched, has done 2 lakh cases. So I think we are well set to achieve the 15% growth in our P&A, and our regular also should grow by about 12 to 13%. So overall, we expect the volume to grow in the range of about 13% for the next year. As far as the value growth goes, I think we should grow by about close to 20% plus in terms of sales value. EBITDA definitely would be higher than that. And as far as margin goes, we are consistently with our premiumization working to get the margin up by about 100 basis points year on year. So that is what we are aiming at. We term it as the luxury segment, where we talk about Royal Ranthambore onwards. So if you see in Royal Ranthambore is there, then you have Jaisalmer Indian Craft Gin, then we have Rampur Indian Single Malt, we have our Sangam. So these are our part of the luxury portfolio. Now, if you see in the last fiscal, our turnover was about close to 340 crores, which is a 30% increase compared to FY24. And in the current year, we are aiming to at least have a turnover of 500 crores of only our luxury segment. If you look at our Jaisalmer Indian Craft Gin, in spite of having competition from the overseas players as well as the domestic players, our market share is more than 50% in this segment. And with more players coming in, the category is more buoyant. So I think it helps with more competition coming in, it expands the category. And we are seeing that the gin category is like the vodka. It is now catching up, and it's still in a nascent stage where we are dominating with a 50% market share with our Jaisalmer. So I think with more players coming in, the category will expand.
Okay, so that is Radhiko Khaitan, but let's now shift focus to BSE, which is in focus after reporting its Q4 numbers. Motilal Oswal has also issued a bullish call on the stock. Vamakshi is here with the details on that.
Well, Ekta, a good set coming in from BSE this time around. When you look at the revenue, that has seen an uptick of almost 10% sequentially. It has come in much higher than what the street was working with, and largely this growth in revenue is being driven by the transaction charges, which were up nearly 20% on a sequential basis. Other operating income too saw a healthy uptick of almost 12%. On the flip side, it was the treasury income which saw a knock of almost 9%. Services to corporates too declined by somewhere around 17% sequentially. The EBITDA margin for BSE has seen a bit of an improvement, up 58 basis points quarter on quarter, but it is lower than what the street was penciling in. Nevertheless, there is a beat coming in on the net profit, and that is mainly on account of an SGF reversal, that is a settlement guarantee fund reversal of around 109 crores. This is in comparison to a SGF contribution which the company had made in the previous quarter. Net profit resultantly saw an uptick of almost 126% sequentially, much higher than what the street was penciling in. As far as operational metrics are concerned, average daily notional turnover has seen a dip of almost 35%, but on the flip side, when we look at the premium turnover, that has seen an uptick of almost 35%. Now there's a note that has come in from Motilal Oswal as well. They have a buy call target price of 7,600 rupees per share. They say that the F&O regulations have been beneficial for BSE with respect to a rise in the non-expiry trading activity, and we did see that given that NSE shares in the equity option segment dipped to almost 81%. They've also gone ahead and revised their premium ADTO estimates to 15,700 crore for FY26, 19,000 crores for FY27, and they see further room for this to expand going forward. Overall, they've gone ahead and raised their earnings estimates by 9% for FY26 and 13% for FY27. So strong set coming in from BSE. They've managed to gain some share. Bullish call from Motilal Oswal, keeping the stock buoyant in trade today.
Right, we take that point. Vamashi, thanks a lot for that. Meanwhile, at the bottom of your screen, big boy MRF, big boy in terms of the share price, 1,40,000 rupees share price, up 4% on the back of good numbers coming in. Revenues up 12%. We've seen margin expansion as well, if I remember correctly. And at the same time, the company has approved a final dividend. Obviously, nothing in front of the massive share price that there is, 229 rupees. But importantly, the final dividend that they give every year, the quarterly dividend for MRF is just 3 rupees. The final dividend is a lot higher, so it's about 229 rupees. But that's not the point. The numbers are good. Net profit growth of 30% over a revenue growth of 12%, implying margin expansion. Crude prices lower. implies that going forward as well, margins would be a lot better. Take a short break, come back, get you more stock-specific news on the other side. Back, let's look at some of the earnings that are, likely to come soon. We had some line on MRF saying that the margins at 15% are higher than the Bloomberg estimate of 12.5% as well. We've been talking about how the margins have been a bit tough. But let's talk about United Breweries. That reports its fourth quarter results today. And what is it that the street is expecting? We have a sneak preview into the volumes already. Net revenue grew in low teens, whereas beer volume grew mid-single digit, and that growth lagged market largely because supply in one of the major states, which is Telangana, was halted for 12 days in the quarter, and as a result of which we would see volume growth come by at just around 4 to 5% against the last quarter growth of around 8% itself. Premium segment, however, is continuing to do well, so that is likely to grow upwards of 20%. Put all of this together, revenue ex excise would be 8% higher. EBITDA grows 22% and margins increase by about 70 basis points. The net profit grows by 11%. 200 basis points is the volume impact due to no sales for 12 days in Telangana. Disruption for beer industry in January in Karnataka due to excise duty hike will also impact performance. UP and Assam, however, are likely to see stronger growth, and premium segment grows over 20-25%. Importantly, the margins will also be supported in the remainder of this quarter and the rest of all of FY26 by the 15% price hike that was allowed in Telangana. So all these things will be very important for United Breweries. Most important would be the volume outlook and the margin outlook for the next year, now that things have settled across states.
Okay, all right, fair enough. So that's on United Breweries, but Boltas will be reporting its Q4 numbers. Upasna joins in with street expectations.
Well, we are expecting a stable quarter this time around with a revenue uptick of 17% according to our poll estimates. EBITDA, we are expecting an uptick of 85% at 354 crore, and EBITDA margin we are expecting to expand sharply from 4.5% to 7.2%. PAT, we are expecting a 110 times increase from 116 to 247. Now, there are significant losses in EPC seen in Q4 FY24 to drive optically high growth, which is likely to be seen in EBITDA and PAT this time around. Now, we are expecting a robust UCP growth of nearly about 20% on the back of strong summer season offtake, and this growth will be mainly driven on the back of 24% growth in RAC segment of the company, 13% by commercial air conditioner, and 5% growth in commercial refrigeration according to the Kotak estimates. Now, this RAC revenue growth is expected to underperform the industry on a relative basis on account of high base and companies' loss of market share. Now let us look at the key things that we'll be closely watching out for. We'll be looking out for the margin and the demand outlook commentary of the company, its market share gains or losses commentary and the way forward, and lastly on the new order additions in its project business. So overall, expecting a stable quarter from Voltas.
Okay, all right, Upasana, thanks very much for that. And on that note, it's a wrap from Manglam, myself and the entire team of Halftime Report. Thanks very much for watching. Business Lunch up next.
Indian Armed Forces launched precision non-escalatory strikes on 9 terrorist bases in Pakistan in response to the TRF's terror attack in Pahalgam. No civilian casualties were noted and no military establishments were targeted in these non-escalatory strikes. Stocks have staged a smart recovery after a weak start as investors shrug off fears of conflict escalations with Pakistan and focus on the positive developments on trade. Auto and utilities are leading the charge, while FMCG and healthcare are the big drags. India and the UK have concluded a historic free trade agreement 3 years after the negotiations were launched. The pact covers almost all tariff lines with duty-free access for Indian exports and revised tariff lines for imports. Alcobev, textiles and autos will be the key impacted sectors. The US and China have agreed to hold formal talks on trade later this week, with Treasury Secretary Scott Bessent and Trade Representatives Jameson Geer representing the US in the slated icebreaker in Geneva. Experts, however, do not expect a deal anytime soon. Good afternoon. You're with us here on Business Lunch live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and it's been a very mature reaction from the markets in response to the retaliatory strikes launched by the Indian Armed Forces in response to the terror attack in Pahalgam last month. The index currently at the flat line, and of course there are plenty of earnings reactions that we are tracking, and those are the ones that remain the key focal point. Of course, the other major announcement, of course, was the UK free trade agreement that was signed last evening, and that is also a focal point, and that has also seen a lot of stocks reacting to that. But of course, as we were mentioning, it is the earnings reactions that are taking center stage. MRF came out with results just a few minutes ago, and on the operational front, there was a significant beat compared to Bloomberg consensus expectations, and you can see that on the stock as well. 4% higher now on MRF, 1,40,000 on the stock. 229 rupees is the final dividend that the company has also announced, which is the highest ever on record for MRF, and this is in addition to the 6 rupees that it had already announced earlier in two separate announcements. So that takes the full year payout to 235 rupees. So strong results from MRF. 3.75% higher on the stock. We are also looking at results from Car Trade Technologies that were reported a few minutes earlier, and the stock ahead of the results announcement was trading 7.5% higher, and then took a nosedive after the earnings were announced and is now trading in the red. Is a Car Trade Technologies at now 0.4% lower, and this is after the monthly unique viewers on their website dropped on a quarter-on-quarter basis, and that has resulted in the stock collapsing from the highs of the day. And this is despite the fact that the profits were up almost 86% from last year, revenues were higher, margins were also up almost 8 percentage points, and despite the positive numbers, the negative that it came in from the unique viewers, that has taken the stock lower, 0.5% lower on Car Trade Technologies as well. Other than that, the other earnings reactions that we are tracking include the likes of Paytm, Piramal Enterprises, BSE, all of them trading with gains of around 7% each. But the big story of the day, and possibly the only story of the day, has been the Indian Armed Forces launching Operation Sindoor early this morning, hitting terrorist infrastructure in Pakistan and Pakistan-Occupied Jammu and Kashmir. Focused strikes were carried out on 9 terrorist infrastructure sites, including Bahawalpur, which is the headquarters of the Jaish-e-Mohammed. The Indian Armed Forces have also decimated terror camps at Muridke, the headquarters of the Lashkar-e-Taiba and Hafiz Saeed's Jamaat-ud-Dawa. Now, according to the Indian Army, no Pakistani military facility was targeted. Now, let us also go across to Parikshit for the latest developments on this. Parikshit.
Well, yes, that operation is still ongoing. These were strikes that were carried out from within our territory. Very important to point that out. There were 9 targets. These were terror camps operating in Pakistan. 7 of these were targeted by the Indian Army using artillery and drones. 2 were targeted by the Indian Air Force. Coincidentally, let me also tell our viewers, I'm in a government school in Lodi Estate in Delhi right now, where there have been mock drills happening all across the country. Advisories are being given to students, to teachers, to move out to the classrooms or to hide themselves under the desk or gather in a closed area of the school or the playground of the school as well. Having said that, let me come back to the issue of the strikes that have been carried out by India. They were carried out in Bahawalpur, located 100 kilometers from the international boundary. This was the headquarters of the Jaish-e-Mohammed. Muridke, 30 kilometers from the border outside Samba. This is a Lashkar camp. This was the place where terrorists from the 26/11 Mumbai attack came. Gulpur, LET camp in Savai, a Jaish-e-Mohammed launch pad in Bilal, a Lashkar-e-Taiba camp in Kotli, a Barnala camp where terrorists were there, a Jaish-e-Mohammed camp in Sarjal, and a Hizbul Mujahideen camp in Mehmuna, which is near Sialkot. We have destroyed these terror camps completely. This is what sources tell us. Pakistan, in response to our military operation, which happened around midnight last night, post-midnight, and lasted around 25 minutes, Pakistan has immediately escalated the level of ceasefire violations with heavy artillery firing all across the LOC and the international border. 8 civilians have been killed, 2 have been injured in that. And these operations still continue. We're looking at a very high level of preparedness all along the country. But the message coming from the 2 women officers and Vikram Misri was one that said that India has acted in a very restrained fashion. We were left with no choice but to respond, but we have still targeted only terror camps in Pakistan. We've not targeted any military area. We've not targeted any vital installation, any installation of economic importance or civilians for that matter. And these messages going out to the foreign media as well. So we've also seen how NSA Doval has spoken to Marco Rubio last night. Soon after this operation was over, we've also taken our counterparts in Saudi Arabia, UK, Russia on board with the exercise.
Parikshit, thank you for those updates there. And as Parikshit was mentioning, the operations are still ongoing. Now, the Foreign Secretary, along with the representatives of the Indian Army and the Indian Air Force, addressed the media about Operation Sindoor. Listen in to that.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. It was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया। किसी भी सैन्य ठिकाने का निशाना नहीं बनाया गया और अभी तक किसी तरह की नागरिक क्षति की रिपोर्ट नहीं है।
There was the details of the briefing there, and as you can see the visuals on your screen of the Cabinet Committee of Security that met this meeting being chaired by Prime Minister Narendra Modi, briefing the Cabinet on the developments that have taken place in the ensuing night of yesterday and early hours of this morning, the retaliatory strikes launched by the Indian Army on terror bases in Pakistan and in Pakistan-Occupied Jammu and Kashmir. There are live visuals coming in there from the Cabinet meeting on the Cabinet Committee of Securities being chaired by Prime Minister Modi. Now, a nationwide civil defense mock drill will be conducted today to enhance emergency preparedness. Abhimanyu is joining in with more on this. Abhimanyu, what are you gathering from your side?
Well, mock drills are scheduled at several places in the national capital and at several places across India. We are currently standing outside the Chabad House, which is located in the Paharganj area of the national capital. And what we see behind us, of course, there is deployment of police, which is a regular phenomena at the Chabad House, what we have seen in the recent past too. Also, several mock drills have been carried out in this area in the past few days. This is as per the information which has been given by the shopkeepers in the vicinity. Also, particularly speaking of the Chabad House, now a Chabad House was the target of the 26/11 terror attack, and the terrorists had targeted particularly a Chabad House in Mumbai. So clearly security has been stepped up at all such places in the national capital and across the country. Also, not just civil defense volunteers, but also several other volunteers among general civilians. They are being sensitized about several procedures with respect to evacuation, with respect to recognition of alarms which would possibly be activated in case of an emergency. And also they have been asked to step up their vigil generally to spot anything suspicious, any suspicious object in their neighborhood to ensure that there is no untoward incident. Now, even as security has been stepped up at India's borders, be it the land, air or sea borders, even within the country, several initiatives are being carried out and mock drills are going to be a part of it. So mock drills, of course, would involve several procedures which would involve detection of IEDs, evacuation procedures, and also how to save lives in case of an attack which takes place. Of course, security has been stepped up, and not just state police but also central security forces have spanned out the entire national capital region to avoid any untoward incident.
Abhimanyu, thanks a lot for that update. Now, meanwhile, several domestic airlines have issued travel advisories, while other foreign airlines said that they are rerouting or cancelling flights from and to and from Europe. Madhya is joining in with more on this. Madhya.
Well, 5 states bordering Pakistan have seen airspace activity getting impacted. So if you look at the flight tracking site, Flight Radar 24, then Jammu and Kashmir, Punjab and Himachal Pradesh have no flight movements at all, while Rajasthan and Gujarat have no flight movements in the regions that are bordering Pakistan. So airports including Leh, Srinagar, Jammu, Amritsar, Pathankot, Chandigarh are closed. Then Jodhpur, Jaisalmer, Rajkot, Jamnagar, Bhuj and Porbandar are also closed for civilian flights. I would like to add that there is no official communication yet from the Civil Aviation Ministry on the same. So Indian Airlines have issued advisories to passengers are talking about the cancellations of flights to these destinations. Indigo cancelled flights to Srinagar, Jammu, Amritsar, Leh, Chandigarh, Dharamshala, Bikaner, Jodhpur, Gwalior, Kishangarh and Rajkot till the 10th of May. Then Air India said that all flights to and from Jammu, Srinagar, Leh, Jodhpur, Amritsar, Bhuj, Jamnagar, Chandigarh and Rajkot have been cancelled till the 10th of May. Air India Express, Akasa Air and SpiceJet have also issued similar advisories. Several foreign airlines like Qatar Airways have suspended flights to Pakistan. And if you look at the Pakistan airspace, it has absolutely no or very few aircraft in its airspace currently.
Indeed. Madhya, thanks a lot for that update there on the advisories issued by airlines and the recent action in the airspace. Take a short break. On the other side, the big development from last evening, the India-UK trade deal. More on that when we return. Stay tuned. Welcome back. Still around that 24,350 mark is where the index is. 24,363 is where the current level is for the index. And as we were mentioning, there are a lot of earnings reactions to track. But aside of that, Welspun Living is the top gainer on the Nifty 500 now, 13.5% higher on that stock. Remember, not Welspun Living, but Welspun Corp had won an order earlier this morning. But Welspun Living is the stock that's moving higher now, 13.5% on that stock. Syrma SGS is the other one, 8.5% higher on that stock as well. And the company announced that they are going to be holding a board meeting next week, of course, to consider results, but more importantly, to approve a fundraising via a QIP. So 8.5% higher on Syrma SGS as well. And of course, the trade deal related stocks, these are the ones, mostly the apparel makers are the ones that are seeing a very, very sharp surge in today's session. Gokaldas Exports at one point of time was up 16%. And the management also told us that they are seeing a major, almost $1 billion opportunity in the UK because of that. So Gokaldas Exports is the big winner from the UK FTA that was announced last evening, and we will get Parikshit on this in just a bit. But Gokaldas Exports is one one of them. KPR Mills is the other one, 7% higher for that stock as well. Raymond Lifestyle is up 7%. SP Apparel too is the other stock that has seen very, very sharp gains in today's trading session. But in some of the other global updates that we are tracking, the Chinese central bank is planning to cut key interest rates as Beijing is looking to boost its economy amidst the ongoing trade war with the United States. CNBC's Emily Tan joins in with more.
China announced the first set of economic support measures since President Trump's Liberation Day and his tariff war. The People's Bank of China announcing a 50 basis point cut to the RRR effective from May the 15th. The cut will release 1 trillion yuan, $139 billion in liquidity into the market. The policy rate will be cut by 10 basis points, which also leads to a cut in the loan prime rate by the same magnitude. Speaking at the Interdepartmental Press Conference this morning, China's securities regulator says the U.S. tariff policies have brought great pressure to China's capital markets, and in response, it will forcefully promote long-term capital into the stock market, adding that it will help A-share-listed companies affected by tariffs to cope with difficulties. Meantime, the financial regulator said it will take further steps to stabilize the stock market and guide financial institutions to maintain steady financing support to the property market. Today's announcements help to lift Hong Kong and China shares, which are also reacting to confirmation of U.S.-China trade talks in Switzerland. Vice Premier He Lifeng is traveling on the invitation of the Swiss government and is expected to meet with Treasury Secretary Scott Bessent and USTR Jameson Greer while he is there on Saturday and Sunday. I'm Emily Tan reporting in Hong Kong. Back to you.
Now, the other major global trigger from this evening is going to be the Federal Reserve policy decision that will be announced later tonight. The U.S. Central Bank is expected to hold its benchmark interest rate. CNBC's Steve Leisman is joining in with more on this.
Amid forecasts for higher inflation but greater concern about recession, respondents to the CNBC Fed survey are increasingly confident the Fed will cut interest rates, but don't see the Fed acting preemptively. The CNBC Fed survey shows 100% think the Fed will keep rates unchanged at the May meeting, and 77% say the Fed should keep rates unchanged. So not a lot of agreement with the idea that the Fed should be cutting interest rates now, but they will over time. 3.7 is the forecast for the year-end funds rate, down from 4.33 at the current rate, and by 2026 it drops to 3.36%. This happens amid a 53% recession probability, up 30 points since January for the biggest two-survey increase we've had since 2022, when the Fed began hiking rates sharply to battle inflation. Asked what the Fed will do in the face of higher prices from tariffs but weaker growth, 65% say the Fed will cut in the face of that dilemma, up from 44% in the prior survey. 26% say the Fed will hold in that scenario, down from being the choice of the majority in March. The change of heart looks linked to the surge in the chance of recession, a rise in the expected unemployment rate, and a greater belief that tariff-related inflation will be more in control by 2026. The March Consumer Price Index came in at 2.4% year over year. That's seen rising this year to nearly 3.25%, but then declines next year to 2.6%. Lou Breen from DRW Trading writes in with the survey, quote, "The Fed must project an inflation fighting stance, but in most circumstances they will react more quickly to labor market weakness. When the unemployment rate rises a few more tenths, the Fed will lower rates and suggest economic weakness will dampen inflation." The growth outlook shows a sharp decline from 3.1% last year to just 0.8% this year, but then bouncing back to above trend at 2% in 2026. The unemployment rate rises by about a half a point to 4.7% from the current rate of 4.2, but remains at 4.6 in 2026. So while cuts are forecast to address expected economic weakness, the Fed is not seen acting preemptively, waiting for the data. So the first cut is not fully forecast in the survey until July, and the second one not until September. Steve Leisman, CNBC Business News.
We'll be discussing all of that at length tomorrow morning. But for now, take a short break. Back with more on the other side. Welcome back. Now, India and the UK have concluded a historic free trade agreement 3 years after negotiations were launched. The pact covers almost all tariff lines with duty-free access for Indian exports and revised tariff lines for imports. Now, Alcobev, textiles and autos are the key impacted sectors here. Earlier today, we spoke to the management of Gokuldas Exports and Radico Khaitan to understand what it means for the industry. Listen.
Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large thanks to FTA, thanks to duty-free access because of it being a low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. And on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India.
If I talk from Radico's perspective, we welcome the FTA move because as a company, we are also one of the largest importers of bulk scotch. We would be the largest importer, and we'll be importing about close to 250 crores of bulk scotch in the current fiscal. And also we are exporting our malts to UK, etc., so which becomes much easier. So from Radico's perspective, I think it's a welcome move. The final prints are still awaited. But on the whole, signing of the FTA is a good move by the government.
Two contrasting reactions there. Gokuldas Exports up 14%, but Radico Khaitan had opened around 6% higher, but has given up almost 10% from those levels, now trading around 3.5% lower. But some more international news then. Conservative leader Friedrich Merz has won a parliament vote to become Germany's next chancellor at the second attempt. Merz has initially fallen 6 votes short of the absolute majority he needed, and after hours of uncertainty in the Bundestag, the parties and the president agreed to hold a second vote, which Merz won with around 325 votes in his favor. The Cardinals' conclave to elect the next Pope began at the Sistine Chapel today. 133 Cardinals will now be barred from meeting the outside world until a new Pope is elected. The race to succeed Pope Francis, who died last month, is seen as wide open. Meanwhile, the crying room, which is an antechamber within the chapel, has been prepared for the next Pope to change into his papal wardrobe. Continue to remain at that 24,350 mark, but numbers from HUDCO flashing on your screen. They have FY25 AUM growth at 35% in comparison to their guidance of over 30% that they had given. So they've beaten their AUM growth guidance as a HUDCO. The NIMS too for the year at 3.22%, in line with what they had expected at 3.2. The gross NPA is at 1.67 compared to 2.71%. So an improvement in the asset quality as well for HUDCO, and you can see the stock too recovering from the lows, and net NPAs too improving in FY25. So HUDCO is one result reaction. The other result reaction is Bharat Seats. We just saw numbers from that company, the Maruti Suzuki backed company, just a few minutes earlier, and that stock is locked in a 20% upper circuit after the results announcement. The profits were up 42%, revenues were up a similar quantum, EBITDA too was up 34% from last year. All the margins remained flat on a year-on-year basis, and you can see Bharat Seats there in a 20% upper circuit. But with that, we call time on this edition of Business Lunch. From me and the team that put this show together, thank you so much for watching. Midcap Radar for the next 30 minutes.
Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Vivek, the markets look very nervous right now. We did see some smart recovery come through after the initial fall that we saw. But the mid-cap end of the markets, that's holding up well, right?
That's right. Good afternoon, Vamakshi. Like you mentioned, markets opened up in a very nervous manner, but a very sharp intraday recovery. Like you mentioned, mid-cap, small-cap indices, ensuring that the market bit remains very, very strong. Let's start off with the top headlines. Stock stage a very smart recovery after a weak open as investors shrug off fears of conflict escalation with Pakistan and focus on positive developments on the trade front. Auto and consumer durables lead the charge, while FMCG, pharma and healthcare drag. Mid-caps surge.
Digital payments platform Paytm in focus on the back of its Q4 earnings. Revenue grows sequentially while net loss narrows.
The street cheers Pyramid Enterprises' fourth quarter. Disbursements rise 16% sequentially. Asset quality also improves.
Angel One in focus after reporting its April update. Positives outweigh some market share loss. Meanwhile, pace of gross client addition picks up after slowing down for 3 straight months.
BSE surges in trade after revenue and net profit in the fourth quarter beats estimates, although operational performance was weaker than expected.
Well, 24,350, that is where the Nifty is at, not doing so well on the benchmark indices, but the broader markets continue to outperform. The mid-cap index is up 1.2%. As far as some sectors are concerned, it is the auto pack that continues to, shine and trade. We have Tata Motors up nearly 5%, MRF2 after reporting a good set of numbers up 4.5%. The FMCG index, on the other hand, is the top laggard. We do have some pressure coming in on Radico as well as Patanjali Foods. But there's like we mentioned before, the broader end of the markets is holding up quite well, and we now have a special segment, mid-cap movers. We have Hormaz to take us through the mid-caps that are moving around in trade. Hormaz?
Broader markets are indeed holding out well for themselves, and there are plenty of stock-specific reactions to various news triggers. Let's start off with Welspun Living at 14% higher for that stock. Sirma SGS ahead of its earnings next week is up 8.5%. Endurance is up 10%. So strong reactions for a lot of these mid-cap names. A couple of earnings reactions as well. A lot of numbers were reported in the last 30 minutes, and MRF is one of them, is now at the highest point of the day, 4.5% higher after the strong operational beat, if I could say that. Cartrade Tech was up 8% before the earnings announcement, is now 1% lower after the drop in the monthly unique viewers for the website, and that too has seen a drop of almost 9% now from the highs of the day. Paytm is a strong earnings reaction as well, and Bharat Seats numbers came in just a few minutes earlier. Stock locked in a 20% upper circuit in today's session. Now to other names, that the bigger trigger was the UK FTA that was signed, and the apparel makers are surging in today's session. And look at Gokaldas at one point was up 16 to 17%, still holding on to gains of 13. KPR Mill is up 7 3/4. Raymond Lifestyle is at the highest point of the day, 5% higher on that stock as well. Stocks doing well on the volumes front, and there are a couple of them that are not doing well as well. Radico Khaitan is one of them, is now down almost 10% from the highs of the day. Piramal Enterprise is an earnings reaction, as is BSC. Both of them doing well on strong volumes. And lastly, some laggards from the broader markets. There are plenty too, and defense names are some of them. Mazagon Dock and Bharat Dynamics both at the lowest point of the day, now 5 to 6% down on both these names. And Swiggy ahead of its results later this week, and the shareholder lock-in ending next week is down 5% as well. Back to you guys.
Thank you so much, Hormaz. A comprehensive list as far as the movers in the broader end of the markets are concerned. Well, just like to look at two stocks. The first stock, of course, has to be Paytm. This particular stock opened lower today. There was a one-time impact as far as the bottom line was concerned that led to a loss on the bottom line. But the subsequent management commentary was quite positive in terms of the company managing to turn profitability in FY26. On the back of that, look at the stock up almost 7.5%. And the second stock is one that Hormaz just alluded to. The results came an hour ago, which is Cartrade Tech. Look at the stock. Post results, the stock was up almost 10% at one point of time, but since then it's cooled off quite significantly and now in the red. What's actually happened? Like Hormaz said, unique visitors as far as website have cooled down, and also sequentially the numbers look quite muted. On the back of that, the stock now trending lower 1%. But it's a good time to welcome Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Good afternoon, Chandan. Thank you so much for joining us. First up, Does this continue to remain a buy-on-dip market? What are your views as far as the Nifty and the Bank Nifty are concerned?
Good afternoon. Thanks for having me. So Nifty got stuck in a range from last 6 trading session in between 24,200 to 24,600 marks. 4 days back, Nifty made high near 24,589. That was a 61.8% retracement of the entire down leg from 26,277 to 21,743 mark. So technically, index has completed one down leg and then recovery of the same, and now it requires the next leg of rally. But the good part is that supports are intact. Even after the concerns, even after the higher VIX at 18.8, the supports are intact in the market. Even the higher base is clearly formed at 23,850, 24,050 or immediate at 24,200. So because of all these levels, buy on decline could continue. Those who are looking for positional point of view, till Nifty holds about 24,050, upside could continue and market has potential to rally towards 24,750 to 25,000. Those who are looking for intraday point of view, 24,200 could act as an immediate support for a bounce towards 24,444, 24,500. So as of now, till market holds the key levels, buy on decline could continue. But one need to keep in mind that Bank Nifty witnessed some underperformance, and because of that, the upside could be kept. But till the key levels are respected, one has to continue to be with long position. Talking about the Bank Nifty index, it has been consolidating in between 54,000 to 56,000 from last 13 trading session. Now it is at the lower band of the trading range. So if it manages to hold 54,000, then some recovery could be seen to us 54,750 to 55,000 marks.
Thank you so much for that, Chandan. This is Mamakshi joining in. So, could you help us understand if it's a buy on dips market, what are some of your top picks as far as some stocks are concerned?
Yeah, so I believe it's going to be buy on decline stance because key supports are being respected. Put writing is intact at lower levels. FI's long short ratio headed to 50%. Put call ratio is hovering near one level. The only concern is that few heavyweights banking stocks are not performing. But at the same time, Bajaj Finance started to witness buying interest. Reliance already seen the good run-up in last 13-14 days. That is taking some consolidation. So if these heavyweights come into the picture, then market will start the next leg of rally. So because of all these data effects, we believe buy on decline could continue. But I believe for next couple of days, we should focus more on the stocks rather than index because market may see some more consolidative move before starting the next leg. So talking about trading idea, first trade is buy on Apollo Tyre. We have seen good buying interest in most of the tire companies, be it C8, Balkrishna, JK Tire. And there are two key triggers. First, the rubber prices are trading at recent lows. Crude oil is comparatively stable and falling from higher levels. And most of the tire stocks are making higher tops, higher bottom with rising open interest and delivery volume. Talking about Apollo Tyre, it has been moving upwards from last 5 weeks. Supports are gradually shifting higher. We have seen addition of long build-up. So one can buy with support of 480. And Apollo Tyre has potential to rally towards 515, 520 zone. Second trading idea, that is buy on Marico. The stock has really done well, and selective FMCG and consumption-related name has seen the momentum. Marico is quoting at its lifetime high territory. It has seen a consolidation breakout of last almost 13, 14 days, and it is all set to give a decisive close above 725 marks, and that itself opened the further upside of 5 to 10%. So one can buy with support of 720. And the stock has potential to rally towards 760, 770 marks.
Thank you so much for that, Chandan. Keeping an eye out on Apollo Tyres as well as Marico. But, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.
Welcome back to Mid-Cap Radar. Well, one particular sector that's been doing quite well after a very encouraging set of Q4 results is the tire pack. MRF is the latest to go ahead and declare its results. The stock is doing quite well, up almost 4%. Sudarshan joins in with the internals of the results.
So after CEAT, now it's MRF, which has reported a strong set of numbers for Q4 FY25, and it was a beat led by margin improvement. Revenue has increased by 12%. EBITDA has moved higher by 18%. It has come around 1,040 crore against Bloomberg estimate of around 900 crore rupees, and margin too has expanded. It has come in at around 15%, and there was an expectation of around 12.5%. So what has worked for the company, not only the company, for the entire sector, is the raw material cost. If you compare sequentially, it has been flat. But now going forward, internals are now looking much better than what it was in Q4 of FY25. So I'll just read out the three factors. First, if you look at the crude, in Q4 FY25, average was around $67 per barrel. Now it's come down. It's around 60 or 59. Second, if you look at rubber prices, it's also trading at multi-month lows. And third, in the commentary of CEAT, the company had said that raw material cost in all probability in Q1 of FY26 also is going to be benign if you compare with Q4. So Q4 earnings are beat, and in all probability, Q1 is also looking better.
Well, thank you so much for that, Sudarshan. A beat on MRF. Resultantly, the stock is trading high by almost 4%. But one other stock that is in focus is Paytm. Keep in mind that the stock had seen a knock of almost 6% yesterday, but today the stock is up almost 10% in trade following its Q4 earnings. We now have Abhishek joining in with the fine print. Abhishek?
Well, the numbers on the top line were below analyst estimate. However, the bottom line was encouraging, and the management commentary also was encouraging. So to begin with, revenue is down 15.7% YOY and up about 4.5% sequentially. It came in at 1,911 crore versus Motilal Oswal estimate of 2,100 crore. They reported a net loss of 545 crore, but that is on account of one-time expense of 522 crore. The estimate of loss was about 110 crore, but the actual loss, if you remove the one-off, is below analyst estimate. Contributed profits, that was down 16.85% YOY and up 11.7% sequentially. The GMV, that increased by 8.5% YOY and about 1.2% sequentially. The total transactions are up 16.65% YOY and about 6.9% sequentially. In the con call, the management has mentioned that, EBITDA before ESOP, they will turn profitable in Q1 FY26, and that spooked, with respect to the reaction that we are seeing on the stock price today. Back to you.
Well, thank you so much for that, Abhishek. That's Paytm for you. The stock as of now is trading with a gain of over 7%. But another counter in focus is Angel One, but not on the back of its Q4 numbers, but its monthly business update. When we look at the gross client addition out here, it stood at 4.9 lakh. This is an uptick of almost 4% month on month. Keep in mind that in the month of March, we did see a downtick of almost 4%. So therefore, we're seeing the pace of client addition picking up after 3 long months, which is a big positive for a company like Angel One. The client base is steady. 3.14 crores is where the client base is at, an uptick of almost 1.5% on month-on-month basis, similar to what we saw in the month of March. Average daily orders have also recovered, up 4% month-on-month at 56.1 lakh. Average daily turnover too seeing a decent uptick of 1.6%, and in fact, this has improved for the second straight month. When we look at the market share, the equity market share is up almost 12 basis points month on month. It has recovered to 19.6%, but the F&O market share is down nearly 37 basis points to 20.6%, and in fact, this has declined for the third straight month for Angel One. Commodity market share also taking a knock after a good recovery that we saw in the previous month, which is in the month of March, and commodity market share now stands at 56.1%. But overall, when you look at the numbers that have come in for Angel One, the positives clearly outweigh the negatives. The stock reacting to that up 1.5%. Vivek.
Well, thank you so much, Vamakshi, for explaining. Angel One has taken quite a bit of a knock in recent times, and today's data indicates that there's some recovery in the offing. Thanks so much for taking us through the internals there. But moving on, remember, last evening, the US FDA said that they are planning to expand unannounced foreign inspections. Ekta joins in. Ekta, clearly the operating environment as far as Indian companies exposed to the US market is getting quite negative, right?
Well, yes, it's pointing to a tougher environment definitely for a lot of the Indian generic companies. So what the US FDA said is that they are going to be expanding unannounced foreign inspections. It builds on the foreign unannounced inspection pilot program which they had conducted in India and China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies. For example, US firms already face surprise checks. Foreign sites, despite the prior intimation, show more violations despite advanced warnings. Investigators have indicated that they refuse, or rather the US FDA paper has indicated that, to ensure objectivity, investigators will have to refuse certain things. For example, industry-paid travel, to ensure that it is completely objective in terms of a regulatory inspection. Now, to put it into perspective, the FDA conducts around 12,000 inspections in the US itself. They conduct around 3,000 foreign inspections in more than 90 countries every year. These surprise checks, according to them, will help catch bad actors who falsify records and conceal violations. And they will also, or they can also act against inspection delays, denials, limitations, refusals. The goal for them, according to this press release, is safer, legitimate products for Americans and a new phase of tougher, smarter oversight. I think, the street has already been preparing for this because the US FDA has been quite vocal about their plans with regards to this. But now they've put it down on paper. But most of the Indian generic companies, they've been supplying to the US. The large companies have been supplying to the US for years now. And hence, they're quite well prepared when it comes to any kind of surprise inspection.
Well, thank you so much for that, Ekta. Now let's move our focus to Radico Khaitan. The stock is under pressure despite a strong set of earnings. The management told CNBC-TV18 that they expect the momentum to continue and are set to achieve 15% growth in the P&A category. Let's listen in to key takeaways from the management conversation that we had earlier today.
We expect the momentum to continue, and as we have always maintained, our focus is on the P&A category, which we want to grow by at least 15% for the next 2 to 3 years. So seeing the momentum in all our brands like Magic Moment Vodka, which has crossed 7 million cases, our 8 p.m. Black, our After Dark, all the P&A Royal Ranthambore, which we launched, has done 2 lakh cases. So I think we are well set to achieve the 15% growth in our P&A, and our regular also should grow by about 12 to 13%. So overall, we expect the volume to grow in the range of about 13% for the next year. As far as the value growth goes, I think we should grow by about close to 20% plus in terms of sales value. EBITDA definitely would be higher than that. And as far as margin goes, we are consistently with our premiumization working to get the margin up by about 100 basis points year on year. So that is what we are aiming at. We term it as the luxury segment, where we talk about Royal Ranthambore onwards. So if you see in Royal Ranthambore is there, then you have Jaisalmer Indian Craft Gin, then we have Rampur Indian Single Malt, we have our Sangam. So these are our part of the luxury portfolio. Now, if you see in the last fiscal, our turnover was about close to 340 crores, which is a 30% increase compared to FY24. And in the current year, we are aiming to at least have a turnover of 500 crores of only our luxury segment. If you look at our Jaisalmer Indian Craft Gin, in spite of having competition from the overseas players as well as the domestic players, our market share is more than 50% in this segment. And with more players coming in, the category is more buoyant. So I think it helps with more competition coming in, it expands the category. And we are seeing that the gin category is like the vodka. It is now catching up, and it's still in a nascent stage where we are dominating with a 50% market share with our Jaisalmer. So I think with more players coming in, the category will expand.
Well, that was the management of Radico Khaitan saying that with more competition coming in, categories expected to expand. A very strong set of numbers. stock is seeing about a profit booking in trade today. Well, the next stock on the radar, the next company on our radar is Aarti Drugs. It's reacting to its Q4 earnings up over 15% in the session today. The management earlier told CNBC-TV18 a while ago that their revenue target stands at 3,200 crore over the next 2 years, which has been trimmed lower from the earlier guidance of 4,000 crore. And this is mainly due to lower API prices. Let's listen in to what the management had to say.
Actually, slightly have to revise it down. So what we feel that we will still try to make 3,000 crore plus in 2 years' time. And from there onwards, we will take another step to 3,500. This is purely based on the fact that the API prices have corrected tremendously over the last 18 months. So what we foresee is that the growth in API won't be that high, but intermediate nutraceuticals and spec chem, these three segments will grow more in the standalone company. And that will be similar to so formulation may not be going upwards of 15%. But the spec chem, intermediate and nutraceutical, that segment can, almost double. Now it is around 8%. So it can go like 15-20% as well. So the API prices have stabilized since December quarter, which is a good news. And that was the main reason why our second half of this FY25 showed a good improvement in gross contribution margins. And now that it has stabilized, we feel that now we have to work more on the expense side of the manufacturing part to improve our EBITDA further. So in this quarter, we already clocked an EBITDA margin of around 14%, whereas on the standalone basis, it was around 14.5%. So going forward, if formulation business improves more on the margin front, then the margins of 14 to 15% is not far off for us on a consolidated basis. The prices have stabilized now, so we don't foresee any change in pricing scenario as of now. But when it comes to projecting FY26 versus FY25, the first half, we might observe a negative price variance of roughly around 4%. But that was because in the last year, we saw some price decline quarter on quarter. On that account, we are forecasting around minus 4% for the first half. The second half won't see any price decline year-on-year basis for FY26. And whatever growth we are forecasting for FY26 purely on the volume terms, hopefully the current demand continues like this in the coming 4 quarters, and with the addition of 2 more products, salicylic acid and a couple of methylamines, we feel that volume growth should be pretty easy for FY26.
Well, that was the management of Aarti Drugs. The stock continues to surge higher, up almost 17% today. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned. Welcome back. You're watching Midcap Radar on CNBC TV18. One other counter in focus, Voltas will be reporting its Q4 numbers today. We now have Upasna joining in with the street expectations. Upasna, what are we expecting this time around?
Well, good afternoon, Vamakshi. First up, let me take you through the revenue growth. We are expecting revenue around 4,900 crore with a growth uptick of 17% on a one-year basis. EBITDA we are estimating around 354 crore with an uptick of 85%, and EBITDA margin we are expecting a sharp uptick from 4.5 to 7.2%. Now, significant losses in companies EPC in Q4 FY24 led to a lower base. That's why we are seeing an optically high growth in companies' EBITDA and profit growth. Now, when it comes to companies' revenue growth, it will be mainly driven by the company's UCP segment, which we are expecting around a 20% growth in this one, which will be mainly driven by RAC with a 24% growth according to Kotak Securities, commercial air conditioner with a 13% growth, and 5% growth in commercial refrigeration segment. Now, RAC revenue growth is expected to underperform this time around as company has lost its market share in this quarter. Now, let us look at the key factors that we'll be closely watching out for. We'll be watching out for the margin and demand outlook, ability to secure and gain market share forward, and company's commentary on that, and lastly on the new order addition in the project business of the company. So overall, we are expecting somehow a stable quarter for Voltas in its Q4 FY25.
Thank you so much, Upasna, for joining us and giving us a sense of what to expect from Voltas when it declares its results later today. As you can see on the bottom of your screen, Yum Brands operator Sapphire has gone ahead and declared its results. The net profit has declined on a year-on-year basis, down 25%, stock down 3%. There's been a moderation across all of the segments, including the EBITDA, which is down over 5%. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwal and thank you so much for tuning in as always. Let's take a quick look at the market. Has recovered from the day's lowest point is what we're seeing for the Nifty 50 as well as the Sensex. But what's outperforming today is the broader end of the market. Nifty as of now 24,370 levels is what it's managing to hold on to, and Sensex 80,600 is where it's trading at. Mid-cap day's highest point almost around that mark, 1.24% uptick coming in for the Nifty mid-cap. Small cap also managing to hold on to that strong green coming in for the Nifty small cap as well. Nifty Bank, some bit of a recovery that's come in from that, though it's far away from its day's highest point. As of now, holding on to gains of almost 0.1% in today's trading session. Other than that, autos is the one I want to highlight. Nifty Auto, that's the top sectoral gainer. It's holding on to gains of almost 1.3%. So keep an eye out on the Nifty Auto as well as the Nifty Metals. That's a pack as well that is managing to hold on to very good gains in today's trading session. So yes, that's how the market setup is looking like. The broader end of the market doing much better than the benchmark indices. But yes, moving on and getting started with the show for today. This is a show where we solve all your stock-related queries. And to do just that, we have our experts joining with us, Asta Jain, research analyst at Hem Securities, and Somil Mehta, head of alternate research, capital market strategy at Mirae Asset Sharekhan, to answer all your stock-related queries. Good afternoon, Asta as well as Somil. Somil, just a quick check in terms of the market levels that we should keep an eye out on, both for the Nifty as well as the Bank Nifty today specifically.
Overall, if you say the market undertone is positive in the medium term outlook. However, in the very short term, in a range. We are trading in a range. Nifty is trading in a range between 24,200 and 24,600. I'll be expecting this range to break out on the upside, and the next target should be would be closer to 25,000, 25,100 for the next levels. In Bank Nifty, similar situation. However, Bank Nifty has seen a very sharp decline in the last couple of trading sessions. However, I'm expecting markets to Bank Nifty to take support around 54,000 levels, or maybe a little lower, 53,600 or 700. Those levels are a very crucial support zone, and from there I'm expecting a good upside on the towards 56,300, 56,400. So overall undertone remains positive, trading in a range, but expected to break on the upside.
Okay, surely keep an eye out on those levels over there for the Nifty as well as the Bank Nifty. But on that note, let's get started with the first query for today. We have Siva Kumar, who's writing to us from Chennai. He's wants to know if it's a good time to enter ITC hotels as well as Indian hotels at the current price. Asta, good afternoon. Your view coming in on both these stocks, ITC hotels as well as Indian hotels. What are your thoughts on this one? Should they look to buy right now? How are the valuations looking like for both these?
Hi, good afternoon to both of you. Talking about both these counter, first of all, talking about Indian hotels, we believe that the structural tailwind of the industry is definitely there, because we are expecting more FTAs, that is a foreign tourist arrival, and that will lead the strong growth, especially in the ARRs, that is the average revenue, average room rate. So I think that will really help the company in the long term to post good numbers. But in the short term, we were not very much, optimistic about the results, and that's why, even though the standalone performance was good, but overall we believe that this stock can fall more. So there is a more downside is there, and where one can make a fresh entry. So not at the present moment of a time, maybe somewhere at around 730 to 740 odd levels are a good levels to make entry into this counter, with a price target of 800 and above levels. So right now, making fresh entry into this counter is not advisable. Maybe some more dips can come where one can make entry into. Talking about the other counter, which is the ITC hotels, I believe with the demerger that has happened, this counter is now trading at a price to earning multiple of 36. And again, the industry tailwind will definitely be there. We have seen that they have a strong plans of the room expansion, and we believe that it is one of the strongest counter where one can deploy the funds in. But in both the counters, we believe that some more downside are better to make entry into, and hence even here also we are recommending to enter into the downside, maybe at around 170 to 175 odd levels. However, our price target for this counter is 215.
Okay. And Saumil, your view on both these stocks?
Indian hotels looks positive in the medium-term outlook and in the short-term outlook. However, if you look beyond that, if you want to invest and keep the stock for more than probably 6 months or 1 year, I don't see anything happening here. It is in a range between 860 and 720 levels, and I'm expecting the stock to keep consolidating for a little while, and then probably a breakout on the upside. So in the very short term, has taken support around 720, 730, and will be expecting Indian hotels to go till at least 820 levels. So short-term targets, but not in the medium-term outlook. Indian hotels, I don't have much data on ITC hotels, but it is forming a triangle pattern, and I'm expecting a sideways correction for ITC hotels between 185 and 208. So these are the levels. Above 208, it will become a very good buy, and probably it will go up till 260, 270 levels in the medium term outlook.
Sure. Okay, that's a view coming in there, but I just want to mark the flashes that are there at the bottom of your screens right now. We have exclusive coming in, and this is according to sources. They're telling CNBC-TV18 that general insurers are to seek 20 to 25% hike in motor third-party premiums. Currently, there's a general and health insurers CEOs meeting that is going on with the DFS secretary, which is underway, and they may also furthermore push for removal of obligatory premium cessations of GIC-RE that is there. Discussions are currently underway. Let's wait and watch what more comes in, but this is what we're picking up from our exclusive sources. Keep an eye out on ICICI Lombard. You also have general insurers that are in focus as well. New India Assurance is in focus. GIC is in focus. So that is something important to keep an eye out on. But yes, that's the update there. But now let's keep it going with, one more stock that I want to highlight, and our ticker team was flashing, was also Craftsman Automation numbers that came in. Margins seem like they've seen a sharp bit of a fall coming in versus last year. So that's what I want to keep an eye out on. Net profit had seen a slight bit of an increase of around 8%. So let's watch out for that. That stock was down almost 2% when we were seeing it flashing on the bottom of your screens. Keeping it going with the queries then, we have the next query that's coming from Vinod Rajan, who's writing to us from Bangalore. He's holding 290 shares of Adani Enterprises, and this is at a price of 2,360 rupees per share. Wants to know whether to sell or wait for buying at lower rates. And given this current scenario, what should they be doing? Your view on this, Asta, Adani Enterprises, what should one be doing now?
I think one can remain invested in this counter with a price target of around 2,500 to 2,560 odd levels. This is at the initial level we are recommending the price target. Now, talking about this counter, as this is a flagship company of the Adani Group, and now this company, in fact, the results were also good, and now this company is scaling up in the energy transition, data center, etc. So that will be really helping the company going forward in posting very good and a very strong financial performance. So my idea here is to stay invested in this counter with a price target of 2,500 to 2,560 at the initial levels.
Okay, keep an eye on those levels. And your view coming in, Saumil, on Adani Enterprises, what should they be doing? They bought it at 2,360 rupees. So does it make sense to continue to hold this or look to sell?
I think this stock has been in a range for a very long time now. It's been in a range since November 2024 between 25,000 levels, 2,500 levels, and the lower end is 2,000 levels. So this is a broad range, and anything above this range, anything about 2,500 levels would be a good buy. But at this point of time, it is struggling to cross 200 daily moving average, 200 daily exponential moving average, and it's been consolidating. In the very short term, if this stock goes down till 2,100 or 2,000 levels, that will be a good time to buy the stock, but not at these levels.
Okay, not buying at these levels. That's the word coming in from you. Okay, let's move on and talk about the next query. This is coming in from Devadas Nair, who's writing to us from Kerala. He's holding 110 shares of Asian Paints is at a price of 3,100 rupees per share, holding it since 2021. But right now, obviously, clearly the stock has not done much in the last couple of years. The stock is trading at 2,372, so he's making a loss here. Wants to know whether he should continue to hold this or look to sell this one. As the Asian Paints, we'll have their numbers also coming out, but what are you expecting in terms of a move that is expected to come in? The stock is 30% down from its 52-week high, trading at around 44 times its FY27 PE as well.
Yes. So what was the major reason behind the volume growth was the continuous distress in the urban demand, although the rural demand for the company is increasing, but urban demand is right now again an issue for the company. And in fact, one of their product, they are started gaining the market traction also, and new products are contributing around now 12% of the total sales. Now, what we believe that with the increase in the discretionary spend, even the government trust is there, definitely this paint company will going to benefit from that in the longer term. But in the shorter term, some sort of volatility can be seen in the price momentum. But idea here is to stay invested and not exit from the current level, because the losses will be huge. So remain invested in this counter with the initial price target of around 2,700. And I think at those levels, again, one can review the query because we believe that the stock can move till those levels. So right now, hold is recommended for what I have said.
Okay, hold is recommended. 2,700 is what you're saying. Keep an eye on that one. Somil, your view coming in for Asian Paints, right? Like I was saying, 30% down from 52-week high. Last 1 year specifically, we have seen that fall coming in also almost around 20%. What should one be doing now? Should they continue to hold this, or would you just say book out your losses, maybe look at another company?
I totally agree with Asha. I mean, my targets would be around 2,750 levels. The fall which we have seen in the last 1 year has been very sharp, and I'll be expecting, at least in the medium term outlook, I'll be expecting a very good run from here. These are the correct levels to buy. It's been in a negative zone at this point of time, but I think this is a correct time to buy into this stock. And for the targets are around 2,750. You can keep a very strict stop loss around 20 to 80 levels. This will be a very strict stop loss for the stock, because in the medium term outlook, it is definitely sliding down, but I'll be expecting a good bounce from here. And this bounce can take it to 2,750.
Okay, keep an eye on those levels. 2,700 and 750, around those levels is what our experts are highlighting for Asian Paints. Maybe then you can look to sell or get out of the stock. But let's move on to the next query, and this is coming in from Debraj Bhattacharya, who's writing to us from Bangalore. 300 shares of Trent is what he's holding at 750 rupees. This is since 2021. He wants to know whether he should continue to hold or divest into other retail or e-commerce stocks. Genuine query coming in there. I think, Asta, Trent as a stock has done well. The company as a performance has done well. Overall, when you look at it since the time the viewer has been holding the stock, 750 to today at 5,239. So they're making a good amount of profit on this, right? What should they be doing now with Trent currently? We had seen that this time's earnings, moderate revenue growth, but margin was something that came in as a surprise. So your view on Trent, continue to hold. What are you expecting here?
So I would recommend to hold this counter. Now, the reason behind this, first of all, their strategy is because now they are rapidly expanding the stores, so that will increase the footfalls. In fact, they are now launching into the UAE also. There's Zudio Beauty, etc. They are entering into the LGD jewelry, etc. also. So I think with these plans in the mind, definitely the management is very much well poised to show some very strong performances going ahead in the company's financial statements. This is what I can believe, and that is why we are recommending to hold this counter. And I think this is a good space in the whole retail space to remain invested in. So idea here is to hold this counter, and a price target can be set at around 5,700.
Okay, and Somil, what is your view coming in? Should they continue to hold Trent, or maybe look at some other retail or e-commerce stocks is what they want to know? And if yes, then what stock should they look at also?
No, I think trend looks great in the medium term outlook, in the short term as well. In the medium term outlook, it has already seen a sharp decline from 8,000 levels, 8,300 levels to 4,500 levels. And multiple times this stock has taken support at 4,500 levels. So I think from here, a good upside is expected. I'll be expecting in the very short term, the support is at 5080, and the next support is around 4,830. So these are the two levels to watch out for in the short term as supports. And in the resistance, as a resistance, I think 5,770. This is a level where the previous swing high was there. Above this, I think there will be a very good rally on the upside for a target of 6,800 levels.
Okay, surely keeping an eye out on that. But on that note, we're going to slip into a very short break. Don't go anywhere, viewers. We'll be back with more of your stock-related queries after the break. Welcome back to your stocks on CNBC TV18. We still have with us Asta Jain as well as Sobil Mehta to solve all your stock-related queries. Let's keep it going then. This next query we have is coming in on Angel One. We have Vimal Kumar, who's writing to us from Kerala, holding 10 shares of Angel One, price is 2,602 rupees, and this is since June 2024, making some bit of a loss right now on this one. So he wants to know if he should add some more stocks to average his losses or book out his losses. Asta, what's your view coming in for Angel One? We had the April update also come in this morning. So what are your suggestions here?
So I would like to recommend hold rather than booking losses at this point of the time. Maybe one can see the cost price of around 2,600. So I'm setting that as a price target also. Now, what are the rationale behind this recommendation? Although we know that the results were not very strong and the major impact was due to the weak market conditions, some of the FNO regulation. And that is why we have seen the weak top line in the company's financial statements. But going ahead, what I'm positive about is that company has given the operating margin guidance of around 40 to 45%, and they will very well achieve it on the basis of the pricing. They have an edge for the pricing, and in fact what we have seen that some of the cost reduction measures can also be taken by the company due to the investment in the IPL. They have seen the elevated cost, so that seems to be reducing going ahead also. So on those basis, I believe that this company will show a strong financial performance going ahead, and markets are also now showing some sort of improvement. So all in all, remain invested in this counter, and we are very much optimistic that definitely one can see the cost price of around 2,600, which we are setting our targets also for this company.
Okay, and Somil, your view coming in for Angel One, should they book their losses, continue to hold? They're actually asking if they want to average, but I'm going to say hold or book your losses.
This stock has been in a range between 20 or 2,560, and the lower end is around 2,150. So I'll be expecting the stock to still be very range bound with a slight negative bias. If the stock goes above 2560, close about 2560, that will be a great time to buy, and then you will have a good rally on the upside, and probably the targets would be around 3000 levels. But at this point of time, I don't see anything happening in there, and it'll be a sideways movement. Probably you can switch on to some other stock where you find like Asian Paints, where I think there will be a more good upside in the stock.
Okay, keep an eye out on Angel One and those levels over there. Let's move on to the next query. We have Ashwik Jain, who's writing to us from Mumbai, holding 180 shares of Interglobe Aviation. Price is 5,160 rupees per share. Wants to know the long-term outlook on the stock. Asta, your view coming in for Interglobe Aviation. There's so much happening in the aviation space, but we have crude that is also seeing a reduction coming in, which accounts to most of their cost, 40% of the cost. So what should one be doing with Interglobe Aviation? Long-term story.
So now they are expanding internationally also, and with the local crude oil prices, and in fact, they are making strong investments. I think this is one of the very strong candidate for not only holding in the portfolio, but also making a fresh entry into. So we are recommending buy as well as hold both on this counter with a price target of 5,400 to 5,500 at the initial levels.
Okay, keep an eye out on those levels over there for Interglobe Aviation. But, that was the last query for today. So thank you so much, Asta, as well as Somal, for joining in with us and helping our viewers, as always, solve all the stock-related doubts. And viewers, thank you so much for tuning in, as always, and sending us your queries. But we'll wind down this edition of Your Stocks. Up next, your closing bell.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
India has essentially carried out calibrated strikes, precision strikes on 9 terror camps.
We'll just have to give it time for this to sort of play out in that sense.
I don't think the US-China trade, while it may resume from a complete stop, it's certainly not going back.
So if you look at, Bangladesh's exports to UK, it's almost 4 billion.
We don't foresee so much of competition coming in.
Israel coming out very strongly in support of India.
It's about 0.4% down, 24,277 is where we're at.
Clearly, the global support is with India.
9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया.
This is an exercise to prepare and sensitize civilians about what's happening nationally.
Of the Cabinet Committee of Security that met this meeting being chaired by Prime Minister Narendra Modi.
Punjab and Himachal Pradesh have no flight movements at all.
The initial, fall that we saw, but the mid-cap end of the markets, that's holding up well, right?
Well, that is the day so far, and on the index, there is still not very much to show for things. Really, a 10-point change on the Nifty, 24,400. We started around those levels, and we are there even now. Although mid-session, we've had a bit of a small rally, then a small sell-off, but nothing major at all. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant Rima, and Nigel are with me. Guys, hi, good afternoon.
Hi, afternoon. It's been a very mature reaction by the markets. There were some initial jitters, but after that, it's been fairly resilient, stable. So despite all the heightened tensions and the headlines, the markets have been calm.
Well, that's right. Part of the uncertainty is behind. The last 7 to 10 trading sessions, the markets have been waiting for this attack. And now part of that is behind us. We have to see if there is some retaliation and then, in fact, if it breaks out or there is an escalation from here on. But otherwise, the reason that we're seeing particularly the broader market outperformance is because of this. We started off with only 185 stocks that were advancing, and now that number is at 1,400 stocks. The crisscross lines come up for you on the screen. That will give you a picture. And for the last few trading sessions, a lot of large HNIs, they've been sitting on the sidelines. In fact, they've been raising some cash levels as well. Now, gradually that money will get deployed. As it is, we know that the FIs have been backing up this market. Domestically as well, there is a fair bit of liquidity. And now the HNI community will gradually start deploying some money, which explains why the broader markets are seeing a relative outperformance.
Absolutely. There is no volume on the downside.
Yeah.
I'm just looking at the top traded NSE stocks. I think 8-10 stocks have got volume and then suddenly drops off. Nothing. Even though, it's not as if market breadth is some 5:1 or even 3:1. It's pretty close to being 1:1. But you look at stocks which are higher and it's a much longer list. So at least, and this is true. This was true yesterday as well. Even as the market was selling off and we ended down, this is a market which wants to go up. I think that's the way to look at things. But just waiting on its hands for more clarity. Is there clarity? Is there absolute clarity and certainty? Obviously not, because we'll need to wait and watch if there are any further. If there's any further escalation with regards to India-Pakistan. But otherwise, this is done and dusted now. I think the market will move on. So enough and more activity as far as the broader screen is concerned. We'll, of course, highlight some of the specific stocks which are moving around. Rima.
Indeed. So while the immediate reaction has been fairly stable, investors will continue to remain vigilant. And the focal point today of investors will be the Fed rate decision. And that will be out later in the night for the Indian market. So taking you through the big movers in the frontline pack, most of the FMCG names. So Asian Paints is the top loser. That's down nearly 3%. But ITC, Nestle, Tata Consumer on the back foot today. Asian Paints, remember, declares numbers with a whole host of FMCG majors. Sun Pharma is on the back foot too. On the way up, you've got Tata Motors and many of the companies which can potentially export to the UK rising. So there is clearly a lot of optimism going into the UK FTA. Look at the way Gokuldas Exports has rallied. A couple of the other textile majors like Indo Counts, KPR Mills, whether they benefit or not, but as Gokuldas says, the opportunity is there. $1 billion is what they quantified it, and Gokuldas Exports is up close to about 12%. Many financial names in the mid-cap space are on the way up. So you've got BSC on the back of their numbers, KFin, Paytm is higher by nearly 7%, pretty large volumes. IFL Finance, add that to that list. Then you've got earnings reaction in the form of Aarti Drugs. You've got even Piramal Enterprises, for instance, that's moved up nearly 7%. CCL products higher for the second day in a row. On the way down, you've got softness in a couple of these defense names like Bharat Dynamics is down, Mazgaon Dock Ships, Shipyard, that's also lower in trade. And Swiggy has been so choppy this week, right? One day up, one day down, today down nearly 5%.
And the next few trading sessions, a lot more of the shares will be eligible for trading. So anything that will be an overhang because that lock-in period ends on Swiggy. So we'll have to keep an eye out in terms of the supply that could come in because of the some of the shares getting freed for trade. Let's get in Mitesh Thakkar, though, to give us his technical check on the markets. Well, Mitesh, when we started off earlier today, we were looking at a screen that was down 150 points. You know, the initial 15-20 minutes itself, that dip got bought into. The Nifty is now trading with a gain of 25 points, but the broader market's looking quite good. You'll say that the market wants to test higher levels?
Good afternoon, Nigel. I think that, still looks like to be the case. But the only thing is that, we are sitting on such a big rally that I think a few days of consolidation will not hurt the market. So I still believe that while the overall trend is up, this is a market which is, essentially sideways and closing about 24,520 or intraday hourly to hourly closing above that level, I think could trigger some upside. But trade with long buys. I have a buy on Oil India with a stop at about 399 and a target of around 425 on the upside. And the other one which I like, and it's been a stock which I recommended earlier as well, it's M&M. Just trying to get past the 3100 mark. So buy here with a stop at 3080 for targets of 3170.
M&M has gained 6.5% this week. Came out with numbers on Monday. The street loved the numbers, and the stock continues to gain upward momentum seen in M&M. That's a stock Mitesh also likes. But let's talk about Pharma. The US FDA says they're planning to expand unannounced foreign inspections. Ekta is here to tell us the implications. Ekta.
Thanks for that. Well, yes, the US FDA is looking to expand unannounced foreign inspections. So what they've said is that this is going to build on foreign unannounced inspection pilot program that they had in India as well as China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies in the US. US firms, for example, already face surprise checks as per them, and foreign sites often show more violations despite advance notice. Investigators now onwards will refuse industry-paid travel to ensure that there is complete objectivity in terms of these kind of inspections. To put it into perspective, the FDA conducts around 12,000 inspections in the US annually and 3,000 inspections outside of the US annually in more than 90 countries. Now, according to them, surprise checks will help catch bad actors who falsify records and conceal violations. The FDA, according to them, can act against inspection delays, denials, limitations, refusals going forward. The goal for them is safer, legitimate products for Americans, and a new phase of tougher, smarter oversight is something that they're looking at.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Prakash Diwan, who joins us this afternoon. Hi, Prakash. What a day of trade, right? You know, one would have thought that, in fact, the broader markets could be under some pressure. But clearly, money was waiting at the sidelines, waiting for the event to get out of the way. Now the markets are willing to look forward. Your comment on maybe the pharma stocks that Ekta just spoke about, or any other stock that comes to mind?
Good afternoon, Nigel. So I think it's been a remarkable day. Lots that's happened in the last 12, 24 hours, whatever. And, you know, the reason why the market has responded so maturely is there was anticipation of some kinetic activity, and that was kind of built in. People were light on positions while the FIs kept buying, which is a great sign of confidence in the underlying economy and the change that we are seeing. So, very clearly, it's going to be back to business as usual for a lot of the sector. There could be certain measures from the other side which could kind of, upset things once in a while. But I think the overall texture remains to be understood that the government wants economic activity to supersede everything else. And once the US Fed rate announcements are out of the way, you'll probably have very conducive global cues as well, which will favor India. I would believe some of these names that we have in the cyclical side, some of the industrials, they are the ones that will start looking up. And, we've been talking about cyclicals like cement and steel and chemicals for that matter, the way they're making a comeback. So it's going to be an opportunity while the rest of the world kind of, gets to pause. You actually have an opportunity to buy into some of these names. Pharma, extremely positive, but, it's a very vast field. What the US FTA is trying to do is rationalize or make the playing ground much more level, and that's always good for Indian companies who have matured enough to understand what the US FTA expects. So from here on, you'll probably see an accelerated pace of growth for some of the good ones. But I can tell you, Pharma is also priced pretty well from a valuation perspective. So don't expect fireworks out there, because it's not something like what IT was 2 months back, where it kind of made a comeback, which was very sharp. So Pharma is fairly, value. But yes, you will keep getting opportunities. I keep telling you about a company which reported numbers, nothing very spectacular, but the build-up is so positive. And after the the UK FTA, there's going to be a lot of work that will start happening at much more competitive pricing, in some of these research-related activities. So Indegene is one company that you could look at. They have a lot of clients in Europe, and once the UK FTA kind of starts getting into action, it's not just the textile and liquor companies that will benefit, but you'll have a lot of these fintech and pharma research companies and all, which will also start benefiting.
Hi, Prakash. PNB's numbers are just out. Remember yesterday, Bank of Baroda, same time was the accident. Bank of Baroda's, stock price slipped nearly 10%. But PNB has managed to grow its NII. In the case of Bank of Baroda, the NII had declined, and that disappointed the street, along with the NIM compression. But at least in the case of PNB, the NII has grown. Profits are up significantly, a 52% jump in the company's profits year on year. There is a surge in the other income, so that also has aided the bottom line. And the asset quality, at least, the gross NPA number looks to be fairly stable. The NII growth stands at about 3.8% at 10,757. The stock is not reacting too much, down close to about 1%. The entire PSU banking index itself is on the flatter side. PNB is down nearly 1%. But the other big story, Prakash, has been the UK FTA, the free trade agreement. So it's eliminated tariffs on 99% of the Indian products entering the UK market. So it's new avenues for key sectors like textile, the liquor industry. So we had a chat with Gokuldas Exports and Radhiko Khaitan. Listen in to what they had to say on how this deal can reshape their export strategy.
Bangladesh's exports to UK, it's almost 4 billion. China's exports is 5 billion. And India is about 1.5 billion or something like that. So Bangladesh is large, thanks to FTA, thanks to duty-free access, because of it being a low-cost country. So that gives them a special access, tariff-free access to UK market. They have a 12% advantage over India, which now through this FTA is nullified. And on top of it, if we get a duty-free access into that country, I presume that there must be a lot more opportunity to source from India. In anticipation, several brands have been socializing, sourcing from India market. Now this will get an incremental fill-up and will, rise very quickly. So I see this as almost $1 billion opportunity for India, incremental opportunity for India.
If I talk from Radhico's perspective, we welcome the FTA move, because as a company, we are also one of the largest importers of bulk scotch. We would be the largest importer, and we'll be importing about close to 250 crores of bulk scotch in the current fiscal. And also we are exporting our malts to UK, etc., so which becomes much easier. So from Radhico's perspective, I think it's a welcome move. The finer prints are still awaited, but on the whole, signing of the FTA is a good move by the government.
There's sort of two key voices coming through, Gokuldas and Radhiko, two different sectors. you know, Prakash, the opportunity for textiles, I think, is pretty clear. Apparel, etc., is pretty clear. For alcohol beverages, it's a little more mixed. We don't know. I mean, Radico, for example, as you heard, said they import a lot of bulk scotch for blending purposes, so they get savings on that. But then you also will have, you know, London and UK brands here at more competitive prices. So will that increase competition, lower pricing, etc.? We don't know. I mean, it's not clear in that conversation. And they also don't know. It's too early. What's your sense?
No, so I don't know if Nigel wants to pitch in, but you know, the market that is actually likely to get completely shaken up by this is the gin market, Prashant. We have a lot of gin players in India. Gin doesn't really take too much of time to set up a unit and get the distillery up and moving. You could start, you know, a greenfield plant just within a short span of 6 months. Now, what has happened is the market has started evolving very rapidly with so much of new introductions. UK is, you know, the mecca of gin. In fact, most of the raw material comes from there, the juniper and all. So, if you know, if the final produce from UK becomes more affordable, that's the market which will probably grow and impact local players as well. Diageo, for instance, has a huge portfolio of products which we don't have in India, which they don't sell in India because of this prohibitively high duty. If that goes away, you'll probably see that. So it may benefit a specific company because of its product strength, or it may kind of, you know, not benefit some of the other ones which compete against the UK imports or potential imports. So it's going to be a mixed bag. But I can tell you, it only helps expand the choices that Indian consumers have. And from that perspective, United Spirits will continue to benefit. And that's why you see, you know, there is a little bit of this neutral reaction of sorts. While it may lose some market share to imported whiskies, it also has a huge portfolio that benefits from it. And remember, at some point, they will start making India as the base to outsource to the rest of the world. So, you know, that's going to be a big change. So we'll have to see how people utilize this FTA in their favor. But there's lots interesting that can happen. It's just that it's just UK market that we are talking about. It's not the entire EU, which would have been a very different scale and scope.
What about textiles?
Oh yes, Nima. Textiles is probably the most obvious beneficiary, particularly apparel and home linen and all of that. So if you're talking about Gopal's expert, I think they've been on the point in terms of pointing out what's advantageous. But there are lots of companies which could benefit. There's a small company called Pearl Global, not very big in terms of size, but equally promising, available at probably 19 times PE. I don't know, to be very honest, how it is placed today, but I'm sure Pearl Global is like a peer group of Gopal's exports, has the base in India, exports to the rest of the world. And some of these companies will start taking advantage of this FTA to get market share. Now, once you get market share, once you get some sort of a footprint built up, it's extremely difficult for others to dislodge. So those are things that will happen. A PDS or a Pearl Global, those are things that I would definitely believe would look. But it's very positive for textiles for sure.
Okay, all right, Prakash, thanks a lot for joining in and giving us those inputs. And by the way, on the point you were making with regard to the alcohol beverage companies, I was just looking at a report earlier today that stated that actually tequila seems to be grabbing some market share on a very, very low base. So those gin drinkers are moving to tequila, but the sweet taste of whiskey does continue. I think volumes are as strong even in the past year. Thanks a lot, Prakash. We've got a few days to go before the weekend, so cheers to that in a few days from now. For the time being, we'll slip into a short break. You come back, we'll continue our market chat. We'll have the Alpha Manager of the Day, Jitendra Sriram of Baroda PNB Paribas, will be joining in. Stay with us.
Welcome back. The Nifty is at that 24,400 mark. Some of the stocks which deserve mention, one of them is Paytm. Stock is up nearly 7%. They reported a loss of 540 crore, but most of it was on account of a one-time ESOP expense. That was 522. So if you strip that out, the company is nearly profitable at the bottom line. So that's something the street likes. And secondly, even in the conference call, they spoke about how regulations are moving on the MDR front, the merchant discount rate, which is currently nil on UPI, but on other forms of payment like credit card, you are paying an MDR of 2%, 2.5%. But if it comes through on UPI, it will be a big catalyst, and the company even said that it could benefit them by 7 to 8 basis points. So Paytm has been a big mover. The other one is BSC, and the stock, I think, went on to hit a fresh 52-week high today. BSC share price, it's still up close to about 6.5%. It's come off from the day's high, but today it went to hit 6,847, new high on BSC. Again, the company's numbers are very strong. 10% jump in revenues quarter on quarter, year on year 75%. They're gaining market share in the options category, and the street likes the performance. KEI is another big mover. We're awaiting numbers from Dabur. Dabur remembers pre-quarter update in Q4 was very disappointing. The stock had fallen, and now we're awaiting the performance for Q4. The pre-quarter was a bit of a miss. But Voltas is the other one which will be reporting Q4 numbers. Upasana joins in with the street expectations.
Well, we're expecting a stable quarter this time around with a revenue around 4,900 crore with a growth of 17%. EBITDA somewhere around 354 crore with a growth of 85%. And EBITDA margin, we are expecting an uptick from 4.5% to 7.2%. PAT also, we are seeing a 1.1 time uptick, that is 247 crores. Now, the company has reported significant losses in Q4 FY24 in its EPC business, due to which the numbers appear to be optically high in terms of growth when it comes to EBITDA and PAT, but it's mainly due to a low base. Now, for RAC, we are expecting a growth of nearly about 24%, and the revenue growth overall of the company, that is around 17%, that will be mainly driven by the company's UCP segment, for which we are estimating a growth of 20%, which will be led by multiple factors, categories such as RAC 24%, commercial air conditioner 13%, and 5% by commercial refrigeration, according to Kotak Securities. Now, RAC revenue growth is expected to underperform the industry growth on account of high base and loss of market share this quarter. So now let us look at the key things that we'll be closely watching out for. We'll be watching out for the market margin and the demand outlook, company's commentary on the market share and the way forward, and lastly on the new order wins in project business. So overall, expecting a stable quarter from Voltas.
Okay, this is a number which we are expecting, but KEI reported numbers. We had the management with us as well. The stock, I think the last I checked, was up some 4-5%. Upasana, quickly wrap up the numbers for us.
Well, KEI reported a good set of numbers. Revenue growth was higher, much stronger than the street estimates. The company has reported a strong cable and wire growth of 34%, which has outperformed its peers, and also the street estimates of 18%. Now, growth was mainly driven by company's domestic demand in infra and real estate uptake, and also copper prices. For FY24, the revenue growth stood at 20% on a one-year basis, which was higher than the company's guidance of 17 to 18% in FY25. Going forward, company is guiding 19 to 20% growth in FY26 and 20+% growth in FY27. Now, coming to numbers, revenue saw an uptick of 33%, which was mainly led by company's key segment, cables and wire, as stated earlier, with a 34% uptick. Cables and wire growth was mainly driven by low tension, high tension cable, and even house wires. Now, company's stainless steel revenue was down 19%, and EPC project also saw a revenue downtick of about 34%. Overall, EBITDA margins saw a downtick of 60 basis points at 10.3%. PAT saw an uptick of 35%. Now, let me highlight some of the important con-call highlights. Company has said that the remaining QIP fund of 1,300 crore will be invested to complete the Sanand project, and low tension and high tension cable will be commissioned in Q1 FY26, and the EHV capacity will be commissioned by FY26 to 27 in Sanand. Exports will also see a substantial jump as Sanand project will come on stream FY26 onwards. So all in all, strong set of numbers and strong commentary.
All right. Thank you very much, Upasana, for that. So that's a pretty exhaustive list, setup as far as KEI is concerned. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. What's your view on the India-Pakistan situation? And just kind of bring in all the conversations you would have had with other participants in the market. So I'm really looking for a amalgamation of views.
Thanks very much.
Thanks
very much, Prashant, for having me on the show. So I think the main thing which struck me was the messaging. There was no major rhetoric around it and all that. And I think Indian government was also very clear that they have not taken any steps against economic, military or civilian sites. So it seems to be something that nobody wants to escalate. So my take is that at this point of time, I don't see any kind of increased activity because of the fallout. See, you can't not let such an event like Pahalgam go unpunished to an extent that has been reacted to. So until and unless there is a very sharp reaction to it, I don't think Indian government will want to escalate this any further.
Okay. No, absolutely. And I think that's something we'll have to keep a close eye on, but good to get that view. PNB just reported numbers, Jitendra, so allow me to just go across and bring in our colleague Abhishek Kothari, who's standing by, with just a quick snapshot view. Okay, I think we will have Abhishek with us in just a bit from now. Let's just look at the stock for a quick bit and see. I think the stock was trading at, it's come off a little bit, but it did spike up after the results came through. So numbers, I think, quite different from what BOB is reported yesterday. We'll have more on this one with Abhishek as we go along. All right, Jitendra, just to sort of come back to you. So what is your sense? I mean, is the market primed to do more on the upside if this does not escalate? Because a lot of the local crowd has been out of the market, staying on the sidelines, watching the situation, even as institutions have continued to pour in money.
My take is, I think this event obviously was a kind of was causing some nervousness in the market. So my take is, I think with whatever has happened, and it seems to be a very measured response. It is not something that, you have tried to escalate something out of hand or something like that. So to an extent, I don't see that being a big concern for markets here on. I think markets are going to be probably more governed at this juncture. One, with the kind of earnings season that we are having. And second is that as a 90-day D-Day of Trump tariffs come through, probably by around June or July, you will want to know what contours you are able to carve out. So yesterday you had obviously the UK trade deal coming in. And if something on those lines can be established on a bilateral basis with the US, I think that is something what the market will await for clarity for going forward.
So I request you to stay with us for the time being. Abhishek is joining in to run us through his quick analysis of PNB. The stock, by the way, has come off the high point of the day because the slippages and write-offs actually have appeared to perk up. But Abhishek, you take it away.
Well, Nigel, if you take a look, amongst the results that are flowing in with respect to large caps, on the private banks and PSU banks are losing their sheen despite low CD ratio that they had earlier. They are not able to command on the yield side, and NII is missing for most of them. So take a look over here. NII growth is just 3.8% YOY, which is the weakest in last 13 quarters. They have seen a decline of 2.5% sequentially, which is the worst in last 12 quarters. So clearly they are losing out on net interest margin because of lower loan growth than the private counterparts. A robust other income, which is seen in all the other financial entities as well, up about 38.2% sequentially. Asset quality is one of the best in last 10 years or even more. Gross NPA ratio is down to 3.95 versus 4.09%. Net NPA ratio is down to 0.4% versus 0.41% in the previous quarter. However, the credit cost has increased a bit on a sequential basis. So NPA provisions are up 85% 2% quarter-on-quarter, which suggests that as seen in the slippages have also increased on a sequential basis. The deposit growth is at 14.4% YOY and about 2.4% sequentially. Sequential deposit growth is at 5-quarter low. Advances growth is at 15.3% YOY and 0.7% sequentially. The 0.7% quarter-on-quarter, that's the weakest growth that you are seeing in last 15 quarters. And cost-to-income ratio for them is at 28-quarter high of 56.2% versus 54.2% in the previous quarter. So clearly weak business momentum as well as weak P&L for PNB. Back to you.
And they've given the FY26 guidance. They're saying operating profit growth seen at 8 to 10% in FY26 versus 10 to 12% earlier. So they've lowered the operating profit guidance. PNB stock down about 1.5%. By the way, the reversal in many of these defense stocks is quite stark. Pull up the intraday chart of BDL. It started trade in the green. Mazgaon Dock Shipyards was up nearly 2% and open, and now these stocks are down nearly 5%. That intraday chart will show you. In the morning, there was some optimism after those precise strikes were carried out. The investor sentiment was high in these stocks, but now there is some rotation out of these defense names. Jitendra, do you own in your portfolio any of these defense stocks?
Yeah, we have a limited exposure to defense names as such. And I think it goes back to what I was saying. I think to an extent, it is probably that the market is starting to believe that there may be not much escalation here on. Because the response was extremely measured, extremely targeted. So I would say that, the kind of euphoria that you were earlier seeing in the last 10 days or so in defense names, I think that is coming off a little bit.
Hi, Jitendra. Good to see you, Ben. Give us your view on a couple of these other names then. We have this UK-India FTA that's been seen the light of day finally after quite a long while. And there are a couple of sectors that could be potential beneficiaries. The textile space, we spoke to Gokul Das earlier today, and they clearly said there's an opportunity for India to maybe double their exports from the current $1 billion thereabouts. The stocks clearly are on fire. What's your take? Big opportunity for this space?
I would say textiles definitely has an opportunity because there are a lot of large UK retailers who do source material from India. So to an extent, obviously that is an area we could tap into. And if we have a little bit of a duty advantage, that would help. But I think the bigger story is obviously on the Scotch side or on the spirits side, where I think you have a straight benefit of in terms of, getting cheaper base liquor out into the Indian markets and then being able to upgrade your product slate as such.
Jitendra, for the index, we started this year with knowing there's a lot of headwinds. There could be a bit of a flattish year, consolidation. In fact, we pulled back close to 10%. But then now we're still up close to around 3% for the first 4.5 months of this calendar year. From here on, would it be adventurous to think that maybe we end the year with a 10% gain? Or do you think the markets will spend some time here?
Was the shift and stance from the RBI. So both in terms of, the rate actions they did, the change in stance and infusing a large amount of liquidity into markets, I think all that has aided sentiment on markets quite a lot. So to that extent, I would say that, where we were 3 months back and where we are now, there's definitely a big improvement in terms of the sentiment. Also, our numbers, the economy numbers itself, if you look at all the quick indicators that come in, like, your GST receipts, net GST, your FASTag collections, and all these are showing some buoyancy. So it may not indicate like a very high growth, but at least it is showing an improvement from last year. So to that extent, also there is a small plus. And also, if you see, the weaker dollar is aiding some return of FII flows also from the flow perspective. So from that matter, I would say probably that the base for the market has definitely gone up from where it was. If you come to the specific part about where from here on, I think, yes, you have seen a near-term rally, which has been quite strong. So you may spend some time consolidating near-term. And maybe after you get the full cues on the results and some more color on the monsoons, market might look to make its next move then.
Okay, all right, Jitendra, we'll leave it there. Thank you very much for joining us with that perspective. Appreciate your time here on CNBC-TV18. Polycab has come off sharply, as the stock at the bottom of the screen indicates. I think it's now down in the red from the highs of the day. The big turn, of course, as we've been highlighting, has been Radico, which has sort of moved quite a bit from the day's highest point. What we'll do is we'll take a quick commercial break here. We come back with some technical trading ideas on the other side, and of course, more opinion that we got through the course of the day.
Welcome back. Markets holding with good gains. We're up 40 points. The bulls will feel this is a very, very good trading session. And the mid-cap index, that's bursting away. It's up closer to 1.5%. The Nifty banks continues to defend the lower level of around 54,000 odd. Mitesh is back with us. Mitesh, what do? Take the money off the table or ride it now for further upsides? And also, where would you place your stop loss at if you're taking a long position? Couple of picks as well as always, 3 p.m.
Nigel, I think taking a long on a Nifty is not something which I'm very keen on, but the Bank Nifty has a setup, which could be slightly positive. And therefore, taking away tight stop loss at about 54,490 or 485, which is roughly about 80 points lower, which is nothing on the Bank Nifty. I think a long trade can be tried for a target of around 54,800 to 54,850. And on the stock side, BTST on Paytm with the stop at about 864 for targets of 890. And Pyramid Enterprises is something which has come on the radar as well. Very strong price and volume action here. They take a BTST with a stop at about 1,022 for targets of 1,050.
It's a cash stock, Mitesh, but CCL Products, what a move. I think day before yesterday, it closed at under 600, 750 today. Any thoughts here?
Prashant,
CCL, yeah.
Something has definitely happened over here. The big gap of today and yesterday and then today, a good follow through. Last time the stock rallied, it had a highest ever weekly closing at about 800, so that's the first pivot. But I think eventually we are looking at a 840, 850 kind of a zone. Beyond which, then we look at 4 figures as well. So the setup is very, very positive for me. If somebody is holding this, hold it out. Or if you get a decline and a fresh entry around 720, 710 mark, that's the area to enter.
What about Gokulda? I think the news will be nothing immediate, but that tailwind is there, the FTA news flow. But technically, how is this one? Bombed out, beaten down name. It's 360, 370 or so today.
Yeah, so actually, IFL is also coming to the futures and options segment. So there's something which has come on my regular track list as well. Last time we got a closing of 366, which was on the 25th of April, and then intra-week high of 374, and then we kind of tapered off from there. But to me, the charts have improved a lot. I think once it clears this levels of 365, 375 zone, then minimum is 400, and possibly we are even looking at a test of around 450.
Okay, all right, Mitesh, we'll let you go on that note. Thank you very much for joining us with your call on your trade destroying terrorist infrastructure in POK. And of course, in Pakistan as well. Let's actually wrap up the day's developments, what's happening, and of course, the state of affairs, the state of play as things stand right now. Parishit is here with details. Parishit, over to you.
Well, it was around midnight that the Indian forces carried out a targeted retaliatory operation against 9 terror camps in Pakistan. Now, these were terror camps along the border and some even 100 kilometers away from the border. These were terror camps of the Lashkar-e-Taiba, the Jaish-e-Mohammed, the Hizbul Mujahideen, which have traditionally carried out attacks on Indian people, Indian forces and civilians as well. We used artillery guns, drones and fighter jets to carry out those strikes. Now, these were very precision and very precise strikes on terror camps, and these had nothing to do with civilians, any economic identities, their faith, and India was left with no choice but to punish Pakistani terrorists in this manner. Having said that, even though we may have exercised restraint in our response and in our targets, the escalation from Pakistan cannot be ruled out. We've seen very heavy shelling by Pakistan ever since that operation took place. It was a 25-minute operation that took place around 1 a.m. last night. And since then, Pakistan has been targeting posts across the LOC continuously. The firing has not stopped. The military operation, so to say, is still on. We're likely to get more updates in the next few days. Pakistan has said that they will now respond to India at a time and place of their choosing. So we will have to see what kind of response Pakistan comes up with and what happens. So India may have targeted Pakistan in a very calibrated way, but the response is not in our control. If tomorrow things escalate, we have to be prepared for that. And that's why we're seeing these wartime mock drills happen all across the country. In fact, the civil defense officials telling us that they currently have 6 lakh volunteers. They're getting an overwhelming response, and they would like at least 18 lakh people to be a part of the civil defense forces all across the country. So we remain on high alert. The airports along the western border remain shut. The civil defense mock drills will continue. And frankly, this operation is not over. Pakistan will also respond, and we will remain on high alert over the next few days.
Indeed, the immediate reaction has been fairly, measured and stable. But investors and civilians continue to remain highly vigilant. In fact, schools in Mumbai where kids were let off early to ensure that before 4 o'clock they're at home when the mock drills begin. But in the aftermath of Operation Sindoor, we also spoke to a whole host of market experts. Here's what they had to say about the strike and the possible impact on the markets.
We all expect it to be a measured and a calibrated strike. And over the last decade, we had 2 instances in a smaller manner like this. One was the Uri and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%.
Clearly, the geopolitical risk is behind us. The uncertainties probably come to an end, though there still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us.
So as a patriotic Indian, undoubtedly, Pakistan deserved a harsh response. And at least this is a beginning. From a market point of view, clearly the global support is with India.
All right, let's focus on the 2 biggest stock exchanges then. NSE, which is unlisted, and BSE came out with its 4th quarter results yesterday. Pamakshi joins us to tell us how both the companies have fared in the last quarter of FY25, and she'll also wind it up with a valuation comparison. Pama, take it away.
Well, Nigel, BSE came out with a very strong set of numbers. NSE, on the flip side, had a rather weak, quarter that was the 4th quarter for BSE. Let's first look at how the numbers fared. Revenue saw an uptick of almost 10%. It's 10% higher as compared to what the analysts were also expecting. Largely, the revenue growth is being driven by transaction charges, which saw an uptick of almost 20%, as well as the other operating income, which is up nearly 12%. Treasury income and services to corporates, however, saw a dip this time around. around. When we look at the EBITDA margin, they have improved by around 58 basis points sequentially to 57.2%, slightly lower than what the street was penciling in, but the net profit has come in much higher as compared to street expectations, and that is because there was an SGF reversal of 109 odd crores as compared to a SGF contribution of 199 crores in the previous quarter. Resultantly, net profit is higher by almost 126%. Operational metrics, let's have a look at that as well. Average daily notional turnover saw a downtick of almost 35%, but on the flip side, the average daily premium turnover was up nearly 35%. The EPS for BSE is at 96.55 per share, and therefore the valuation for BSE is at around 65 times, much higher as compared to NSE, which is somewhere around the 30, above the 30 times mark for NSE. BSE has been seeing some market share gains as well. So, strong set of numbers from BSE. NSE, not a great set this time around.
All right, Vamakshi, thank you very much for that. That's a comparison. I mean, let's just put the valuation table, the last one, back up on air. 65 times compared to, I mean, I guess a much more reasonable NSE, just at about 32 odd times earnings or so. So that is, some numbers which are coming through with regards to valuation comparison at this point in time.
I guess a couple of factors, right? Because of the valuation difference. One is because BSE is listed, NSE is unlisted. And the second factor is because BSE in index options, they have been continuing to gain market share. Last check, it was at around 20% approximately. And now they're talking about making some kind of penetration to the cash market. But otherwise, NSE, the cash market, they are the leaders out there. They have been holding on to their market share as well. And the larger player, in fact, trading at a discount, I think it's only because it's unlisted as of now.
Absolutely, and I think that is absolutely the case. And we'll continue to sort of dive in. And BSE, of course, is a big gainer today, but we'll have to look at the overall perspective because there is a large unlisted, larger players.
11 crore down about 15.7% YOY, but up 4.5% sequentially. The net loss was at 545 crore. This has a one-time impact of about 522 crores. So the net loss is way lower than Motilal Oswal estimate of 110 crore. If you remove this one-off, contribution profit, that's up about 11.7% sequentially. The GMV is up about 8.5% YOY and 1.2% sequentially. Total transactions, that's up 16.65% YOY and about 6.9% sequentially. The management in the con call did mention that the EBITDA before ESOP, they will break even in Q1 FY26, and that's what got the interest with respect to investors in street today. Back to you.
Thank you very much for that. Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us on the show. Mayuresh, come in on Paytm first, and then we'll get chatting about the other stocks.
Afternoon, Rima. No, I think numbers are a tad bit better than what the street was probably expecting. But let's again look at how the competition is mapping out, right? I think there are a lot more competitors at this juncture as far as banking correspondent services are concerned. There are a lot more correspondents as small merchant banking is concerned as well. And therefore, I think competition is brewing in this space as we speak. Obviously, I think the innovations that a lot of competitors getting on in terms of their digitalization efforts, in terms of the friendliness that the platform has to offer in terms of services. And because of digitalization, a large part of the cost probably gets embedded in terms of better margin performance. But again, I think the expectation of the street and what they probably delivered a tad bit better. But my own sense is that we will wait it and watch it out for the next couple of quarters results as well to see how Paytm is doing, how competitors are probably doing, and whether there is some element of saliency and consistency in terms of numbers that are probably getting the problem.
Okay, all right. Well, we have the APL Apollo tubes numbers that are flashing for you at the bottom of your screen, and the numbers look quite good. Part of the street actually was anticipating good numbers because we already had the volumes with us earlier. Mayuresh, what's your call on APL Apollo? The stock had got very, very expensive. And if I'm not mistaken, in the last 20 months or so, the stock has not done anything. It's not gone beyond those high efficiencies as well. And it's the leader in the pack. You saw stocks like High-Tech Pipes, they went ahead, they raised some money, JTL as well. But it appears the leader is now taking over. The leader is gaining market share and will get that valuation premium. Your take at around 1,650 rupees?
I think it's looking good, and I think afternoon to you, Nigel. And if the numbers are a testimony, if numbers have no one-offs, the operating performance, if it is better as it seems prima facie, I think it should start bouncing back very, very smartly. Again, I think as you rightly put out, market leadership in category that it operates out of, the backward integration that they've probably deployed over the past few quarters in the right areas as well. And because of all these factors put in place, the expectations in terms of what capex is expected to happen, specifically on the government side, over the next few quarters, the expectations of some element of private capex expected to come back very, very strongly. And in fact, in the release, I'm just reading that out as well. I think they are expecting their existing capacity to probably get added by 2.3 million odd tons over the next 2 to 3 years. 1,500 crores capex is lined out, which is largely going to be internal accruals and a mix of debt. So in that sense itself, I think they are seeing and sensing all these macro tailwinds probably to play out very, very effectively. They have got the backward integration, which means margins should probably support them. With the expanded capacity, as their belief is that demand should come back very, very strongly and sustain and remain at an elevated level. I think it should probably start sustaining and gaining its market share over the next few quarters as well. So yeah, I think rating rankings look super for APL Apollo. We remain optimistic on this.
All right, Mayur, stay with us. What we're going to do is take a quick commercial break here. There is 12 minutes to go for close. We're back on the other side.
Welcome back. Tata Motors is your top Nifty gainer. Looks like it will end with a gain of 4.5%. Two sets of news that the stock could be reacting to. One is it could be a beneficiary of the UK FTA agreement. The tariffs on automobiles imported from UK will fall from 100% to 10%. So that's a positive for JLR cars coming into India. The question is, how big a market will India be given the price point? And the second one, the one which investors are really cheering, is the demerger of the CV business. So shareholders have unanimously given their nod for the demerger of the CV business. Mayuresh, your thoughts on these two sets of news flow for Tata Motors?
I think that's exactly what's playing out, Rima, onto the stock itself. But the first point that you pointed out, I think, what is the expectations in terms of volumes from the Indian market with the FTA that is expected to get signed? I think the next few months, I think, will be a testimony to that fact. And even at this juncture, I think there are imports that are happening for the Range Rover and the JLR models in India as we speak. Obviously, with the duty cuts expected to take place, that will have an implied effect on volumes. But a large part of their volume share comes through from North America and China. And you're obviously seeing some elements of tariff conundrums as far as the North American market is concerned. And what BYD and the other players are doing in the Chinese market, specifically when it comes to cars, designing content per car, is simply fabulous, the videos that we probably see. So I think competition is intense for key markets for JLR. And therefore, how volumes play out for these key markets are going to be extremely critical. Also, I think a few reports that I was reading through that generally, I think the global EV market is going through some periodicity of softness. And the expectation is that the softness might very well continue into FY25, which means the accelerated R&D expenses and investments that have probably been done, not just by JLR, by its competitors as well. I think it might take some time to recoup all these investments onto the balance sheet. So I think positive news based on what we've seen so far. But generally, I think the re-rating will happen in terms of how the key markets for Tata Motors will be.
Textile companies, Mayuresh, do you like anything here?
Afternoon, Prashant. No, I think they have been underperforming, but I think two aspects here again. The expectation in terms of China plus one expected to grow strongly. I think that is a theme resonating with the entire sector as a whole. Obviously, I think stocks like a KPR Mill, Vardhman Textiles are backward integrated to that extent they have full control right from yarn to fabric, and that gives them superior EBITDA margins. So KPR's margins anywhere between 20-21%. Similarly, in the case of Vardhman Textiles as well. The other players like a Gokaldas, which have a significant say in the UK market, the expectation here largely is that if you probably dissect how the textile market is, China is one of the biggest exporters to the UK and the EU market, followed by Bangladesh, Turkey, and then India. So I think India needs to probably ramp up its game when it comes to UK and EU. US, we are reasonably placed as far as cotton bed sheets, cotton bedspreads are concerned, bed linen is concerned as well. And therefore, I think players will benefit, in my opinion, going forward as well. And therefore, integrated players, players like a KPR Mill as an example, Vardhman Textiles as an example, would not just see domestic opportunities, but export opportunities. And because of their sheer backward integrated operations, margins will be far superior and a better control over working capital cycle, which will give ROE efficiencies on the
All right, Mayuresh, what's the view on Navin Fluorine? I'm looking at the exchange, and midnight we had an announcement that came in that they have announced a strategic agreement with Chemours company to manufacture and establish initial capacity, at their facility in Surat. So that seems to be a piece of news flow that came in overnight. The stock is sitting with a gain of around 1%. Your view on Navin Fluorine?
So remains positive, Nigel. I think the existing lines of businesses are expected to continue on a stable footing. Having said that, I think the kind of pain in terms of reported numbers over the last few quarters should largely be behind us. And the expectation largely, again, whether it comes to refrigerant gases or otherwise, should show signs of improvement as well. Again, I think the new gases that are expected to get used and deployed, I think Navin obviously is having a front-running aspect in that, both in terms of capacities and more capacity expected to get added. So I think all business segments should perform in a stable fashion. So anybody holding on to the stock should continue.
Radico, we've not spoken about. Any thoughts here? Are down 4% now.
No, I think the UK trade agreement and the expectation that whiskies will probably come into India at a lower cost is creating the dent onto the stock. But I think fabulous set of numbers, in my opinion. As a disclaimer, Prashant, I think we continue holding these stocks both in our domestic and global portfolios. Our own sense is that the entire premiumization for the sector as a whole, including Radico. So Radico has a 45% volume share in premium products, a 69% share in terms of the sales value of these premium products. They are expected to grow at a decent pace. In fact, realization per case for their premium products has crossed 1,800 odd rupees. And some of their products are world-class as we speak, very well recognized globally, have won global awards, whether it's Rampur or whether it's Sangam Single Malt. And therefore, I think my own expectation is that even if the FTA announcement is done, even if more whiskies probably come through from the UK, they have created their stand, they've created the quality benchmarks, and volume and numbers should continue growing at a decent pace domestically and from an export-oriented perspective as well. Again, from an input cost perspective, whether it's ENA, molasses, glass prices, look extremely stable. So my own sense is that the earnings momentum should continue. We remain positive and optimistic.
Okay, all right. Mayuresh, stay on. I'm just going to come back after just wrapping out things as far as market closing is concerned. Just a minute and a half to go for that. So, it's actually a pretty decent session, 40 points higher. We started with a 50-point drop, then the market recovered, went up 50, then didn't do very much. Basically, on the index, there wasn't very much. But the broader market, the Nifty, the mid and small cap indices up between 1.5% and 2% each. So a lot of activity as far as single stocks in the broader markets are concerned. And we'll just talk about those broader market names in a bit. But large cap, Tata Motors was the 5% top gainer. But there were other gainers as well, Bajaj Finance, Shriram Finance, there was Eternal, Geo Financial Services also participating. On the downside, you had Asian Paints, Sun and Reliance Industries, which were down a little bit. Nigel.
Well, let's focus on a few stocks then that did bounce back today. We had solid numbers coming in from APL Apollo. I was looking at the EBITDA per ton. It's coming at the highest we've seen in the last 8 quarters. So the leader getting its mojo back. The street likes it. That stock went home with good gains in trade today. What else did well? Well, you had Paytm bursting away in trade. BSC spiking away in today's trading session. Jyoti Structures, that stock has been all over the place. Now they have a big order book. That one was up close to 5.5%, pointing it out because it has very large volumes. DCX Systems, one of those defense plays that saw a sharp correction from, I think, around 350 rupees. It went down to around 220 rupees. Okay, trade ended high with a gain of close to around 4.5%. One of the stocks that absolutely got hit but bounced back. We had Stovecraft as well, that was up 4.5% in trade today. And Sonata Software as well did pretty well in today's trading session. On the flip side, Vishal Mega Mart that had a very good run, came in for some profit taking. And Swiggy not swigging it away today. Well, that a larger number of trades will come in for the trade because of the lock-in period expiring. So we'll have to see whether or not supply does hit out there. But otherwise, you'll have to say it was a good trading session. Nifty goes home with around 30 points. The Nifty Bank up 350 points. The mid-cap index close to around 2 stocks advancing for 1 stock that's declining. The bulls fought back today. Well, we'll wrap up on this edition of Closing Bell. Don't go anywhere though. Markets Forward comes up next.
Market shrugs off fears of conflict escalation with Pakistan to end significantly off the day's low. Nifty holds on to 24,400. Auto, consumer durables lead the charge. FMCG, pharma and healthcare were on the other side today. Mid caps and small caps doing much better.
Indian Defence Forces carry out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. Pakistan confirms the strike, says 26 people were killed and dozens injured. Meanwhile, India's Foreign Secretary called the military operations appropriate and non-escalatory. India Army says no Pakistani military establishments were targeted.
China cuts rates and frees up liquidity to fight tariff wars. This amid anytime soon. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you everything you need to know as you prepare for the next trading session. I am Prashant. With me today, my colleague Vinny. Vinny, hi.
Hi Prashant, an interesting day, right? Because a lot happened overnight, from UK FTAs to a retaliatory action on Pakistan. But markets didn't do that badly. Mature move coming in.
Very well because we ended higher, first of all, and the broader markets did extremely well. So I think, and that I think is the bigger point. The broader markets with 1.5%, 2% kind of gains, it just gives you a sense that, this is a market which kind of just wants to go higher and, maybe it will. The strikes which India carried out, of course, caused a very tentative kind of a start. And if you just look at the Nifty through the course of the day, down, then up, and then bobbing up and down through the course of the day to end about 30, 40 points high. So not very much to take away by looking at the Nifty. But I think broader market, single stocks, etc., I think a lot of action really. Of course, we've struck and we just need to watch what Pakistan does next. If this is it, if there is going to be any action, we can't control it. But I think, at least in the very near term, that'll determine the course of things from here on. But all told, by 3:30, it was a very good session, a very decent session. Really no ripple effects of what happened as far as those strikes are concerned, not showing up here in the market. Vinny.
Absolutely. And, couple of sectors that did absolutely amazingly well today was auto. Nifty auto among the top sectoral gainers. You had realty that was doing well. So yes, keep an eye out on that. There was news flows that came in around auto that was supporting the up move, but that is something interesting. Other than that, the sectors on the flip side that were in the red today or closed in the red today were Nifty Pharma as well as the FMCG. A bit of a laggard coming in on that front, but that's how the market setup was looking like today. But we had a whole host of stocks, like we saw that in the mid and small cap, which came the outperformance came in. So we have Vivek joining in with us from the wall to get started with the show to tell us about the top stock movers in today's day.
Well, thank you so much for that, Vinny. Again, another session where the advance decline ratio was very, very strong, despite all of the overnight news flow that we did see. Result reaction that you see over there, almost 7.5% higher in this particular name. Analysts quite enthused. CLSA going ahead and upgrading this particular name. Paytm, again, despite the fact that the headline numbers indicated a significant bottom line loss, analysts were enthused by the fact that the company most likely in FY26 will turn profitable, and this is something that led to a very sharp intraday recovery. BSE was the other stock in focus, a very good set of numbers, top line growth very, very strong, volumes over there quite high. And on the back of that, BSE, one of the top gainers today, over 6.5% higher. The entire cable and wiring companies in this particular quarter have come out with a very good set of numbers. KEI Industries was no different. Again, a strong top-line beat against what the street was anticipating, over 3% higher for KEI. And MRF, in line with what most of its peers, as far as tire companies were concerned, did. MRF also saw significant margin expansion, along with the tailwinds present in terms of cooling of rubber prices. This particular stock ended higher by over 4%. Remember, it's a very high-priced stock. On the other hand, in terms of negative stock reactions, you did see Pharma continue to see selling pressure. Sun Pharma, one of the top laggards, regulatory environment turning quite unfavorable over there. Look at PNB, again, in line with what other PSU banks have done. PNB too reported muted growth. Stock ended recovered a little bit from the day's lowest point, but still ended in the red. Radico Khaitan, very strong set of numbers. Stocks are profit booking post that. And Mazagon Dock, remember, a whole host of defense companies today did see some profit booking after the recent rally that they have seen. Overall, good set of good day, especially in terms of the broader markets. Advanced decline ratio quite strong.
All right, Vivek, thank you very much for that. So that's a comprehensive stock wrap out. Mayuresh and Srikanth are with us with what they'd like you to do and advice as far as markets go. Gentlemen, thanks very much. Mayuresh, thank you for staying on. Mayuresh, to your mind, does it look like a market which is waiting or wanting to go up? There is no real earning support. Maybe that will come, but all other factors, right, are lining up in a positive way. Mostly, I mean, macro and we'll see how the latest escalation goes. But pretty much all other factors are lining up in a positive way. What's your sense?
Absolutely. I think what we are sensing in terms of our approach on the markets seem to be in a confirmed uptrend based on our ratings and rankings. And obviously, I think earnings were expected to disappoint in Q4, Prashant, and it has largely remained soft. But the belief here is that with the tax cuts announced in the budget, consumption should start getting a boost from this quarter itself. So from Q2, the expectation largely is that earnings should start bottoming out. And the scenario that is getting penciled in with better monsoons expected this time round, rural consumption should also bounce back very, very smartly. Now, couple that up with government capex continuing at a fast pace, the liquidity that RBI is providing. And therefore, I think expectations of private capex coming back at some point of time, even with the interest rate cut scenario not getting accounted for in the second half, would largely mean that both the macro and the micro picture look very, very strong and steady for India. In the global context of tariffs, in the global context of inflation, in the global context of how the rate cycle might move. The only risk factors that we see, a couple of them. One, I think the 90-day window that Trump has announced. What comes out of that at the end of the next 45, 60 days with negotiations happening with China, outside China as well. And second, I think the inflationary roadmap across the globe, whether you're seeing some element of sticky inflation coming through, which pushes the interest rate cycle globally and differs it by a quarter or two. I think those are the only two risk factors. Outside that, I think India probably seems to have a steady path. We probably remain positive on it.
Right. Thanks for that view, Mayuresh, coming in on the markets. But talking a bit more stock specific, and among the top sectoral gainer today was Nifty Auto. In that, Tata Motors was leading the gain. Why was it in focus today? This came in after India and United Kingdom signed a free trade agreement which will reduce significantly tariffs on automobiles. Shareholders of the company have also approved the demerger of the company's commercial vehicle business. Sudarshan is here to tell us more on this front. Sudarshan?
So after a long time, we saw Tata Motors gaining in trade, and today it was higher as much as 5%. So the back of two announcements that company has seen. First, India, UK have finalized the FTA. Now, under the deal, import duty on automobiles is going to reduce to 10% from 100%, and it's going to benefit JLR, which forms 70% of Tata Motors' consolidated revenue. And analysts believe that JLR has already been facing issues in markets like US and China. Now, considering the reduction in import duty, and it would make easier for JLR imports in Indian market, and the sale will also increase considering the duty reduction, and that might offset certain negatives that are coming from markets of US and China. And the second announcement was related to demerger approval that company has received from shareholder. It's almost 100% approval that company has got. Now, under that process, if a shareholder is having one share of Tata Motors, he or she will receive one share of CV business as well. Now, apart from these announcements, what do brokerages feel? So, total 34 brokerages, as per Bloomberg data, have the coverage on stock, and of that, 20 have the buy call and 6 have a sell call. Now, those who have buy call, amongst those, the target is as high as 1,300, and for them who have a sell call, the target is as low as 600 per share. So going forward, we'll have to see how this India-UK FTA deal plays out and if it really benefits Tata Motors.
Thank you very much for that. So Tata Motors up 5, biggest Nifty gainer today. Srikanth is also with us. Srikanth, a quick view on markets, and then if you can weigh in on Tata Motors.
Yeah. Good evening, Prashant and everyone. I think, the markets are very clearly we can see that the market is in time-based corrective mode. It took just 10 days to climb 2,500 points from the levels of 21,750. However, since then, if we see the overall trend of the market, then the market has spent equal amount of time, nearly 9 days, within the range of 24,500 and 24,200. So it is very clear that the market is in time-based correction, and such type of patterns usually turns into continuation pattern and follow the previous trend. So previous trend was like rally from lower levels. So we can expect further more bullishness in the market. But for that, we need whether the market is crossing 24,500 or not. So the final strategy should be to look for creating long positions even at current levels, but with a stop loss at 24,200 on a closing basis. So I'm expecting market to move towards 25,000, but for that, we need to keep a stop loss at 24,200. If we go through with the technical pattern of Tata Motors, then after a very long time, the stock is absorbing selling pressure and it is forming some higher top, higher bottom series. And whenever we see such type of recovery from the deepest lower levels, most of the time stock tries to hit the 200-day simple moving average or median averages. So based on it, I'm expecting Tata Motors is moving towards the levels of 800 in next maybe a few weeks or few months. So it will take some time, but gradually it is heading higher.
Gradually, it is heading higher. That's the word coming in on Tata Motors. But let's move on, talk about a couple of other names, where BSE versus NSE is what we talk about, because the two largest stock exchanges, Bombay Stock Exchange as well as NSE, both have reported their fourth quarter numbers, with BSE actually outperforming in terms of Q4 versus NSE. Vamakshi is joining with us to give us a comparison in terms of their numbers. Tell us why and what led to the outperformance for BSE as well. Vamakshi.
Well, Vinny, strong set coming in from the BSE, but on the flip side, when you look at NSE, the numbers were rather weak for the quarter gone by. BSE reported a growth of almost 10% sequentially in their revenue. This came in much higher than what the street was penciling in, and this growth is largely coming in from their transaction charges, which saw an uptick of almost 20%, and other operating income, which was up nearly 12%. As far as the EBITDA margins is concerned, that also expanded by almost 58 basis points sequentially, coming in at 57.2%, but nevertheless, it is a miss as far as street expectations are concerned. Now, this time around, the company had an SGF reversal of around 109 crores as compared to an SGF contribution of 199 crores in the previous quarter. Resultantly, when you look at the net profit, it has seen a very sharp uptick, 125% higher on a quarter-on-quarter basis. So overall, when you look at the numbers, very strong set. Let's also look at the operational metrics. Average daily notional turnover for BSE saw a downtick of 35%, while on the flip side, the premium turnover saw an uptick of 35%. So that bodes well for BSE. In addition to that, they managed to also gain market share in the equity options segment. That is a big positive for BSE. In fact, what Motilal Oswal also earlier highlighted was that because of the F&O regulations, BSE has benefited from a rise in the non-expiry rate trading activity. Now, let's also put the valuation for you. For BSE, the EPS is at 96. Of course, when you adjust for the SGF reversal, the EPS is much lower, and as far when you consider the EPS of 97 odd rupees, the stock is trading at a PE of almost 65 times. In comparison to that, NSE, basis the unlisted price that is available, is trading at a PE of nearly 32.5 times.
Okay, all right, Vamakshi, thank you very much for that. Stocks at 66.50 as of today's close. Mayuresh, any thoughts here?
Again, Prashant, I think BSE is getting the premium because it's listed. NSE is not listed. I think that's point one. Second, I think in terms of the option activity, the expiry that BSE is conducting, you've seen significant market share gains. And one expiry per exchange is obviously helping BSE to a large extent. Again, I think out of the streams of revenue that they generate, the annuity-based revenues seem to be pretty strong, expected to remain strong over the next few quarters, next few years, as equity investment still picks up quite significantly across the length and breadth of this country. And therefore, I think from a numbers perspective, it should keep on coming on to the balance sheet. Obviously, valuations that Pamachi was pointing out a tad bit expensive at this juncture. Again, NSE is a market leader as far as cash trades are concerned. Again, in terms of their expiry, it is one of the leaders in terms of options and futures market as well. And therefore, I think from a valuation perspective, NSE looks attractive. But I think for both the exchanges, volumes will keep on continuing to grow at a decent pace, and so will numbers. So at this juncture, since BSE is listed, anybody holding can continue holding, but not adding because valuations probably are expensive.
Absolutely. Valuations are very expensive as of now.
And with BSE, Vinny, the other thing is, I think this has been pointed out by many analysts. There's something called a settlement guarantee fund, towards which exchanges have to contribute. So if you adjust for that SGF amount, which, I mean, BSE has to at some point bring in, the EPS drops to 70. And then the PE actually is an actual normalized PE is about 90 plus.
So that's very, very high.
Yeah. So you have to, I mean, you can adjust for it based on this. Yeah.
So absolutely keep an eye out on that point as well. But let's move on and talk about the pharma space. Now, US drug regulator has said that it is planning to expand unannounced foreign inspections. Ekta Batra is joining in with us to give us details on this front. Ekta, take us through the details, what this actually means for pharma companies as well.
Well, it is something which was largely expected. The US pharma companies were in fact expecting this kind of trend to take place, but now it's become more official. So the US FDA has indicated that they will be expanding unannounced foreign inspections. This is building on a pilot program that they had conducted in India as well as China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies. And the US firms, remember, already face surprise checks. Foreign sites, for example, according to them, show more violations despite advance warnings of inspections. Investigators are now going to be very objective. For example, they're going to refuse any kind of industry-paid travel. Overall, to put it into perspective, 12,000 domestic inspections every year by the US FDA and 3,000 foreign inspections in more than 90 countries every year. Surprise checks, according to them, will now help them catch bad actors who falsify records and conceal violations. So investigations are definitely going to be tougher. The larger generic companies have been dealing with surprise inspections for a long period of time. Yes, maybe there could be an element of toughness involved now, but they are used to it. It could probably impact the smaller companies which have smaller operations dealing with the US. That's probably where regulatory concerns would crop up more.
Ekta, thank you very much for that. I mean, getting a little serious, right, with regards to the US FDA saying, more inspections, unannounced, costlier, etc., etc. Mayuresh, pharma is a space. I mean, this is not even about reciprocity in terms of tariffs. This is onshoring pharma as a national security priority. That's what they want to do. Although, as we well know, it's very costly to make in the US. So how far can they take this? We don't know. But any thoughts on stocks?
No, so from a portfolio perspective, we continue holding stocks like a Sun and a Cipla in our global portfolios, Prashant. And you're absolutely right. I think if you probably hear the Ali Lila management a few weeks back, I think he's given the perfect argument in terms of how cost and time overruns might probably happen if drugs start getting manufactured in the US. No two ways about it. I think FDA inspections is a part and parcel of what Indian pharma companies have to go through. And they've followed a very stringent process now because of what you've probably seen in the past. A lot of pharma companies, plants have got affected, resolutions take time. And therefore, there have been a lot of proactive measures on the ground checks that we've done, management conversations that we had, in terms of ensuring that at any point of time, the process requirements are fulfilled to the FDA's requirement as well. And therefore, I think my own sense is that the kind of specialty pipeline, a lot of these leadership stocks have created, phase 2, phase 3 trials, a lot of these drugs are going through and expected to probably get introduced over the next few months, next few quarters, will give a huge pipeline and also an alternative to the existing drugs in the portfolio that they've got. So I think Sun, Cipla is something that we continue holding, albeit I think keeping a watch on what developments happen from a macro perspective for this segment.
Okay, Mayuresh, thank you so much for that view. But thank you so much, Mayuresh, as well as Shrikant, both of you all for joining in with us on the show as always and helping us understand in terms of specific stocks as well as the market move. But on that note, we're going to slip into a very short break, but we'll leave you with key commentary we got through the day from market experts. Stay tuned in. We'll be back with the corporate action on the other side.
We all expect it to be a measured and a calibrated strike. And over the last decade, we had two instances in a smaller manner like this. One was the Udi and the other was the Pulwama, and market took it its own stride. But the larger one was in 1999, if you remember, May to July. Market saw a 10% drawdown, but eventually we outperformed MSCI. The MSCI India outperformed by 30%.
Clearly, the geopolitical risk is behind us. The uncertainties probably come to an end, though there still continue to be a few developments going forward, as there will be retaliation as well, or there could be retaliation as well. But clearly, from a market standpoint of view, the uncertainty is behind us.
Well, I think we have to wait and watch. Clearly, the ball is in Pakistan's court, whether they choose to escalate and retaliate and how far they go, because the risk is tit for tat escalating. The opportunity is that if Pakistan does something token, because they'll have to do something to save face, is my guess. And if they do something token and call it a day, then maybe things can calm down. So, the markets are obviously have been on tenterhooks the last few days. Today, it looks like the markets are hoping that whatever was expected has happened and it's not going to get worse.
Welcome back to Markets Forward on CNBC TV18. Now we go across to the top corporate voices. And firstly, we had Polymedicure. The company has guided for domestic growth in the range of 25 to 30%, with margins expected to remain around 25%. It also projects overall revenue growth of over 20% in FY26 and expects export to grow between 15 to 18%. Now, despite the positive outlook, the stock was down in today's trading session. Next up, we also had Newton Software. The management of the company joined in with us. They spoke about and have maintained its growth rate, run rate of 20% in Q4. The company's order book, that grew by 17% on a year-on-year basis, and it secured around 62 new customer deals as well. The management believes the US market will be the primary driver for the future growth of the company.
Okay, we had the management of JBM Auto with us, who essentially told us that the company aims to achieve revenues in the range of between 6,000 to 6,500 crore rupees in FY26. They believe the India-UK FTA will unlock new opportunities, and they expect exports to contribute to 10% of total revenue. It's about 5% right now. The company is also anticipating healthy growth in its OEM business this financial year. We also had the management of DCM Shriram join in. So they told us that the company, DCM Shriram, is expecting a 10 to 15% revenue growth in FY26. The chemicals business, which currently contributes 25% of the top line, is expected to be a key driver of bottom line growth going forward. Ongoing cost initiatives should also help in improving margins.
And before we wind down this edition of Market Forwards, let's go across to Vamakshi, who's here to tell us what are the important events to watch out for in tomorrow's trading session. Vamakshi.
Well, Vinny, it's expiry day tomorrow, so lots to watch out for. But, we'll be keeping an eye out on a lot of earnings tomorrow. A lot of Nifty companies reporting their numbers. And we do have some heavyweights as well. Asian Paints, Bharat Forge, Biocon, Britannia, Escorts Kubota, L&T, as well as Titan. All of these counters will be reporting their numbers tomorrow, so keep a close eye on that. But apart from that, Gravita India and Oracle Financial Services will also be in focus. These two stocks go ex-dividend tomorrow. As far as some broader economic cues are concerned, later this evening we'll be hearing from the Fed on their interest rate decision. Largely the expectation is that they will leave the interest rate unchanged, but we'll have to keep an eye out on this development. Tomorrow we'll be keeping an eye out on Bank of England's interest rate decision, as well as the US initial jobless claims data that comes through. And lastly, it is very, very important to watch out for the India-Pakistan standoff if there are any sort of developments on this front.
All right, Vamakshi, thank you very much for that. That's the most important bit. We woke up this morning to news flow of India striking across the border. I think that is very much going to be on the radar in terms of how this really moves forward. Well, it's a wrap on this edition of Markets Forward from all of us here. Goodbye. Thank you very much for staying with us. News and updates follow on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian Defence Forces carry out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. The headquarters of terror outfit Jaish-e-Mohammed and training camps of Lashkar-e-Taiba were targeted. Pakistan confirms the strike, says 26 people were killed, dozens injured. India's military operations are appropriate and non-escalatory, says the Foreign Secretary Vikram Misri, flanked by women military officers. The Indian Army says no Pakistani military establishments were targeted. The Indian Air Force says it is prepared to respond to any Pakistani misadventures. The head of the terror group Jaish-e-Mohammed, Masood Azhar, admits 10 of his family members and 4 associates were killed in strikes by the Indian forces. Masood Azhar has been designated a global terrorist by the United Nations Security Council in 2019. Pakistan terms India's strikes as an act of war and vows to respond at a time and place of its choosing. 9 Indian civilians killed near the border in Jammu and Kashmir after heavy shelling by Pakistani forces. President Donald Trump says he hopes tensions between India and Pakistan subside quickly. UK, Russia and UAE call for restraint. Israel supports India's right for self-defense. China calls India's strikes regrettable. No flight movement in northern parts of India bordering Pakistan as tensions escalate. Airports shut across Jammu and Kashmir, Punjab, Himachal Pradesh. Indigo cancels 160 flights till the 10th of May. Air India, CASA and SpiceJet issue similar advisories. A nationwide civil defense mock drill begins. The move to ensure emergency preparedness involves thousands of volunteers across 244 districts. Training to involve first aid, evacuation and emergency protocols. Let's start with the market action. The Sensex and the Nifty closing in the green. This despite tensions between India and Pakistan flaring up. The Nifty holding on to 24,400. It was a volatile session though. The rupee weakened by nearly 40 paise against the dollar, and that's how the markets closed for the day. US and China will hold negotiations this week to de-escalate the tariff standoff. Talks will be held in Switzerland from the 9th of May to the 12th of May. China cuts interest and announces sweeping measures to shore up the economy as the trade war starts to bite. US Federal Reserve is likely to hold rates later tonight, according to a CNBC survey. India Inc. welcomes the free trade agreement between India and the UK. The revised tariff lines will impact auto, textiles, alcohol and other industries. Apparel makers expect incremental opportunity of $1 billion. Well, the top story this evening, Indian Defence Forces carried out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. Codenamed Operation Sindoor, the strikes come 2 weeks after terrorists targeted tourists in J&K's Pahalgam, resulting in the death of 26 civilians. Now, the strikes were carried out between 1:05 a.m. and 1:30 in the morning, targeting 9 terror sites at 7 places in Pakistan and Pakistan-Occupied Kashmir. Now, these places are Muzaffarabad, Kotli and Bimber in Pakistan-Occupied Kashmir and Sialkot, Muridke, Bahawalpur and Bahawalpur in Pakistan. Pakistan confirmed the strikes as 26 people were killed and dozens injured. Now let's talk specifically about Bahawalpur. Located about 100 kilometers from the border, the Markaz Subhan camp in this area served as the headquarters of the terrorist group Jaish-e-Mohammed. Masood Azhar, the head of the terror group, admitted that 10 of his family members and 4 associates have been killed in the strikes by Indian forces. Masood Azhar was designated a global terrorist by the United Nations Security Council in 2019. In a press conference flanked by 2 women military officers, Foreign Secretary Vikram Misri said that the operations were measured, appropriate and non-escalatory. The Indian Army said that no Pakistani military establishment was targeted. The Air Force said it is prepared to respond to any Pakistani misadventure. Prime Minister Modi also briefed cabinet ministers about Operation Sindoor during a meeting. He also met President Murmu at Rashtrapati Bhavan to brief her about the operation. Home Minister Amit Shah chaired an urgent video conference with chief ministers, DGPs and chief secretaries of states bordering Pakistan and Nepal.
These actions were measured, non-escalatory, proportionate and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. It was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian Armed Forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया।
अगर पहलगाम में लोगों को इस तरह मारा नहीं गया होता, ये दिन नहीं आता। हम बड़े आराम से रह रहे थे। हम में से कोई जंग नहीं चाहता। हम लोग जो खासकर जम्मू कश्मीर में रहते हैं, क्योंकि अक्सर बेशतर हमने देखा है, चाहे वो इससे पहले जो वार हुए हों या करगिल हुआ हो, वो कहीं ना कहीं जम्मू कश्मीर को ही हिट कर जाता है। हम तो चाहेंगे कि हालात जो हैं वो दोबारा ठीक बने, लेकिन उसके लिए पहले हमारे जो पड़ोसी मुल्क हैं उनको अपनी बंदूकें शांत करनी होंगी। यहाँ से फिर बंदूक चलेगी नहीं।
Full support to our forces. Best wishes to them. Much love to them. Complete support from the Congress Party and the Congress Working Committee.
In 9 places, Indian Army has attacked terrorist-based centers. While doing so, except terrorist-based centers. No other places have been attacked. No innocent people have been attacked in Pakistan.
आज इस ऑपरेशन सिंदूर ने ना केवल मेरी उन बहनों को न्याय दिलाने का काम किया है, बल्कि पूरे के पूरे भारत में एक संतोष की अनुभूति महसूस की जा रही है कि भारत को यदि किसी भी प्रकार से कोई छेड़ने की कोशिश करेगा तो हमारी सरकार, हमारी सेनाएं उसके छोड़ेंगी नहीं.
Well, reactions they're coming into Operation Sindoor. Parikshit Luthra joins us now. Parikshit, the Indian government underscoring the fact that the response from India was non-escalatory, and they call it that because they say that we have not targeted Pakistan's military establishment or Pakistan's military infrastructure. Now, these 9 sites that have been identified and targeted, Parikshit, take us through the significance of why these were the sites targeted under Operation Sindoor.
India all along has been saying that India's response is going to be a calibrated one. It will be against terror groups in Pakistan. That's exactly what has happened. We had planned and carried out strikes using artillery guns, drones and precision missiles from the Indian Air Force fighters to target 9 terror locations across the LOC. All of these are groups which have been targeting India. Now, these were at different places in Pakistan and Pakistan-Occupied Kashmir. All of this happened less than half an hour. It was just a 25-minute operation. Most of these sites are affiliated to the Lashkar-e-Taiba, the Jaish-e-Mohammed, and also the Hizbul Mujahideen. The Jaish-e-Mohammed and Lashkar are 2 terror groups responsible for multiple attacks in India over the years. Let's talk about Bahawalpur. Bahawalpur is located around 100 kilometers from the international boundary and was the headquarters of the Jaish-e-Mohammed. It was used mainly for recruitment, training, indoctrination of recruits. The Gulpur camp, located 30 kilometers from the LOC in Kotli, was the base camp for Lashkar-e-Taiba. Terrorists who carried out attacks in Poonch in 2023 and on a bus of pilgrims last year were reportedly trained here. Similarly, the Mehmoomana Joy camp near Sialkot was a training facility of the Hizbul Mujahideen. The 2016 attack at Pathankot Air Base was directed from this very camp. The Markaz Toiba camp, located near Muridke, is located around 25 kilometers from the border. It was the headquarters of the Lashkar-e-Taiba. Ajmal Kasab, one of the terrorists who was captured alive during 26/11 Mumbai attacks, had confessed that he was trained here. The Savai Nala camp in Muzaffarabad was a key training facility of the Lashkar-e-Taiba. Terrorists who had carried out attacks on civilians and security forces in Gulmarg and Sonmarg last year, and those behind the Pahalgam attacks were trained here as well. So India had gathered a lot of intelligence and then carried out this operation.
Parikshit, many thanks for joining us. Parikshit Luthra there explaining to us the significance of those 9 sites that were identified and targeted under Operation Sindoor. Meanwhile, Pakistan resorting to heavy shelling near the border in Jammu and Kashmir's Poonch after India's military operation. At least 9 Indian civilians have been killed so far and dozens have been injured. Pakistan termed India's strikes an act of war and has promised to respond at a time and place of its choosing.
At 6 locations where the Indians attacked last night, unprovoked, the blatant aggression that they did, Pakistan has lost 26 civilians and 46 are injured. Pakistan reserves the right and will respond to this aggression at a time, place, and means of our own choice.
Well, that is the Pakistan Army responding. Now, world leaders reacting to India's strike on terror camps in Pakistan. President Trump said India and Pakistan have been fighting for decades. He hopes it ends very quickly. India's National Security Advisor Ajit Doval briefed U.S. Secretary of State Marco Rubio shortly after the operation. Rubio said he's monitoring the situation closely and the U.S. will continue to engage with both India and Pakistan in hope of a peaceful resolution. UN Secretary General Antonio Guterres expressed concern over the strikes in his call for maximum military restraint from India and Pakistan. The UAE and the UK have also called for a de-escalation of tensions. Israel's ambassador to India said Israel supports India's right for self-defense. He said, and I quote, "Terrorists should know there is no place to hide from their heinous crimes against the innocent," end of quote. China's foreign ministry said it regrets India's military action and has urged both countries to put peace and stability first. Russia has expressed concerns over military confrontation between India and Pakistan. It's also condemned acts of terrorism. Let's listen in to what President Trump had to say.
No, it's a shame. We just heard about it just as we were walking in the doors of the Oval. Just heard about it. I guess people knew something was going to happen based on a little bit of the past. They've been fighting for a long time. You know, they've been fighting for many, many decades and centuries, actually, if you really think about it. No, I just hope it ends very quickly.
President Trump then. Several airports in northern and western Indian states that border Pakistan have been closed today following India's strike on terror target Pakistan. Indigo, SpiceJet, Air India and other airlines have suspended services to and from affected airports. Authorities have also reportedly shut down the Kartarpur corridor at Dera Baba Nanak in Punjab's Gurdaspur district. Madiha is standing by with more on the impact on the airspace activity. Madiha.
Well, 5 states bordering Pakistan have seen airspace activity getting impacted, and that has led to flight cancellations. So if you look at the video that we captured from flight tracking site Flight Radar 24, you will see a rare picture where the sky over northwest India is completely empty. So Jammu and Kashmir, Punjab, Himachal Pradesh have no flight movements at all in their airspace, while Rajasthan and Gujarat have few flights in the airspace away from the border. So airports including Leh, Srinagar, Jammu, Amritsar, Pathankot, Chandigarh are closed. Then Jodhpur, Jaisalmer, Bikaner, Kishannagar and Rajkot, Jamnagar, Bhuj and Porbandar are also closed for civilian flights. Let me add that we still don't have an official communication from the Civil Aviation Ministry on these airport closures. But Indian Airlines have been issuing regular updates, issuing advisories to passengers on cancellations of flights to the impacted airports. Indigo has cancelled over 165 flights to and from Srinagar, Jammu, Amritsar, Leh, Chandigarh, Dharamshala, Bikaner, Jodhpur, Gwalior, Kishannagar and Rajkot till the 10th of May. Likewise, Air India said all its flights to and from Jammu, Srinagar, Leh, Jodhpur, Amritsar, Bhuj, Jamnagar, Chandigarh and Rajkot have been cancelled till the 10th of May. Air India Express, Akasa Air and SpiceJet have issued similar advisories. What you will also see on the map is that foreign airlines are avoiding flying over Pakistan airspace. Airlines like Qatar Airways have suspended flights to Pakistan. A British Airways London Islamabad flight was also cancelled for the 7th of May. Emirates too cancelled its flights from Dubai to Lahore and Islamabad. And Saudi Arabia's Saudia Airlines cancelled its flights from Jeddah to Islamabad and Lahore. So that's the situation that we are seeing right now.
Madiha, many thanks for joining us. And staying with Operation Sindoor, the Indian Army carried out precision strikes against the terror infrastructure in Pakistan and Pakistan-Occupied Kashmir. The precision strike weapon system is designed to precisely target positions while minimizing collateral damage to surrounding areas and to civilians. Now, it can hit targets with high accuracy from a long distance. Retired Commodore Shrikant Kesnoor explained to CNBC-TV18 how precision strikes work. Listen in.
Precision, as it implies, means precisely hitting the target. So the kind of weapons and platforms you use are those that hit your intended target, whether it is a building, whether it is a camp or whatever, with huge amount of accuracy. I think that minimizing civilian casualties is in a way sending out a message to Pakistan people too, that India is wanting to hit the terror camps and the terror infrastructure, and now it is your job to ensure that you don't basically encourage these sort of people.
Meanwhile, nationwide civil defence mock drills across India have begun. The move is to ensure emergency preparedness that involves thousands of volunteers across 244 districts. Santya joins us from outside the Chhatrapati Shivaji Maharaj terminus. Santya, the drill underway?
So, Shireen, right now we are at Cross Maidan, and here's where the mock drill is happening. What you can see in front of the camera is the simulation of a war-like situation. So a couple of minutes ago, a fire was started here. A couple of blasts took place here, and now you can see ambulance, you can see teams of NDRF, Mumbai police, local administration here handling the situation. These ropes which you can see in front of camera, Shireen, these ropes actually are the ones which were used to evacuate affected people, evacuate victims. On the top, at the left-hand side, you can see the whole siren system. You can see how a volunteer is coming down the building with the help of a rope. And these people you can see in t-shirts and white t-shirts and yellow t-shirts, these are either members, either volunteers, civilian volunteers, or members of civil defense. Maharashtra civil defense is conducting this mock drill at 10 locations, at 10 districts in Maharashtra. One is taking place here in Mumbai. Blackouts will take place in Anushakti Nagar and Tarapur. Other than that, Nashik, Thane, Pune, Ratnagiri, Sindoor are the places where the mock drill is going to take place. Here you can see these are fire tenders here. The moment the fire took place, these fire tenders were called, and the whole model of a war-like situation has been prepared here by the authorities. You can see these people sitting on the ground are civilian volunteers. Other than that, NCC teams are also here. Mumbai police teams are here. And air siren went off sharp at 4, and it's been calculated how long it's going to take for the authorities to respond. You can see an ambulance is coming out off the spot, carrying volunteers, carrying victims played by volunteers. On the other side, you can see NDRF teams in orange uniforms. So this is the model based on which today's mock drill was planned by Maharashtra Civil Defense. Similar mock drills taking place at 9 more districts in Maharashtra. Shireen.
All right, Sandhya, many thanks for joining us. We will head to a break, but up next, the Sensex and the Nifty end in the green despite an escalation of tensions between India and Pakistan. That and more when we return. Let's take stock of the day's trading action. The Sensex and the Nifty ending in the green despite tensions between India and Pakistan. The Nifty holding on to 24,400 in what was a volatile session. Bottom markets outperformed the blue chips. Prashant is standing by to take us through the details. Prashant, the Lal Street quite resilient through what was an otherwise fairly tumultuous day.
Well, all told, a pretty good session. We woke up to news that India has launched strikes across 9 sites in POK, Pakistan, destroying terrorist infrastructure. And the start was a little tentative, but very quickly the market found its footing. Advanced decline, which was deeply in the negative, some 5 down for 1 up, turned actually positive, and we actually ended in a pretty good fashion. While the Nifty didn't do very much, slight small gains on the Nifty Bank, etc., the gains really came through for the mid-cap index and the small-cap indices, which were up between 1.5% to 2% each. And that's the reason why the broader market felt a lot lighter, a lot better. as compared to just looking at the Nifty and, the index bobbing around up and down through the course of the day. I'll start with where the large caps really, what the large caps really did, and I'll start with what was up. Tata Motors was the big gainer, 5% gain coming in there. Top gainer. Of course, stocks done very, very poorly over the last many months now. Shriram Finance, 2%. Bajaj Finance, 2%. Jio Financial Services and Eternal were some of the other 2% moves today. On the downside, Asian Paints was the clear loser, 3.5% down. Oil prices, oil's kind of felt out of sync with equity prices, which have done so well around the world. Oil has been depressed. So over the last 2 days, we're seeing some rebound. We'll see where the things go. Sun and Reliance are the others which were down 2% and 1% respectively. These are large caps I'm talking about. Now, for the broader market, more up than down, and clearly so by 3:30. BSE was by far the biggest gainer, 6.5%, big number one volume-led gainer. Wellspun Living was up 12%. Paytm after number 7% gain. CCL Products, second day running, has done about 150 rupees in 2 days. We have Gokuldas Exports. This is a clear textile beneficiary after the India-UK FTA. Piramal Enterprises. Motherson Sumi was up 5%. K Fintech was up 5%. Aarti Drugs locked up 20% on this name, 419. There was Sirma, PG Electroplast from the EMS space. IIFL Finance, a bombed out name, 7% gains. And really broadened out, but this is the bulk of the top 10, 12 sort of volume-led gains that we had in today's session. On the downside, some of the defense names like Mazgaon and BDL saw some profit booking, 5% down on these each. There was Swiggy, which has been going up and down. Today it was down 4% lower. And a name like KPI Green, Eventel, etc., which did well yesterday, were on the downside. The India-Pakistan, I think, news flow very much on the minds of investors and especially traders who are looking to sort of navigate this slightly tricky period. Back to you.
Prashant, many thanks for joining us. And the U.S. Federal Reserve will conclude its two-day monetary policy meeting tonight. As per a CNBC survey, the central bank is expected to hold the interest rate steady despite pressure from U.S. President Donald Trump. More than half of the respondents expect a likely recession in the next year. When asked about how the Fed will respond to higher prices due to tariffs and weaker growth and employment, 65% said the Fed will cut rates. China has cut its key interest rates and announced sweeping measures to shore up the economy as the trade war with the U.S. starts to bite. China will establish a 500 billion yuan re-lending tool for consumption and elderly care. Its central bank will reduce mortgage rates under the nation's Housing Provident Fund as well. The U.S. and China have announced that they will meet in Switzerland this weekend to start trade talks. This comes after weeks of an escalating trade war between the two countries. Chinese Vice President will represent Beijing in Geneva, while U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer will represent Washington. Bessent said there is a need for de-escalation before moving forward. This will be the first high-level interaction between both countries since Trump's inauguration. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more. Hello and welcome to our special broadcast. I'm Shireen Bhan. Indian Defence Forces carried out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. Codenamed Operation Sindoor, the strike comes 2 weeks after terrorists targeted tourists in Jammu and Kashmir's Pahalgam, resulting in the death of 26 civilians. The strikes were carried out between 1:05 in the morning and 1:30 a.m. and targeted 9 terror sites at 7 places in Pakistan and Pakistan-Occupied Kashmir. Now, these places are Muzaffarabad, Kotli and Bimbar in Pakistan-occupied Kashmir, and Sialkot, Muridke, Gulpur and Bahawalpur. Pakistan confirmed the strikes and said 26 people have been killed and dozens injured. But let's talk specifically about Bahawalpur. Located about 100 kilometers from the border, the Markaz Subha camp in this area served as the headquarters of the terrorist group Jaish-e-Mohammed. Masood Azhar, the head of the terror group, admitted that 10 of his family members and 4 associates have been killed in the strikes by Indian forces this morning. Masood Azhar was designated a global terrorist by the United Nations Security Council in 2019. In a press conference flagged by 2 women military officers, Foreign Secretary Vikram Misri said that the operations were measured, appropriate and non-escalatory. The Indian Army said that no Pakistani military establishments were targeted. The Air Force said it is prepared to respond to any Pakistani misadventure. Prime Minister Modi briefed cabinet ministers about Operation Sindoor. He also met President Draupadi Murmu to brief her about the operation. Home Minister Amit Shah chairing an urgent video conference with chief ministers, DGPs and chief secretaries of states that border Pakistan and Nepal.
These actions were measured, non-escalatory, proportionate and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. It was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया।
Joining us now to understand the impact and the implications of Operation Sindoor, Manjeev Singh Puri, Adjunct Distinguished Fellow at Gateway House and former diplomat. Also with us, Deepak Bhojwani, the former Indian ambassador to Latin America. Gentlemen, appreciate you joining us here on the program. Ms. Puri, if I could start by asking you, Operation Sindoor launched overnight, targeting 9 specific sites in Pakistan-occupied Kashmir and in Pakistan. The significance of the operation and the significance of the sites that have been targeted by India.
First of all, I must say, this was expected and it was the need of the hour. It was necessary for India to respond to Pakistan, which had carried out a heinous terror attack within India and disrupted a life for common people who have come from across the country. Absolutely right. Look, in my opinion, we have done the right thing. We have targeted areas which are associated with terror, which are associated with terrorist camps. We've been clear that we've avoided Pakistani civilian areas and even their military. We've done this in a precision manner and as the press statement says, in a non-escalatory manner, which is why the rest of the world has said, look, you have a right to be able to take action against what was done about you. And that is very, very important in what we have stressed. For me, 2 places are particularly important, Bahawalpur and Muridke, because these places are not exactly next to the border where only these LETs, etc., are known camps, forward camps are there, but where fundamental bases are there. So what we've done is right. It gives a strong message to the Pakistanis and, of course, the world as well as our public that, look, we are strong, we are determined, and we will give a fitting reply if such kind of things are ever done on the soil of India.
Absolutely, a fitting response there from India. But Mr. Bhojwani, let me bring you into the conversation as well. As we just heard there from Mr. Puri, the significance of the sites that have been targeted as part of Operation Sindoor. But more importantly now, the response that we should be prepared for. Of course, you know, it would be foolish to speculate on how Pakistan intends to respond. But given the political pressure, given the global pressure that is also at this point in time being exerted on Pakistan, we heard from President Trump as well as Secretary Rubio asking for restraint. Do you believe that Pakistan finds itself somewhat boxed in a corner today? They've also got that crucial IMF meeting coming up on the 9th, which will determine in many ways the economic future of Pakistan as well.
Shireen, I think Pakistan has been in kinetic response mode for the last perhaps 2-3 decades. Their sponsorship of terrorism is a known fact. That's why they're on the Financial Action Task Force grey list. They should be on the blacklist in many ways. But the fact of the matter is that they are getting financing from Saudi Arabia, which has given them, I think, billions of dollars in terms of deposits in their treasury. China, of course, which is financing the CPEC, and even other countries. In fact, now the IMF is talking to them also. So the Pakistan keeps slipping out of the net somehow every time we tighten the noose. But the problem is not that. The problem is that even if Pakistan was to develop economically, they have this base, this matrix of terror organizations, which is also fed. And as Ambassador Puri was implying, it's basically state-sponsored. So we have to address that issue. And what's happened, as we see through this century, at least 2008, 2016, 2019, our response now has become asymmetric. Because while they do things clandestinely, we believe we have the right. And in fact, it seems that implicitly the international community has accepted that the right of hot pursuit and the right even of retaliation of the sort we've done today, we did in Balakot, etc., are accepted. And I think we should take our government at its word when it says we were not targeting neither civilians nor Pakistan military. If there is collateral damage at all, that's the fault of the terrorists who are housed there, and particularly deep inside Punjab.
Ambassador K.C. Singh also with us. Ambassador Singh, appreciate you joining us. Both Ambassador Puri as well as Mr. Bhojwani, they're talking about the message that this Operation Sindoor sends out, as well as the global response and the global reaction. Do you believe that, given the fact that India has gone after very specific sites, 9 sites specifically, and has called its response non-escalatory, will make it harder for Pakistan to try and gather any kind of global support at this point in time?
I think globally it's an ideal time to be taking action like this because President Trump has created enough disruption and distraction. So Europeans are busy. Germans spent the whole of yesterday electing a chancellor. Canadian Prime Minister ticked off the president. So, you know, all kinds of things are happening. But we must remember that Pakistan, we shouldn't just write it off because it's not a question. We always make a mistake between equating Pakistan with Pakistan's army. Pakistan's economy may be going downhill. Pakistan may be in economic distress. Pakistan army is in no distress. It's an army that controls the country, not the country controlling the army. And that's why that intemperate lecture by the army chief over 2 weeks ago, which was a signal that something was afoot and we should have been prepared for it. But I think what India has done, number one, having set a certain bar after Balakot, there's no way that India could not have reacted, and particularly a BJP-led government. It was expected that there will be a kinetic response. But we've combined it also with the putting Indus Water Treaty into abeyance, and also by using the gates of the rivers to control the water and then release them. So water has also become a weapon at a time that Pakistan requires. We can't completely stop the flow because they are run-of-river projects. But we can always reduce the flow and then increase it and cause disruption in Pakistan. So they have to take a call. And the other thing is that I don't think Indian planes, according to international reports, Indian planes did not cross the LOC or the Indian border. And that's why you'll see all the targets are within about 100, 120 kilometers of the border or the line of control. So what does Pakistan do? Now, Pakistan normally retaliates the same way. We've not attacked a military target. What target will they attack here where there are terrorists attacking Pakistan? We don't have terrorists attacking Pakistan. But the only problem is that they will go on a PR thing. Because in Muridke, their leadership is not there. LET is using a front of schools, hospitals, charitable organizations. We might have taken out their headquarters, but they'll make it a big case of innocents getting killed, civilians getting killed. Similarly, in Bahawalpur, Jaish-e-Mohammed is no longer. They were, in any case, they had moved out of there, but they would have emptied out. But nevertheless, they will have basic workers and headquarters. And I think an attack, even if it has limited loss in terms of life or buildings, a signal was important to send to these terrorist organizations that you can't hide in Pakistan behind charities and charitable organizations with the protection of the Pakistani army, and India will not come and touch you. Remember, even in during Balakot, we did cross the international border because Balakot is not in POK, but that was still in areas contiguous to Kashmir. This time, it's plain and simple in the heart of Pakistan. Now, let's see what they do, and that is why I think India is expecting a reaction in the border areas within 100-odd kilometers. That's why we stopped the flights in Chandigarh and Rajasthan, Srinagar, and so on and so forth. And then India will have to take a call because you have to be ready for an escalatory response depending on what Pakistan does. Internationally, I don't see any problem. The world is distracted. And with Trumpian rules of the powerful deciding, if he's saying Russia did not attack Ukraine, Ukraine attacked Russia, he's got a history all topsy-turvy. He thinks that Pakistan was created 1,500 years ago. So you're dealing with a person who's completely mixed up on history, current relations, international relations. So keep him humored. I think he'll keep out of it.
What would you expect, at least along the border areas, as a response from Pakistan over the next few days?
Shireen, look, I have no doubt that the Pakistanis will respond in terms of shelling and so on and so forth. I am not so sure about their undertaking sort of surgical strikes or this kind of action within India, distance away from the border. I'll tell you why I think so. You know, there was a need for us to retaliate in the way we did, also in terms of the domestic political opinion. In Pakistan, the opinion which is being created there is that, you know, we are being unfairly targeted. They have detracted from the fact that they were the source of the terrorist act insofar as their own people are concerned. Secondly, let us not be we should be mindful of the fact that the world knows, the world has awoken to this fact, and they are talking in terms of de-escalation, etc. While they may be distracted in other ways, and Ambassador Casey Singh is absolutely right, the world is in a topsy-turvy state. But the fact of the matter is that we are interested in interacting with them. They have a certain worldview on this entire thing. And so the question of keeping everything measured would be important, which is why we have been very strong in stressing that A, there's been no targeting of civilians, even military facilities, only terrorists, and B, that it is not an escalatory move, but really simply retaliating to what they did, which was an act of terror. This is particularly important. Of course, the rest depends on the Pakistanis. If they escalate, I have little doubt that the Indian armed forces are more than prepared for giving them a bloody nose, which they will remember for a fairly long time. But in a sense, for the moment, the ball is in their court.
Mr. Bhotwani, if I could get you to comment on that. The role of the Pakistan army, as he said, the Pakistan government may find itself in a precarious fiscal position and its economy may be in dire straits, but the Pakistan army finds itself in no distress. And especially given the kind of commentary that's been coming in from the Pakistan army officials, do you believe that there is likely to be dissonance between what the government may wish to do and what the Pakistan army intends to do?
We'll have to see how it plays out, but my feeling personally is that the government will have to go along with what the army says. There's far too much political pressure on them to look strong and to look like they intend to retaliate, even though they may not want to. Of course, they've got more pressure internationally than we do, and that was evident in the recent UN Security Council meeting where we were not present because they're non-permanent members. They called the meeting, but from today's reports, it appears that they didn't get what they wanted, and a lot of members of the Security Council were questioning them on what they were doing and what they planned to do about LET operations. Now, basically, the Pakistani army is in control of that country. They've proved it time and again, despite the popularity, the apparent obvious popularity that Imran Khan enjoys, and the fact that he should have won the election and been elected. But they managed to keep control of that country against all odds. So they clearly run the show. And this, let's not forget, is an absolute military operation. So there's no question that the civilians will be told to take a back seat, and they'll be told that the army will see what it wants to do. Of course, there will be constraints on the army, not just international. Even the fact that today India is far better prepared than it ever was. Forget about 2008, even then in 2019. We won't be losing any aircraft, as we haven't apparently, if the government is to be believed. And I think the army will have to reconsider anything it might want to do overtly. But that doesn't mean to say they will not continue with their covert operations, which I believe will not stop. Now, that is the longer game. They have to play and bring such pressure to bring on them, to bear on them, that they will have to roll back their support of these elements. While we here in India, in Kashmir, I was there last September, the atmosphere was fantastic. Clearly, there are either cells or rogue elements who have been, of course, sponsored by the Pakistani side, who are doing this on our side, okay? And we also have to keep in mind that there's Pakistani infiltration too. So that, I suspect, is going to continue. And we'll have to play the long game too, but with increasing pressure on Pakistan. And the army will just have to live with it or give up.
Israel was among the first nations to condemn the Pahalgam attack and also back India as far as the strike against terror groups in Pakistan last night goes. Joining us right now is Israel's ambassador to India, Reuven Azar. Ambassador, thank you very much for joining us. Give me a sense of how you are seeing India's military operation right now. This was an act of self-defense, non-escalatory, targeted at terror groups only.
Well, Parikshit, it's only natural in the backdrop of this terrible, terrible attack in Pahalgam, in which the lives of innocent people were taken in such a terrible way, that Israel will support the right of self-defense of India.
Right. What's your sense on the kind of damage that has been caused to the terror groups in Pakistan? There were 9 targets altogether. I'm sure you and the Israeli government must be monitoring the situation very closely. What is your assessment of the ground situation?
Well, we don't have an assessment. We follow the news and we are updated, like all the audience is updated regarding what is happening. We, of course, are following the events and we wish success to the Indian forces. And I hope that this whole event comes to an end for the sake of peace.
Right. Do you see parallel similarities in the manner in which Hamas carried out the attack on the 7th of October 2023 in Israel and what has happened in Pahalgam a few weeks back?
Well, you know, unfortunately, Parikshit, when as much as we rise as nations, as much as we develop ourselves economically, security-wise, as much as the strategic balance changes in the region, the terrorists become more desperate and commit more atrocious crimes. And this is what we are seeing, what we saw on the 7th of October, in which, unfortunately, not only people were massacred, but people were also abducted. Sex crimes were committed. Terrible things. And this cannot be acceptable. Terrorism must be condemned, and all the countries in the world must unite in condemnation of terrorism and in support of the countries that defend themselves against terrorism.
Do you feel India is finding a strong voice globally when it comes to exposing Pakistan's record of harboring terrorists on its soil?
Well, it's our duty to expose those who harbor terrorists. I think it's important because we want to create a situation in which the international cooperation to curb terrorism works. Unfortunately, there hasn't been enough international cooperation. There are many things that we can do in the diplomatic realm, for example, in preventing dissemination of radical content, in working with social media and electronic media around the world to prevent those radicals from putting out their message. We can do much more in order to punish those who harbor terrorists and to sanction radical groups. We can do more to prevent the proliferation of sophisticated weapons. Look at what's happening in our region. You have terrorist organizations that possess ballistic missiles and the means to produce them. This is unthinkable. So if we don't want to create a situation of complete chaos in the world, in which these irredenant groups have possession of such sophisticated technology, then all humanity is going to suffer even more. We, as democracies, both India and Israel, just stand at the forefront of this challenge. But everybody can suffer. And therefore, we have to unite against terrorism.
Right. Since the Pahalgam attack happened and 26 people, civilians, were killed, what has been the cooperation like between India and Israel?
Look, we are, generally speaking, working to deal with challenges, and we cooperate to create capabilities to deal with challenges. We are not part of this conflict, and we do not interfere in specific incidents. This is completely the responsibility of the Indian government, and we trust its judgment.
But do you also appreciate the manner in which India responded? We said that this is non-escalatory. We did not target military. We did not target civilians. This was targeted only at terror groups. Do you think that is a kind of response that will be lauded by the world?
Well, as I said in my tweet, those who target innocent civilians cannot think that they can escape from paying a price for committing those heinous crimes.
Right. Ambassador, as you've seen in the case of Israel and in Gaza, you can come up with a response. So we may say that our intention is non-escalatory. We want to target only terror groups. But you cannot control the response of the other side or the enemy. Keeping the situation in mind, the Pakistani Prime Minister, his office has said that they will get back at a time and place of their choosing. How would you recommend or advise India, keeping in mind the kind of war that Israel has seen over the last 2 years?
Well, it is not more my role to give advice. What I can tell you is that this is becoming an increasingly difficult challenge because this hybrid or asymmetric warfare is creating a situation that it is very difficult to act because terrorists are breaking any rule in the book, any norm of humanity. And we as democracies, we respect our values. So we are fighting with one hand behind our backs. There are some that are trying actually to tie the other hand as well. This cannot happen. At the end of the day, we have the duty to defend our citizens, and we'll have to perform according to our responsibility.
Ambassador, do you buy the argument that the Pakistani Prime Minister and the government are giving that they had no role in the Pahalgam attack? There was no sponsorship of terror from the Pakistani government, and it is the Indian government which has carried out a false flag operation, and even this terror strike is not against terror camps, but civilians in Pakistan. Do you buy that argument?
Look, I'm not in the business of buying or not buying an argument. At the end of the day, you have to look at the bottom line. When your citizens are being massacred, you have to take action. You have to take effective action. That's not an easy thing to do. There are many risks that are being entangled in that. And as I said, I trust the Indian government to do the judgment, to take the calculation and do the right thing for its people.
And as the situation evolves, we can expect Israel to be one of those countries which will possibly be at the forefront of supporting India, whether it's with intelligence or military or politically.
Because a country that has been hit very hard by terrorism, a country that on the 7th of October, its citizens have been massacred in such a terrible way. People that were going to a music festival were massacred, abducted, raped, decapitated. It's very difficult to ignore the similarities with what happened in Pahalgam. So we have to stand firm. We are at the forefront of this challenge, either if we like it or if we don't like it. And we have to face it.
Right. Speaking about the situation in Gaza, we have been reading reports how Israel is all set to expand the operation there. Could you give us a sense of what the thinking of the Israeli government is right now?
From the outset, the Israeli cabinet has decided that we have two goals here: to bring back our hostages and to make sure that Hamas cannot rearm and regroup. It has to be removed from power in the Gaza Strip. Now, through a combination of negotiation and military pressure, we've been able to bring back 194 hostages, and we are left with 59. As time passes, it is becoming more difficult to extract more concessions from Hamas because they understand they are getting to the end of the way. And therefore, the Israeli cabinet has adopted a decision 2 days ago that we are entering a new phase in this war, hopefully the final phase. We are now in preparations for an operation that is going to include a civilian phase in which we are going to encourage the population of Gaza to come to safe zones in which they will get international assistance, but under Israeli control and not under the control of Hamas, which is stealing that humanitarian assistance from the population and selling it to them to finance its war machine. And the second element is going to be taking more chunks of the Gaza Strip until Hamas either renounces power and gives up the hostages or is eliminated.
Right. Ambassador, thank you so much for joining us, coming to the CNBC-TV18 studio at this hour of crisis, showing your solidarity with the Indian government, the Indian forces and the Indian people, and also telling us about Israel's plans in Gaza going ahead. Thank you once again for being with us. All right, that's the end of this broadcast. That was the Israeli ambassador telling us that they are standing with India as far as this Operation Sindoor is concerned. Indian civilians have been hit brutally, and India has a right of self-defense, and that is the bottom line.
साथ ही
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया।
Hello and welcome to our special broadcast on India's strike across the border. Indian Defence Forces carried out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir, codenamed Operation Sindoor. The strikes come 2 weeks after terrorists targeted tourists in J&K's Pahalgam, resulting in the death of 26 civilians. The strikes were carried out between 1:05 a.m. and 1:30 a.m. and it targeted 9 terror sites at 7 places in Pakistan and Pakistan-Occupied Kashmir. These places are Muzaffarabad, Kotli, Bhimber in Pakistan-Occupied Kashmir, Sialkot, Muridke, Gulpur, Bahawalpur, Pakistan. Confirmed the strike, says 26 people were killed and dozens injured. Let's talk specifically about Bahawalpur, located 100 kilometers from the border. The Markaz Subhan camp in this area served as the headquarters of the terror group Jaish-e-Mohammed. Masood Azhar, the head of the terror group, admitted that 10 of his family members and 4 associates were killed in strikes by Indian forces. Masood Azhar was designated as a global terrorist by the United Nations Security Council in 2019. In a press conference flanked by 2 women military officers, Foreign Secretary Vikram Misri said that the operations were measured, appropriate and non-escalatory. Indian Army said that no Pakistani military establishments were targeted. The Air Force said that it is prepared to respond to any Pakistani misadventure. Prime Minister Modi also briefed cabinet ministers about Operation Sindoor during a meeting. He also met President Draupadi Murmu at Rashtrapati Bhavan to brief her about the operation. Home Minister Amit Shah chaired an urgent video conference with chief ministers, DGPs and chief secretaries of states bordering Pakistan and Nepal. Speaking at an event in Delhi, Defence Minister Rajnath Singh said that India has exercised its right to respond to the attack on its soil.
हम कह सकते हैं एक तरीके की सटीकता, सतर्कता और मानवीयता यह हमारी भारत की सेना के जवानों ने दिखाई है, जिसके लिए मैं हमारे सेना के जवानों और अधिकारियों को पूरे देश की ओर से मैं साधुवाद देता हूं और सेना को संपूर्ण संबल प्रदान करने के लिए अपने प्रधानमंत्री माननीय नरेंद्र मोदी जी को भी मैं साधुवाद देता हूं.
I'm now joined by Gurjeet Singh, former ambassador, Tilak Devashar, author and former member of the National Security Advisory Board as well. Let me go across to Mr. Tilak Devashar first. Sir, give us a sense of your reading of the situation right now. NSA Ajit Doval has briefed his counterparts in Saudi Arabia, UK, Russia and other European countries, also the United States. The message is very clear. We were non-escalatory in our actions. Our intent was to target only terror camps, not civilians, not economic targets, not the Pakistani army. But in case there is an escalation, we are prepared. What's your reading on how things stand and how things could develop now?
Thank you. Thanks for having me on your show. I think India has covered all bases. As you mentioned, they've covered the diplomatic base by briefing close friends on what exactly happened. They've covered the military bases by carrying out precision strikes only on terror camps. Civilians were not targeted, neither was there any military targets done. So it is just the terror camps, especially the snake pits of Bahawalpur and Muridke, the headquarters respectively of the Jaish and of the Lashkar. And finally, we've also said that we will be prepared to any miscalculation or any misadventure that Pakistan may do. Now, this is the kinetic operation that happened last night. But if you add this to the non-kinetic operations that were done within a day of the Pahalgam attacks, especially the holding in abeyance the Indus Water Treaty, I think comprehensively it should send a message across to Pakistan that terror cannot be an instrument of interstate relations. We thought that Pakistan would have learned its lesson after 2019, but obviously they had forgotten the lesson, or because of the army chief's own personal ambitions, they have started on a path that can only lead to a lot of disastrous consequences for Pakistan. We hope that Pakistan would learn its lessons even now and not go up the escalatory ladder.
Right. Let me get in Ambassador Gurjeet Singh at this point. Ambassador Gurjeet, right now we are looking at a press conference by Shehbaz Sharif. He has directed his forces to respond to the Indian Army and the Air Force attack. What is your sense of the present situation? How important is the role of the international community and India's diplomatic outreach with its allies to make sure that Pakistan's ability to respond is diminished? And in case now there is an escalation by Pakistan, what steps does India need to take diplomatically?
Thank you for having me. First of all, I would like to compliment the government of India and its armed forces for a very successful and measured operation. Secondly, to answer your question, over the last few weeks, since the Pahalgam tragedy, the international pressure has been largely on us not to do anything, by even-handedly looking at saying there should be no escalation and India and Pakistan must keep everything under the lid. Since we were the victims, that pressure was on us not to do anything. But after these strikes, that pressure not to do anything, not to escalate, not to react is gone on to Pakistan. So Pakistan has tried through the UN Security Council, where it currently is a non-permanent member, to get its narrative going. But there has not been success on that count. So today, if Pakistan decides to escalate, India has already briefed all the members of the UN Security Council earlier this evening. And India has spoken to the major partners through the NSA, explaining that we are not going to escalate matters. We have achieved our objective of a counter-terror strike. So therefore, the diplomatic pressure now is going to be on Pakistan. And it seems that they are bound to react some way or the other to assuage their army and their public opinion. But after that, it depends how much more are they ready to do. I don't think on our side there will be any escalation. But having said that, I don't think a single strike with no escalation should be part of our policy. Our policy should be that if there is ever a terror strike in India, we can do this kind of thing, and we could in the future do it preemptively too. Thank you.
All right. Let me go back to Mr. Tilak Deveshar. Mr. Deveshar, now, clearly there will be a response by Pakistan in the days to come. They've said that they will attack at a time and place of their choosing. How different is the situation today? Clearly, India has not made it only about a military operation. This is bigger than Balakot in terms of the strike by India. At the same time, you've got India, which has suspended the trade route. You've suspended shipping. You've suspended postal services. And you're also suspended visas for Pakistani nationals, suspended the Indus Waters Treaty as well. So there is a very strong economic offensive that India is also carrying out. Pakistan is treating all of this as an act of war. Today, for the first time since 1971, we're having this extensive mock drills across the country. And these are wartime mock drills which are taking place, called Operation Abhyas, to defend ourselves now against any future retaliation. How different are these circumstances today? If you had to explain an average viewer about the sensitivity, about the gravity of what's happening, how would you do that?
Actually, I froze, I think, in the middle, so I missed part of your question. If you could just repeat it briefly.
Right. How different are the current circumstances between India and Pakistan, sir? Because Pakistan has said it will respond. And today, India's action is not just militarily. We've also suspended trade, suspended shipping lines, air connections, the airspace for Pakistan, postal services. So the reaction from India this time has been very widespread economically, diplomatically and militarily. How do you think Pakistan will respond? And how would you explain the average Indian viewer about the gravity of the situation, considering we're looking at wartime mock drills also which are taking place?
So, you know,
All right,
I think
I believe we have some...
we had thought that after Balakot, Pakistan would have... Can you hear me?
Yes, sir. Please go ahead. Okay, we've lost that link there. Let me just try and go to Air Marshal Ahluwalia. Air Marshal Ahluwalia, are you with us?
Yes, I'm with you. Strength 5.
Yeah, thank you so much, sir, for being with us. What kind of response do we have to be prepared with? I was speaking to officials in the government, and they were speaking about these wartime mock drills, and they were saying that Operation Abhyas becomes extremely important because there has been a kinetic action by India, but now you have to be prepared for defense. We've not seen these wartime mock drills happen since 1971. What is the significance of these drills, these civil defense drills, which are taking place now?
These are just training methods to prepare the general public if there are any air raids through aircraft platforms or through missiles. Whenever something is detected, the sirens will go off, and the sirens will indicate that there is an imminent strike. In that case, you have to take shelter as appropriate and as that you have been practicing. So that is basically the purpose of this, to be prepared for an imminent airstrike. But to go further, that is, you can ask me the questions, or do you want me to speak?
No, please go ahead, sir.
Okay, so basically, I think this was a very measured and proportionate response to what happened on April 22nd at Pahalgam, where we lost 26 very valuable civilian lives. There was no choice, but we had to have some reaction, and the reaction was kept at a minimum level, in the sense non-escalatory. We didn't want it to go further than conveying a specific meaning. So basically, we needed to attack the Pakistan terror groups, the JEM and the LET, the terrorist infrastructure, their training camps, their recruitment launch pads. And this was basically to only hurt the terrorist infrastructures and not attack any military or other civilian high-value targets, because that would have led to an escalation where we would have got reciprocal strikes, reciprocal attacks, and that would have led very quickly up the ladder to an all-out conflict. In this case, we have put them in a little bit of a fix as to how they're going to react. They will have to react in some form or manner like they did last time after the Balakot strikes. What they would probably try to do is find some targets. I don't think they'll find any targets here, just like they didn't find any last time. And they'll have, because we don't have any terror camps, etc. But if they have to strike any military targets, then they're in for big trouble. So now it's a fix for them as to what kind of action they are supposed to take. We have conveyed our intent. We have used the correct weapons, the correct platforms, identified the correct terror camps, 4 in mainland Pakistan and 5 in the occupied POK.
Okay.
So
all right.
Now what happened? So all this was done very well, and we use standoff weapons beyond visual range. You use the Rafale, and you have, the scalp.
Okay, I think we've lost that link with Air Marshal Ahluwalia. Thank you very much for joining us, Ambassador Gurjeet Singh and Mr. Tilak Deveshwar as well. We're taking a break now on CNBC TV18. Our discussion continues on the other side, and we'll have Lieutenant General D.S. Huda joining us. Welcome back. You are watching CNBC TV18, and this is our special broadcast on Operation Sindoor. Joining us right now is Lieutenant General D.S. Huda. He's a former General Officer Commanding-in-Chief of the Northern Command of the Indian Army. He spearheaded the 2016 surgical strike across the LOC. General Huda, thank you very much for joining us. How would you describe the Operation Sindoor to our viewers? How big is this compared to what we saw in Uri, in Pulwama?
Prakshit, thank you for calling me to your show. Look, this is much larger in scale and scope than what we did in 2016 and 2019. Not only have you hit terrorist camps, you've also hit at the heart of Pakistan's terror infrastructure. In particular, hitting the headquarters of the Lashkar-e-Taiba and Jaish-e-Mohammed in Punjab. I think is a huge step and also a very, very clear message to Pakistan and to Pakistan Army that we will not tolerate this anymore. You saw that in the presentation that was given by the Foreign Secretary, where one slide said no more, and so I think that's a very, very clear message that is going out, that we are going to hit at the heart of terrorism in Pakistan.
Significance of these targets, sir, like Bahawalpur for that matter, Muridke. Do you think India now has significantly eliminated Pakistan's ability to strike with terror groups and target civilians in India, target army installations in India?
So, Prakshit, I won't say immediately that you could say that it has significantly impacted that ability. I think what we can say with confidence is that we are showing that, look, there is going to be a huge cost if you carry out and continue to conduct cross-border strikes into India. And that cost will incur to the terrorist leadership, and not merely to foot soldiers. There are thousands of foot soldiers you can send. So I think it's a strong deterrent message. let us see how it goes out, combined with other steps that India has taken, diplomatic steps. I think this is going to put enormous pressure on this whole military jihad complex that exists in Pakistan. Also put pressure. I know there are no direct attacks on Pakistan military targets, but I think it's going to put pressure on Pakistan that if you continue to support the jihadi infrastructure in Pakistan, then you could be, leading Pakistan into a very ruinous conflict with India. So these are things that I think as we go ahead, Pakistan as a state must think about, and certainly it will have an impact on the support that they are now currently giving and pushing terrorists into India.
Right. How do you see statements coming up from the Pakistani army, the Pakistani Prime Minister? Do you, of course, see an immediate response by Pakistan? They have said that they will now attack at a time and place of their choosing. They're mirroring the statements made by India. How different is the situation in terms of the response now this will invite from Pakistan?
Look, Parikshit, I think it would be wise for India to prepare for some retaliation from Pakistan. We have seen that in the past, also in 2019. Pakistan Army Chief General Munir, who has made such sort of radical statements in the past, would be under some pressure that at least India has carried out such a major operation that you need to react in some way. What form and shape that reaction takes, I mean, at this stage, we can't say. My own sense, Parikshit, is it would be demonstrative, it would be limited in scope, that, India has done something, so we have also demonstrated our capacity and capability. That is the sense I get. I may well be wrong, but I don't think Pakistan is in a state to escalate this conflict. It's really going to hurt them. So my sense is, yes, retaliation, perhaps limited and demonstrative.
Could there be a full-blown war as a result of India's kinetic strikes?
Actually, as of now, I don't see that. So as I said, we have done something. If you look at the statements by the Foreign Secretary, he's very clearly said, this is non-escalatory. It is a measured response to terrorists. We have not hit any military targets. We have tried to avoid any sort of collateral damage. And I think so. He's saying that, we did what we had to do in our national interest to protect ourselves. The escalation is now up to Pakistan. And knowing the sort of conditions that exist in Pakistan as a country today, I'm not sure that, they are in a position to really escalate to such an extent that we could see the two countries engaged in an all-out war.
Right. And do you feel, General Huda, that this situation will subside over the next few weeks? How do you think it will eventually play out? Briefly, if you can tell us.
Actually, a lot depends, as I said, on what the Pakistan response is. Because whatever response comes, obviously there's going to be also a reaction from India. If the response is limited and we can keep things at a limited scale, then I think over the next few weeks, we should see the current crisis sort of calming down. However, if there is, should I call it, unreasonable and very escalatory response from Pakistan, then we really don't know how things escalate and how they move ahead. But as I said, my own feeling is neither country is sort of looking to get into a full-blown war with each other.
All right. Thank you very much, sir, for joining us. Let's move on. Let's talk about the Lashkar-e-Taiba camp located in Muridke, which was one of the terror sites struck by India. Located around 25 kilometers from the border, it was the headquarters of the Lashkar-e-Taiba. Ajmal Kasab, one of the terrorists who was captured alive during the 26/11 Mumbai attacks, had confessed that he was trained here. Santya Gora now joins us from outside Mumbai's iconic Taj Hotel, which was attacked on the fateful night of 26 November 2008. Santya, a very important day for the victims of the 26/11 terror attacks, especially those who died at the Taj Hotel?
Absolutely, Parikshit. On 26th of November 2008, 10 terrorists of Lashkar-e-Taiba infiltrated Mumbai. They entered Mumbai. They came to Mumbai via the sea route. And once they entered the city, they launched what is known to be one of the most ghastly, the most horrific terror attack on the satellite city till 29th of November. They targeted multiple locations, Taj Kulaba being one of them. We are at Taj right now. Taj, Chabad House, CST Station, Leopold Cafe, Oberoi Hotel, Kama Hospital were some of the locations. And we all remember, especially every Mumbaikar, and not just Mumbaikars, every Indian remembers that image of Ajmal Kasab walking through CST station on the platform with weapons in his hand, shooting citizens. And the reason today's strike, Operation Sindoor, is significant in so many ways. One way that finally the perpetrators, not only the perpetrators of 26/11 are, we have given an answer to them, but also the training camp where all these terrorists, they received their training, all 10 of them. That includes not just the people who infiltrated the city, but also the handlers, because it was not just Ajmal Kasab and his fellow terrorists who got training there, but also Tahavur Rana and David Headley. And remember, Tahavur Rana is right now in India. He is in NIA's custody. Tahavur Rana is one of the handlers who was aware of the entire operation of not just related to 26/11, but also of Lashkar-e-Taiba. Talking about training, Ajmal Kasab and these other terrorists, they were trained how to use GPS. They were trained how to operate a ship because they took the sea route. They were trained how to navigate maps. They were trained how to survive on very little food or no food or water for over 60 hours. Because as per LET's calculation, they were planning on conducting the terror attack in Mumbai for 60 hours. And their calculation was that's how long it's going to take once they finish everything to cross LOC. So that was the calculation they kept in mind. They were trained how to seek directions while speaking in Hindi by not using any word which can raise any suspicion. They were, in fact, I remember I covered David Headley's video conferencing deposition which happened in 2015. At that time, in that deposition, Parikshit, David Headley had mentioned that Ajmal Kasab and other terrorists were asked to wear a sacred thread which we call Rolly on their wrist so that nobody could suspect them. They were trained how to use weapons and they were asked to shoot and kill as many people as possible. They were first asked to take as many people hostages as possible, and all these terrorists, they were in touch with the handlers sitting at this camp on satellite phones. So that training camp has now been successfully destroyed by the Indian forces, Parikshit.
All right. Thank you very much, Sante Gora, for joining us. And let's also emphasize that the civil defense drills that are taking place all across the country, even in Mumbai, Delhi, and around 244 districts, very significant at this time when we are looking at a very tense situation at the border. And let's not forget, Pakistani forces have been firing artillery shells at Indian troops and civilians all across the LOC and the international border. 8 civilians have been killed, 2 have been injured, and the firing continues. And India is also responding. So the operation not yet over. Let's see how things pan out over the next few weeks. With that, it's a wrap on this special broadcast. Thank you for watching. Goodbye. Why is the Indian government carrying out wartime mock drills across the country? The last time that such a nationwide exercise to prepare and sensitize civilians took place was in 1971, the year when India-Pakistan went to war against each other. The best way to explain this is that after the Pahalgam attack, India and Pakistan relations are very tense and at an all-time low. Pakistan has been violating the ceasefire and opening fire at Indian posts along the LOC on a daily basis. India is also retaliating. Prime Minister has given operational freedom to the army, the air chief and the naval chief to respond to Pakistan as they deem fit. While India's response is likely to be a very calibrated and targeted one, but the government feels it is necessary to prepare civilians in case things escalate.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Small and mid-cap stocks. Are they the real road to riches? And if yes, then what should you be doing with SMID exposures, as it's called, small and mid-caps? That's how it's called. The acronym goes by the word SMID. Now, market experts say that small and mid-cap stocks in the current market environment are still expensive. So what should you be doing? This week, we do a deep dive into the world of small and mid-cap investing via mutual funds. What are the mistakes to avoid and which are the funds that can potentially offer great wealth creation opportunities if you're in the market for the long haul? Joining me to discuss this and bring us lots of very interesting data points and analysis today is Alek Yadav, Head of Investment Products at Sanctum Wealth. Alek, really appreciate you joining us in the studios. Good to have you in. And I think this is your first Let's Talk Money.
That's right.
So welcome to the show.
Thank you so much. Thanks for having me.
So, this is something that we've been hearing, common narrative in the market right now is that large caps are safer, the market is correcting. So don't be overexposed to small and mid caps. The heydays after COVID are over. That's what the wise men are telling us. Why don't you give your take? How critical are small and mid cap stocks and funds in anyone's portfolio?
Sure. So mid and small cap stocks are, of course, important. What happens is that there are certain sectors which are not represented by large caps. And in certain cases, the market leader itself is a mid cap and a small cap. Like for example, auto ancillaries, there'll be some companies which will be making certain parts for an auto manufacturer, and they by themselves are mid and small cap. So if you want such kind of exposure, then you have to have allocation to mid and small cap. While I agree that that mid and small caps are expensive at this point of time, and hence you may have lesser allocation to them, but some allocation at any given point of time makes sense.
Okay, so let's look at some examples from history maybe, and we all know that history cannot be projected into the future. It's no guarantee for future returns. But historically, and I'm now talking about people who are planning long-term portfolios. You don't want to stress too much about 6 months ke liye ye mid-cap fund kharida, then you get out, then another one year you put your money in this small cap fund and then you get out. But for steady wealth creation, have SMIDs really delivered as a category?
Sure. So if you look at last 20 years data right now, as in April 2025, if you look at 20 years data back, if you go back and look at the past 20 years data, right now mid caps have outperformed large caps, and they have in fact outperformed small caps as well. Small caps have done better than large caps also. So that's how it's been. But what happens when you look at 20-year data is that point-to-point data is that there are certain periods that can impact the returns, significantly. What is happening right now is that March 20 onwards, you've seen a big bull market for mid caps and small caps, and that's why the CAGR is also looking higher. But if you look at a long-term chart where if say you had money invested in May 2005 and you then expanded to right now, there are points of time where mid and small caps have underperformed large caps. For example, in the 2013 time period, large caps, are behind mid and small caps. If you invested money in May 2005 and you held it till August 2013, then you would have been better off in large caps. Similarly, in the COVID correction, you would have been better off during the COVID correction if you were in large caps, even if you had invested in May 2005. But right now, mid and small caps have outperformed.
So market cycles many a times influence which category of market capitalization of stocks will do better. And okay, we've got some data points now which are reflecting exactly that. So what we've done is we've taken this data and we're looking at 3 different buckets, 3 different market cycles. So if you go back in time, 2005 to 2009, there was a bull bear cycle there, then 16 to 20 and now. So why don't you kind of briefly explain this to us, Alek?
So generally, mid and small caps are a little high beta. That means they tend to do better in bull markets. And as you can see here, during the 2005 to 2008, which was a big bull market for India and Asian markets generally, mid and small caps outperformed. Small caps did much better than large caps as well. But during the great correction, the GFC, which was the global financial correction, we saw that large caps fell lesser than mid and small caps. The same thing sort of got repeated in 2016 to 2020 as well. 2016 to 2018 was a very good time for mid and small cap. In fact, some of the mid-cap mutual funds and small-cap mutual funds delivered 100% type of returns. There again, large, mid and small caps outperform. But in the 2018 to March time, March 2020, which is the COVID time, they again underperform. This was a time when there was the SEBI recategorization and large cap funds were selling mid-cap stocks. And that was followed, of course, by the COVID correction. And then post-COVID, we have seen mid.
So broadly speaking, what you're saying and what past track record tells us that in bull market phases, typically small and mid caps do better. Right. When the market is under the weather, when there is a correction phase going on, then typically large caps outperform.
Exactly.
Let's also pull up a chart. I think, there we go. We've got that chart up, which talks about long-term performance. And here in this chart, I think it's pretty evident. Here, May 2005 till April 2025, this is a 20-year period. Here, mid caps are showing the maximum outperformance. So is it fair to say that if you're in a decent mid-cap fund for a long period of time, you will make money?
Yeah. So here again, if we see, if we see the blue line, which is the large cap line, till August, till 2013, which is during that time, we can see that the blue line is ahead of mid and small caps. It's actually doing better even in the COVID time. It is actually post-COVID where mid and small caps have done better. Having said that, this is just index data. And when we look at mutual fund data, we'll see that, mid-cap mutual funds and small-cap mutual funds have actually done better than the index. So that adds a little bit of alpha.
Okay, so before we move on to figuring out what kind of funds will work well for us, this data also tells us that there are plenty of people who will try and time this. When the market is bullish, let's buy a mid-cap fund. When the market's bearish, sell your mid-cap funds. Right now, we've been in a bit of a challenging phase since October. So isn't this a little counterintuitive?
Sure.
How should you, in terms of our behavior as investors, when it comes to timing our entry and exit in mid-cap funds, what should we do and not do?
So I think the best is to start with the anchor. And the anchor here could be a benchmark. Like, for example, say the total market cap of India, about 75% is large cap. 20% is mid-cap and 5% is small cap. So that's your starting universe. Depending on, your risk profile, if you're a young person, have an aggressive portfolio, then in your case, you could have like a higher amount of mid and small cap, say maybe 30 to 40% mid and small cap. If you're a conservative investor, on the other hand, you will be at a lower end, maybe 10 to 20% mid-cap, small cap. Depending on your view on the market or what you're hearing on the market, you could use these ranges. So right now, you would be closer to 30% for the aggressive investor and maybe closer to 10% for the conservative investor. If it is a market which is a little more positive, then you could be towards the higher end. But using these guardrails and using a benchmark actually helps, avoid taking too much of cash call. I'll just use one example here. So for example, in 2021, 2022 actually, mid and small caps corrected. They corrected about 15-20%. If seeing that correction, if somebody had got underweight, then from 2023 to 2024 onwards, like September 2024, when markets peak, you would have missed a 50-60% rally. So trying to time it too narrowly is a problem, and that's why you use guardrails and use ranges to sort of do allocations for mid and small caps.
So in today's environment, for a medium risk investor who's at least in the market for the next 5 years, what is the allocation you recommend?
So as I said, 20% is mid cap, 5% is small cap for a general market cap. In this case, I think you should be closer to that range. Maybe 20% mid cap and 5% small cap is what you should have.
Okay. So that kind of puts to rest this whole issue of how much mid-cap exposure do I need? Now the next question, you have, I don't know, and you count this, I'm not sure how many funds, but there are hundreds of mid and small cap funds in the market. There are actively managed funds, there are passive funds which are simply tracking the index. Is there a huge variance in the performance?
There is variance. While, over a 10-year period, that variance may look small, but if you do an absolute number, then it comes down to a lot. For example, if you look at the last 10 years return, then the top quartile fund is delivered about 16.9%, while the bottom quartile, which is the last 25 percentage of the funds, they've delivered about 14.6. So that's a difference about 2.3. But if you do it over a 10-year period, that's a 25% absolute return difference. So it's a difference between 1.1 crore versus 1.25 crores. That's a significant amount, you know. And when you extrapolate it to 15 years, that 2% becomes 30%.
Yeah, I don't want my fund to be underperforming my friend's fund by 25%.
That's
Definitely
right.
not.
That's right.
And for small caps, what's the variance you said?
That's actually even more. So for small caps, in a 10-year time horizon, the difference between top quartile and the bottom quartile is almost 4%. So that if you do over a 10-year period, that's almost 50% difference.
50% difference?
Yes.
Over a 10-year period?
Over a 10-year period.
In a fund that Alek might have and the one that I might have?
Yes.
Okay, we don't want to be in underperforming funds.
Yes.
So where do we start?
Yeah, so I think the starting point is similar to any other fund. You know, you first look at who the fund manager is. The fund manager becomes even more relevant in a mid and small cap environment, because what happens is that the skill set that you require for a large cap investment is very different from small cap and mid cap investment. Also, there is little coverage in terms of information and data. So the fund manager should have the expertise to have done mid and small cap investing over a longer period of time. So that's, I think, the first starting point, fund manager having relevant experience and relevant mid and small cap experience. That's one. The other very relevant point right now is this fund size. And, you know, SEBI has also sort of come out with, you know, the whole liquidity framework for mid and small caps. So there, you don't want a very large fund when it comes to mid and small caps. What can happen there is that, for example, if it's a 20,000 crore fund and you want 1% allocation, 1% of that has to be allocated to a company, that comes to about 200 crores. And some of these small cap companies, maybe 3,000-4,000 crores in market cap, free float would be lesser, so maybe 1,000 crores of free float. Out of that, if a fund is buying 200 crores worth of that company, that means 20% of the free float is with one manager. Now, if he needs to sell it, then that can become a challenge. So fund size is also quite relevant when it comes to large and mid, when it comes to mid and small cap. Then, of course, the other things like consistency of fund. You know, you want a fund which is consistent over a period of time. You don't want somebody who's top and then falls down. That's anyway common with any typical fund that you will look at. And then, so these are, the few things that one would look at. Fund manager, fund size, and, consistency of past returns is what is relevant when it comes to mid and small cap.
All right. I think, very worthwhile points to keep in mind when you're deciding on which mid-cap fund and small-cap fund to pick. We will take a very quick break, but after the break, we get down to the specifics now in terms of some examples, some funds that you can work with, fund houses that have had a good track record when it comes to small and mid-cap investing. We'll discuss the details after this short break.
Let's talk money.
Conflict or even a war. Now, what is the immediate order from the Ministry of Home Affairs? The order is for conducting civil defense exercises in 244 districts across the country. These are areas where civil defense teams are present. The Department of Civil Defense comes under the Ministry of Home Affairs at the central level, and each state has civil defense teams under the state government. Civil defense is an organization where civilians can volunteer to assist the police and the defense forces. The functions of the Civil Defense Department include protecting the public and property in case of a hostile attack, supporting armed forces during emergencies, mobilizing citizens, assisting in preparing civilians and making them aware about safety and evacuation measures, and helping in relief work. Now, what will these exercises entail and what is the objective? First, they're happening all the way down to the village level. The objective is to test the effectiveness of air raid warning systems, operationalizing hotline and communications with the Indian Air Force in civilian areas, assessing the readiness of civilian control rooms, training of civilians and students so that they can protect themselves in case of a hostile attack, getting ready with crash blackout measures, working on camouflaging vital installations, and also assess the response time of civil defense teams in responding to distress calls. And this could mean assisting firefighters and protecting sensitive areas. Also sensitizing the public and assessing the efficacy of evacuation plans. Now, all of these mock drills around the country will be done in collaboration with inputs of the Army, Navy, and the Air Force. Local police departments, anti-terror squads of state police forces, and paramilitary forces will also be involved in these mock drills, where an exercise mimicking a hostile attack would be conducted to test the response of all stakeholders.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we are giving you the basics of small and mid-cap fund selection. And now it's time to get to the really exciting part, which is some funds that Alek specifically likes. Alek Yadav is, of course, from Sanctum Wealth. So, Alek, now this is the juicy bit that our viewers are really waiting for.
Sure.
Let's start by talking slightly broader
Sure.
in terms of AMCs that have had a good track record.
Sure.
That know this business of,
Sure.
picking the winners of tomorrow, so to speak. What does your experience tell you?
Yeah. So, an AMC which has had fund managers who have, really sort of done well. Some of them include Invesco, Nippon. Bandhan is doing well right now. Edelweiss has done well. They've had a fund manager change, but the new fund manager after he took up has really changed. So these are some of the AMCs that have done well. What we see with mid and small cap is that it's generally led by the fund manager. So the fund manager's capability comes really handy. The investment framework, the way the fund manager manages is also important. But his track record, his expertise is also quite relevant when it comes to the mid and small cap space, at least.
Does the age of the fund house matter? Because I mean, you have a lot of new AMCs now coming up as well. So there you might not have like someone with a 15-year track record with the same age AMC, though he or she might be a great stock picker. What are your thoughts here?
Yeah. So and there have been instances in the past as well. So for example, Mirai, when it came, hardly people knew, but when Nilesh took over and he started managing, he's been exceptional. His track record has been really good. So that can happen where a new fund manager comes in, is able to show his track record, etc. One issue that some smaller AMCs will always face is attracting talent, right? And you need talent, you need the right kind of people to sort of do the research. So that newer AMCs will always keep facing. But if it's an AMC which can sort of upfront some of these costs, get a good person, to head the mid and small caps, and that can happen.
Let me ask you, who are your favorite small and mid cap fund managers and why?
Sure. So one of the funds that we really like is Invesco Small Cap. So this is a fund managed by Tahir Badshah. He's himself, been in the market for a very long time. He's got a very consistent track record of managing. He's the CIO of Invesco as well. What Invesco also does is that they have a very good investment process. So every stock they categorize based on certain parameters. They call it Diamond, Frog Prince, Warrior, etc. And that is how they've categorized each of this fund. This is a framework that they've put over the last few years. And that has really worked out well for them. And recently, Aditya Khemani joined them from Motilal, and he's bringing new ideas for them as a fund house as well. And they've done well. So that is a fund that we really like, which is the Invesco Small Cap Fund. The other fund that we also like, this is a mid-cap fund that we like, which is Nippon India Growth Fund. So this is a fund managed by Rupesh Patel. He took over the fund more recently in 2022, but he's got a much longer track record of managing money. They follow a growth at right price kind of approach, a GARP approach to managing money. They're very conscious about liquidity, and that's very important. As we mentioned, also fund sizes can become a concern. Buying. Owning too much of a company can become a concern. So he's very cautious about the liquidity of the portfolio as well. And that has really done well for him. And his track record also has done well for them. Their up captures and down captures, which is basically how they've done in bull markets, and down markets have also been very good for Invesco. The final one that we'll talk right now is Edelweiss. This is a fund managed by Trideb. Trideb joined from Axis.
Trideb Bhattacharya.
So Trideb used to, he was earlier with Axis, was looking at their PMS business, had a good track record managing the Axis PMSs as well. And then he took over the fund house recently. They had a much smaller team initially. Now that team is growing up. The AUM is becoming bigger. So they have hired many more analysts and fund managers more recently. He follows, he's not style biased. So he doesn't follow a growth approach or a value approach. His basic thing is bottom-up stock picking. We'll find the right ideas and not be biased by a particular style that is there. What that allows to do is that it allows a little more consistency, because there are styles which can perform at one point of time. They may underperform at certain period of time. This way, the consistency can be a little more, especially if you're able to pick the right stocks. And he's again very cautious about liquidity in his portfolio. Doesn't take macro calls, doesn't take cash calls, etc. And that has done really well for the.
Okay, so let's recap the fund names and the fund managers, all the three.
So we started with Invesco Small Cap. This is managed by Tahir Badshah. He's the CIO of Invesco, and that's a fund that we that we choose in the small cap bucket. In the mid cap, we have Nippon India Growth Fund. This is the mid cap fund managed by Rupesh Patel. So that's the pick there. And then finally, we have Edelweiss Mid Cap Fund, which is by Sudhir Bhattacharya. So this is the third fund.
2 mid cap fund ideas and one small cap fund
right
ideas.
now.
Got it. Great. Thank you very much. Now, just, as we come to sort of last and final thoughts, what could go wrong in our mid-cap investment journey? What are the classic mistakes to avoid?
Sure. So what happens is, first thing is generally that we see, is that the timing becomes a big problem. Most investors follow after a strong performance has already happened. So if you came in, say September 2024, you're down about 15-20%, in peak time, you're down about 25-30%. So that, I think, is something to avoid, not to chase returns, look at what the conversation on valuation, etc. is. So that's generally about mid and small caps.
So on that, one follow-up question. People who invested close to the peak of the market, say around 26,000, and they took mid-cap exposure, and now they've been sitting on losses. Would you recommend that they should remain invested and ride this out? Or a lot of them would be thinking, should I just take the hit and maybe invest afresh later?
Yeah, it depends on how much amount of mid and small cap you have also, right? If you end up, like we talked about earlier, 20-25% mid small is the overall allocation amongst the market cap. Now, if you are at 50-60%, then of course you need to cut down. You need to bring it down. But if you're on the lower end, then stick with it. What we have seen, as we saw the data as well, over longer periods, mid and small caps tend to do well. And that's what one should look at. Depends on overall allocation that you have in your portfolio.
So mistake number one, which you have to avoid, is trying to time your entry and exit in mid-cap funds. What else?
Yeah, the other thing is that, this thing, you also can end up choosing the fund which is the most best performing fund, and you end up just buying that. What you should also look at consistency of returns, and that's something that we spoke about earlier. You don't want a fund which was quartile 4 earlier, now became quartile 1, and probably could become quartile 4. If the fund manager has been able to even achieve, say, quartile 2 on a continuous basis, then that is a more consistent fund. That should be chosen over a fund which keeps switching between quartiles.
Okay, all right. So don't go for the flash in the pan kind of stars. Stay with consistency. Got that point. Finally, the active versus passive debate. Because what we saw as the market was peaking around September, October, a lot of index funds got launched as well last year, right? We had funds on the small cap index, on the mid cap index. We had funds based on several factors like momentum, mid cap plus momentum, etc. Things like that. What is your take on such formats of passive mid and small cap investing?
Sure. So when we look at the data when it comes to the mid cap funds outperformance, almost 60% of the time, mid and small cap funds have outperformed benchmark, which is a decent outcome. For large cap, it is less than 50%. So less than one and a half fund outperform benchmark consistently. Here, over a 5-year period, almost 60-70% funds outperform benchmark. That's one. The other thing is almost 70% times they've outperformed benchmarks on a rolling return basis. So if you look at last 20 years data and do a 7-year time horizon, any 7 year that you have taken, 70% of the times median mid-cap funds have outperformed benchmark and delivered an alpha of about 1-2% over the benchmark, which is decent. Large cap, that number is very poor. In small caps, it's even better. In small caps, almost 95% times funds outperform benchmark, and there the outperformance is almost like 4-5%.
Pretty high outperformance ratios or numbers that you're talking about.
Sure.
That in small caps is as much as you're saying 70% plus of the median funds, or is it 90%?
90% plus for small caps.
90% of the times, a median sort of range of small cap funds will outperform the small cap index.
That's right, and on average by 5%.
Okay, so the outperformance can be as much as 5%, which again, if you're compounding over long periods, is going to add up to a sizable difference.
That's right. The one reason there is that, in the small cap is where the least amount of information is available. Something called information asymmetry is maximum in small caps. And there is lesser research that is happening from sell side and other people as well. FIIs are also less invested. So that's where the fund manager's skill can really come out and he can find gems, and that is what people have done in the past.
Okay, so that makes a lot of sense to look for good, fund managers who know how to pick those mega stars or future multiplier stars, so to speak, and then look at active investing when it comes to small and mid caps. All right, final word, Alek, any final advice or tips for our viewers before we wrap up?
Yeah, so I think it's always about asset allocation. It's always about having frameworks. So as we said, there should be a guardrail of how much of mid and small cap you should have. Never exceed that guardrail, either on the upside or on the downside. And if you do that, then over long periods, your portfolio should do well.
Okay. All right. Very interesting conversation and a fairly helpful one as well. And thank you for some of those ideas as well on small and mid-cap funds that our viewers can look at. Really appreciate you being here.
Thank you so much. Thanks for having me.
All right, viewers. Hopefully you found this conversation interesting and of use. Do keep sending us your feedback and your comments, queries, anything else that you want us to talk about. And we'll pick it up in the coming weeks. Thank you very much for watching.
Let's talk money.
Kind of IT services, the big view is, since we are in a headline-driven market, for us in India, these are the stocks which will be the headline-driven stocks. Because if something goes wrong with global growth and with US growth, then this is where people will actually be finding their ways to exit or to kind of go short of the ones who can. So that top-down setup isn't great. There is going to be trade deals. Now, if trade deals really play out, which is the other side of the coin of, this being only a temporary trade war caused by humans so that someone could get a better deal. If that is the angle, then suddenly the next leg up in the market will come from people who are part of global trade or countries who benefit from global trade coming back on the table. So I think that's a nuance that one needs to kind of think through. India is the most
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian Defence Forces carry out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. The headquarters of terror outfit Jaish-e-Mohammed and training camps of Lashkar-e-Taiba were targeted. Pakistan confirms the strike, says 26 people were killed, dozens injured. India's military operations are appropriate and non-escalatory, says the Foreign Secretary Vikram Misri, flanked by women military officers. The Indian Army says no Pakistani military establishments were targeted. The Indian Air Force says it is prepared to respond to any Pakistani misadventures. The head of the terror group Jaish-e-Mohammed, Masood Azhar, admits 10 of his family members and 4 associates were killed in strikes by the Indian forces. Masood Azhar has been designated a global terrorist by the United Nations Security Council in 2019. Pakistan terms India's strikes as an act of war and vows to respond at a time and place of its choosing. 9 Indian civilians killed near the border in Jammu and Kashmir after heavy shelling by Pakistani forces. President Donald Trump says he hopes tensions between India and Pakistan subside quickly. UK, Russia and UAE call for restraint. Israel supports India's right for self-defense. China calls India's strikes regrettable. No flight movement in northern parts of India bordering Pakistan as tensions escalate. Airports shut across Jammu and Kashmir, Punjab, Himachal Pradesh. Indigo cancels 160 flights till the 10th of May. Air India, CASA and SpiceJet issue similar advisories. A nationwide civil defense mock drill begins. The move to ensure emergency preparedness involves thousands of volunteers across 244 districts, training to involve first aid, evacuation and emergency protocols. Let's start with the market action. The Sensex and the Nifty closing in the green. This despite tensions between India and Pakistan flaring up. The Nifty holding on to 24,400. It was a volatile session though. The rupee weakened by nearly 40 paise against the dollar, and that's how the markets closed for the day. US and China will hold negotiations this week to de-escalate the tariff standoff. Talks will be held in Switzerland from the 9th of May to the 12th of May. China cuts interest and announces sweeping measures to shore up the economy as the trade war starts to bite. US Federal Reserve is likely to hold rates later tonight, according to a CNBC survey. India Inc. welcomes the free trade agreement between India and the UK. The revised tariff lines will impact auto, textiles, alcohol and other industries. Apparel makers expect incremental opportunity of $1 billion. Well, the top story this evening, Indian Defence Forces carried out precision strikes on 9 terror camps in Pakistan and Pakistan-Occupied Kashmir. Codenamed Operation Sindoor, the strikes come 2 weeks after terrorists targeted tourists in J&K's Pahalgam, resulting in the death of 26 civilians. Now, the strikes were carried out between 1:05 a.m. and 1:30 in the morning, targeting 9 terror sites at 7 places in Pakistan and Pakistan-Occupied Kashmir. Now, these places are Muzaffarabad, Kotli and Bimber in Pakistan-Occupied Kashmir and Sialkot, Muridke, Bahawalpur and Bahawalpur in Pakistan. Pakistan confirmed the strikes as 26 people were killed and dozens injured. Now let's talk specifically about Bahawalpur. Located about 100 kilometers from the border, the Markaz Subhan camp in this area served as the headquarters of the terrorist group Jaish-e-Mohammed. Masood Azhar, the head of the terror group, admitted that 10 of his family members and 4 associates have been killed in the strikes by Indian forces. Masood Azhar was designated a global terrorist by the United Nations Security Council in 2019. In a press conference flanked by 2 women military officers, Foreign Secretary Vikram Misri said that the operations were measured, appropriate and non-escalatory. The Indian Army said that no Pakistani military establishment was targeted. The Air Force said it is prepared to respond to any Pakistani misadventure. Prime Minister Modi also briefed cabinet ministers about Operation Sindoor during a meeting. He also met President Murmu at Rashtrapati Bhavan to brief her about the operation. Home Minister Amit Shah chaired an urgent video conference with chief ministers, DGPs and chief secretaries of states bordering Pakistan and Nepal.
These actions were measured, non-escalatory, proportionate and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India. It was deemed essential that the perpetrators and planners of the 22nd April attack be brought to justice.
No military establishments were targeted. India has demonstrated considerable restraint in its response. However, it must be said that the Indian armed forces are fully prepared to respond to Pakistani misadventures, if any, that will escalate the situation.
ऑपरेशन सिंदूर 22 अप्रैल को पहलगाम में हुए विभत्स आतंकवादी हमले के शिकार मासूम नागरिकों व उनके परिवारों को न्याय देने के लिए लॉन्च किया गया था। इस कार्रवाई में 9 टेररिस्ट कैंप्स को टारगेट किया गया और पूरी तरह से इसे बर्बाद किया गया।
अगर पहलगाम में लोगों को इस तरह मारा नहीं गया होता, ये दिन नहीं आता। हम बड़े आराम से रह रहे थे। हम में से कोई जंग नहीं चाहता। हम लोग जो खासकर जम्मू कश्मीर में रहते हैं, क्योंकि अक्सर बेशतर हमने देखा है, चाहे वो इससे पहले जो वार हुए हों या करगिल हुआ हो, वो कहीं ना कहीं जम्मू कश्मीर को ही हिट कर जाता है। हम तो चाहेंगे कि हालात जो हैं वो दोबारा ठीक बने, लेकिन उसके लिए पहले हमारे जो पड़ोसी मुल्क हैं उनको अपनी बंदूकें शांत करनी होंगी। यहाँ से फिर बंदूक चलेगी नहीं।
Full support to our forces. Best wishes to them. Much love to them. Complete support from the Congress Party and the Congress Working Committee.
In 9 places, Indian Army has attacked terrorist-based centers. While doing so, except terrorist-based centers, no other places have been attacked. No innocent people have been attacked in Pakistan.
आज इस ऑपरेशन सिंदूर ने न केवल मेरी उन बहनों को न्याय दिलाने का काम किया है, बल्कि पूरे के पूरे भारत में एक संतोष की अनुभूति महसूस की जा रही है कि भारत को यदि किसी भी प्रकार से कोई छेड़ने की कोशिश करेगा तो हमारी सरकार, हमारी सेनाएं उसके छोड़ेंगी नहीं।
Well, reactions they're coming into Operation Sindoor. Parikshit Luthra joins us now. Parikshit, the Indian government underscoring the fact that the response from India was non-escalatory, and they call it that because they say that we have not targeted Pakistan's military establishment or Pakistan's military infrastructure. Now, these 9 sites that have been identified and targeted, Parikshit, take us through the significance of why these were the sites targeted under Operation Sindoor.
India all along has been saying that India's response is going to be a calibrated one. It will be against terror groups in Pakistan. That's exactly what has happened. We had planned and carried out strikes using artillery guns, drones and precision missiles from the Indian Air Force fighters to target 9 terror locations across the LOC. All of these are groups which have been targeting India. Now, these were at different places in Pakistan and Pakistan-Occupied Kashmir. All of this happened less than half an hour. It was just a 25-minute operation. Most of these sites are affiliated to the Lashkar-e-Taiba, the Jaish-e-Mohammed, and also the Hizbul Mujahideen. The Jaish-e-Mohammed and Lashkar are 2 terror groups responsible for multiple attacks in India over the years. Let's talk about Bahawalpur. Bahawalpur is located around 100 kilometers from the international boundary and was the headquarters of the Jaish-e-Mohammed. It was used mainly for recruitment, training, indoctrination of recruits. The Gulpur camp, located 30 kilometers from the LOC in Kotli, was the base camp for Lashkar-e-Taiba. Terrorists who carried out attacks in Poonch in 2023 and on a bus of pilgrims last year were reportedly trained here. Similarly, the Mehmoomana Joy camp near Sialkot was a training facility of the Hizbul Mujahideen. The 2016 attack at Pathankot Air Base was directed from this very camp. The Markaz Toiba camp, located near Muridke, is located around 25 kilometers from the border. It was the headquarters of the Lashkar-e-Taiba. Ajmal Kasab, one of the terrorists who was captured alive during 26/11 Mumbai attacks, had confessed that he was trained here. The Savai Nala camp in Muzaffarabad was a key training facility of the Lashkar-e-Taiba. Terrorists who had carried out attacks on civilians and security forces in Gulmarg and Sonmarg last year, and those behind the Pahalgam attacks were trained here as well. So India had gathered a lot of intelligence and then carried out this operation.
Parikshit, many thanks for joining us. Parikshit Luthra there explaining to us the significance of those 9 sites that were identified and targeted under Operation Sindoor. Meanwhile, Pakistan resorting to heavy shelling near the border in Jammu and Kashmir's Poonch after India's military operation. At least 9 Indian civilians have been killed so far and dozens have been injured. Pakistan termed India's strikes an act of war and has promised to respond at a time and place of its choosing.
At 6 locations where the Indians attacked last night, unprovoked, the blatant aggression that they did, Pakistan has lost 26 civilians and 46 are injured. Pakistan reserves the right and will respond to this aggression at a time, place, and means of our own choice.
Well, that is the Pakistan Army responding. Now, world leaders reacting to India's strike on terror camps in Pakistan. President Trump said India and Pakistan have been fighting for decades. He hopes it ends very quickly. India's National Security Advisor Ajit Doval briefed U.S. Secretary of State Marco Rubio shortly after the operation. Rubio said he's monitoring the situation closely and the U.S. will continue to engage with both India and Pakistan in hope of a peaceful resolution. UN Secretary General Antonio Guterres expressed concern over the strikes and has called for maximum military restraint from India and Pakistan. The UAE and the UK have also called for a de-escalation of tensions. Israel's ambassador to India said Israel supports India's right for self-defense. He said, and I quote, "Terrorists should know there is no place to hide from their heinous crimes against the innocent," end of quote. China's foreign ministry said it regrets India's military action and has urged both countries to put peace and stability first. Russia has expressed concerns over military confrontation between India and Pakistan. It's also condemned acts of terrorism. Let's listen in to what President Trump had to say.
No, it's a shame. We just heard about it just as we were walking in the doors of the Oval. Just heard about it. I guess people knew something was going to happen based on a little bit of the past. They've been fighting for a long time. You know, they've been fighting for many, many decades and centuries, actually, if you really think about it. No, I just hope it ends very quickly.
President Trump then. Several airports in northern and western Indian states that border Pakistan have been closed today following India's strike on terror target Pakistan. Indigo, SpiceJet, Air India and other airlines have suspended services to and from affected airports. Authorities have also reportedly shut down the Kartarpur corridor at Dera Baba Nanak in Punjab's Gurdaspur district. Madiha is standing by with more on the impact on the airspace activity. Madiha.
Well, 5 states bordering Pakistan have seen airspace activity getting impacted, and that has led to flight cancellations. So if you look at the video that we captured from flight tracking site Flight Radar 24, you will see a rare picture where the sky over northwest India is completely empty. So Jammu and Kashmir, Punjab, Himachal Pradesh have no flight movements at all in their airspace, while Rajasthan and Gujarat have few flights in the airspace away from the border. So airports including Leh, Srinagar, Jammu, Amritsar, Pathankot, Chandigarh are closed. Then Jodhpur, Jaisalmer, Bikaner, Kishannagar and Rajkot, Jamnagar, Bhuj and Porbandar are also closed for civilian flights. Let me add that we still don't have an official communication from the Civil Aviation Ministry on these airport closures. But Indian Airlines have been issuing regular updates, issuing advisories to passengers on cancellations of flights to the impacted airports. Indigo has cancelled over 165 flights to and from Srinagar, Jammu, Amritsar, Leh, Chandigarh, Dharamshala, Bikaner, Jodhpur, Gwalior, Kishannagar and Rajkot till the 10th of May. Likewise, Air India said all its flights to and from Jammu, Srinagar, Leh, Jodhpur, Amritsar, Bhuj, Jamnagar, Chandigarh and Rajkot have been cancelled till the 10th of May. Air India Express, Akasa Air and SpiceJet have issued similar advisories. What you will also see on the map is that foreign airlines are avoiding flying over Pakistan airspace. Airlines like Qatar Airways have suspended flights to Pakistan. A British Airways London Islamabad flight was also cancelled for the 7th of May. Emirates too cancelled its flights from Dubai to Lahore and Islamabad. And Saudi Arabia's Saudia Airlines cancelled its flights from Jeddah to Islamabad and Lahore. So that's the situation that we are seeing right now.
Madhya, many thanks for joining us. And staying with Operation Sindoor, the Indian Army carried out precision strikes against the terror infrastructure in Pakistan and Pakistan-Occupied Kashmir. The precision strike weapon system is designed to precisely target positions while minimizing collateral damage to surrounding areas and to civilians. Now, it can hit targets with high accuracy from a long distance. Retired Commodore Shrikant Kesnoor explained to CNBC-TV18 how precision strikes work. Listen in.
Precision, as it implies, means precisely hitting the target. So the kind of weapons and platforms you use are those that hit your intended target, whether it is a building, whether it is a camp or whatever, with huge amount of accuracy. I think that minimizing civilian casualties is in a way sending out a message to Pakistan people too, that India is wanting to hit the terror camps and the terror infrastructure, and now it is your job to ensure that you don't basically encourage these sort of people.
Meanwhile, nationwide civil defence mock drills across India have begun. The move is to ensure emergency preparedness that involves thousands of volunteers across 244 districts. Santya joins us from outside the Chhatrapati Shivaji Maharaj terminus. Santya, the drill underway?
So, Shireen, right now we are at Cross Maidan, and here's where the mock drill is happening. What you can see in front of the camera is the simulation of a war-like situation. So a couple of minutes ago, a fire was started here. A couple of blasts took place here, and now you can see ambulance, you can see teams of NDRF, Mumbai Police, local administration here handling the situation. These ropes which you can see in front of camera, Shireen, these ropes actually are the ones which were used to evacuate affected people, evacuate victims. On the top, at the left-hand side, you can see the whole siren system. You can see how a volunteer is coming down the building with the help of a rope. And these people you can see in T-shirts and white T-shirts and yellow T-shirts, these are either members, either volunteers, civilian volunteers, or members of civil defense. Maharashtra civil defense is conducting this mock drill at 10 locations, at 10 districts in Maharashtra. One is taking place here in Mumbai. Blackouts will take place in Anushakti Nagar and Tarapur. Other than that, Nashik, Thane, Pune, Ratnagiri, Sindhudurg are the places where the mock drill is going to take place. Here you can see these are fire tenders here. The moment the fire took place, these fire tenders were called, and the whole model of a war-like situation has been prepared here by the authorities. You can see these people sitting on the ground are civilian volunteers. Other than that, NCC teams are also here. Mumbai police teams are here. And air siren went off sharp at 4, and it's been calculated how long it's going to take for the authorities to respond. You can see an ambulance is coming out off the spot, carrying volunteers, carrying victims played by volunteers. On the other side, you can see NDRF teams in orange uniforms. So this is the model based on which today's mock drill was planned by Maharashtra Civil Defence. Similar mock drills taking place at 9 more districts in Maharashtra. Shireen.
All right, Santya, many thanks for joining us. We will head into a break, but up next, the Sensex and the Nifty end in the green despite an escalation of tensions between India and Pakistan. That and more when we return.
In the world, most expensive. And that's where what is the starting point for us. This rally in India has been driven by the need to find a place to hide. It is not a rally which is being driven by some kind of a beta where you are playing for the excitement of things continuing to get better from very good. That's not what is the foundation of this rally.
Let's take stock of the day's trading action. The Sensex and the Nifty ending in the green despite tensions between India and Pakistan. The Nifty holding on to 24,400 in what was a volatile session. Broader markets outperformed the blue chips. Prashant is standing by to take us through the details. Prashant, the Lal Street quite resilient through what was an otherwise fairly tumultuous day.
Well, all told, a pretty good session. We woke up to news that India has launched strikes across 9 sites in POK, Pakistan, destroying terrorist infrastructure. And the start was a little tentative, but very quickly the market found its footing. Advanced decline, which was deeply in the negative, some 5 down for 1 up, turned actually positive, and we actually ended in a pretty good fashion. While the Nifty didn't do very much, slight small gains on the Nifty Bank, etc., the gains really came through for the mid-cap index and the small-cap indices, which were up between 1.5% to 2% each. And that's the reason why the broader market felt a lot lighter, a lot better as compared to just looking at the Nifty and, the index bobbing around up and down through the course of the day. I'll start with where the large caps really, what the large caps really did, and I'll start with what was up. Tata Motors was the big gainer, 5% gain coming in there. Top gainer. Of course, stocks done very, very poorly over the last many months now. Shriram Finance, 2%. Bajaj Finance, 2%. Geo Financial Services and Eternal were some of the other 2% moves today. On the downside, Asian Paints was the clear loser, 3.5% down. Oil prices, oil's kind of felt out of sync with equity prices, which have done so well around the world. Oil has been depressed. So over the last 2 days, we're seeing some rebound. We'll see where the things go. Sun and Reliance are the others which were down 2% and 1% respectively. These are large caps I'm talking about. Now, for the broader market, more up than down, and clearly so by 3:30. BSE was by far the biggest gainer, 6.5%, big number one volume-led gainer. Wellspun Living was up 12%. Paytm after number 7% gain. CCL Products, second day running, has done about 150 rupees in 2 days. We have Gokuldas Exports. This is a clear textile beneficiary after the India-UK FTA. Piramal Enterprises, Motherson Sumi was up 5%. K Fintech was up 5%. Aarti Drugs locked up 20% on this name, 419. There was Sirma, PG Electroplast from the EMS space. IIFL Finance, a bombed out name, 7% gains. And really broadened out, but this is the bulk of the top 10, 12 sort of volume-led gains that we had in today's session. On the downside, some of the defense names like Mazgaon and BDL saw some profit booking, 5% down on these each. There was Swiggy, which has been going up and down. Today it was down 4% lower. And a name like KPI Green, Aventel, etc., which did well yesterday, were on the downside. The India-Pakistan, I think, news flow very much on the minds of investors and especially traders who are looking to sort of navigate this slightly tricky period. Back to you.
Prashant, many thanks for joining us. And the U.S. Federal Reserve will conclude its 2-day monetary policy meeting tonight. As per a CNBC survey, the central bank is expected to hold the interest rate steady despite pressure from U.S. President Donald Trump. More than half of the respondents expect a likely recession in the next year. When asked about how the Fed will respond to higher prices due to tariffs and weaker growth and employment, 65% said the Fed will cut rates. China has cut its key interest rates and announced sweeping measures to shore up the economy as the trade war with the U.S. starts to bite. China will establish a 500 billion yuan re-lending tool for consumption and elderly care. Its central bank will reduce mortgage rates under the nation's Housing Provident Fund as well. The U.S. and China have announced that they will meet in Switzerland this weekend to start trade talks. This comes after weeks of an escalating trade war between the two countries. Chinese Vice President will represent Beijing in Geneva, while U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer will represent Washington. Bessent said there is a need for de-escalation before moving forward. This will be the first high-level interaction between both countries since Trump's inauguration. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
The impact of Pakistan's airspace closure isn't just limited to Indian airlines. Several foreign airlines are also choosing to avoid flying over Pakistan, even though the restriction officially applies only to Indian carriers. So as we have been reporting that international flights from North India are the most hit, as they now have to travel to Mumbai and Ahmedabad and then proceed to their journey. We learned from airport officials that Mumbai ATC is now handling nearly 135 more flights of Indian as well as foreign airlines ever since Pakistan closed its airspace. Many flights operated by foreign airlines like Lufthansa's Delhi-Frankfurt flight, British Airways' Delhi-London flight and Air France's Delhi-Paris flight have chosen the longer route, avoiding Pakistan airspace. There are others like Etihad's Delhi, Abu Dhabi and Oman Air's Lucknow-Muscat flight sometimes avoiding the Pak airspace, meaning there are days when they fly over Pakistan and then there are days when they fly over Mumbai and Ahmedabad. Now, interestingly, not all foreign airlines are avoiding Pakistan airspace. American Airlines, for instance, then United Airlines, KLM, these three airlines are mostly using the Pak airspace to enter India. So why are some foreign airlines taking the longer routes, even when they are allowed to use Pakistan's airspace? That's the question. So as expected, when we asked these airlines, they said this is a precautionary measure, keeping in mind passenger safety.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Flip Spaces, an interior design startup, raises $35 million in a funding round led by Iron Pillar and existing investors. The firm plans to use the funding to accelerate growth across India, US and UAE, also explore inorganic opportunities.
Logistics tech startup Shiplog secures 6.5 crore rupees in a seed round led by Deepak Bagnani Family Office. This marks Shiplog's maiden fundraising round since its inception in 2022. This capital will strengthen the tech infrastructure and AI-driven inventory management solutions.
InfoEdge achieves 36% returns from its early-stage investments in startups since 2007. In a letter to shareholders seen by CNBC-TV18, founder Sanjeev Bikhchandani writes InfoEdge's AIF investments alone yielded 18.7% returns. Further, the company and its affiliates have invested a total of 3,959 crore rupees, with the fair market value of the invested capital growing to 36,855 crore rupees today.
Jeff Bezos' personal firm, Bezos Expeditions, is leading a $72 million investment in artificial intelligence data solutions company Toloka, which is looking to scale up its business, Reuters reported. In addition to Bezos Expeditions, Mikhail Parakhin, CTO of Canadian e-commerce company Shopify, is participating in the investment.
It was a miss for Uber in revenue terms as growth in its ride-hailing unit slowed to its weakest since the pandemic. Uber reports nearly $12 billion in revenue while $2 billion in net income. Well, those were the headlines we've been tracking for you this evening. On what's brewing today, AI-driven corporate transport as a service company Routematic, which offers a full-stack commute solution to over 300 corporates across 23 Indian cities, has raised $40 million in a Series C funding round led by Fullerton Carbon Action Fund and Shift for Good. Founded in 2013, Routematic has delivered over 5 million trips a month for more than 300,000 employees, powered by its proprietary AI technology. Joining me now to talk about how Routematic is redefining corporate transportation is its founder and CEO, Sriram Kannan. Sriram, welcome to Startup Street. As I mentioned earlier, this $40 million funding comes from Fullerton Carbon Action Fund and Shift for Good, both major players in sustainable investment. Tell us, how will this support accelerate your sustainability goals, especially the integration of electric vehicles into your fleet?
Yeah, so sustainability comes from two different angles. One is pooling of...
Sriram, I believe you're on mute. Can you unmute yourself?
I am on mute. I am not on mute. Yeah, I seem to be okay now.
Yes.
Can you hear me now?
Yes, go ahead. Go ahead.
Yeah, so sustainability, we need to work on it along two different angles. One is the pooling of cars, even before the EVs come in. How do you reduce the number of trips? How do you reduce the dry runs and so on in the logistical space? And in addition to that, you also, bring in EVs to lift off some of the or most of the ICE vehicle runs. So it comes from both angles. So this kind of a sustainability focused funds backing us, two of the giants in the industry, will definitely help us to scale the technology that we have been improving over the last 12 years. And we call it the moving from the lab to the factory kind of a scenario now, where we are looking to scale it much bigger than where we are right now.
All right, so take us through your fund allocation plans. Beyond converting 30% of your fleet to EVs, what other initiatives, Sriram, are in the pipeline? And how will this fresh capital help Routematics differentiate itself from traditional players in the transport space?
So the traditional urban mobility play is either demand-focused or supply-focused or some sort of a glue logic. Our ambitious plan is to actually handle both the demand and supply on equal rank, and with the unit economics that help the driver to maximize their earnings, right, by packing as much as possible. So as a thesis, we buy out the time of the driver and maximize his earnings rather than just capture supply or just capture demand and not knowing what to do with it. So as a primary step, we are going to be setting up our ROCs, Routematics Operations and Command Centers, in large cities. We are starting with the 5 cities. We are already present in 3 cities already. So the ROCCs will help us in managing the transportation across corporates through centralized command centers in every city that are both demand planning and supply matching at the same time. These are going to be state-of-the-art outfits that we are going to build. What we already have, we are going to spruce up. And like I said, the experience for our corporate clients who are always very demanding is going to get even better, with at the same time maniacal focus on improving the outcomes for the driver.
Sure, but you've got 300 plus corporate clients and millions of trips each month. How is your AI-powered SaaS platform transforming the employee commute experience? What kind of operational efficiencies and, of course, cost savings are you delivering to your clients? If you could throw some light on that.
So corporates are always looking for 3 things. Point number 1 is compliance at 100%, right? Any compromise on compliance, be it on the driver side or the car side or the law of the land, is to be no compromise at all. So we deliver 100% on the compliance factors, and it is all tech driven. Point number 2, they are looking for metrics in terms of on-time arrivals and departures, right? We promise and sign off on 95% on-time arrivals and 100% departures, right? Arrivals help the corporate, timely departures will help the employees and having higher level of satisfaction that they are not sitting around in the car. The third thing being cost. Right? This is the pecking order that corporates are looking at. This is exactly what we are going to be doing.
Okay. Sriram, you've also set an ambitious target of scaling your fleet to 10,000 vehicles by 2026. How do you plan to manage this kind of growth, and what role will your city-level command centers play in this expansion?
Very good question. So what Routematics has been doing from beginning, from 2013, it's a 12-year-old outfit now, is that we have captured a large volume of demand, to the extent that we already are operating with about nearly 70,000 fleet on the platform, right, in the planning space. And so it is not such a long shot to actually look at acquiring a 10,000 fleet scenario. We are at nearly 3,000 right now, 2,500, 3,000 right now. Yeah, so we are going to be capturing them. And given that corporate transport has a certain pattern to it, it is much easier for a corporate player having aggregated city-level demand from corporates, and now we are also looking to other B2B segments like airport transfers and so on to maximize the utilization given a time. So it is not such a big deal for us to actually get to 10,000, because like I said, the platform has already shown capability of nearly 70,000.
All right, one final question before I let you go. India's employee transportation market is projected to hit $13.2 billion by 2030. What are the biggest opportunities you see for Routematics in this growing space?
So while employee transport is one large segment, like you said, it's nearly $14 billion. We have much bigger ambitions of actually coming up with an entire DRT platform. What I mean by that is demand responsive transit, where you design for projected demand and design supply for it, rather than the current state of the art, which is design supply, float supply, and expect people to be taking those cars, right? So we are looking at not just employee transportation, but that will definitely set a very huge base for us to play with in terms of improving our utilization. But we have much bigger dream of coming up with an entire demand responsive transit DRT platform, which is actually expected to be over $2 billion by 2030.
All right, and we wish you the very best for that. Many thanks, Sriram, for joining us on Startup Street. Appreciate your time.
Thanks, appreciate it. Thank you. Yeah.
All right, moving on. Also on what's brewing, Sadhav Offshore, a key player in India's maritime services sector, has raised 25 crore rupees in an equity funding round led by the Unique Undiscovered Value Fund, with participation from several prominent family offices and high net worth individuals. Now, the funds will help launch a critical floating dry dock facility, vital infrastructure in a country where naval and commercial vessels often travel abroad for repairs. With a growing focus on defense readiness and domestic maritime self-reliance, joining us now to talk about what this expansion means for Sadhav Offshore is its director and CEO, Devahuti Chaudhary. Also with me is my colleague, Arundhati. Devahuti, welcome to Startup Street. Now, given the tensions between India and Pakistan and the strategic importance of maritime readiness, how is Sadhav Offshore contributing to strengthening India's defense preparedness, especially when it comes to quick turnaround times for naval and coast guard vessels?
First of all, Shruti, thanks for having me here. So yes, it's a tense time for everybody involved. We have already expressed, as Sadhav, we have already expressed our support to the Indian Coast Guard and the Indian Navy for whatever we can do. When it comes to quick turnaround time, Sadhav is known, it has a track record of completing refits before the sanction time and with quality. And therefore, customers like the Coast Guard and Navy trust us to complete projects before time. So early delivery means that the ship remains operational for a longer time to carry out its charter of duties. But this itself is a game changer, you see, and it creates a huge value in for our national defense systems and also for the commercial shipping industry. But yes, this is very helpful for the defense.
Sure. Hi, Devahuti, Arundhati here. Now, shifting focus to the fundraise, right? One of the key focus areas for the round is the launch of a large floating dry dock. If you could sort of explain why this is such a game changer for India's ship repair industry?
Yeah, so basically the floating dry dock is basically a facility and infrastructure which where a ship comes and we are able to access the underwater hull of the ship for carrying out repairs. Now, basically over the last few years, what has happened is that the government has, kind of given the existing public infrastructure to PSUs like Cochin Shipyard and GRSE. And these PSUs focus on carrying out naval repairs. And naval repairs typically take a very long time. So as a result, the other ships, they don't get access to the dry dock infrastructure and they have to travel great distances for their repair requirements. Secondly, what's important to note is that this floating dock would be set up in the heart of the industry. Like the shipping industry is, like Bombay is the shipping capital of the shipping industry. Maximum number of ships that operate in India are actually operating around Bombay. And your ship repair ecosystem is in Bombay. Your ships are in Bombay. So everything is around here, which basically once the infrastructure comes up in Bombay, it means that the ships can be repaired faster and it's a huge cost saving for the industry. And that's why it's a game changer.
Absolutely. Absolutely. Yeah. And Devahuti, you've been operating the Paradip Port dry dock since 2013 and are already servicing a major share of the Indian Coast Guard's FEP fleet. How will the new facility scale up your capabilities and client reach, both commercial and defense? If you could quickly answer that.
Yeah. So every infrastructure has its restrictions in terms of the size of ships it can cater to. So for example, at the Paradip facility, we can basically dry dock ships of the Coast Guard of up to 50 meters in length. We cannot dry dock offshore supply vessels because of the beam restrictions. But at the new floating dock, where we can dry dock ships up to 130 meters in length, we will be able to cater to Coast Guard ships of 100 meters to 150 meters in length, one ship at a time. Or we can do 2 offshore supply vessels at a time. or we can do multiple tugs or smaller vessels at a time. So that changes the scale of the business significantly.
Right, absolutely. And you know, India is also aiming to become one of the top 5 shipbuilding nations by 2047, right? How do you see Sadhav Offshore aligning with the government's vision, particularly through initiatives like Sagarmala and Maritime India Vision 2030?
So being a ship repairer per se, we are already aligned. And actually, while this Maritime Indian Vision 2030 has been announced more recently, but the workings have been going on for the past few years. That's why we are able to set up the ship repair facility in Bombay. But Sadhav has been designing and building boats by itself. We've been working with DPSU yards like Mazgaon docks and all to build warships and submarines as well. But as a shipyard for shipbuilding, we have a tie-up through our sister concern with a foreign partner to set up a shipyard which will cater to shipbuilding in Paradip. So the economics of shipbuilding as such requires you to have deep pockets because ships, as you know, are very expensive assets. And the shipyard has to manage the production of multiple ships at a time because otherwise the economics will not make sense. So you have to manage production of multiple ships at a time while waiting for milestone payments from your customers. So for a small company, it's actually a difficult exercise. So that's why we have entered into this kind of MOU for a joint venture, and we'll be suitably be able to cater to the shipbuilding requirements.
All right. You know, Devahuti, like we were discussing, ship repair is often seen as a slow-moving traditional sector. How is Sadhav Offshore bringing in innovation, whether through partnerships like the Kongsberg Maritime or new tech in dry docking and maintenance?
Yeah. So, well, actually, ship repair is not slow. It just looks slow. It is a traditional sector. So, as a layperson, you may not be able to visibly gauge the entire gamut of activities that are going on. Because so many people are working on so many different areas of the ship simultaneously, and this requires a huge amount of project management. When it comes to innovation, basically, yes, there is a limited amount of innovation you can do. Where, for example, for the floating dry dock, we plan to use robotic hydroblasting systems. So this will enable us to, kind of blast the ship's hull in a much faster with a much faster way and have a much faster turnaround time. But other than that, one has to kind of modernize the way ship repair is done. So for that, we are basically, taking a lot of steps. One is we have made Paradip into a center of learning and excellence, where we are training new recruits in ship repair processes specific to our sector, which is a very small sector, so to say. And we're taking a leaf from our partners as Rolls-Royce Marine, which is now being taken over by Kongsberg. So we're basically converting tacit knowledge, which our engineers have, to recorded knowledge. So this basically, with the experience of the engineers, we'll be able to kind of and also we're implementing systems where we'll be able to record and use AI.
Absolutely. And, we're running out of time, but if you could quickly tell us, speaking about this, and, you're talking about the opportunity here, but most Indian ships currently head overseas for repairs, right?
Yes.
So what's the scale of opportunity for domestic repair infrastructure, and how soon do you expect the demand to translate into revenue?
So the industry estimates of the domestic ship repair industry is like about 4,000 crore, which definitely will and can increase if the ships that are going abroad for repairs come into India. 80% of SCS is actually refitted outside. One thing is that there is non-availability of dry dock infrastructure. Secondly, there is a skill gap because we don't have the skills to actually dry dock bigger ships like bulk carriers and container ships like 250 meters in length, etc. And thirdly, when these ships go abroad, they can very easily go to a dry dock, which is en route. So basically, we are trying to cater to ships that are operating in the coastal waters of India, which is basically your offshore supply vessels, coastal ships, coast guard ships, etc. And once a floating dock is built, this will immediately translate into revenue.
Okay. All right, Devahuti, we've completely run out of time, but many thanks for joining us on Startup Street, and wish you the very best for your growth plans.
Thank you so much for having me here.
On that note, it is time for us to head into a short break. But coming up next, Green Grahi has secured 32 crore rupees in a seed round. We put the firm's founder on the hot seat to find out more about their growth blueprint. Stay tuned.
Concerns behind this rerouting of flights. First, since tensions continue between India and Pakistan, any sudden retaliation from either side could leave these foreign airlines stranded in the sky if they don't have enough fuel to divert to another airport. And second, in case they are forced to do an emergency landing at a Pakistani airport, then that could jeopardize the security of Indian passport holders on board the flight and lead to a risky diplomatic problem. So to prevent these unwanted consequences, some foreign airlines that we mentioned have voluntarily decided to take a longer route for Indian flights, although it will have an impact on their cost of operations.
Look, when we look out at the world, Samir, we look for partners. We don't look for preachers. Particularly preachers who don't practice at home what they preach abroad. And I think some of Europe is still struggling with that problem. Some of it is changing. So, the issue for us, I mean, in many ways, Europe, I think, has entered a certain zone of reality check. Now, whether they are able to step up to it or not, it's something we will have to see. But from our point of view, if we are to develop a partnership, there has to be some understanding, there has to be some sensitivity, there has to be a mutuality of interest, and there has to be a
Welcome back. You're still with us on Startup Street. A next-gen startup using insect biotechnology, Green Grahi, has just raised 32 crore rupees in the largest ever funding round for the sector. Backed by Avana Capital and other marquee investors, the company is redefining how we think about animal feed and farm inputs with solutions powered by the black soldier fly. From improving shrimp yields to boosting crop health, Green Grahi is building for both scale and sustainability. Joining us now to talk about the company's journey and future plans is co-founder Siddharth Sharma of Green Grahi. Siddharth, thank you so much for taking time out and being here with us on Startup Street. You know, before we get into the details of the fundraise, right, at Green Grahi, you guys use insect biotechnology to create alternatives to traditional animal feed and chemical farm inputs. If you could sort of take us through what you have on offer in sort of layman's terms.
Yeah, absolutely. So first of all, thank you for having me on the show. So at its heart, Green Grahi is an agri-biotech company. We create alternative proteins, fats, and supplements, as well as biologicals and biofertilizers using insects. Now, these insects are fed on agri residues and agri byproducts that we get from different food processing companies. So in a way, we are turning these low value residues into high value inputs for both animal nutrition as well as plant nutrition and protection industries.
Absolutely. And if you could sort of, you know, take us through the kind of demand that you're seeing for your offerings, the kind of clients that you're catering to across which sectors, and how is your offering more cost effective and scalable versus traditional animal feed?
Absolutely. So Green Grahi is working across various sectors. As I mentioned, we're working on both animals and plants. Within the animal nutrition space, the demand is from shrimp industries, it's from aquaculture as a whole as well, then poultry industry, and even pets. And each of this sector has a unique value proposition that they see in us. For example, in poultry, we are able to increase the yield of the layer hens, which are basically the egg-laying hens, by up to 30%. In shrimp, we are able to increase the yields by up to 7%. Similarly, for pets, which are more like companions and family members now, we are able to reduce their allergic reactions. We are able to improve their gut health and even the skin and fur quality. And these are a few of the tangible benefits that the consumers as well as the large feed companies are able to witness. On the plant nutrition side, as a biological company, we provide them with inputs that help the farmers reduce their dependence on chemical feeds and chemicals. as well as increase the yield of their crops and their income as well. So on both animals and plants, we have demonstrated our performance, which has in overall resulted in LOIs worth close to 550 crores that we have received in the last 2 years. And just to cater to this demand, we are setting up a new factory through this fundraise, which will cater to a part of this demand that we have.
Sure. So you've sort of, pointed out there all the material impact that these particular, your offerings have. And you also said that you're going to use some of the funds that you've raised for a new manufacturing plant. But if you could also tell us how else will you spend this 32 crore rupees? How are you allocating it across key areas like manufacturing, R&D, team expansion, as well as market entry?
Yeah. So we have basically segregated the fundraising in 3 segments. One would be definitely the enhancement of our manufacturing capability. But the second one is as a company, we are deeply focused on R&D. So we want to double down on our R&D efforts, develop more formulations for problems that are coming up because of the climate change. For example, white spot disease, which is happening in shrimp and results in almost 20-30% loss to farmers. Similarly, the reduction in the crop yield that happens because of extreme summers or extreme rainfall. So these are some of the new problems that we wish to solve for using our ingredients. The third segment is on global expansion. Pet food as a segment is growing rapidly in the US, and EU, and UK. And we already have a lot of incoming demand from large pet food manufacturers who want to use our ingredients not only to as a replacement to conventional proteins, but also to differentiate themselves from rest of the pack. So these are the 3 key pillars that we'll be targeting through the fundraise.
Absolutely. And with Greenrahi sort of entering or looking at these international markets like the US, UK, and EU, as you pointed out, what sort of regulatory, supply chain, or scalability challenges would you face, and how do you plan to overcome them?
Yeah, so EU was the first geography to recognize insects as a potential feed ingredient for animals. They have laid down a list of requirements that any feed-focused insect company should be following. So we'll be following those regulations, which basically govern what kind of food can be given to insects. Apart from that, these are standard regulatory practices. GMP, HACCP, and Geopolitical are 3 licenses that a company needs to have to ship out their products to US and EU.
Right. And if you could sort of, talk numbers now, take us through the kind of revenues you're currently clocking. What portions of Greenrahi's projected 510 crore rupee LOI, as you said, is expected to convert into actual revenue over the next year or 2?
So once the factory is commissioned, we expect to get around 40-45 CR per year from the first commercial unit. But we do not wish to stop there. We want to be the biggest player in this segment across the world. So we'll be setting up multiple of such units, medium to large scale units across India and then soon globally. The 550 CR LOI, which I mentioned, is just from India. But the demand is much bigger as we look at other sectors, including if we deep down in the pet food sector in the US and UK.
Sure. And if you could quickly tell us, how are you sourcing this feedstock for your insect biomanufacturing at scale? And what are the kind of environmental or logistical implications of the sourcing model?
So as a company, we are a full stack insect biotechnology company that also differentiates us from a few other companies in this space. But in terms of the only dependency that we have is on the raw material, that is the feed for the insect. This is something that we are getting from large food manufacturers. So companies manufacturing chips, they can give us potato peels, which generally get wasted. Companies producing, or companies in the alcohol industry, we can take spent grain from them. Similarly, all the big push on the bioethanol, so we can take all the DDGS and DWGS that these companies are producing. So there's no dearth of feedstock availability in India. India is rich in and has a lot of these feedstocks easily available within 50-kilometer radius of any geography. So yeah.
No dearth of feedstock there. All right, Siddharth, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best going forward on your journey.
Thank you for having me.
Well, let's take stock of all the other startup stories. Now to the latest on Gensol Blue Smart fiasco. Another setback for Gensol Engineering. The Delhi High Court bars the companies from selling or transferring rights of over 220 additional electric vehicles leased from separate lessors. As per the ruling, the court will be appointing a receiver to take charge of these vehicles. The court also directed Gensol to submit a status report on the leased electric vehicles within 2 days. Additionally, Gensol and Blue Smart were ordered to provide a detailed disclosure of their assets and liabilities.
Uber's first quarter numbers beat expectations but fell shy of anticipated revenue growth for the quarter. Revenues at the ride-sharing firm grew 14% to come in at $11.53 billion versus the $10 billion for the same period last year. The company also reported a net income of around $1.78 billion versus a loss for the same period last year.
Staying with earnings, car trade shares skid in trade after the company reports its fourth quarter numbers. Its net profit was up by 86% at 41 crore rupees as against 22 crore rupees in quarter 4 FY24. The company's net revenue rose by 17% and EBITDA increased by 68%. Further margins saw improvement.
Meta wins a lawsuit worth $168 million against Israeli spyware firm NSO Group. A US-based court ordered Pegasus spyware maker to pay the compensation after it found the company guilty of targeting WhatsApp users using Pegasus spyware. Calling NSO Group a notorious foreign spyware merchant, Meta said, and I quote, "The verdict in WhatsApp's case is an important step forward for privacy and security," end of quote. This is a 6-year-old lawsuit whereby Meta had sued the group for hacking 1,400 WhatsApp accounts.
And with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Of how the world works. And I think these are all work in progress to differing degrees with different.
Welcome to Indianomics. Today's debate stirs or questions the very heart of Indian policy and Indian economy. A 60-year-old trend of greater globalization is set to take a U-turn because of President Donald Trump's tariff war. So far, state-of-the-art consumer products like, say, iPhones or iPads or semiconductor chips were designed in the West, manufactured in emerging economies and marketed again in and by the West. Now every country, including India, has to produce for itself, and accordingly, India's laws and policies need to change away from global scale and focus on domestic demand. Tax laws should encourage consumption and not savings. Airlines should connect not Bangalore with Boston, but Coimbatore with Kanpur. This is the thesis put forward by Jahangir Aziz, the head of emerging market economics with JP Morgan and a veteran India watcher. Is such a dramatic change called for in India's economic policy? That's the debate in today's Indianomics. I have with me Jahangir Aziz himself to present his thesis, and two other well-known Indian economists, Ratin Roy, who's a distinguished professor at the Kautilya School of Public Policy, and Pulapre Balakrishna of the Center of Indian Economics. Thank you very much, professors, for joining me. Let me start with Jahangir himself. Jahangir, please restate your theory as briefly as you can, and what exactly needs to change in India's policy.
Morning, Lata, or good evening. So there are two ways of looking at the world the way it stands today. So one way of looking at the world is to say that, look, the largest economy of the world most likely will go into a recession. The second largest economy of the world is going to not have a technical recession, but likely will have a severe slowdown in the economy. And all of this is happening in the midst of a tariff war that is no longer confined to US and China, but has spread to other countries. If that's the way in which you want to look at it, or one wants to look at it, then what happens to the rest of the world is by and large going to be governed by the spillovers that happen from these two economies slowing down onto the other economies. And over the last 50 years, we have gone through at least 5 US recessions. The world has survived, and we've come out of those recessions. The alternative way of looking at it is that this is a broadside against a 80-year-old global trading system by the very country that built that system piece by piece, and that the damage that we are looking at, or we are fearing is going to happen to the US economy or to China or the rest of the world is just a spillover from that breakage in the global trading system. The problem with this view is that if that is the origin of the shock, that this is a resetting of global trading system, then over the last 8 years, every country, whether it's an advanced country or whether it's a developing country or an emerging market country, has been built around this global trading system. The economic structure therefore needs to change if the global trading system has to change. And that was basically my point, that the economic structure of almost all economies in the world, including India, is built in some way or the other on the basis of this global trading system continuing with all of its unfairness and all sorts of concerns, but broadly continuing. But if that no longer is going to be the case, then the economic structure itself has to change.
Okay. Well, let me question that thesis first. Ratin Roy, would you agree that it changes so dramatically that every country becomes inward-facing? Or is it going to be an incremental change where the US perhaps extracts some mileage, some production and, trade surplus from other countries, but basically we all still play to our strengths and we will do it through, FTAs with like FTA UK, India UK, India EU. Will it be really such a dramatic change that everyone produces for themselves?
Well, there will definitely be more autarky in the world. And if you're asking me whether every country will produce for itself, probably not. In the sense that, as Jahangir, I don't think even Jahangir was saying that. I mean, there are small open economies which really have no choice but to produce for other people. Many of them don't produce goods, although countries like Singapore do have a very high manufacturing share. And they will have to navigate these headwinds somewhat more carefully than India. India, of course, has another great advantage. It's a busted flush when it comes to world trade. India's share of world exports is piffling. India cannot even compete with Bangladesh and Vietnam, especially Vietnam, forget China, for many of those things that we ought to be producing. Our share in manufacturing is anyway declining. So I rather hope that Jahangir is right, in the sense that if he is right, then India will do what I've been urging all along. Mahatma Gandhi once said about Western civilization, it would be a very good idea. When people talk about India exporting, I say it would be a very good idea because I've been hearing that line since I achieved puberty. And India has not been an exporter since then. So if we then turn inward finally and stop dreaming these pipe dreams about being a global manufacturer based on a relatively small shift in where iPhones are manufactured, that can only be a good thing for India. If we focus on home market demand, which is huge, that can only be a good thing for India. I'll leave the consumption point for later. I do slightly want to nuance what Jahangir said in the Indian context. But otherwise, I think Jahangir is probably right when it comes to large countries. But large countries anyway, like India, especially India, which is a busted flush globally, should have been always focusing on domestic markets. And I think Trump has done us a favor if he impels his government to do that systematically in a more disciplined way than it has been doing in the past.
I am not sure of the end game of this trade war. My guess still is that it is going to be incremental changes. But Dr. Balakrishna, your first thoughts. There is clearly a challenge called to globalization. But is it complete deglobalization, or is it just going to be some stalling and plateauing with perhaps the US extracting some advantages? What's your best guess?
Well, let me start by saying that I do agree with Mr. Aziz that we are seeing some serious disruption here. Now, what will be the magnitude of that disruption is certainly uncertain. The only thing that we can be certain about is that there's going to be some uncertainty. So that's the first thing that I'm going to say. Secondly, I would say that India certainly does not have the luxury of producing for itself for the simple reason that about 80% of its oil consumption is imported. So jolly well export in quite a big way if it wants to at least take care of its balance of payments. But exports as a means of actually growing the economy has not been part of India's history ever, not even after 1991. So I'm not sure if the disruption in world trade is going to make a great difference to India's growth prospects. But there's certainly going to be disruption, and the United States is a major trading partner of India's. So how we come out of all of this is also going to be related to what sort of trade agreement we are able to negotiate with the United States. So I'll say that for a start and keep everything else for later.
Okay. Okay, then Jahangir, I'll come back to you with the same question I'm asking the other two. Is it going to be such a big U-turn? For instance, do you think seriously that iPhones are going to be made in the US, even for the US?
No, iPhones may not be made in the US for the US, but as you asked the question, what is the intention of this, these trading moves? If you look at the manner in which the reciprocal tariffs were imposed, these were not imposed based on, okay, India has these amount of tariffs and these amount of non-tariff barriers, these amount of other things, and therefore the non-tariff barriers have costed X billion to the American taxpayers, and therefore the US will reduce its reciprocal tariffs by this amount if India reduces its non-tariff barriers.
Jahangir, they are based on trade deficits. That was very clear.
That's correct.
Higher the deficit, higher the punishment.
Right. So let's look at the trade deficit. It's 1.1 trillion is a trade deficit. Let's say even 1.1 trillion goes to $500 billion. So I'm not being as dramatic as you were being, Lata, and I'm glad that Rotin pointed out I wasn't being that dramatic.
Okay.
All I was saying is that if you take away from the largest economy in the world, their trade deficit going by $500 billion every year, and let's say that leads to a significant reduction in their imports. US imports about 4.1 trillion every year, which is larger than India's GDP. If that economy is turning autarkic, whatever the reason may be, if that economy is turning autarkic, it will force every other economy that trades with it to turn autarkic.
One minute, Jahangir. I'm not denying that it is turning autarkic. What I'm saying is that they can't take away 4.1 trillion of imports in 1 year, 10 years, 100 years. It will only be a little less than 4.1 trillion incrementally.
The little less was done in global financial crisis. So go back to the global financial crisis. Look at the period before the global financial crisis. Those were, quote unquote, the golden years of emerging market, including India. Why was it the golden years of emerging market, including India? It was because globalization was surging at that point in time. We were establishing supply chains. That was what was driving our investment. That was what was driving our growth. If you look at what happened to the world since the global financial crisis, across the world, the potential growth, the medium-term growth of every economy has actually ratcheted down. And that is because global trade has ratcheted down. Now you're telling me that let's look at another small ratcheting down. I have no idea whether it's going to be a small ratcheting down or not. In the global financial crisis, there was some opposition to deglobalization. I will grant you that, but it was a political opposition in Europe and the US. It wasn't that the opposition was on the policy front. This is an opposition that is taking place against globalization, not just politically, but also actually in actions. And you are not even looking at the retaliation that will happen. We are assuming that the 90 days you will actually get trade deals with the Europeans and other countries. We haven't seen any of the trade deals apart from the India trade deal is being talked about. And as Rotin said, India doesn't really matter in the global trade. What matters is Japan. What matters is Mexico, Canada, and Europe. And we haven't seen anything of that sort. We don't even know what retaliatory steps these countries will take. So the ratcheting down of global trade can be significantly larger than the ratcheting down of global trade that occurred in global financial crisis, where the only thing that happened, by the way, was that trade financing was frozen.
Yeah. Okay.
So my point being that you can see another ratcheting down of trade and therefore another ratcheting down of medium-term growth, because we in the emerging market world continue to believe that being part of the globalization world or being part of the global trade is our ticket to greater prosperity. And that was what I'm questioning.
Okay. Well, I have to take a commercial break. Let me come back and ask you professors, what should be India's policies going forward? Back in a minute. Welcome back to this all-important Indianomics, where we are discussing whether the challenge by President Donald Trump would mean that most economies will start having to become domestic demand-based, especially India. I've been speaking with Jahangir Aziz, who wrote this excellent edit in the Indian Express. I have also been speaking with Professor Ratin Roy and Professor Pullapre Balakrishnan, both prominent Indian economists. Gentlemen, thank you very much for your patience. Ratin, Jahangir had a say. What is your best guess of how this challenge to globalization will turn? Will it mean that US imports reduce from, say, 4.1 trillion to, say, 3.5 trillion? Is that the end game, or is it much more dramatic?
If I may respond to your question from a purely Indian perspective.
Yes.
My trade surplus with the US is a little north of $100 billion. I think it's 120 or 130. Let me assume that halves. Worst case scenario. Responding to what Pullapre said, that we have to worry about the balance of payments. So I now have to find $70 billion to close my balance of payments deficit. Now, the good news for India is we have never managed to close that by increasing exports. The way we close our balance of payments deficit is that our total foreign inflows, which is remittances plus FDI plus FII, exceed our current account deficit.
Yes.
That excess is more than financed by these three things. So the question here is, will this trade war in any way inhibit that process from happening? That is where I think our policy needs to focus. Let me give you one very good example. I have been working on this with the state governments here where all the Indian action really is south of India. Nothing much happens up north. There's a Darbar and that's it. The interest of the main hit that's going to come to American service producers is going to be the more or less abandonment of the H-1B visa policy and the entire green card pipe dream route. That could seriously affect the fortunes in the south. The reason it may not is that the response I'm seeing, and you can look at this by looking at rental yields in South India and Hyderabad, which have gone up by 45%, Bangalore by 40% in anticipation of the last 6 months, is that global capability centers of various types, not just IT. We're looking at services, we're looking at Accenture, we're looking at knowledge industries, looking at banks. There's a plan for a rapid expansion in that. Now, what that would mean is we'd get in FII, and that would become part of domestic GDP almost, because the FIIs would then produce these global capability things which we would sell to the US. Now, if that trade in services is interrupted, that would be a serious blow. But that itself should take care of about 80% of our balance of payments deficits. Then with a little bit of smarter, with slightly smarter import strategies, we should be okay. So and here I'm looking at a pretty non-marginal impact like you are. I'm saying our trade surplus with the US on goods halves. Even that, I think we can manage fairly smartly over the next year or two. Now, the only thing we have to do with Trump, because he's not a stable person, is what the Indian government, to its credit, has been doing against its normal track record, which is to talk too much. We mustn't talk too much. We should quietly try and engage with the US and get what we can out of them while making sure that our strengths, which are services, etc., those grow in India. And I agree with Jahangir, we also have to come up now, like all other countries, major countries will do, not Switzerland, but certainly the UK or France will be forced to do, which is focus more on home market.
Okay. You know, Ratan, this is exactly what the Indian market is also going with. Our trade surplus with the US is only 42 billion. Our total exports to that country is $130 billion, but the surplus is only 42 billion. If that has to be halved, it's only 21 billion. That's not a great deal of money.
No,
and as you say,
we lose our
services,
trade surplus.
services
We lose our trade
exports,
surplus, and our trade with the US halves too. Our exports to the US halve to about 70 billion. We can even manage that.
Yes, and in any case, the GCCs or services exports is not in Trump's radar at this point in time. So both the market and I were of the assumption, or seem to be of the assumption, that it is going to be an incremental problem that India has to deal with. But Jahangir seems to be saying that we could be impacted much more. Let me first get Dr. Balakrishna to respond. Dr. Balakrishna, how seriously should India change? Jahangir says that even tax concessions given to savings need to go away, and we have to actually start encouraging consumption because domestic demand will become much more important. Does it get that far, sir?
I think that is a very important point, and I generally agree with that. But I just want to say something about part of the discussion that went on a minute ago, which is that we can't do the calculation entirely in terms of how India's trade with the US will be affected. US's actions are going to affect global trade, and therefore India's exports are going to be affected by much more than what is going to be part of the Indo-US trade agreement. So I just want to keep that in mind. Now, the other thing that I want to say is that the general point about domestic demand is absolutely correct. And this is not the first time we're talking about it, or if I might say so, I have been talking about it. I think this became apparent even after the global financial crisis of 2008-9. Even international bodies like the Asian Development Bank were already talking about the importance of domestic demand for Asian economies. Now, the question, however, is that how do you spur demand? You can't say that this can be done by raising consumption alone, because consumption is a function of income. So you must increase income to start with. And one way of doing that, of course, is via investment. And here I want to say that, as you very well know, private investment as a share of GDP in India has been stagnant for over 10 years. And I don't see very much happening on that front. So really, all that we have left is public investment, which, despite the noises that the government has been making and some increase in roads and ports, etc., has increased only by 1 percentage point or something in the past 10 years, from 7% of GDP to 8% of GDP. So clearly, public investment is part of the story. And the other is something which cannot be fixed very easily, which is that there is shrinking demand in the economy for anything other than food, mainly because of inflation. Inflation is shrinking household budgets, which is being directly reflected in manufacturing output. In particular, manufacturing, as you know, has slowed despite a kind of aggressive policy by the government for over 10 years in terms of Make in India, for about 3 years now. In the form of production-linked incentives.
That is a larger debate, sir. We will not have time for that. We have to have concluding points from all of you since we are out of time. Well, Jahangir, what Ratan is also arguing is that this is going to be incremental in terms of the trade surplus we have with the US. But as Balakrishnan agrees with you, that it is not just a question of our deficit with the US. We are going to see a shrinking global economy. So do you still think we have to go that far? That, you have to stop encouraging savings and go to encouraging consumption. Does it get there?
So first, let me just tee off from Professor Balakrishnan's last 2 points. The first point, thank you, Professor Balakrishnan, for mentioning that it is very narrow. You'd be missing out the forest for the trees if you only focus on Indo-US trade. It's that the US moving out of the global trading system is going to affect global trade. The second point, which is the point that you made, which is about investment, and I completely agree with it. And obviously, for many sessions I've had with Lata, we've talked about the languishing of investment. So there's a very easy chart, and you can do that one of these days, Lata. Whether you look at growth rate of exports with growth rate of investment, or growth rate of investment as a share of GDP versus exports as a share of GDP in India. And I'm not talking about other countries. In India, it is true also in other countries, but India, there is no daylight between the two lines. The reason in the global financial crisis period that we had that rapid expansion in investment is that the investment directly or indirectly was related to the expansion of supply chains and export markets. Since global financial crisis, that has come down. And that has come down because we are no longer expanding supply chains to get more become more connected to the global trading system, because the global trading system itself is pushing back.
I agree. Jahangir, unfortunately, out of time. Tell us one key change you want to see in Indian economic policy.
For example, I would really want to see, the entire basis of our discussion, that India is a supply-constrained economy, and therefore we need to keep on easing supply constraint, simply being changed to India is no longer just a supply-constrained economy, but a demand-constrained economy. Okay. If we just accept that as a starting point, I think the rest of the policies will actually come through.
Okay, well, unfortunately out of time. Gentlemen, thank you very much for starting this conversation on how Indian economic policy needs to change in a changed global order. That's it on this edition. Thanks for watching. The newly appointed chairman of SEBI on March 1st outlined